And we're also keeping a close eye on what's going on with European cars. European car sales rising for the third consecutive year, something of an EV recovery, it seems, certainly for cheaper car models. Guy.
Let me just add Sandvik to that list. It could be an interesting one as it opens up. Mining materials, certainly in focus. Okay, let's dig into these markets. Let's see what's happening. These are the numbers. We are, as we can see, we are starting to see maybe equities gaining a little bit of traction. And this is overnight. We've seen euro dollar go to 119, which is interesting. Are we going to see further momentum? Are we going to get up to the target we heard from BNP a little bit earlier on, 122? Do we go beyond? What impact will that have? The 600, we'll wait for some of the other markets to settle in and see what happens there. The CAC 40, we are waiting for LVMH after the close today. That is a big moment as well, as we await the big tech story coming out of the United States tomorrow. The IBEX is up by 0.4%. We'll wait for the SMI and Germany to open. Germany's going to be really interesting today. Plenty of stocks in focus there, including, as Anna says, Puma. Tom, what do you got?
Yeah, before we get to the tech names on the US on Wednesday, of course, it's SK Hynix steaming high, and that's led to gains across the tech space in Europe right now. Sectors across your sectors, top of the list is tech, gaining more than 1%. Banks also doing quite well as well. HSBC seeing a pop in their share price. Banks up 0.8% as a sector. On the downside, basic resources down by 0.7%. Copper and oil under pressure in the session today. We'll see how silver is reflected in some of the names like Fresnillo. Fresnillo's actually down 1.8%. Antofagasta also down around 2%. Anna, what are you looking at? What's standing out to you?
It's almost, has all that volatility in silver just got a little bit much for some people? Because, yeah, it's quite surprising on a day where silver is once again up by 8% or more. The basic resources is the worst performing sector. It's down by 0.7% as a whole. Interesting, within that technology space, there's no doubt the global story, the Asia story that you nodded to there, Tom. Also, if you click into the sector, Sage Group is the best performing stock. And this is a business that's very European, but also very North American. And it's been questions around such businesses that do software, essentially, and how they perform in an AI age that have maybe been dominating some parts of the tech conversation. And this company, fairly small by European standards, but out with updates today, reiterating full-year guidance, and the stock managing to go a little higher, up by 3%. So that's the best performer on that tech index.
Techs are banks up. It's interesting that we are seeing some of the pharma stocks up. Is that? Can I draw a line to India on that one, maybe? Maybe there's a sort of pharma element to what we're seeing there, I don't know. Or maybe we're just, as a group, buying back into that space. You are, though, seeing some weakness in some of the staples. Some of the energy stocks are also giving back some of the ground as well. So in terms of what we are seeing, it certainly kind of feels like a more risk-on market. Tech feels like it's on the front foot. That definitely feels like it's risk-on. The banks are also into the mix as well.
And we'll bring you the move on Puma, of course, when it's reflected. We know that pre-market, it was pointing high by double digits on the build-out of the stake by the Chinese company Anta as well, but waiting for that to reflect. Not coming through yet, but we'll update you when we get that.
Absolutely. So let's get a perspective on these markets. Richard Saldana joins us, Global Equity Fund Manager at Aviva Investors. Richard, nice to have you with us. We have seen 3 years of strong moves in global stocks, and I've read notes from a few people this week that have made that point at the start of 2026 in order to then set up their view for 2026. Does that matter? Is that material? Are we still is it a cyclical conversation we're having, or is it more structural for 2026?
Yeah, so look, I think that's the question that's on everyone's minds right now. I think one of the themes that we were sort of certainly pointing to last year, but also coming into this year, was that theme around diversification. So to your point in terms of, what was driving that strong performance we've seen over the last 3 years, or the majority of the last 3 years, it's been that the US equity market, right? And obviously that's led to questions about US exceptionalism. But I think what was interesting last year is you definitely saw a changing of the guard, right? If you think about the regional performance, obviously you saw Europe, UK, Asia and emerging markets outperform the US, not just in US dollar terms, obviously given the dollar weakness last year, but even in local currency terms. So you did see what we think is a changing of a guard in many ways, and obviously that has continued to play out this year, particularly against that backdrop of geopolitics.
Yeah, what did you take, Richard, away from the fact that we worried a lot this time last year about too much reliance on the Mag 7, and then we managed to pivot actually away to a much wider basket of tech names and a wider geography than just the United States, and markets didn't fall over. I mean, what did you take away from that?
Yes, so look, I think the key takeaway from us was the broadening out, right? So if you think about what was the reason why the Magnificent Seven stocks outperformed so much, it's because they were the big driver of earnings, right? If you think about where the bulk of the earnings growth is coming from, it was very much concentrated in those stocks. Again, particularly towards the latter part of last year, you definitely saw a broadening out of that earnings growth, and you started to see that as well if you think about even the beginning of this earnings season. So I think in our mind, that's really what's going to keep underpinning this broadening out story. It's going to be earnings driven.
So, Richard, just in terms of timeframes, that continues. So you're talking about diversification. Where are we in that story, and where are we in the broadening in the AI story?
Yeah,
How much further do those two themes have to run?
Yeah, look, to use a baseball analogy, I'd suggest we're pretty early innings in terms of that diversification theme. And the reasons behind that is actually, think about the starting point. You've got a global sort of equity, if you look at sort of most global equity benchmarks, still around 2/3 in the US, right? So again, we think about the backdrop right now, whether it be the foreign policy uncertainty, questions over central bank independence, some of the fiscal question marks as well. That diversification theme, we think, makes a lot of sense and will continue to make sense. You also put the context of valuations. Again, you look across most valuation metrics, the US market certainly looks still relatively extended, certainly relative to Europe and certainly relative to emerging markets as well there. So I think that's going to continue to underpin that diversification and broadening out theme as well.
Which FX trend are you most focused on that could impact that view?
Yeah, look, I think the dollar is clearly going to be key, right? But I think it's interesting, again, I think the geopolitics is also driving some of that. Clearly, we've seen that dollar weakness last year. We saw last week as well the dollar relatively weak against that backdrop. So I think people to some extent are starting to think about, that US exposure, perhaps applying a bit more of a risk premium towards that. And that's clearly impacting as well some of the currency metrics.
Do I just want to sell any dollar asset? How big an impact is it going to?
Yeah.
Equity markets, S&P 500, in nominal terms up 1.53, in euro terms up by 0.5%. Big outperformance coming from European indices as a result of that. The US looks like it's the AI trade, it's all this there's lots of things going on. But if it's priced in dollars, do I want it?
No, I think that's a really good question. I think it's something investors are asking themselves. I think just taking even the currency part aside for 1 second, again, look, we know what themes are going to continue to underpin this market, certainly the AI story and that CapEx story. But I think, again, thinking about the broadening out context, right, it's not just about those Magnificent Seven companies. It's not just about the hyperscalers. You start to think about areas such as, whether it be memory, again, the Korean names come into play. We talked obviously about Hynix and the likes of Samsung as well. You start to think about areas such as semiconductor equipment, whether it be things like lithography, deposition, companies such as ASMI, ASML very much come into play in Europe. So I think that sort of broadening out is not just a regional perspective, it's also a sector perspective as well.
So, okay. So I want to buy the AI trade, but I want to buy it outside America, basically.
Well, certainly you can continue to have exposure within the US, but you can diversify outside.
Am I going to get a better performance outside or inside the US, do you think, this year?
Well, so I think the question mark for us is, I think given how much those US stocks, particularly some of those big hyperscalers have run, I think the argument actually is you start to look, particularly from a valuation standpoint, and I think Asia in particular starts to look very attractive on that perspective.
In terms of, so you've talked about earnings and how important that's been to where we've seen outperformance from stocks, and we're going to see corporate earnings from the tech sector this week. We were talking to one of our colleagues yesterday, analysing tech names, and he was saying this is going to be a real show-me quarter. There's been so much CapEx spent by these names. Yeah. And I appreciate that, we've broadened out the conversation now. But in terms of the CapEx that these businesses are spending, I mean, what are we going to be watching for around that CapEx theme? Because sometimes the market can take really big CapEx numbers, and sometimes the market says, no, that's too much.
Yeah, no, so look, I think we're shifting. Obviously, last year, clearly there was a lot of focus on that CapEx number. That still remains well underpinned. I think if you look at the sort of, call it the big four across those sort of names, whether it be likes of Amazon, Meta, Google, Microsoft, you're still going to see close to probably $500 billion in terms of CapEx. So the numbers are huge, right? But I think what the market is really going to be wanting to understand are a couple of things. One is, where is that CapEx coming from? And again, if it's still coming in terms of cash flow generation, this isn't companies taking on additional debt.
Matters, yeah.
So I think that absolutely matters. Now, the second point is about the revenue linkage, right? So people are starting to think about, when are you going to start recognizing the revenue from this CapEx expenditure? Again, the more detail you can start to get from the companies in terms of that revenue recognition, and obviously a lot of that is going to depend on the enterprise adoption phase, that's clearly going to be something on investors' minds.
How long have they got on that question?
Yeah, so look, I still think there's still, in terms of that runway for CapEx, you could still be talking a couple of years at least when you start to think about still that data center build out. It's still relatively early, right? So I think as you start to think about probably that enterprise adoption, that still could be very much a 2027, 2028, frankly, story in terms of that. But I think in the meantime, the likelihood is you're still going to see these companies invest in terms of building out that future capacity.
You're constructive on equities. Where are you finding downside protection?
Yeah, good question. I think that downside protection part is really important, and it ties back to what you were saying, Anna, at the beginning about, look, we've had clearly a very strong period of performance, 3 years now of 20% plus returns in sort of dollar terms for global equities. So downside protection should be, investors should definitely be thinking about that. Look, I think a couple of sectors just to highlight: consumer staples, very unloved right now, but on a relative valuation basis, trading on sort of relative multiples, relative to the broader market at decade lows, right? Multi-decade lows. So again, you want to be selective there. We're looking at companies, particularly with emerging markets exposure, where the consumer still remains relatively strong from a sort of spending perspective. So companies such as Unilever, Reckitt's, even here in the UK, Colgate in the US would be an example there. So staples, I think, could offer you some protection, almost a hedge somewhat against some of this volatility and geopolitics that we're seeing. And I think healthcare still has appeal. I mean, we think about last year, it was almost the perfect storm, whether it be, tariffs, drug pricing, healthcare reform. But we still think sector, from a valuation perspective, is attractive, and you're still seeing companies delivering good cash flow and dividends.
Relative protection?
It's relative protection. To be very clear here, that's relative protection. But look, we've seen in the past.
Where do I get absolute protection? How do I protect a portfolio in absolute terms?
Well, I think then you'd be looking at certainly things like metals, etc. You'd be looking at that sort of hedge, whether it be gold or other things like that. But I think
they all look pretty choppy as well, pretty high as well.
They do.
Choppy.
They do, and there's a lot of momentum certainly behind that trade as well. But look, I think from an equity perspective, when you're thinking about defensive sectors, certainly those two. And we even saw that last week when you saw that kind of on Tuesday. It feels like an eternity ago when the markets dropped on that Tuesday. Where did you see the defensiveness? It was certainly staples. Was an outperformer that day.
Great to see you, Richard. Thank you very much indeed for coming to see us. Richard Saldano, Global Equity Fund Manager, joining us from Aviva Investors. Let's take a look at what the Core 6 looks like this morning. With some quite interesting divergence emerging. Certainly chips are back on the front foot. ASML is up quite strongly. Big day tomorrow, but big day today out in Korea as well. That's manifesting itself in a big performance from ASML, one of the big gainers. LVMH is weak into its numbers. So we get those at around kind of 4:40 London time, a little bit later on. That's a story for tomorrow. We'll talk about it in more detail in just a moment. But LVMH, a little bit of selling coming through as we see the numbers coming into view. Chloe Melly's got more on what stocks we're watching. Let's start with Puma and figure out what is going on with that stock.
Good morning, Guy. Indeed, Puma is, as expected, moving quite strongly this morning, up more than 10% after China's Antisports took a controlling stake in their company, a stake of $1.8 billion, becoming a top shareholder in Puma. And this could potentially pave the way towards a full takeover of Puma, although Antisports has said it is not considering that at this stage. And in the meantime, it taking this big stake in the company is seen as signaling high hopes for a turnaround, and therefore we are up very strongly for Puma this morning. Moving on to Burberry, which is also in the green after being upgraded to a buy rating by Barclays analysts. It seems that this turnaround story with the new CEO is something that analysts have got quite a lot of confidence in, and we are up about 1% for that luxury company ahead of LVMH earnings coming later today. Moving on to another company that's in the green, and that is Legrand, which is a maker of data center equipment, and it was placed on positive catalyst watch by JP Morgan analysts, and therefore we are up 2% ahead of those earnings. Cranswick is also in the green. Cranswick, a producer of meat, of poultry, of pork, and it said that profit will be at the top end of expectations, and that is because it is really benefiting from this big kind of protein train, protein moment, and we are up about 2% for that company. And finally, finally, let's end on a company that's in the red, and that is Evoke, the gambling company. It reported numbers that were a little bit disappointing. It said back in December it was considering selling the entire business, and it said today that that strategic review was ongoing, and we are down quite significantly for that company, about 9% this morning.
Chloe Millet, thank you very much indeed. On the protein trade and others, some have been bulking up. Guy Johnson's been loading up on the protein bars and the turkey meat. Coming up, as we've been hearing, China's Antisports has become the top shareholder in Puma. We're going to have more on that story. Is it a takeover target? That's coming up. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back, everybody. This is the opening trade, 8:17 in London, Tuesday, 27th of January. And European equity markets on the front foot, not by a huge amount, but pointing a little bit higher. Nasdaq futures, interestingly, up by 0.6%. E-minis up 0.3. Guys, should we talk about cars?
Why not? Let's talk about what is happening in the European car sector. It looks like data is signaling that actually we had a third year of growth last year, but actually we're still, before we get too exuberant, are basically below where we were pre-pandemic. Affordable electric certainly seems to be doing well. Hybrids definitely having a good performance at the moment. Joining us now with details, Danny Lee. Danny, what are Europeans buying, and what does that tell us about kind of where we're going next?
Well, the Europeans have been buying into that Chinese EV story, more affordable EVs, and you've seen the response from European automakers with those sub €20,000 models, which have really taken a hold in Europe over the last several months. And we have seen, as a result, the 6 straight months of growth in new car sales across Europe. And it's that now great competition which has then allowed EVs, pure EV sales to jump 30% year over year in 2025. And hybrid sales, a combination of hybrid sales, has made it become one of the best-selling items in Europe from a cars perspective. So they've taken up 45% of all new car sales across Europe in 2025. So it does leave those petrol and diesel cars in the minority, and therefore that real rapid change and transformation of the European car space kind of feels like it's leaving some of those European legacy automakers behind.
Yeah, all right, good news for pollution, good news for consumers, Danny, but maybe to your point, a challenge, of course, for the industry of Germany in particular, but more broadly, the auto industry of Europe. What are governments doing? Are we seeing additional measures coming through to support the auto industry?
Well, yeah, you make a great point about Germany, because they've just recently announced 3 billion euros in subsidies for new EV purchases. And critically, this permits the Chinese EV makers to benefit from this massive subsidy. Germany wants consumers to buy more into EVs, so we could very well see more momentum into EV sales thanks to that strong showing the back end of 2025. That momentum could very much continue into 2026. And it's not just Germany. We see the likes of France and the UK, major auto markets where governments are showing support for consumers in allowing them to buy electric vehicles with some handouts. So yeah, there could be some more momentum. I think the key question really is about tariffs, though. Because of those exports from China into Europe, there could be a settlement between the European Commission and automakers from China, so that could help lower prices and give more predictability in a market where there was some friction.
Yeah, these European legacy automakers, they make plenty of electric cars these days, but there is increasingly a presence for new entrants, or presence of new entrants. So BYD, their European car sales tripling, the car maker aiming to sell 1.3 million cars outside China. So with this performance in Europe, Danny, how close do they get to that target?
I think for BYD, the chunk of sales from Europe has been sizable already. They've had really good success, and you've seen that in the European sales numbers. And they sold 1 million units outside of China in 2025. They've raised their target in 2026 to 1.3 million. You can sure bet that BYD will be targeting Europe aggressively. It'll be a fairly open market compared to 2025, and it'll be following its rivals in trying to challenge the European automakers to have even more share and lower pricing in order to stimulate that sales number. And it hasn't got anywhere without being very aggressive on pricing tactics to make it be one of the world's biggest EV sellers around the world.
Okay, Danny, thanks for that update on the auto sales out of Europe, what it tells us about the trends going forward as well. Danny Lee joining us with the context. To the retail space now, Puma shares are surging after news that China's biggest athletic apparel seller, Anta Sports, agreed to buy a stake of about 29% in the German brand. The €1.5 billion deal would make Anta Sports the largest Puma shareholder. Joining us for more is Bloomberg opinion columnist Andrea Felsted. What is the appeal, Andrea, for Anta in building this stake out in Puma, and ultimately are we on track for a takeover essentially?
Anta's really keen on this because in China everything is Gorp core. It's hiking, running, outdoor wear. So that's why it's targeting Puma. Now the thing is, Puma doesn't actually have a very strong position in that market. Puma has more products in the fashion lifestyle sector, and that's the sector that's really under pressure from changing fashion tastes, where we are ditching our sneakers and going for proper shoes again.
You said what was the focus? Something core, Andrea, which went completely over my head.
Gorp core, it's kind of dressing for the outdoors, hiking, running, all those types of things.
Okay, excellent, just to clarify.
Okay, let's go kind of away from Gorp core. We're about to get LVMH,
yeah.
Then we get Kering, then we get Hermes. What is the setup into these earnings numbers? What do analysts need to see? What do investors need to see? The stocks have done okay-ish. Year to date, not so good. But what is the setup into this?
Well, the stocks have rallied a lot from last summer when everyone thought no one was ever going to buy luxury again. Investors have realised actually the luxury, industry does still have a pulse, and the stocks have come up accordingly. But now we're at the point where they're probably up with events, and we need from these numbers some reassurance on China. China's not getting any worse, but it's not clear that it's really rebounding. We need some comfort on the US. Don't forget, go back a year ago, there was lots of optimism about the US luxury market. We'd had the election, that unleashed a wave of spending. We're up against those tough comparables. We've had a little bit of wobbles in markets last week with the political tensions. We'll need to see that hasn't derailed things. So I really think it's, can the next leg of this recovery continue?
Seeking comfort from luxury.
Yeah. I want to ask about, Anna has a sensible question, but baggy trousers, is that a long-term trend, Andrea? I'm still on the shelf, on the fence, on the shelf. Do I go all in on baggy trousers?
No.
I have one pair, but I'm not convinced.
My 14-year-old does. I'm just going to point that out.
Okay. So that's a good gauge, because he's probably ahead of the trend.
Don't buy more. Silhouettes are slimming again. We are peak baggy. We have seen, the big thing, so we've had the 90s. The next thing being tipped is the 80s. Big shoulders, cinch waist, and
the 80s were amazing.
And a slimmer silhouette.
The 80s were amazing.
This feels like a trend we can definitely lean into. I feel like it's a...
I've still got some of it. What are you talking
exactly.
about?
Recycle it. It's a bit of a problem, though, for people of, well, I'll say my age, because I don't want to put everyone in the same bracket. You don't really want to feel too ahead of these trends, do you? Because then you just look a bit ridiculous, Andrea. That's the risk, to be ahead of an 80s trend. She says, sitting here with slight shoulder pads.
But then again, everything's so expensive. Everything's gone up so much. You want to have a little bit of ahead of the trend, because then you'll get your money's worth.
So, so 80s, what am I buying if I want to the 80s?
It's shoulders, waists. It's really that big.
For me?
Well, big jackets. Big jackets. Shouldered. Maybe a slightly
remember the big sort of big jacket, the sort of oversized jackets.
Exactly. That's it. It's really it's all about the sharp shoulders.
Okay. Andrea, thank you very much. You see, I love these conversations with Andrea Felsted. They always start somewhere entirely sensible and news-based, and then they stay sensible in a sense, but very useful. Thank you very much. Bloomberg Opinions, Andrea Felsted, with all the advice you need on fashion. We've been talking about global trade today in the context of an EU-India trade deal. Let's listen in briefly. Ursula von der Leyen, Commission President, of course, signing that trade deal with Antonio Costa, with Narendra Modi. Let's listen in to what Ursula von der Leyen is saying.
Greatest wealth are our people. That is why I'm so glad that we are signing an agreement on mobility. We will facilitate the movement of students, researchers, seasonal and highly skilled workers. And this is also why we are launching the first EU legal gateway office in India. It will be a one-stop hub to support Indian talent moving to Europe in full alignment with EU member states' needs and policies. This is good for our economies. This is good for the friendship between our people. And this openness benefits us all. As we conclude this 16th summit, let me reflect on another event of deep meaning. 2 weeks ago, India marked...
The EU Commission President, of course, Ursula von der Leyen, talking about what she's described as the mother of all deals with India. Is that part of the diversification trade? And is gas and is energy for Europe also in focus? We're going to get some details, some analysis in terms of LNG imports into Europe. Stay with us. This is Bloomberg.
What's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, you know, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, you know, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, you know, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Welcome back. This is the opening trade. We are 30 minutes into today's session. So the earnings story front and center, the AI trade in Asia, giving that region a decent lift in the session today. You have green on the screen in Europe. It's pretty modest, building on the soft upside that we saw yesterday. Gains of about 0.2 yesterday, upside to 0.2 so far today. So the direction of travel is still upwards, but of course we have the Fed to contend with, the earnings story as well. The DAX up just 31 points, 32 points. Over in France, the CAC 40 is essentially flat. The FTSE 100 gaining 0.2%. You have banks, financial services performing quite well. Technology also on the front foot. On the downside, basic resources. Guy has some more details.
Absolutely. So it's interesting. If you look at the headlines, basically what you're seeing is a market that really isn't going anywhere. If you look at the sector composition, it tells you actually maybe the market is feeling a little bit more risk on. Feels like an Asia trade coming out of what we've seen, particularly out of Korea overnight. But we're about to get big tech. So is that going to change? In terms of the sector composition, how does it translate into what we're seeing in terms of the internals? 307 up, 274 down. I'm not actually sure there's much of a lead there. Volume's a little bit on the light side. We're going into an awful lot over the next few days. Is that a signal there as well? In terms of the stock story, the Chinese are buying into Puma. That stock initially much higher. It's fading that move now. Burberry is actually down by 1% this morning despite an upgrade. Sage Group is up very nicely on the back of its numbers. Accountancy software still important. And also remember, big AI component maybe going into that narrative too. Let's talk about what is happening on the downside. We've just seen what's happening with Burberry potentially being dragged lower by the big kind of behemoths in this space. LVMH is down this morning. You got to watch out for its numbers a little bit later on. Then we get Kering, then we get Hermes kind of midway through February. Rio's a little softer as well this morning. Total is down on a downgrade as well. That stock is up though. Sorry, it has been up recently. Today though, down by around 0.5%. Anna.
Guy, let's get an update on some of the other stories we're covering this morning. Speaking this morning, Indian Prime Minister Narendra Modi says India and the European Union have agreed a free trade agreement. The announcement caps nearly 2 decades of negotiations at a time of strained ties with Washington. The pact is expected to eliminate tariffs on over 90% of EU goods. The UK Prime Minister Keir Starmer says he won't choose between the US and China as he flagged, quote, significant opportunities for British businesses ahead of his trip this week to Beijing. Starmer told Bloomberg he can meet with President Xi Jinping without angering President Trump or harming relations with the United States. Starmer also told us that while the UK will maintain close ties with the US, it doesn't make sense to ignore ignore business opportunities in China. And US airlines are still paring back flights as a deep freeze hampers the restart of operations at some major hubs. Flight Aware indicates that American Airlines has already axed about 500 mainline and regional services today. The industry is bracing for further disruptions as another Arctic blast looms later this week. Tom.
Let's get more in terms of how we should be thinking about gas prices, and part of that is what's happening in terms of the weather in the US. Of course, US natural gas prices are dipping, traders taking profits, arguably. Continued freezing weather conditions, as Anna was saying, across much of the US had sent gas prices up as much as 35% on Monday. Similar price reversals in European gas prices. We're seeing a gain of just 2.5% so far on Dutch gas, on the pricing that I'm looking at. They're now paring back some of those losses. Let's bring in Bloomberg's Priscilla Azevedo-Rocha now for the details. Priscilla, how much of an impact are we seeing in terms of the gas markets as a result of this weather, and will it be sustained?
So gas markets are whipsawing this morning. We've seen a retreat from very high prices. In Europe, we are 40% up so far this year, which shows the volatility is back, and it shows how European global markets are now integrated. The storm is in the US. In Europe, the weather forecast is looking milder, and still we're seeing the impact of this because Europe now relies on the US for most of its LNG purchases. So when we see something happening as far as the US, now we have an impact here.
Yeah, tell us more about how quickly that has been evolving, Priscilla, because we used to talk about these as very separate markets. The sort of landlocked hub in the United States was where we took the price for US gas, and it didn't really have much of a bearing. As recently as a few years ago, that was the case. So this has been changing since Ukraine, I suppose.
Yes, that's right, Anna. That has been changing since Ukraine, and we've seen a complete transformation in the market. Europe is now importing gas from global markets via LNG, so it comes in ships and so on. In the US, when we have a situation when we have a freeze in places like Louisiana, Texas, where most of the export facilities are, we see those facilities closing or cooling off, and this gas is being destined to local markets rather than exports. We are starting to see some mild signs that Europe is getting less gas from the US on the back of this freeze. The data is coming through this morning, but yet the prices are retreating on the fact that most of the storm now is over. And we've seen that the consequences for Europe have not been as bad after all.
Are US data centers willing to give power back to the grid? And how does this whole process work?
Well, the US last night signed an order, and they have to do it. So for gas traders, that shows that even in the case of an emergency, there's backup supply that can be redirected for the biggest power source that is out there right now. Data centers consume a lot of energy, and they have backup systems, they have batteries, and so on.
So if I'm a data center and I have my own power supply, which a lot of these data centers are increasingly looking at, I am now required to use my power supply rather than to power my data center, but to power the grid. Is that?
Well, you're looking at hospitals, you're looking at emergency businesses, and so on. It's a state of emergency.
Yeah, but that's part of the. I suppose you have to think about that when you spend all that money on putting in that facility for your data center. Really interesting, Priscilla. Thank you very much, Priscilla Azevedo-Rocha, with the latest on the storms stateside. For more on the evolving global gas story, let us talk to Jonathan Schroer, who joins us now, sustainability and energy investment strategist over at UniCredit. Jonathan, really nice to have you with us. Listening there to Priscilla, clear just how much the trade in LNG has upended relationships within the global gas market. Just how much more reliant is Europe now on US gas than it was before the invasion of Ukraine?
Well, yeah, I mean, before the invasion of Ukraine, Europe was getting about 45% of its gas from Russia, I mean, almost all via pipeline. And as they have been cutting that back rather dramatically, they've had to basically replace the pipeline gas with LNG. So now Europe's getting about 40% of all of its gas from LNG. And the share that the United States has in all of that has been growing to most recently in 2025, 58%. So when you put that together, that accounts for about 25% of the gas that Europe gets. It gets from the United States these days.
Okay. And so, Jonathan, does that mean that Europe needs to start being concerned about changes in energy policy in the United States and what that might mean for the reliability of that supply? Could that trade relationship be used as a weapon?
Yes, I think absolutely. That's something that the Europeans are starting to consider more and more, especially after some of the negotiations that we've had in recent weeks or through the first year of the Trump administration. They've shown that they are willing to use geoeconomic weapons. And so whether natural gas could be the next one is a question that I think Europeans have to be asking right now.
Okay, so America's built all these trains. We're seeing those trains exporting a lot of gas onto the international markets. If Trump said you can't sell to Europe, Jonathan, who would they sell to?
Well, that's perhaps the good news for the Europeans, is that in contrast to pipelines, the way the system was really based before, with LNG, you do have a more liquid, you have a more fungible product. So they would need to sell to someone. It would be very complicated, I think, actually, for the United States to block those exports. And you certainly never would want to say never. But on the other hand, the ability, if they were to do that, it would really be harming a lot of their own private companies. In contrast to something like Gazprom, which was controlled by the Russian state, most of these contracts with LNG are done with private companies. And those are companies also that have been very supportive of the Trump administration. So it is a global market.
It is a global market, and there's also an awful lot of gas on that global market. So if you couldn't buy from the Americans, could you buy from the Qataris? We've already seen a rewiring of the global energy market. If the Trump administration were to do this and say we can't sell to Europe, we just see again just a rewiring. The tankers just kind of, they go out of America in a different way, they come out of Qatar and they go a different way. How quickly could we reorder?
Well, I think it would reorder relatively quickly because it is a liquid market. It's very different from the situation when you're relying on pipelines. So I can't imagine that those U.S. companies would simply want to sit on that gas. It would need to go somewhere, and so gas that enters one market makes gas available in other markets. So it is a less effective geoeconomic weapon than what we had before. So yeah, that's
Jonathan. If this is a material concern in the halls of power of Brussels, do they look at rewiring the feedstock and look at nuclear energy? I mean, should we be thinking that there's going to be a build out of additional nuclear energy? Could Germany change its rules around nuclear power, given that that is a European strength and expertise?
Well, certainly, I do think that what this does is it is a warning signal, and the Europeans need to start thinking about how do they gain energy autonomy. And really the two ways to do that would be either through nuclear power or through renewables. So they really need to invest in those two. In terms of the German situation, they've repeated over and over again that they're not interested in re-entering nuclear power. In this environment, it's probably a decision they would like to have back. So, but assuming that they're not going to go back on that decision, then what I would assume is that this should give new impetus to renewable investments as a way to cut down the exposure to fossil fuels, which, as the United States gains power as a fossil fuel exporter, you basically have a situation where the Europeans are having deja vu. They've exchanged dependence on one power to another.
But can the Europeans ever build out renewables without being reliant on China?
Well, that's right now, no. They need to invest in their own technologies. So at some point, yes, they do have China exposure for those investments. It really is a matter of balancing all of these priorities off of each other. And so, yes, they would need to buy Chinese technology for the time being. But yes, I think they also need to invest in their own technology. This is something that was cited in the Draghi report that was a special real strength of the European economy and innovation was green technology.
Jonathan, we've dealt with the sort of big picture geopolitics of all of this. In the here and now, America is contending with a storm. We've got really cold temperatures here in parts of Europe as well. I wonder what the storage situation looks like in Europe. And are you concerned that even not for sort of mercurial change of policy reasons, but just because America needs it, that gas doesn't flow quite so quickly from the US to Europe?
That's exactly the problem. Now, that would be a short-term issue. But if you, just because of storms, because if there were a policy threat, we've seen that the price of European benchmark gas, TTF, is up 40% since the start of the year. And that's largely weather-driven. There are some geopolitical factors in there with the turmoil in Iran and headlines, especially coming out of around the Davos. So these are factors that can drive short-term surges in the benchmark gas price. The question is really whether it's going to be enduring. If we're going to talk about the impact on long-term inflation expectations, it really needs to be more than just a short-term spike. There needs to be a structural reason why it would stay higher, and then we're talking about more severe, longer-term economic consequences.
Jonathan, thank you. Jonathan Schroer, Energy and Sustainability Investment Strategist at UniCredit, with those insights and context around the complexity of Europe's energy challenge still. Coming up, how high have temperatures soared at the Australia Open in Melbourne? The answer when we come back. This is Bloomberg.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open the restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. And because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes so strange idea, but it's good idea. So, example, Nobu Hotels idea come from him. He said, "Hey Nobu, so we have a lot of new restaurants coming in somebody's hotel." For him, doesn't make any sense. Then we start Nobu Hotel in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. Now, before the break, we asked you how high have temperatures soared at the Australia Open in Melbourne this week. The answer, 45.6 degrees Celsius, or 114 degrees Fahrenheit for our American friends. That's as the quarterfinals, of course, at the Grand Slam got underway today. Wow, tournament officials moved to implement cooling breaks and the possible suspension of play on outdoor courts. Temperature records tumbling across Australia's southeast over the past day due to the most prolonged heat wave since the 2009 bushfires. Interestingly, since 1950, every decade in Australia has been hotter than the decade previously. I think even Anna Edwards' killer serve would be challenged in 45 degrees, Anna.
Right, yes, there's absolutely nothing to say about my tennis game, non-existent as it is, Tom, thank you. Prime Minister Narendra Modi has been signing a trade deal with the European Union. So Ursula von der Leyen, Antonio Costa, both present in New Delhi for that. After nearly 2 decades of negotiations, the pact aims to lower tariffs on most consumer and industrial goods traded between India and EU members. Let's bring in Brendan Murray, who covers trade, of course, here at Bloomberg, and somebody we turn to at moments like this. Talk us through some of the terms of this trade deal. 20 years in the making, but strangely enough, they found it within themselves to get over the line this week.
Yeah, exactly. So this will lower tariffs on a lot of key traded goods between the two countries. It's phased in over 7 years, up to 2032. And so both sides are walking away saying, we get access to their market and they get access to ours. It's really an important symbolic deal as well, because the Indians have traditionally been very protectionist, very difficult to break in there. The U.S. has found this. A lot of other countries have run into resistance trying to open up India's huge consumer market. But now this is what they're saying. Of course, the catalyst here is the U.S.'s posture on protectionism, and all these countries now scrambling to try to figure out how they diversify away from the U.S. economy. Suddenly, these deals that have been decades in the making are starting to come together.
How's this going to go down with the Trump administration? Are we bracing for a Truth Social post from the president or even Scott Bessent attacking the EU? They have 50% tariffs on India because of Russia and Ukraine.
Yeah, exactly. The president in the U.S. definitely has his finger on the trigger of his social media account on trade lately. He went after Mark Carney in Canada for doing a deal with China, and so we'll have to see how President Trump assesses what they've got here. He very much looks at these as loyalty tests. If he sees the Europeans giving something to the Indians that they wouldn't give to the U.S., he could take it the wrong way and could fire off one of these posts.
Let's talk about Taco Korea. Market seems pretty immune to the whole Trump tariff trade now. You can see that with the Korean markets overnight. I'm just wondering if we need to put another word in the taco. Should it be Trump almost always chickens out? Because there's some great Bloomberg economics research on this.
Yeah, exactly. So the markets in South Korea, the shares of Hyundai, didn't really react to this news that President Trump was going to slap 25% tariffs on South Korean goods into the U.S. This is the fourth big sweeping tariff threat he's laid out there this year. We heard about Iran, Greenland, Canada, and now South Korea. The markets seem to be kind of shrugging all this off. The Bloomberg economics data basically shows that it's not that he always chickens out, it's that he only really follows through 27% of the time.
Almost.
27% of the time, almost.
T-A-A-C-O.
T-A-A-C-O.
Yeah, Trump almost always chickens out. Not always, almost always.
Guy Johnson's rebranded the acronym for us.
Yeah.
Brendan, thank you very much indeed. Brendan Murray with the update on the trade front. There's a lot of trade news today, of course, that we've been walking through. Here's what else to think about today. NVIDIA's Jensen Huang, the CEO, of course, of that company, is in China for Chinese New Year. He's going to be with the team. We'll see if there's any moments where he pops up in, I don't know, dim sum shops or Jiaozi hole-in-the-wall places to celebrate with his colleagues. EU-China, EU-India, in fact. That summit, of course, continues in Delhi. We've been crossing that for you, marking that for you. And aftermarket on the earnings front, it is LVMH, of course, the big one on the luxury front. It's a big week for luxury earnings. Logitech earnings as well on the tech front, and later Boeing earnings before the market, and aftermarket Texas Instrument earnings as well in the semiconductor space, Anna.
So that's the day ahead. Not a huge amount of, well, very little in terms of data. So what are we going to be watching for? Closely watching developments stateside, where there were worries about the possibility of a government shutdown, of course. Skylar Montgomery-Koning is with us. Weigh in then, Skylar, on shutdown risk, because this time yesterday, the Democrats were asking to carve out part of the bill they were going to sign by Friday, and the Republicans were saying, no, we're still there, aren't we? But some of the tone from the Trump administration about domestic policy seems to have softened a little bit.
Yeah, and I mean, I think it's quite interesting that the market reaction has been very muted. And I think it actually will be quite boring even if we do get a shutdown, because that's actually what we saw last time, right? So the risk with this is that it is a partial shutdown, and yes, you get an initial reaction, but because you'll have the BLS closed, you're not going to get inflation data. So we're kind of going back to this lost few months where you don't have any data, and so yields trade in a range, the dollar trades in a range because you don't know what the Fed's going to do on the back of it. Maybe it's potentially more dangerous now because we are closer to neutral.
Because the dollar's not been in a range.
Well, yes, because we've broken out a little bit more. But, you know, generally markets digest shutdowns quite well, actually.
Big auction in Japan tomorrow.
Yes. Yeah. I think the Japanese risk, I mean, I think the issue is the risk isn't going away, right? Particularly for the yen, you either need a fundamental shift, which we haven't gotten. So you either need an idea of where terminal rate is in Japan, maybe 125 or something that changes that calculus around what makes the yield attractive, or you need something to shift from the U.S. side in terms of a more aggressive easing cycle.
What's a bad auction?
I think it's if it's not covered well.
Okay.
Is the main thing that you're looking at. So if people aren't buying that auction, despite the fact that yields are quite elevated, and we've had this kind of pushback in terms of not wanting yields to go that high in Japan or not wanting volatility, which is what we saw at the end of last week, with particularly the U.S. involvement being the key factor there, is in that really changes the calculus.
I don't know if this is too much of a stretch, but if we have a badly received auction, the 40-year, does that give more upside for precious metals?
Yeah, I mean, I would believe that entirely in terms of we have all of these geopolitical risks. We have risks when it comes to markets from fiscal, and what that's shown up is an everything bid for precious metals because you don't know how to hedge it. You also know that we're in an environment where you have strong growth. Monetary and fiscal policy is easing, so you don't want to be out of risk assets entirely. So what you do is you hedge instead, and you know, because we have all these risks coming up over and over again, it's created this froth in the market.
The question, there's this great, I come back to the John Author speech this morning. The S&P in gold has gone nowhere since the GFC. Now, this is the debasement trade kind of writ large, and can gold go much higher? Like it's testing the extremes at the moment. Every other asset class is paling into insignificance once you start pricing everything in gold. How much further can this go? And is silver's choppiness yesterday an indication of what's to come?
I mean, yes, we're going to continue to get choppiness. That's what you get, especially because you get encouragement of speculative flows. And so as soon as you get speculative flows, you have to be a little bit more choppy. But I think you certainly can go higher because gold's been in these really big cycles triggered by central bank buying and selling. And so if you look back to like the 70s and 80s, there were loads of central bank buying. That meant you got this kind of parabolic move higher that was massive, and then in the 90s you sold again. And so we're back to that structural bid, and central banks like China are building back to your average level that developed markets have from a historic perspective, but EMs don't. And so they need to get there, and that's why you get that continued bid regardless of the price.
Skylar, thank you very much indeed. Bloomberg Skylar, Montgomery Coney. There was some really interesting reporting over the weekend as well about economists in Germany putting pressure on the government to move their gold reserves from the Fed, from the New York Fed, back to Germany.
All the ways that this pressure is on the US is building. It's getting into football. We haven't got time to do justice to that story, but I saw that was well read on the Bloomberg.
The campaign to boycott.
Yes, talk of
boycott the World Cup,
suggesting boycotting the World Cup. But
we'll Sepp Blatter.
See if that gains any momentum.
Of all people.
Meanwhile, gold and silver still higher. Silver up by 7.5%, as we've been discussing. On the GMM screen, does not even appear in green. That's how run-of-the-mill that particular move is right now. It's in grey.
We're going to give you a heads up in terms of who else we're going to be speaking to as well in the next few hours. Martin Kochak, the Austrian central bank governor. That's at 10:10 a.m. UK time. That is it for the opening trade. The Pulse is up next. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility. There's still room to maneuver.
Reduce the opportunities.
That allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
India and the European Union have agreed a free trade agreement after nearly 2 decades of negotiations, with both sides wanting to reduce the impact of Washington's tariffs. Now, the Goldman Sachs chief executive warns of a slower trajectory for talent growth this year, despite having an optimistic view on global markets. Plus, China's Anta buys $1.8 billion stake in German sportswear brand Puma from France's billionaire Pinault family. So there is quite a lot going on. We'll have a good insider look at what all these trade deals mean for future growth. The other thing we're watching out for is, of course, everything that's going on in tech, but also a luxury. Now, global stocks pressing towards fresh record highs, with technology shares seem to be leading that advance. Earnings season moves into its busiest phase. Investors now looking to earnings to support this 3-year bull run that has broadened in recent months. Big tech driving much of the earlier gains, and you can see S&P futures gaining some 0.2%. The big story is also dollar-yen at 154.73, and then gold. Look at gold; it's above 5,000. Let's take a look at the European markets map. A little bit more shy. We're 1 hour into the trading session. The FTSE showing some small gains. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, India and the EU have agreed on a historic free trade pact after nearly 2 decades of negotiations. EU leaders are in New Delhi to mark the occasion, which they have hailed as a significant agreement.
We delivered the mother of all deals. We're creating a market of 2 billion people, and this is the tale of 2 giants. And by combining these strengths, we reduce strategic dependencies at a time when trade is increasingly weaponized.
Well, Bloomberg's chief Europe correspondent Oliver Crook now joins us. Ollie, what do we know about the contents of the agreement?
Well, you heard it there from Ursula von der Leyen, the mother of all deals, and the EU really trying to take a victory lap about this in terms of how much market access this grants European companies, because, of course, India is notoriously one of the nations with very, very, very elevated trade barriers, and this goes some distance in reducing them. So if we look at the actual numbers of what this will hopefully deliver, according to the EU, it will eliminate or reduce tariffs on 96.6% of EU goods exported to India. The EU, in turn, will eliminate or reduce tariffs on 99.5%. We should say that that figure is a little bit misleading because it is certainly going to reduce some of them and remove some of them. But again, when you're reducing barriers from 150%, that does not necessarily eliminate them. The EU claims that it's going to double EU good exports to India by 2032. And I'll just go through a sort of snapshot of some of the things this targets for the Europeans. So car tariffs are at about 110% at their highest level. Those can go as low as 10%. They're going to abolish tariffs on car parts. Machineries at 44%, chemicals at 22%, pharma at 11%. Those will be mostly eliminated. We also are very concerned and concentrating on the farmers and, of course, agriculture. The average tariffs on agriculture going into India are over 36%. Those will come down. Wine, something for France there, 150% down to 75%, eventually 20%. Olive oil, something for Italy, down from 45% to 0% over time. That being said, of course, one of the big concerns for the European farmers is that their own sort of produce and their own products are protected within Europe, and there are provisions for that within this agreement. For example, beef, chicken, rice, sugar are all excluded from this trade agreement, and of course all this sort of health and safety standards for food products will also have to be maintained from the European level. So again, the idea with many of these tariffs, they will not go into effect on day one. They will go into effect over a progressive period of time, sometimes 5 years, sometimes 10 years. This still needs to clear the hurdle of the European Council, European Parliament, and some other sort of legal amendments. But again, this is for the Europeans a major step forward, and again, a major signal to the President of the United States that basically multilateralism is not dead, and if you cannot trade with the United States, you're going to have to go and trade elsewhere.
Ollie, thanks so much. Oliver Crook there, Bloomberg's Chief Europe Correspondent. Now, in just a moment, we'll be speaking to Janet Henry, Global Chief Economist at HSBC. But first, let's bring in Brendan Murray, who heads all of our Bloomberg trade coverage. Brendan, I mean, when you look at the deal, how significant is it? Is this likely to provoke the wrath of President Trump?
Yeah, obviously, and Ali laid out the economics of it, the 2 billion people, and bringing the tariffs down from very high, triple-digit levels. The two sides will take a win on all of that, but the geopolitical, the sort of optics of this are going to be interesting to follow as the days progress here. Mm-hmm. President Trump has lashed out at the Prime Minister of Canada for doing a deal with China. He, has a sort of loyalty test for countries that are going around doing deals with other economies, and so it will be interesting. And of course, he has his own deal pending with India that's kind of stalled. They put it together in a couple months. It's sort of a 5-pager. It's not exactly as comprehensive as the FTA that the Europeans and the Indians have put together. So the backlash from the White House here, you can bet that the U.S. is going to want exactly the same terms that the Europeans got on this deal. So there's going to be a lot to sort through in the fine print, and how that will go over with a U.S. president that doesn't take too kindly these days to other countries going around, and as they say, diversifying. To him, that's a disloyalty move.
Meanwhile, the U.S. president has also threatened 25% levies on goods imported from South Korea. So they're weaponizing still these tariffs.
Yeah, exactly. This is another one of those threats that probably won't get carried out. The president has done this a couple times when he sees trade deals stalled in the legislative process in other countries. That would be a pretty drastic move to put those tariffs on Korea. So we'll see how that plays out. Markets kind of ignored it, so markets see it as a lot of talk and no action. So, and of course, Bloomberg Economics has a new analysis out today that says basically of the 49 tariff threats that the president has laid out since he was elected for a second term, he really only has followed through on 27% of those.
Yeah, it's a great piece, actually, by Bloomberg Economics that we'll be putting out also on social media. Brendan, thank you. As always, Brendan Murray, head of Bloomberg's global trade coverage. Now, let's discuss all of this, these trade moves and the economy with Janet Henry, global chief economist at HSBC. Janet, so good to see you. I mean, look, the global economy just seems a little bit uninspiring. Like there's nothing bad, but there's nothing great either. Is that a good way of qualifying it?
Yeah, I think that's a very
CFA level 6.
Good morning. And I think that's a very fair overlay. The fact is there is a lot to be relatively positive about the global growth outlook. We've got fiscal stimulus. We've at least had a government reopening. Hopefully it won't shut down, or at least partially shut down at the end of January. But we've still got unpredictable policies being announced. And also when we're constantly getting these headlines on a daily basis, and they are in some ways good news, 2 decades that this trade deal between India and the EU has been under negotiation, and it is progress that they've come to some kind of agreement. But actually, at the moment, it's still quite small in the general scheme of things. Less than 1% of EU exports go to India, but it's quite long term. This is going to happen over 5 years, double it over 5 years. That goes beyond the current presidential term in the US. But the signalling is there, but markets are obviously focused on the here and now. So much going on. What's happening to growth? Still pretty solid. Yeah. What's happening to earnings? Still pretty solid.
But trade, these bigger trade deals, are they positive for the global economy going forward, even if you have these almost daily, battles with the U.S. administration on weaponizing tariffs?
I think it is something of a jigsaw puzzle. We know that what we now have, relative to what we had just a year ago, was much more friction in world trade, because the effective tariff, depending on how you measure it, on the US is currently of the order of between about 12-13%, something like that. So friction is always bad for world trade. You don't get the same advantages, competitive advantages coming through. But actually, the fact that India, for instance, is undertaking domestic reforms, these extraordinarily high tariffs, they're still going to be high, but they're going to be lower than they were, should be good news for the India growth story. And a big part of the India story over the last year has been, they've suffered from a fall, the payback on exports to the US, but they've had lower inflation, they've been able to cut interest rates, they've had more of a consumer story. So you've got different stories around the world in different countries, depending on how exposed they are to the tariffs and to the world trade cycle and their product mix that comes through. But overall, more friction in trade is not good. Trade deals around the edges, depending on what retaliatory action follows, could offset some of that good news.
Yeah, and actually on these trade frictions, let's listen to Secretary Besant talking about Mark Carney.
I was in the Oval with the president today. He spoke to Prime Minister Carney, who was very aggressively walking back some of the unfortunate remarks he made at Davos. And Sean, I'm not sure what the Prime Minister was thinking.
We talk about the New World Order. Can you, it's one step forward, maybe 2 steps backwards. It's unclear how it ends up. What does it mean for economic growth of blocks?
Of blocks? Well, the fact is, there are certain growth pillars globally at the moment, and we know what they are.
AI.
AI, the various elements of AI, the AI-related capital, asset price gains, the AI capital spending story, the AI trade-related story, and then the other one is, of course, the fiscal stimulus. We tend to focus on the big, beautiful bill in the US across the board, the Japanese stimulus, the German stimulus, as well as the next generation EU and Europe. But there are a lot of countries in the world that are supporting the global growth story through the fiscal stimulus. So there's a vulnerability there because obviously we've got high and rising government debt and markets may demand a bit more risk premium. We've had a reminder of that quite recently. And the AI story, we still think it's a transformational story, but will there at some point be overinvestment? Probably, but when?
Jen, even before talking about an AI bubble, do we have a full understanding of how AI changes our economies? I mean, you could see massive job losses or retraining that I guess we're not quite to grips with yet.
No, you're absolutely right. We're not quite to grips with. I mean, there's been no shortage of research that's been written on the topic. There's been an array of academic research in recent years, and broadly they agree that the peak period of the productivity impact will be in the early 2030s. estimates range from, the negligible to the implausibly high. But also we know that it's been gradual and then kind of exponential. ChatGPT was 2023, DeepSeek was 2025. We could be on the cusp of something much more significant. And obviously this is why a lot of people are focused on the fact that you're seeing the rise in unemployment rate, particularly in the last few years, amongst new graduates, whereas all workers, it's been more stable, partly because of the immigration story and partly because some jobs are not as easily replaceable. But I don't think it's all of the graduate unemployment story. We've seen it in India, we've seen it in China, we've seen it in the US, we've seen it in the UK. There has obviously been lower demand for entry-level jobs, and some of it is probably AI. I think we are seeing some impact, but it's not all of the productivity story at the moment.
Janet, when you look at the K-shaped recovery in the US, I mean, this is not, it's okay, but it's not what people want, right? If you want to bring everyone along. Do we stay in this K-shaped economy? And actually, what kind of role do you see inflation playing this year?
Well, I think the K-shaped story, we know that people that earn over $100,000 a year have been driving a lot of the consumer story in the US, and particularly the over 55s that hold nearly 80% of the wealth in the equity market and such like. I think there is some scope for some convergence actually within that, because we think about some of the tax cuts in the big beautiful bill, the exemption of taxation on tips and overtime. There could be a degree of convergence that comes through there. But broadly speaking, in terms of the wealth gains, yes, they continue to accrue to the higher earners and to the older parts of the population. I still think that will be an important part of the story.
And on inflation, again, there's been a lot of talk on whether inflation, we could see a rise in inflation even before these extra trade threats from the U.S. because of an overlag of what we saw last year. But at the same time, we could be importing deflation from China.
Yes, there's not much impact so far from deflation in China. We've even seen that in Europe. Now, the euro's been strong. They've had a surge in imports from China, but goods prices have not fallen in the Eurozone. There's a lot going on there with margins and such like. In the US, what you have seen is that goods price were falling by about 1.5–2% per year. They're now rising by over 1.5%. Some of that is the tariff-related story. Remember, the China tariffs came through nearly a year ago now. It was in February last year. But we are seeing some other price pressures globally. Obviously, we've got bad weather at the moment. Gas prices suddenly. Memory chip prices, DRAM prices have been pushing up. We've seen it in service sector PMIs. So even if inflation doesn't explode higher, some people are obviously arguing it's a lagged impact of tariffs that's going to push inflation to 3–4%. We don't have that, but we don't have it coming down. We have quite sticky inflation, particularly as a lot of consumer spending is in services, which make up most of the consumer basket.
So what does that mean for the Fed? Political pressures notwithstanding.
Political pressures notwithstanding. Well, the Fed is firmly on hold, as I think we are well aware. The market is ascribing, very, very low probability of any change. So we know that the press conference will be all about Fed independence in particular. And as much as the journalists will be desperate for some kind of guidance, it will be back to watching the data. I think the policy is neutral. The risks to inflation are still to the upside. We'd have it not even below 2.5% by the end of the year. And actually, with the strong growth, helped by the fiscal stimulus in particular, the global economy, the US economy holding up pretty well, so the unemployment rate not spiking. So they're back to watching the data and obviously waiting to see what happens when the new Fed chair arrives.
Janet, thank you so much, as ever, for joining us. Janet Henry there, Global Chief Economist at HSBC. Now, President Trump has signaled he'll make changes to his administration's deportation crackdown. Trump's border enforcer in Minnesota, Greg Bovino, is leaving following a public outcry over the killing of 2 U.S. citizens by federal agents. Well, let's bring in our Bloomberg Deputy Managing Editor, Balash Pants. Balash, what led to this dramatic pivot from President Trump?
It is a dramatic pivot, Francine, and it's hard to see it as anything else than de-escalation or an attempt to de-escalate, which just goes to show how much the political environment around immigration has changed in the U.S. This used to be one of the go-to issues for President Trump, one of the issues that he pulled the strongest on, and now we see that changing. A lot of Americans have been horrified by some of the distressing images that have come out of Minneapolis, and there's been a lot of pushback from even within his own party about the handling of this situation by the DHS, by ICE, by all the law enforcement officers on the ground, and it's also given Democrats an opening to increase their leverage on him, which they exercise through this threat of a shutdown.
So, where does this leave his immigration strategy and the risk of a government shutdown?
In terms of the immigration strategy, that's a great question. It doesn't seem like they want to completely dismantle this huge immigration operation. In terms of the shutdown, it doesn't seem like there's any firm movement yet. The Democrats have certain asks. They want things like body cameras for ICE and Border Patrol agents and warrant requirements, and the Republicans are not budging on that right now. They have until the end of the week to reach a compromise, but that doesn't seem likely right now. So the chances of a shutdown keep increasing every moment.
Thank you so much, Balázs. Bloomberg Deputy Managing Editor Balázs Pence. Now, coming up, how can Europe remain competitive with global powers? We'll discuss geopolitics with the Managing Director of Institut Montaigne. That's coming up next, and this is Bloomberg.
up-to-the-minute global news whenever and wherever it happens. I'm Hazla Amin in Davos, Switzerland, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
In an interview with Bloomberg, the British Prime Minister, Keir Starmer, says the UK will not be forced to choose between the US and China. Well, the Prime Minister is looking to reinvigorate strained business ties with China when he travels to Beijing this week, one of several leaders pushing for trade and investments with China. So what about the rest of Europe? Marie-Pierre de Baillancourt, Managing Director at Institut Montaigne, now joins us. Marie-Pierre, thank you so much for joining us. So, I mean, it's a very simple and the most difficult question of 2026 is how can Europe remain competitive, and do they really have to choose between China and the US, or can they stay competitive alone?
Well, this is a question on everybody's lips, and honestly, I don't think this is a good question.
The situation is changing, of course. We are in a moment of recomposition. There's this Gramsci says about the old world is dying, the new world is yet to come, and in the meantime, the monsters are prospering. And the fact that we have to choose between two hegemonic powers is not a good posture. Because we could not act as one, and we are still being herbivores in the world of meat eaters. And so we are asked, with whom am I going to add to ally? Either it's going to be China or it's going to be the US, instead of calling for our own destiny. So I think this is a wrong question, and it shows how people are checking at and how they are losing nerves and vision. So,
Marie-Pierre, with all due respect, what are you optimistic about for Europe? I mean, there's a lot of great things, but even when I was in Davos, the Europeans were at pains in saying things of the past. Well, we were a great power. Like, what are you optimistic today when you look at Europe?
Well, first of all, the scale matters. And when we look at Europe, we have a scale that really matters, with a lot of market and a lot of possibilities. We have innovation, we have educated people, we have good infrastructure, we have investment, we have creativity. All of this are, for me, good omen of what Europe could do if it was able to really leverage its scale. The problem today is that we have developed, of course, specific tools in order to be more powerful, and that we are very shy about using them. For example, we can work against economic warfare, and we have packages such as EU anti-coercion instrument to restrict market access, to increase tariff trades, to reconsider intellectual property rights, etc., etc. But the system and the mechanism in which we are able to use those instruments is very deficient. For example, it requires two votes. Yes.
Yeah, I mean, it just feels like we have a lot of stuff that the U.S. has, but they do it better at a bigger scale. Do we need to reset the relationship between Europe and the U.S., and how do you do that?
Okay. So I think we shall not reset this because the U.S. is our primary ally, and it's still a country with whom we have built prosperity and security for the past 70 years. And I think it's better to be strong with our former allies because we know each other, we know how to behave together, and we shall, once again, keep our nerves on what is happening. And I do believe that the American will respect Europe if we set up the condition of mutual respect. So I think we should not reset US-Europe relationship. But in the method and in the way we do it, we should reassess our tools, our levers, and the way to get the respect we deserve. We shall not be on the menu. This is Mark Carney saying in Davos, if you're not around the table, you are on the menu. So how do we organize ourselves not to be on the menu? And this is why I was mentioning a lot of instruments that Europe has and a lot of benefits that Europe can capitalize on in order to set a more respectful alliance with the US.
Marie-Pierre, very quickly, how worried are you about the rise of populism in Europe?
I'm not so worried because there's, of course, all the populist campaigns that are very anti-European. But once populist or national populist arrives in power, they are very pragmatic. For example, Mrs. Meloni's Italy was a very good example of a very populist campaign, but a very pragmatic approach once in power. Same thing with Hungary, same things with Poland. The reality call is enforcing upon political speeches in first instances. So I'm not so worried because at the end of the day, we all know that we need Europe. We all know that we need that scale. We all know that we cannot resist bullying country without playing the market scale and the complementarity of our resources and our capabilities. whether it is in defense, in economy, in health, etc.
Marie-Pierre, thank you so much for joining us. Marie-Pierre de Baillancourt, Managing Director at Institut Montaigne. Coming up, traders on alert for intervention in the yen. We'll discuss the latest in global FX markets with James Lord from Morgan Stanley. That's coming up next, and this is Bloomberg.
For us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Open, for example, and Movia. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth for StartupWave by empowering our customers across all our segments?
This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. India and the European Union have agreed a free trade agreement after nearly 2 decades of negotiations, with both sides wanting to reduce the impact of Washington's tariffs. The Goldman Sachs chief executive warns of a slower trajectory for talent growth this year, despite having an optimistic view on global markets. Plus, China's Anta buys a $1.8 billion stake in German sportswear brand Puma from France's billionaire Pinault family. Now, gold is holding above $5,000, with the weak U.S. dollar helping to extend a blistering rally fueled by geopolitical risks and investors' flight for sovereign bonds and currencies. Let's bring in James Lord, head of emerging markets FX strategy at Morgan Stanley. James, so good to speak to you. We were saying, like, FX is cool. I always thought FX was cool, but you're definitely busier than before.
Yeah, I mean, I don't know if FX markets being cool means that FX strategists are cool again, but let's see. We certainly get a little bit more attention from clients. Yeah.
Everyone's cool in this space. So, you know, it does seem that dollar traders seem to be paying the most on record to bet that it continues falling, right, on the sell-off. Is this because of U.S. political turmoil? Is it because of other things in the world? And what happens with dollar this year?
Yeah, so there's been a lot happening in FX markets. Clearly, the dollar's had a pretty weak start to the year, and I think there are a range of different catalysts, really, but a lot of them have been fairly unconventional. I mean, traditionally, when people look at FX markets, they focus very much on the macroeconomic data, interest rate differentials, what does it mean for the Fed, and that generally has pushed the dollar around. This year is an echo, really, of what happened in the first half of last year, where you had a lot of unconventional catalysts and a lot of policy uncertainty driving the dollar weaker. And I think you've seen that in a number of instances so far this year. So at the beginning of the year, there was a lot of focus on the Fed and the case against Chair Powell. And then, we moved on to the Greenland issue. And now we're moving into FX intervention, which is something that happens in FX markets. But in the way that this particular one with Japan was conducted, it looks like the U.S. Treasury was behind a lot of the rate checking. And so, that's unusual. And so you're sort of moving into a world where, let's call them unconventional catalysts, have been driving the dollar weaker. Hasn't really been much focus on the data.
But, James, I mean, overall, when we talk about intervention, it kind of startles people, right? It says things that have to be so bad that countries and finance and treasuries want to get involved. I mean, do you look at it that way? Does it just point to much more anxiousness out there?
Well, I think, in general, you see a lot of intervention in FX markets in EM, and that's always been about trying to restore external balance sheets, trying to maintain exchange rate competitiveness. And, the US has started to show a little bit more of an interventionist streak in cases where it sees it's in its interest to act. And we saw that with Argentina. And now, we know that this administration has always talked about the weakness of the Japanese yen and other Asian currencies and the strength of the dollar. And there is also the angle where if you see instability in other countries' markets, like JGB yields, that could spill over back into treasuries. And so the US clearly has taken a slightly different track relative to previous administrations and wanting to get a little bit more involved.
So what happens with yen? I mean, if there's lack of intervention follow-through, could it really undermine some of the recent yen gains?
So I do think the strength of the yen has in part been driven by this expectation that the intervention is going to be coordinated. It's not just going to be the Ministry of Finance in Japan, but also the US Treasury potentially acting. And I think that is now built into the market price. And I think if you don't see follow through, then the markets will start to question whether or not it's going to happen. And so if that is the case, you could see dollar yen start to edge back higher. But ultimately, we do think that dollar yen will be heading lower. We have a target of 151. We're sort of positioned that way. And whether it comes through intervention or more Fed rate cuts later in the year, we think ultimately the dollar will weaken.
I mean, if you look at some of the other, what's gold right now? Is it a play, to move away from U.S. asset, or is it also hedge against other things?
I think it's a hedge against uncertainty in general, not necessarily something specific to the US. But we live in a world where there are not very many high quality AAA rated safe haven assets. You look at what we see in the JGB market, what you saw happen with gilt in previous times. There's a lot of angst about fiscal sustainability in many DM markets, maybe slightly less actually in EM these days. But I think if you're a central bank reserve manager and you're looking around the world for where can I store my reserves in a safe jurisdiction in high quality rated paper, the number of places where that tick that box is arguably falling. So I think gold is benefiting from that.
Are there any other pairings that you look at? I know there's conversation about Swiss franc, but anything in the emerging market space that we should pay closer attention to?
Whether emerging markets are now the new safe havens?
They could be.
Well,
parts of it could be.
I mean, they're certainly benefiting from the weakness of the dollar. I mean, the dollar weakness is a huge tailwind for EM. And I do think it sort of calls into question some of the historical valuation metrics that people have used for EM, like rate spreads to DM bond markets, for example. If those bond markets now have a little bit more term premium in them, maybe it's totally reasonable to expect emerging market spreads to come in. And I think, when you see the fundamentals in EM on the fiscal side, and though you see many places that are either stable or improving, just look at South Africa, and monetary policy is pretty credible in EM now. Like I think you see a number of central banks where you have very conservative monetary policy, and set against the issues that we see in the US. I think EM looks to be in good shape.
So I like your note looking ahead to 2026, because you basically highlight 8 financing themes that some of them are a little bit quirkier than others, but it kind of really sets everything in a very, very interesting perspective. What do you expect? I mean, January is quite seasonal, so are you expecting a lot more volatility for this month? We're almost to the end of January, even if it feels like it's been 50 days at least.
You mean on issuance trends specifically?
Issuance.
Yeah, I mean, it's been a great start to the year for issuance. I mean, you've seen many EMs coming to the market. But I think what will be really interesting for me to watch as an FX strategist this year is what will be the split between dollar financing and other currencies. Last year, we saw actually a bit of a shift in towards euro-denominated sovereign issuance from emerging markets. So, clearly, as the euro was strengthening, more demand from investors for euro paper, and we saw people tapping that. And I think if we see that again this year with EMs and anyone that's issuing foreign currency denominated debt, more growth in the euro market, it will start to paint a picture again about this kind of diversification away from the dollar story, which is clearly something everyone's quite focused on.
So how would you construct your ideal portfolio if you look at diversification in FX?
Well, I think you've got to say long EM carry.
Right.
Like that's clear. There has been a little bit of uncertainty, I think, about just how much you want to be short the DXY or some of the or be long the low yielders within emerging markets. But I actually think that now we could see, like last year was a clear outperformance from like high yielders within CEMEA and Latin America. Asia lagged. I think this year we could see a little bit of a catch-up in some of the Asian currencies that lagged last year. The yen strengthening can potentially be a catalyst, but we also see some catalysts for Korean won to start to strengthen. We can see, for example, local authorities in Korea are trying to rebalance their asset portfolio. The NPS news we got yesterday, and so I think there is some scope for some of the Asian markets to catch up a bit.
James, thanks so much for joining us. James Lord, their head emerging markets FX strategy at Morgan Stanley. Now, the Goldman Sachs chief executive says he sees a slower trajectory for talent growth this year, even as he made an upbeat call on global markets as a deregulatory tone boosts optimism. Bloomberg's Stephen Engel spoke exclusively to David Solomon and asked him, with a number of big-ticket IPOs like SpaceX on the way, what he was expecting in 2026.
The environment's very constructive, for our business, particularly our banking and markets business. We highlighted in our fourth quarter earnings, our year-end earnings, that our backlog was again at another, significantly high level, and it moved quite positively. I think it's going to be a very constructive year for M&A activity. Could be one of the best years, if not the best year ever for M&A activity. I think CEOs feel unleashed to really invest, drive growth in their businesses. It's a better regulatory environment. They're asking big questions about what the art of the possible is. That's very different from where we were 4 years ago, where the answer to any question was no. Now the answer to any question is yes, maybe, and so CEOs are looking forward. That's a very, very constructive environment for our business.
The stock market here regaining the IPO crown last year, and essentially on the back of all these IPOs in the tech sector. A lot of them, really, the big gainers have been the infrastructure and the not necessarily the applications or the large language models. They've been essentially the hardware players, the chips and the like. Do you see a sustainability of this pipeline from China of AI?
If the environment continues to be constructive the way it is now, yes, I think it'll be a very good year for IPOs over here too. I think there's a lot of pent-up capital markets activity because we really, coming out of the pandemic, we kind of shut down capital markets for a period of time. You got a more conducive regulatory environment. You've got a good detente in U.S.-China with a constructive setup in 2024 for more constructive dialogue. I think all that's conducive for more IPO activity here in Hong Kong. And I think you're going to see more IPO activity in the U.S. and in Europe. So it's a pretty constructive setup. Now, of course, if there was a big exogenous event, it could slow it down. But I don't think that's the base case, but that doesn't mean we won't have some speed bumps along the way this year.
I think Wall Street shed about 10,600 jobs in combined, the big banks, last year. Does 2026 look like that as well? I think that was the most since 2016.
I don't have a view on Wall Street overall and its headcount. You know, I understand our headcount plan.
Yeah.
And, you know, all we've said publicly is it's probably a little bit more constrained in 26 because we see opportunities for efficiency and we're trying to deploy those. But ultimately, we've also said those efficiency opportunities give us more of an opportunity to invest in parts of our business where we can scale growth. And some of that growth scales with additional headcount. You know, I'd point to our wealth management business, which scales with people all over the world.
Goldman Sachs Chief Executive David Solomon speaking to us exclusively. Now, Puma shares are surging after the news that China's biggest athletic apparel seller, Antisports, plans to buy a 29% stake in the German brand. Well, joining us now for more is Bloomberg opinion columnist Andrea Felsted. So, Andrea, thank you so much for joining us. Why has Antisports pursued this deal now, and how could this benefit Puma?
Well, it was clearly available. Some equity was still clearly available from the the controlling family. The shares had really slumped, so it was clear that Anta would have to pay a big premium, which it has. Now, the really interesting thing is Anta clearly wants this because the big trend in China is outdoor hiking, running, the whole Gorp core aesthetic. But Puma doesn't have a strong position in this. Puma's strength is really like fashion sneakers. And that's a bit of the market that's really under pressure from a shift to dressing up again and, moving into proper shoes and more tailored outfits. Puma's really in not a great position.
So switching to the luxury sector, what should we look out for in LVMH earnings later today?
It's really how China's doing. China's stabilized. It's not been getting any worse, but it's not really getting much better. So we need to get a sense of, perhaps it is improving. Similarly with the US has been very strong, correlated with equity markets, but obviously we've got quite a lot going on out there. Is that going to put any brakes on the US? And if we cast our minds back to a year ago in the wake of the US election, that seemed to unleash a bit of a spending boom for the luxury makers. It all came to a halt in April with tariffs, but they're also up against, tough comparisons with a year ago.
So staying with LVMH, what's happening with cognac producers and brands like Hennessy?
Well, they're having a very, very tough time. And the key to watch with LVMH, I doubt anything will be announced tonight, but the key to watch with LVMH is there some kind of corporate activity on its drinks division? Does it buy in the minorities and spin it out? Does Diageo buy the shareholding that it doesn't own in Moët Hennessy? So they're all the questions to ask relating to LVMH drinks business.
Andrea, thank you so much. Bloomberg Opinions, Andrea Felsted. Now, coming up, we'll be joined by the Chief Executive of IQM Computing, Quantum Computing. We'll discuss the tech landscape as American rivals IonQ buys its own chip foundry. That's next, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
He
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Now, the U.S. quantum computing firm IonQ has agreed to buy chipmaker SkyWater in a deal worth around $1.8 billion. The agreement gives IonQ access to a large U.S.-based chip foundry, allowing it to speed up development of its own technology and boosting its appeal to U.S. customers in sensitive sectors like defense. Now, it raises the question of Europe's role in the field of quantum computing. With us now is Jan Goods, Chief Executive of Finland's IQM Quantum Computers. Jan, thank you so much for joining us. Look, it's an exciting time. So, first of all, what makes your approach to quantum computing very different from competitors in the US and China?
So with IQM, we actually use a very vertically integrated approach to build quantum computers. This means we run our own chip factory, we run our own assembly line, we run our own data centers, and with this, we bring the most performant quantum computers out there to big data centers to build ecosystems around the world.
I mean, do you see quantum as critical to European sovereignty? Would you ever sell to a US competitor?
Well, quantum is a critical technology because of its application also in security, defense, and many other industries. But it is a global business, both on the supply chain side and on the market side. We have been selling to the US. One of the biggest supercomputing center, Oak Ridge in the US, is running on an IQM machine.
So how close are we really to top practical, fault-tolerant, quantum computers?
It is a journey, and we are on the way. We can build computers that work today, but they still make errors, as you rightfully point out. And the use cases will not all come at once, but they will be unlocked time after time. Like in AI, we see this with the GPUs. First, they were designed for graphics, then maybe for Bitcoin mining. During COVID, a lot of molecular simulations, now LLM training. And it's similar in quantum. Use case after use case will be unlocked. Maybe in the next few years, we will see the first commercial use cases.
So what are the biggest technical hurdles, actually, that IQM is facing right now?
So we know the algorithms that we want to run. So the theory is clear and the proof of concepts are clear. What we now need to do is to scale the technology. This means we need to build more powerful processors. And similar like any other big chip or computer company, we are taping out a new processor generation every year, which is better than the previous one. And this means we are kind of executing this roadmap. And this is also why then we will see the commercial use cases being unlocked with each generation.
Jan, I mean, you're in a fascinating space. When will quantum computers, I guess, move from research labs to real-world industrial use?
Yeah, so what we see now on the industry side is that companies are getting ready. They have seen in AI how fast the trains can move, and they don't want to miss the quantum train. So they see it coming already, and they're building up their teams, they're building up know-how, and they're running use cases. But the point is, with the current quantum computers, they're not yet outperforming big supercomputing centers. Nice. But you can simulate molecules, you can do optimization of train schedules, financial portfolio, all this, you can do it, but it's not yet big enough from a problem size perspective.
How many computers will IQM deliver this year?
So we are actually the company that globally has sold most quantum computers as on-premise devices. Yeah. And last year, we have been delivering 7 systems, and we think that this year we will do more than that.
And so how do you see, I mean, what do you see the first commercial use going to be? Is that difficult to tell right now?
No, probably it's going to be in the field of chemical simulations. So quantum, what it's ultimately good at is simulating other quantum systems. Mm-hmm. And the molecule, ultimately, these are individual atoms that come together to do something, and this is a quantum system. So we think that this will be the first use cases, and you find them in material science, you find them in pharma, you find them in battery development, for example. So this is what we think will be the first use cases.
Jan, what do you make of this IonQ deal?
Well, as a company, we have been vertically integrated since day one. We are running our own chip factory, so we knew how important it is, and we have already integrated it. And I think this move shows that we have been on the right track already for many, many years. And we are running a chip factory here in Europe, and you pointed out the sovereignty aspect. So I think it is important to de-risk the supply chains and make sure we have them on different areas in this world.
What does it mean for EU competitors? So it basically, you say that it reinforces your business model, but do they become a bigger rival?
I don't know if they become a bigger rival. We don't think it's a winner-takes-it-all game anyway. So computing, typically you see a few dominant players, and our ambition clearly is to be one of them. And I think if you look where our products are and where technology is, we are clearly there leading. But then as I said, it is a race, it is a marathon actually, it's not a sprint. And we are all kind of working towards the same goal, which is to make quantum computing commercially useful. And this is why we are betting a lot on an ecosystem building approach. We are building the industry. We are developing together with our customers, and we think in this way, actually, we will tap into a huge market that is completely undefined as of today.
Does IQM need to buy its own chip foundry?
No, I said we are running our own chip foundry.
You already have it, actually,
so
but there's nothing to add. Right.
So we don't need this. We are completely independent from this perspective.
So how much are you planning to spend on chips?
So we have just announced last year that we are expanding our chip factory. The good thing is that in our case, we don't need these very small feature sizes that you typically have in semiconductors. And this is why the investments are relatively modest. So in our case, in total, we have been spending maybe 70 million in our own chip factory, which is way less than these big foundries that you see out there.
So there's no add-ons that you need, basically. You're self-sufficient, and from what you have, you can grow.
That's correct. And so the chip factory is, of course, one thing. What we also have is the assembly line. So in the end, we build full-stack computers, which contain many components. And our factory is at the moment designed to build 30 computers a year. We don't think there's any other company which comes to this capacity.
So, Jan, I mean, when you started this, how did you think about, because it's quite unusual to say, I want the whole process under what I have. Was it because of rivals? Was it because you understood the complexities better if it was under you?
Yeah, it was more that. So we have been doing, as a founding team, research in quantum for many, many years on the university side. And it was clear that if you operate in these university clean rooms, you will never reach the quality and also the quantity of chips that you need if you want to industrialize it. And this is why very early on in the beginning of the company, we made this decision that we will have our own chip factory. And now looking back, I do think it was the right decision.
Yeah, what are you most excited about? Are you thinking of IPOing?
Well, our goal is to build a sustainable business model, and I think we are on a very good path there. As I said, we have been selling more quantum computers than anyone else. In addition, we are running a cloud business through our own data center, but also with AWS as a partner. So we have a very solid path towards profitability. And of course, on the financing side, we will do what's best for the company. And this might be another private raise. This might be an alternative path. We are exploring all possibilities. We have just closed a funding round last year. And from this perspective, we are very well capitalized, and now we are using this position of strength to plan the next steps.
Jan, so great to speak to you. Thank you so much for joining us. Jan Goetzler, the Chief Executive of IQM Quantum Computers. Now, NVIDIA's Chief Executive Officer, Jensen Huang, is in China, hoping to reopen a crucial market for his company's AI chips. Joining us now is Matt Bloxham, technology analyst at Bloomberg Intelligence. Matt, good morning. So what more do we know about Huang's visit and how significant this is?
Yes, I think this is his first visit of the year, and I think last year he was there 3 times. Obviously, China, a relatively small part of the business now, but potentially important going forward. And so he's really there to talk to local potential buyers of their chips as the Chinese government makes preparations to allow local companies to start orders again. Obviously, the focus now is on the NVIDIA H200 chip, which is the one generation behind their leading-edge Blackwell chip. So it's a much more sophisticated chip than what was previously allowed by NVIDIA to sell into the China market by the US, which was the H20. So I think he's there to kind of facilitate both in terms of customer demand and the kind of Chinese authorities getting comfortable with allowing those sales to go ahead.
Alibaba-backed Moonshot AI has released its flagship model. What does it offer, and is it going to be a fierce competitor to some of China's biggest AI players, Matt?
Yeah, so there's quite a flurry of new models coming out, and this is all in anticipation of an expected release by DeepSeek that we all know very well. So this is the Kimi 2.5 model, which is a more sophisticated model, allows kind of complex reasoning, allows some coding capabilities too, and very agentic focused. And also we've also seen a release of Alibaba's main QN product too. Now that Kimi product, based on initial reaction, seems to be a big step forward, but still, I think, lagging behind the likes of OpenAI and Gemini's latest version. So it's a step forward, but I think probably it's going to be put in the shadows again by whatever DeepSeek's coming up with in the next week or two.
Yeah, well, are you excited about that, Matt? I know it was a year ago that, the world found out about DeepSeek, but it also sent shivers around everyone's spine.
Yeah, it did, and we're certainly excited just to kind of see how far the kind of leading-edge Chinese technology has come. I think, in those last 12 months, we've seen a bit of a divergence between the kind of Chinese-dominated environment and the kind of US-dominated environment. So I think this is more now about not so much whether DeepSeek can displace the likes of Gemini or OpenAI, for example, in the US, but I think it's more a measure of how advanced the Chinese technology capability is, and they're reducing reliance on Western technology to push forward both their commercial and military ambitions.
Thank you, Matt. As ever, Matt Bloxham, technology analyst at Bloomberg Intelligence. Up next, it's Bloomberg Brief. They'll have a full roundup of what we can expect from the Fed, gold, and some of the market moves. This is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The aim here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading in cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need, because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Trade threat. President Trump vows a 25% tariff on South Korean goods. This as other nations seek trade partnership to diversify away from the United States. Shifting tone. Trump's border czar set to meet with Minneapolis Mayor Jacob Frey under mounting pressure to change course on his immigration crackdown. And earnings ramp as a global stock marching towards fresh record highs continue. All right, let's look at these futures. They are pointed higher once again today. We did see some gains yesterday. We were off our highs at the end of the session. But year to date, we're still up plenty. We're up 1.5% on the S&P 500 and more than that, 1.8% on the NASDAQ 100. So all calm on the futures front right here as we continue with the earnings ramp. All calm in the bond market as well. If we look there, yields continue to stay around the 481 on the 30-year yield, 422 on the 10-year yield, just a basis point higher, and 358.32. Sticking to this level, some kind of signal to the Federal Reserve starting its meeting that, you know, all is calm right here. Keep things here for right now. Let's take a look at some of the other volatile assets that were moving yesterday. So we're still below 154 on the yen. Looks like nothing too much has changed there overnight. Gold still at $5,100 an ounce. That ramp continues. And natural gas futures have calmed ever so slightly. That front month contract rolls off tomorrow, Wednesday. So there's a little bit of illiquidity, but also it is just down from the really elevated levels that we had seen above 7. Do expect that that might ramp up again, though, because we're seeing another winter storm possibly coming through, at least in the United States. All right, with that volatility to watch for the next hour, let's get to some individual movers now. For that, we go to London and Chloe Melly.
Good morning, Bonnie. Insurers are in the red today as the U.S. proposed roughly flat rates for Medicare insurers next year. And this came as a big disappointment to investors and also as a big surprise, given it was thought that the current administration would be much more favorable for private Medicare plans than the previous ones. And therefore, we're seeing a big downward moves across that sector this morning, and Humana in particular down more than 12%. Moving on to Micron, which is in the green after saying that it will invest $24 billion in Singapore over the next decade, and this is to expand its manufacturing capabilities to ease the memory chip shortage, which of course is in really high demand because of the AI boom, and therefore we are up more than 4% in pre-market trading for Micron. And finally, Salesforce is also in the green after being awarded a $5.6 billion contract from the US Army. Will provide some of these cloud technologies to the Department of War, and we are seeing the company up about 2% this morning on the back of that contract.
Chloe, thank you so much. That is Chloe Melly there in London. She'll be back later in the hour. And also coming up this hour, we're going to be speaking to Austrian National Bank Governor Martin Kocher. And later this hour, Katrina Dudley of Franklin Templeton joins as stocks look for a second straight day of gains. But first, 2 decades in the making, the European Union and India have reached a trade deal. European Commission President Ursula von der Leyen is calling it, quote, the mother of all deals. She added on a post on X that the two countries have created a free trade zone of 2 billion people, with both sides set to benefit. Joining us now from Brussels is Bloomberg's Oliver Crook. So, Oliver, this trade deal, 2 decades in the making, but it might not even have been necessary if there wasn't a whole trade realignment taking place in the first place. What's in this deal?
Yeah, absolutely, Vonnie. I mean, conspicuously, it also comes a couple of weeks after another trade deal that the EU negotiated with Latin America, which had been in the works for 25 years. So, yeah, it's no sort of accident these things are all happening now, you know, after a year of sort of Trump tariff roller coasters. But the India trade deal, this is something that Ursula von der Leyen and the European Union really want to take a victory lap on, because India is notoriously one of the nations with the highest trade barriers across the world. And what the EU is now saying is that their companies will have preferential access to that market. So I'll give you just the top line of kind of what we can expect here. They say that it will eliminate or reduce tariffs on 96.6% of EU goods that are exported to India. The EU will also eliminate in return or reduce tariffs on 99.5% of goods that go into the EU. Now, we should say that those figures are a little bit misleading, because reducing tariffs from 150% to, say, 75% is not necessarily eliminating them, though it is certainly a sort of large step forward for the European Union. And the European Union say they would like to double their trade, double their exports to India over the next 5 years. And just to give you a flavor of some of the things that are contained here, there's really things for every European country. So, for example, for the Germans, car tariffs will go from 110%. That'll come down to as low as 10%. You get wine, something for France, from 150% down to 75%, eventually down to 20%. Olive oil for Italy down from 45% to 0%. Now, a couple of notes on all of that. This is still a deal that needs to go through the European Council. It still needs to go through European Parliament and some legal opinions. And this is something also that with these tariffs, it's not just going to go into into effect on day one. This will be tiered over a number of different years, sometimes 5 years, sometimes 10 years. But the broad strokes here, Vonnie, is that in this sort of global realignment that we've seen from Donald Trump, we're starting to see what the consequence of that is, and that is pushing people together, people that would not necessarily, as you alluded to earlier, necessarily have this trading relationship were it not for Donald Trump.
Speaking of which, the UK Prime Minister Keir Starmer is visiting Beijing this week. What are his intentions?
Yeah, absolutely. And I think this is sort of very, very interesting. It comes in the week of Mark Carney striking that sort of trade deal, not necessarily a free trade agreement with China, which obviously got a lot of scrutiny from the Trump administration, a lot of criticism. You see the UK doing something similar. We spoke to Keir Starmer overnight about kind of what his intentions are there. And he was basically saying that it's a false choice to say that you have to choose between the United States and between the United States and China. But I think as we see with Canada, as we see with the United Kingdom, as we see with the EU, who's choosing to trade with Latin America and India, this is all about sort of diversifying these markets, because at the end of the day, once the United States has sort of proved itself to be unreliable, that's really only something you can do once. And the moment that that begins, all of these countries are going to look to diversify away from the United States. For the Europeans, they're also looking to diversify away from China, and they're going to try to find all of these different markets. For what I think will be very interesting, Vonnie, is that as this sort of continues to go forward, what is the Trump reaction going to be, as if the Trump administration feels that they're losing their sway on these trading partners because eventually they're diversifying away from the U.S., that could create quite a combustible situation if the American president feels that he's losing control and tries to reassert it as time goes on.
Well, so far it's not stopping President Trump issuing the threats. The latest one on South Korea, another 25%, because it hasn't been quick enough to ratify the trade deal and to get moving on investment, right, Ollie?
Yeah, that's right. I mean, so they were going from about 15%, which is the agreement that they've got signed, and he's very upset that basically the parliament has not yet ratified it. So he's now saying, okay, we're going to kick up tariffs to 25%. Now, if you look at the session for the Kospi here, I've got it here in front of me. I mean, that sent shares in Korea down basically 1%, but that session closes up almost 3% on the day. So I think that it's fair to say that for the markets, they're sort of dismissing this threat. We actually crunched the numbers, our trade team over at Bloomberg, and looked at only 27% of all the tariff threats that Trump has began since the beginning of 2024, when he came into office, or when he was elected. Only 27% of those threats have actually gone into effect.
Yeah, and yet they don't seem to be losing their potency. Oliver, thank you so much. Chief European Correspondent Oliver Crook. In Minneapolis, U.S. Border Patrol Commander Greg Bovino is set to be leaving the city over the recent killing of 2 U.S. citizens by federal agents. This as President Trump signals a strategy shift in his deportation drive. Joining us now from Washington is Jonathan Tamari of Bloomberg Government. So, you could ask what's prompting this shift, Jonathan. It should be the obvious, but maybe it isn't. Maybe it's sagging poll numbers. Maybe it's just the difficulty in continuing in Minneapolis with, his commanders there perhaps overstepping.
Yeah, I think it's a combination of all these things. I think these 2 shootings that we've seen have driven down what were already bad poll numbers for the president, and immigration has traditionally been one of the strongest points for President Trump for Republicans. It's one of the first things he talked about when he entered politics, and it's been really powering to him. And when you look at the polls now, there's significant disapproval of his handling of immigration, significant disapproval of Immigrations and Customs Enforcement, which is kind of the face of this crackdown, although not the only agency involved. And I think even people in the White House realized that the handling of this second shooting and many of the false statements that were made over the weekend is just disastrous, if not morally, certainly politically. And we're seeing a change in tone, which is a very rare thing for Trump to do.
Obviously, the human element is paramount, but beyond that, there is a government funding bill. I mean, does that take away questions of whether we'll have a partial government shutdown now or not, if indeed, something changes, at least in the tone, if not in the actual execution with ICE?
I think it's still going to be a very big problem. Democrats are really furious about the way this has been handled, and there's a number of Republicans who are also very concerned about the way the investigation is unfolding, and they're calling for a truly independent investigation, as opposed to what we've seen so far, where the Department of Homeland Security is essentially investigating itself. So I think Democrats are going to make some demands about conduct of these immigration raids, for the rules of engagement, the rules around how ICE conducts itself. We'll see senators are coming back to town this evening, so that'll be a better indicator, but I think Democrats are going to draw a hard line on this one after what we've seen.
All right, and border czar Tom Homan in Minnesota, Homeland Security Secretary Kristi Noem's rival, of course. Jonathan, thank you so much. Jonathan Tamari of Bloomberg Government in Washington. Now to other top stories trending on the terminal this morning. U.S. airlines are still paring back flights as a deep freeze hampers the restart of operations at some major hubs. Delta says services at its hubs in Boston and JFK are affected. American Airlines has axed about 500 mainline and regional services. Airlines bracing for further disruptions as another Arctic blast looms later this week. Goldman Sachs CEO David Solomon says he sees a slower trajectory for talent growth this year, even as he makes an upbeat call on global markets. He spoke with Bloomberg TV's Stephen Engel from the Goldman Sachs Global Macro Conference in Hong Kong.
It's probably a little bit more constrained in 26 because we see opportunities for efficiency, and we're trying to deploy those. But ultimately, we've also said those efficiency opportunities give us more of an opportunity to invest in parts of our business where we can scale growth, and some of that growth scales with additional headcount. You know, I'd point to our wealth management business, which scales with people all over the world.
And Puma shares are surging after news that China's biggest athletic apparel seller, Anta Sports, plans to buy a 29% stake in the German brand. The €1.5 billion deal will make Anta Sports the largest Puma shareholder. Coming up, an exclusive interview with ECB Governing Council member Martin Kocher. That's next. This is Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bloomberg Brief. I'm Bonnie Quinn in New York. Let's get right now to our exclusive interview with ECB Governing Council member Martin Kocher. Here's Bloomberg Daybreak Europe anchor Lizzie Burden. Lizzie.
Bonnie, thank you so much. Well, it's great to speak to the Governor of the Austrian National Bank ahead of the ECB decision next week. Governor, thank you for stopping by in London.
Thanks for having me.
You and your colleagues at the ECB have talked a lot about how you're in a good place, but the geopolitical backdrop doesn't seem to be in a good place anymore. Of course, you had President Trump's tariff threats over Greenland. He walked them back, of course, but has all of that changed your economic outlook?
So we've received our last projection in a large exercise in December, and lots of things happened in terms of trade conflicts, in terms of other geopolitical developments since December. But we knew already in December that the uncertainty levels that we are seeing geoeconomically, geopolitically are high. So it's important to have full optionality. The monetary policy has to be able to react to any kind of risks manifesting themselves quickly and decisively. So it means having this full optionality is an asset, and we agreed that we want to have this full optionality in any direction.
But we were talking about how it feels like a year has happened in a month already. Do you think that household and business confidence can withstand this lingering trade uncertainty? Will it dent confidence at all?
What we've seen in December, and I think it hasn't changed, is that the sentiment indicators within the euro area are slightly biased upwards. We see modest growth projections. We see inflation projections in line with our 2% target. So that means, and that's the reason why it has been called being in a good place, but it means, of course, not that we want to be there for all time. It means conditionally on what we are seeing, conditionally on the risk environment, this is where we want to be, but we want to be able to react quickly to anything that happens.
Well, yeah, the Eurozone economy was pretty resilient in 2025. Do you not perhaps fear that the tariff impact is in the mail? It's coming at some stage in 2026?
You're absolutely right. So some of the experts predicted that there will be strong impacts on the euro economy in 2025 already. You have to take into account that some of the tariff threats have not been implemented. Some of the rules have been relaxed a bit, but uncertainty is still very high, and we've seen that last week with additional tariff threats. So yes, indeed, we have to be careful. There might be some repercussions. There might be effects on the development of the European economy coming from the very unstable international environment, especially with regard to the trade environment. But we have seen today the trade agreement being concluded between India and the European Union. So there's a clear strategy to diversify to make sure to be more resilient as a region.
Does that move the needle for growth for the Eurozone economy?
We'll see what's going to happen. But we are at a projection where we above 1% for the euro economy. It is modest growth, as I said. Hopefully, those risks that we have identified as being tilted towards the upwards, the German stimulus, the savings rate that is very high and that could reduce more quickly than expected, that those chances for economic growth are manifest themselves during the next couple of months, and then we might see even larger growth. But of course, the downside risks that we're discussing all the time, they are quite substantial, and we need a more certain outlook. We need more calm to make sure that the international economic development is better.
Well, yeah, Governor, when you look at inflation, the December print was actually shy of the ECB's target, and it's predicted to be slow again in the next reading. But then core inflation pretty stubborn. What for you explains that stickiness?
Difficult to say. We're looking at different things and monitoring, especially the wage development that matters a lot. We're monitoring import prices. There's a couple of aspects that influence prices directly or indirectly at the moment. But as long as we are having or seeing modest diversions from the targets, I think we are fine. But if there is, in any direction, a clearer movement and we get more and more data in that direction, then it's important to monitor it closely and be able to respond.
Well, yeah, I know you tend towards the hawkish persuasion, but if that undershooting became persistent, at what point would it start worrying you?
So the outlook that we have, there was the large projection exercise in December, is that we are returning to 2% and slightly undershoot this year, next year 1.8, 1.9. So this is really, really modest. I think what you need is a strong undershooting or overshooting and a narrative, an explanation why this is the case. At the moment, these are just small diversions from our targets.
How does the dollar weakness and euro strength on the flip side feed into your outlook for inflation?
So the exchange rate, of course, matters. Europe is a quite open continent. That means exchange rates matter, especially when it comes to the trading relationships, but also when it comes, of course, to prices, competitiveness. So all these things matter. It's a bit unclear what it means, but we've seen some appreciation of the euro over the last year. That was actually quite substantial when you compare it over the last year. On the other hand, if you compare it to the span of exchange rates we have experienced since the creation of the euro, then we are very much in the middle. So what we have to monitor now in the next couple of weeks and months is whether this appreciation continues and whether it perhaps even accelerates. But we don't see that at the moment. But of course, events that have been happening over the last couple of days, they contribute to some concern. So clearly a thing to monitor in my view.
But one thing that could change, will be changing, is who's sitting in the chair at the Fed. Of course, Jerome Powell set to be replaced. If that person is particularly dovish, I wonder where it leaves the ECB, because one of your colleagues at the Bank of England, Megan Green, has been saying that the impact of loosening financial conditions would outweigh the stronger currency impact on imports. So if you do have a dovish Fed, would that accelerate ECB rate hikes?
First of all, I think it's important to talk about central bank independence, and it's clear that it is in the interest of the public to have an independent central bank that is able to respond quickly. And when we talk about the exact policy stance that the central bank has, then of course we're not reacting to the policy stance itself, but of course a completely different policy stance by the Fed might have spillover effects onto the inflation outlook in the euro area. And it's a bit unclear what we could expect if that is the case. There is of course first of all effects on the economic development, but there's also potential effects if the stance is too loose on financial stability perhaps. So lots of things, but it's a bit early I think to judge. We'll see when and who is appointed.
So in the nearer term, markets are still pricing a small risk that the ECB cuts this year, but further out they're looking at a bigger pricing of hikes down the line. Governor, does that tally with your view?
At the moment, we're in a good place. That is exactly what has been surprising to a certain extent, given the uncertain environment that we have been seeing quite some stable inflation outlooks. That's the main target. But I think the risks that we are seeing in both directions make it unlikely that over a very long time we are able to stay where we are. That means full optionality is important, as I said, but it's difficult to say if it happens that we stay at the current rate and the economic development remains calm and some of the risks reduce. Then I'm happy, but we have to be prepared for any changes.
How much worse would things have to get for you to back another cut?
I mean, if clearly the inflation outlook is going down, so if we are going clearly below 1.8%, which is the current outlook, then we have to discuss a cut. But it's equally likely, I would say, so the risks are more balanced now that we see a development where inflation outlooks are adjusted upwards, and then we have to think of a hike. But at the moment, we are doing fine.
Well, some of your colleagues have gone as far as to discount the idea of a hike this year. Would you go as far as that?
We have agreed on a meeting-by-meeting approach and a data-dependent approach, and that means you have to be open to anything that is necessary at that moment, but being very well prepared. So I would not exclude anything at the moment.
A message I'm sure that President Lagarde will be echoing in Frankfurt next week. Great to have you with us in London. Thank you so much.
Thanks a lot.
Bonnie, that was Martin Kocher, the Governor of the Austrian National Bank and member of the ECB's Governing Council. Thank you.
Fantastic interview, Lizzie. Thank you very much. That's Bloomberg's Lizzie Burden there. Time now for your front page news. First up on the Washington Post, House Democrats set to open an investigation into Homeland Security Secretary Kristi Noem as early as next week, laying the groundwork for a push to impeach her. The Post says Democrats plan to conduct their investigation without Republicans. Now, they do concede they're unlikely to remove Noem in the short term, but believe launching an investigation will signal they are taking deaths in Minnesota seriously. Next up, the Wall Street Journal is reporting tax filing season will produce a cash surge around $100 billion, higher than last year's $329 billion total. And it's engineered to boost Republicans' sagging approval ahead of the midterms. The Journal says the plan has little guarantee of success. Republicans need, for example, the IRS to issue refunds efficiently, and they need to make voters know why they're getting more money. And finally, the Financial Times reporting the administration has indicated to Ukraine that U.S. security guarantees are contingent on Kyiv first agreeing a peace deal. That deal would likely involve ceding the Donbass to Russia. The FT says Ukrainian and European officials describe the U.S. stance as an attempt to strong-arm Kyiv into making painful territorial concessions. All right, let's take a look at these markets because futures are pointed higher, particularly Nasdaq 100 futures after a day of gains yesterday. Now, the Bloomberg Dollar Index is bouncing around its lows. We have Paul Donovan of UBS saying today as trade stagnates and maybe even starts retreating, reserve status for the US dollar actually becomes less important. And we might see international investors flouting out of dollar assets in any kind of dramatic exit. But we might see them less interested in accumulating additional dollar holdings. So that's a little nuance there to the debasement trade. The 10-year yield not really going anywhere, just up a basis point to 4.22. We have silver bouncing around the place. It gave up some of its gains, and now it's gaining again. It's very close to its high above 114 an ounce, right now about 112 an ounce, and gold still about $5,100. Coming up, tech leaders will catch up with Katrina Dudley of Franklin Templeton on the AI investment trade.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Trade threats. President Trump vowing a 25% tariff on South Korean goods this time. This as other nations seek trade partnership to diversify away from the United States. Shifting tone, Trump's borders are set to meet with Minneapolis Mayor Jacob Frey under mounting pressure to change course on the immigration crackdown. And earnings ramp up as global stocks march towards fresh records. And to that end, we can see it happening once again today with futures pointed higher and gaining ground now. Look at those NASDAQ 100 futures just rolling away with things. Now, Russell 2000 futures pointing to gains, but that index, while it outperformed the others at the beginning of the year, taking a little bit of a back seat, particularly to international stocks in the last few sessions. Bonds-wise, we're not seeing too much movement. Of course, the big event is the FOMC decision tomorrow. So, of course, bonds will be waiting on anything that comes out of that. Not that we're expecting any kind of a cut or anything like that, but that two-year yield firmly stuck to 358.53. And then in terms of other assets on the move, well, obviously that volatility continues. The yen did top 154 earlier, but it's back below that now, so it's stabilizing to an extent. Gold also stabilizing, albeit at highs. We're very close to 5,100. And natural gas futures, that front month contract coming off, it rolls off tomorrow, so there's a little bit of illiquidity there. And as we know, the second and third month contracts were not priced to that extent whatsoever. Silver is an interesting one today. It's bouncing around the place. It had come off its highs, getting right back to those highs now, and as we know, it's well above $100 an ounce. Let's get to some individual movers to watch now in the early hours. Here's Chloe Melly.
Good morning, Bonnie. Insurers are in the red this morning after the U.S. proposed roughly flat rates for Medicare insurers in 2027. So this came as a big surprise given that the current administration was expected to be much more favorable to that insurance industry, and also came as quite a big disappointment for investors given that some analysts had expected an increase of as high as 6%. And so we are seeing that weakness, that disappointment reflected in those shares in that sector today. Moving on to Micron, which is in the green this morning, after saying it will invest $24 billion in Singapore over the next decade. It is expanding its manufacturing capabilities so that it can actually answer to this global memory chip shortage, which is, of course, due to the AI boom. And so we are up this morning on the back of this Singapore investment. And finally, Salesforce is also in the green after being awarded a $5.6 billion contract with the U.S. Army. And the U.S. Army will be using those cloud technologies from Salesforce to simplify the contracting process and reduce procurement timelines as well. And so this big contract is being rewarded by the market this morning, and we are up a little bit over 2% for Salesforce in pre-market trading this morning.
Indeed, we are. Chloe, thank you so much. That is Chloe Melly there in London. Global stocks climbing towards fresh records. U.S. stocks looking at 2 straight days of gains now after back-to-back weekly losses for the S&P 500. Joining us now is Katrina Dudley, Senior Investment Strategist at Franklin Templeton. Thrilled to have you in studio. Katrina, just a broad question first. What is the health of this market? And if we look at, say, the rotation trade, which was peeking its head up at the beginning of the year, or the debasement trade, which was also there, where do they stand?
So if I take a look at the health of the market, what we look at is breadth, and we've talked about breadth, and I think last year we were wrong. We thought that the market would broaden out, and really you saw a lot of the returns to the Mag 7, and that concentration level is at such high levels that we now think we're set up for this broadening trade. If we look across all of the GIC sectors and we look at our 2-year forward earnings forecast, it's positive across all of those sectors. And as you know, it's earnings growth that drives market. It's not so much valuations. That is actually what happened in 2025. It was the growth in earnings that resulted in the growth in the market. And we think with this broad-based growth in earnings across all of the markets, we're going to continue to see this positive narrative.
Well, so earnings season so far, and it's just starting, has been very nice, right? On top of a pretty decent earnings season last time around as well. So I'm curious, what then causes the market to be fragile? Because at the end of last year, suddenly everybody was worried about a bubble, and we saw days of massive volatility.
Yeah, so you had last year, and even the years prior, was kind of this recession, no recession, and where are we going? And I think that narrative is really tampered down. So people are very much in the camp of this is stable, it's good economic growth. We've got a lot of good trends that are supporting the market. We have the AI, CapEx, we have AI productivity. They're some of the things which I think are going to be such drivers of earnings and such drivers of the market going forward. So I do think we have a positive narrative. It is no longer just there's no recession camp, which is going to support the market, which is that prior positive narrative. Now I think you have some really tangible drivers of earnings going forward.
Right, so you think breadth is going to be a lot more healthy,
Yes.
but you obviously think that the AI trade isn't done yet, and I want to point to something that you've written. You say, across our equity and fixed income teams, AI-driven investment is consistently viewed as a durable support to activity, both US and global, even as non-AI pockets of the economy soften. How does that then overlay on your investment thesis that you just outlined?
So whereabouts are we looking at AI? AI is now actually impacting multiple sectors. I look at us in financial services. We're a traditional regulated business, but we're actually benefiting from the productivity side of AI. So that AI trade is actually migrating into various parts of the economy, but it's not migrating everywhere. And it's also not migrating evenly. There are some early adopters and some people that are really latching onto AI. They're forward thinking, and they're the companies that we think you should really be investing in, not just within your traditional technology sector, but across a broader spectrum. But there are a number of companies that are going to be left behind, the AI doubters, and that's where you've got to be very wary.
Well, so how do you identify them? Is it something to do with the, neo-cloud nature of certain companies? Is it to do with how companies just generally in the economy are using AI? What would be the criteria?
So what it is actually just on the boots, feet on the ground research, talking to companies and listening and hearing where they are in terms of their AI journey. So you can look, and it's not necessarily the places you would automatically go to, but you could look for a materials company, for example, investing in AI to help them with the leaching process and getting more productivity out of the same amount of rock that they're taking out of the ground. And that would be an indicator of a company that's forward on the AI curve. That's probably an investment that they've been talking about for a number of years, because these AI investments are they're long-tailed investment, and you're now starting to see that productivity starting to come through. But it is really understanding companies, understanding what they're doing and how it flows through their business model and where they're going to see those benefits.
Now, you mentioned that this is paramount to your fixed income teams as well. How are they using the AI narrative to decide what they invest in? Is it AI debt that they're investing in, or just debt of companies that use it well?
It's more about the growth narrative, and that's where we're seeing it show up in the fixed income teams, because from a fixed income perspective, this idea of how sustainable is economic growth. We've come off a year of very strong growth. We're looking at our growth forecast. We're at 2.5 for 2026. I think the market's around 2.3, so we're slightly above. So we're still continuing to be optimistic on a growth front, and that's where this AI and the CapEx narrative shows up in our fixed income teams.
Katrina, is there any possibility that we'll get some kind of a surprise tomorrow? And I don't even just mean a cut or something. I mean maybe something that's in the commentary or,
No, we really think that if I look at the betting markets, and that's, just one data point that we do, the market's not expecting anything tomorrow. So the market is expecting more of the same. We've been in the camp that, it's going to be higher for longer. So even if we have cuts in 2026, we think that they're going to come in the latter part of the year. We're not optimistic about them coming in this forward part. So I think you're going to see these higher rates stick around. And I think the Fed narrative is going to be supportive of that. If you look at wage growth, wage growth pressure has started to abate. So that's another positive for them, because that lessens that unemployment narrative. We were concerned that, we would start to see some job losses attributable to things such as AI. And I think that, with that lower wage pressure, you're likely to see the Fed just sit still here.
You talked in your note about, internationally and growth holding up and productivity and so on. Where are you looking in particular internationally this year? I mean, we saw a huge run up in China, for example. We also have the yen story and the idea that maybe even a huge investment pension fund might be thinking about pulling out of US Treasuries, which indicates that there's going to be plenty going on between the US and Japan in the next year.
Yeah, I think you mentioned it. I mean, the US has been a place where a lot of investment, incremental investment dollars have gone, and I think that we're probably closer to the end of that allocation. But that doesn't mean that the US goes down. It just means we're not a source of incremental fund flows. If I look at Japan, it has been a long story there in terms of improvements in the market, improvement in the market structure, a lot of change in how companies are thinking about returning capital to shareholders. So I think that you continue to have that long tail of the story, and then you have those incremental things such as a shift of more money into equities within that domestic market. The other parts is you're talking about emerging markets. It's an area where our EM teams are seeing a ton of opportunities. China is obviously a big part, but there are a lot of other emerging markets that we just think are well set up if we look at how they've handled COVID. And I know we're 6 years after COVID, but still, what they did during that situation, I think, has set a number of these economies up well.
Such as?
Opportunities. I think, you can really... If I wanted to pick one, I would probably go somewhere like India, where you've got a lot of good market structure and a lot of opportunities there.
All right, Katrina, so much content. Thank you so much for visiting us in the studio. That is Katrina Dudley of Franklin Templeton. Now to a Bloomberg exclusive. Goldman Sachs CEO David Solomon seeing a slower trajectory for talent growth this year. He spoke with Bloomberg's Stephen Engel at the Goldman Sachs Global Macro Conference in Hong Kong. Take a listen.
The environment's very constructive, for our business, particularly our banking and markets business. We highlighted in our fourth quarter earnings, our year-end earnings, that our backlog was again at another, significantly high level, and it moved quite positively. I think it's going to be a very constructive year for M&A activity. Could be one of the best years, if not the best year ever, for M&A activity. I think CEOs feel unleashed to really invest, drive growth in their businesses. It's a better regulatory environment. They're asking big questions about what the art of the possible is. That's very different from where we were 4 years ago, where the answer to any question was no. Now the answer to any question is yes, maybe, and so CEOs are looking forward. That's a very, very constructive environment for our business.
The stock market here regaining the IPO crown last year, and essentially on the back of all these IPOs in the tech sector. A lot of them, really, the big gainers have been the infrastructure and the not necessarily the applications or the large language models. They've been essentially the hardware players, the chips and the like. Do you see a sustainability of this pipeline from China of AI?
If the environment continues to be constructive the way it is now, yes, I think it'll be a very good year for IPOs over here too. I think there's a lot of pent-up capital markets activity because we really, coming out of the pandemic, we kind of shut down capital markets for a period of time. You got a more conducive regulatory environment. You've got a good detente in U.S.-China with a constructive setup in 2024 for more constructive dialogue. I think all that's conducive for more IPO activity here in Hong Kong. And I think you're going to see more IPO activity in the U.S. and in Europe. So it's a pretty constructive setup. Now, of course, if there was a big exogenous event, it could slow it down. But I don't think that's the base case. But that doesn't mean we won't have some speed bumps along the way this year.
I think Wall Street shed about 10,600 jobs in combined, the big banks, last year. Does 2026 look like that as well? I think that was the most since 2016.
I don't have a view on Wall Street overall and its headcount. I understand our headcount plan.
Yeah.
All we've said publicly is it's probably a little bit more constrained in 26 because we see opportunities for efficiency and we're trying to deploy those. But ultimately, we've also said those efficiency opportunities give us more of an opportunity to invest in parts of our business where we can scale growth. And some of that growth scales with additional headcount. I point to our wealth management business, which scales with people all over the world.
That was Goldman Sachs Chairman and CEO David Solomon speaking exclusively with Stephen Engel. Now to other top stories trending on the terminal this morning. PIMCO is standing by its conviction in Japan's 30-year government bonds despite last week's rout. Fears of fiscal excess by Prime Minister Sanae Takaichi's administration wiped out $41 billion from the bond market and triggered a sell-off elsewhere. Breitling's CEO expects the U.S. to cut tariffs on Swiss watches. The watch industry was jolted in July when President Trump imposed tariffs of as much as 39% on Swiss imports. That tariff was later cut to 15%. Breitling's CEO says the levy makes no sense given Swiss watchmakers do not compete with U.S. domestic production. And And the largest grid operator in the United States was granted authority to divert power meant for data centers to households, hospitals, and other customers. PJM, which serves more than 67 million people from Chicago to Virginia, sought federal approval to stave off the potential need to impose rolling blackouts. Coming up, a strategy shift. President Trump's border czar, Tom Homan, set to meet with the mayor of Minneapolis. More on that next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. U.S. Border Patrol Commander Greg Bovino is said to be leaving the city of Minneapolis over the recent killings of 2 U.S. citizens by federal agents. This as President Trump signals a strategy shift in his deportation drive. Joining us now from Washington is Jonathan Tamari of Bloomberg Government. Jonathan, pressure was ramping up. We even had CEOs in Minneapolis writing a letter to Trump saying, de-escalation should be the priority. Is that what prompted Trump to finally do this, or is it something a little bit more practical, like polling numbers?
I mean, it's probably a combination of these things. I mean, having these 2 shootings in such close proximity, and in this second instance, having members of his administration make some claims and statements that were just blatantly false about it, I think has turned a lot of public opinion against the president. I think even he and some of his advisors think that this is not going the way that they want it to go. Many voters are saying that it's not what they expected, even though they want border enforcement. They strongly disagree with the tactics that are playing out here. And you're even seeing some concerns from Senate Republicans. So I think all that combination is affecting the president and causing him to have to change tack, which is something he almost never does.
Tom Homan, borders are, in Minneapolis, has been sent there by President Trump. Obviously, Kristi Noem is, the person that's been in charge of this. Does she keep her job, Jonathan? She's obviously going to be testifying in front of many committees over the next several weeks, but does Trump keep her?
That is the big question right now, I think. That's what a lot of people in Washington are watching. Senators are certainly starting to zero in on her, calling her to come and testify, raising concerns about the way she presented the evidence that turned out to be not true immediately after this second shooting this weekend. So I think we're going to be watching. She's certainly, at a minimum, being kind of downplayed and replaced as the face of this operation by Tom Homan. Whether they go a step further, I think we'll find out in the coming weeks.
Now, we do have a fresh tariff threat today as well. Trump promising South Korea is going to raise tariffs on their goods by 25%. I mean, do we need to take this seriously given that recent threats haven't come to pass?
Well, I think you have to always take Trump seriously because sometimes he certainly does follow through on things that he says that people say, oh, he'll never go and do that, and then he actually does. People didn't think he was serious about trying to take Greenland, and clearly he showed that he was. But as you point out, our colleagues at Bloomberg have crunched numbers. Something like 27% of the tariffs he has threatened have actually been fully implemented. And even then, many of those have been scaled back eventually. So I think you do have to take it with a grain of salt, but know that there are times that Trump does push the button. It makes him a very unpredictable actor, which I think he likes, and many people on the other side of the table do not.
Yeah, you can't completely discount anything, right? Jonathan, thank you so much. Jonathan Samari of Bloomberg Government in Washington. On the East Coast, travelers bracing for further disruptions from another winter storm later this week, which airlines are still cutting back flights. Bloomberg's Benedict Camel joins us now for more. So we're in the middle of earnings season for airlines, but we have all these flight cuts. Benny, how are airlines coping?
Well, today looks a little bit better. We sort of had the peak of disruption yesterday with more than 6,000 cancelled flights. If you compare that to today, we're just north of 1,000 at this point, still quite a bit. The hotbed being still on the East Coast, so places like JFK, Boston, and DC and so on are impacted. It's less the snow at this point and more the freeze, so you have a lot of de-icing activity on the ground that's delaying operations and actually cancelling some flights. But it appears we are through the worst at this moment. We heard from Sean Duffy, the Transport Secretary, yesterday saying that he hopes things to be back to normal by tomorrow. So we'll see about that. There'll probably be some commentary today. We get earnings from American Airlines, we get earnings from JetBlue, and those are two of the airlines that were most impacted by this. Obviously, that won't feed into the earnings because that came after the numbers, the storm, but still, there'll probably be some commentary on how they dealt with the operations and what kind of lessons they learned.
Yeah, absolutely. And it was interesting to hear United Airlines talk about geopolitical disruptions hurting and their outlook for this year being that will happen more and more, right? Because United had a fantastic year in the end. They're taking delivery of more than 120 planes this year.
That's sort of been the theme of the earnings so far. If you look at airlines that have reported, Delta, United, Alaska, they all had very good numbers, but they probably also learned a lesson from last year where they went into the year feeling really good, and then things sort of fell apart rather quickly amid the tariffs and the first sort of geopolitical dislocations. So this year, they're going into 2026 with a more sort of cautious mind frame. They are aware of what's happening with Europe and the US and the dislocations there over Greenland that we just heard. So we might get similar commentary today from American.
And from Boeing as well. Benny, thank you so much. Benedict Camel, thank you. Coming up, we'll get you set up for your trading day with economic data on deck. This is Bloomberg.
the world's second-largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Now a look at what's ahead today. First up, earnings from Boeing, American Airlines, UPS, United Health just out, beating on the bottom line, and General Motors also coming out a little bit today. Don't miss our interview, by the way, with GM CEO Mary Barra at 7:30 a.m. Eastern. Plus, data-wise, we get consumer confidence from the Conference Board. That comes out at 10 a.m. Eastern. So once again, let's take a look at the macro environment. We have futures pointed higher as we ramp up earnings week. We have the dollar index sort of bouncing around its lows, so not a huge comeback in that story, but at least some stabilization, particularly with the yen. The U.S. 10-year yield at 4.22. We have the 2-year yield still at 3.58 as the FOMC begins its meeting. And once again, I just want to point to United Health earnings just out, beating on the bottom line. It's been a tough few sessions, though, for health insurers. That is it for Bloomberg Brief. Surveillance is next.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, you know, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content, and never the two shall meet. But there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction, might be using models to do so. You know, stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's really hard to have any kind of negativity on the U.S. market.
The setup here is that it's all about tech.
Expectations right now are much higher than they've been over the last 3 years.
Just meeting earnings is not enough.
Anything that looks like it's going to threaten that earnings picture is going to be problematic.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday within striking distance of all-time highs. Equity markets advancing, heading into the Fed's two-day meeting. As the explosive rally in precious metals takes another leg higher, President Trump is threatening to raise trade tariffs on South Korea. This time, the market isn't blinking.
So equities are just piling through, ignoring some of the noise. When you look at gold, potentially that debasement trade continues. But as we said last year, and that's continuing through this year, uncertainty is a feature, not a bug. The president is clearly annoyed that the South Korea legislature has not put through this deal. A lot of this has to do with the investment deal. Some of these companies are going to make investments into the United States. So he's coming out with a 25% threat. Does it mean we land here and end here? Potentially not. But the president is using trade and tariffs as a way to negotiate once again.
I'm always thinking what's new? What's new about all of this? And what's new in the last week or so is that trade partners are now looking elsewhere. The EU and India put in. We hear from the British Prime Minister Keir Starmer speaking to our colleagues over in London, who's not going to choose between China and the United States. And ultimately, that's a choice this administration wants these countries to make.
And it comes on the heels of Mark Carney, the Canadian Prime Minister, going over to Beijing, looking at potentially tightening some ties when it comes to the economic sphere. This is what Keir Starmer had to say. I'm often invited to simply choose between countries. I don't do that. Actually, Keir Starmer, that's a very wise decision. They're looking to China to have economic ties, even though they say this will not impede on their relationship with the United States or hurt their national security posture.
The market really is not blinking. Equity futures up by 0.25% on the S&P 500 on a 4-day winning run. Can we make it day 5? This from Max Kettner over at HSBC. We continue to put little weight on geopolitics. Seemingly, he's not alone. He says this: it's about U.S. rates and rates volatility and near-term growth expectations. And as for near-term growth expectations, we'll speak to a range of guests this morning. They're getting higher and higher and higher.
Well, you heard David Solomon overnight talking to Stephen Angle, our colleague over in China, and he was talking about the deregulatory push that we see out of the United States, and he's talking about the fact that things are looking incredibly optimistic and rosy. You have to remember, there's a fiscal impulse around the globe, especially here in the U.S. Potentially when you have some tax refunds coming down the pipe, it is a constructive environment for a lot of individuals that are ignoring the noise, ignoring any geopolitical ruptures, and just looking through at the fundamentals and the data.
Are we going to see it in the corporate earnings through the next hour or so? GM reporting later this hour. In the next hour, we'll hear from American Airlines and from JetBlue too. UPS just moments ago, this is their outlook. They now see 2026 revenue of about $89.7 billion. Compare that to the estimate of $87.95. You want to see more of that throughout the morning, Anne-Marie. That stock is up by 2%.
Yeah, they're doing very well. So they have better revenue posture going into for 2026. Beating the estimate handedly also comes at a time when people, were thinking maybe tariffs, all of this was going to damper some trade and commerce. It's not happening with UPS, which shares are now rising in the pre-market because of this. In 2026, sales outlook beat big time.
A better outlook from UPS. If you're just joining us, their stock is up by 2% in the pre-market. The numbers look like this. For 2026, revenue of about $89.7 billion. That outlook versus the estimate of $87.95. The stock is higher by 2.2%. Coming up this hour, we'll catch up with Cameron Dawson in just a moment of New Edge Wealth, with stocks looking for a fifth day of gains. Kit Jukes of SocGen with the dollar very much under pressure, and George Goncalves of MUFG as the Fed's two-day meeting begins. We begin this hour with stocks within 1% all-time highs. Cameron Dawson of New Edge Wealth looking ahead to earnings, writing with an acceleration in revenue growth, a surge in margins to new records, and a big broadening of companies who are driving earnings. The big question for 26 is, how much room is there for this normal margin expansion to go? Cameron joins us now for more. Cameron, good morning.
Good morning.
Normal. Let's get into that. Yeah, just frame how massive the margin story's been in the last 12 months.
It has been incredibly surprising, and we even would frame it as a miracle, given the fact that how much you threw at corporations over the course of 2025 with tariffs, which we know were primarily borne by corporations. We had that Kiel Institute report that said that 96% of tariffs were borne by the U.S. consumer and corporations. So companies had to do a lot of blocking and tackling in order to just keep margins flat, but they actually expanded them in 25 by over 100 basis points. And that's without a concomitant acceleration in revenue growth, which is typically the relationship that we see. So when we boil it down, it comes down to productivity that is likely a function of a lot of investments that came out of the pandemic. And it's also a lot of labor productivity. There's a big dynamic where we have labor wage growth slowing to a material extent, which means that wages are not causing as much upward pressure on margins at the same time as workers are switching jobs as much. So the workers that you have are becoming more productive. You get the margin expansion. The last point is this probably doesn't have a lot to do with AI.
Why not?
Because AI is still in these test phases. AI is still in testing to see how much it could impact growth. This is not AI necessarily causing people to fire workers. It is supplementing workers. Maybe at the margin, it's causing some companies to not have to hire as many low-end workers. You can see that with college-age unemployment rising. But this is likely not an AI story of what we saw in 2025, which raises the question, is that what is baked into 26 estimates? 26 estimates have 200 basis points of margin expansion baked into the forecast for $310 a share. That to us looks like a productivity boom, another productivity miracle.
Given how you're framing this, it sounds like you think there is pretty decent downside risk here into the year ahead.
So let's think about the cadence of earnings growth through the year. 8% growth is expected for this quarter. It's coming about bang in line with that 8%. That's very different than the last two quarters of earnings season where you saw earnings growth come in about double what was expected going into the quarter. That 8% accelerates to 18% in the second quarter, 21% in the third quarter, and another high teens in the fourth quarter. So it's not a big thing to say that there is a high bar for earnings to jump over. It's not to say it's not achievable. There's a lot of parts of the economy that didn't experience great earnings growth over the last couple of years because of the concentration in just Mag 7, but that is still an extraordinarily high bar for this market just to meet expectations, let alone beat them.
Well, if anyone's going to be jumping over that bar, that 200 basis points in margin expansion, what kind of companies are prepared to potentially do that?
Yeah, it's probably those that have the most ability to apply AI quickly into their workforce. So those people who have a lot of workers, maybe that they're lower productivity, a lot of wage costs. But I think the big question is, can we still see the degree of margin expansion out of the tech names, which has been so extraordinary and one of the reasons why this market has levitated so much. If we look at tech companies, the Mag 7 or FANG names have grown their margins by 10 percentage points in the last 3 years. A lot of that is because they simply were able to raise prices so much. There's a lot of monopolistic pricing power for some of these businesses. They were able to cut headcount significantly. And yes, you had some benefit and boost from AI, but it really was more the good old-fashioned blocking and tackling of margin expansion, not necessarily this big step change function and technology yet.
Honeywell was talking about physical and AI and how pilot projects are now being spread out to actual adoption. Is this going to be the theme for this year, if you're able to adopt in physical AI?
I remember going to a Honeywell Analyst Day probably 10 years ago, and they were really excited to roll out this VR system in order to fix pipelines. The reality is that a lot of these technologies have been being rolled out for quite some time. We used to call it big data before it was AI in industrial land. And so what you've seen is these kind of normal sort of margin expansion that is typically then passed on through to customers, not necessarily driving big upside to the margins that are experienced by the businesses.
It really sounds like you're not buying the hype around the AI story. Is that a fair characterization? That's what I'm feeling, just sitting here listening.
I think that the productivity from the actual application of AI is going to take longer than people are expecting. That's very different than the benefit you're getting from the build out of the infrastructure of AI, which we can see the earnings benefit immediately. You can look at it in the nuclear names, you can look at it in the power generation names, you can even look at it in some of the commodities, of course, the semiconductors, the memory stocks. That's the immediate benefit. The actual benefit of the application, that broadening benefit of it, I think that still remains the question of when it will come, and if it will come as quickly as what's being priced into 2026 earnings.
Cameron Dawson of New Edge Wealth is going to be sticking with us. We'll explore some of these themes in just a moment. Big 48 hours coming up for big tech when we start to get earnings from Meta, Microsoft, and the others all report over the next week or so.
I love what Cameron was saying, though, how a lot of this has already been happening in terms of the physical AI world. Actually, it's just been called big data. Now they're just rebranding it, it sounds like, with some C-suite seats.
Futures positive this morning by about 0.25% on the S&P 500 with an update on news worldwide with your Bloomberg brief. Joining us now is Yahira. Hey, Yahira.
Good morning, John. UPS shares are higher, up 4.5% in the pre-market after the shipping giant's fourth quarter earnings exceeded estimates on the top and bottom lines. For the full year 2026, UPS is expecting revenue to be approximately $89.7 billion, beating Wall Street expectations. The outlook marks the first time in a year that UPS has provided full-year sales guidance. Meanwhile, UK Prime Minister Keir Starmer says he won't choose between the US and China as he flags significant opportunities for British businesses ahead of his trip this week to Beijing. Starmer told Bloomberg he can meet President Xi Jinping without angering Trump or harming relations with the US. He is scheduled to travel to Beijing next week. And U.S. Border Patrol Commander Greg Bovino is leaving Minneapolis following public outcry over the killing of 2 U.S. citizens by federal agents. The White House says it's dispatching Border Chief Tom Homan to the city to ease tensions. President Trump also saying he's considering independent investigations into the shootings. That's your Bloomberg Brief. John.
Hey, Yahira, thank you. More from Yahira later this hour. Up next on the program, ongoing trade tensions.
Canada doesn't live because of the United States.
He spoke to Prime Minister Carney, who was very aggressively walking back some of the unfortunate remarks he made at Davos.
Up next, we'll catch up with Bloomberg's Tyler Kendall, live from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Big morning for earnings coming up. This is what it looks like. Later on this hour, we'll hear from GM, General Motors around 6:30 Eastern Time. In the next hour, American Airlines and JetBlue. Boeing as well. Moments ago, we heard from UPS. Check them out in the pre-market. Their stock is higher by about 2%, almost 3 percentage points higher now. Heard from the company moments ago saying the outlook for 2026 revenue looks like this: $89.7 billion. The estimate was $87.95. So that's an upside surprise and a beat for the outlook from UPS. UPS trading higher by 2.8%. The broader equity market doing okay as well, coming off 4 days with no losses on the S&P 500. Can we make it day 5? Up by 0.25% on the S&P 500. On the NASDAQ, up by 0.6. Under surveillance this morning, ongoing trade tensions.
Canada doesn't live because of the United States. Canada thrives because we are Canadian.
I was in the Oval with the president today. He spoke to Prime Minister Carney, who was very aggressively walking back some of the unfortunate remarks he made at Davos.
So here's the latest this morning. Tensions remaining high between the US and its allies after a call between the president and the Canadian Prime Minister. The president also threatening to raise trade tariffs on South Korea, saying the country is not living up to its end of the trade deal. Bloomberg's Tyler Kendall joins us now from Washington for more. Tyler, just to pick up on the Treasury Secretary words, the Prime Minister of Canada was, quote, aggressively walking back some of the unfortunate remarks he made there at Davos. Was he?
Well, at this point, John, what we've heard from Prime Minister Mark Carney is that he's not pursuing a free trade agreement with China, which is what we've heard this administration ask Canada not to do. So at this point, it's not totally clear exactly what the Treasury Secretary was referring to in this private conversation between President Trump and the Canadian Prime Minister, though it does appear to be an opportunity for perhaps some de-escalation from the Trump administration's threats. Because, John, ultimately, what we've seen over the past few weeks has just been a re-escalation of potential upgraded tariffs, even if that ultimately means that the administration walks it back, right? We have this 100% threat on the table against Canada. We also saw renewed tariff threats against those European allies who have rallied support around Greenland. And now we have this threat against South Korea. And while perhaps we knew that tensions were escalating there, for example, I had reporting on the terminal just last week that there is a growing unease in the U.S. with how South Korea is allegedly treating U.S. tech companies. This is a clear escalation on the Trump administration's part, but our own analysts at Bloomberg Economics say that the threat likely won't go into place. This is more about applying external pressure for a domestic outcome to speed along the approval of the package agreed upon between the two countries in South Korea's parliament. Now, John, of course, we're watching closely what these potential impacts could be, not just from the administration, but how our allies are now looking elsewhere. Of course, you have Carney striking this trade deal with China, but then also worth mentioning, new this morning, the European Union striking a huge trade pact with India after nearly 2 decades of negotiations. There are definitely questions here about what perhaps spurred that timing.
Tyler Kendall down in Washington. Tyler, thank you for jumping on for us. Think about the objectives of these tariffs: bring manufacturing home, national security, raise revenue, all of that. The other one we've talked about consistently is to get China to change its economic model. And if Sir Keir Starmer, the British Prime Minister, is speaking to Bloomberg over in London and saying we're not going to choose between China and the United States, that just tells you how difficult this is going to be.
It's incredibly difficult. And then also, to Tyler's point at the end there, what do you think spurred this last minute trying to get it over the finish line after 2 decades of negotiations between Brussels, which you know nothing moves quickly there, and India? It's likely this pressure by the President of the United States. You know what also is interesting? Bloomberg Economics did a study. Only 27% of Trump's tariffs have actually been enacted. So this is why it is so hard sometimes for the market to understand what is real and what is just negotiated.
Still with us around the table, Cameron Dawson of New Edge Wealth. Cam, do you just look through a lot of this now and ignore it? Can you just ignore it?
Yeah, embody the spirit of the Kospi this morning. So the Korean stock market is now actually up after those threat of tariffs. And I think the question that we have is that if everybody's expecting a taco, do we actually not get one? Because it's a classic boy who cried wolf scenario, which is that you warn of something, it never happens, and then when it's too late, it actually does happen. So the question is, does this lack of market reaction actually push Trump to potentially talk about even further tariffs or follow through on them to get that 20% number of tariffs that are actually completed up higher?
I'm trying to keep up. We did get higher tariffs last year.
We did.
It didn't show up in the data in the way people thought it would. And I wonder how much comfort investors and economists are also taking from that coming into 26.
And I think it's fascinating that you have a company like Amazon starting to come out and saying, just now we're starting to see the tariff impact because of all the inventory dynamics and inventory pull forward. And maybe the greatest folly for forecasters in 25 is that they thought tariffs would be the equivalent of shutdowns, right? Shutdowns impacted the market immediately. They impacted earnings immediately. But the reality is that because of all the steps that supply chains go through, because of all the preparation in advance, tariffs simply weren't passed on immediately to consumers. Now, there's pockets of areas where we've seen tariffs impact consumer prices, but when you put it into the grand context of broader CPI data, it's not moving the needle as much as people expected.
Cameron, you talked about how 96% of tariffs were borne and paid for by U.S. companies. I know you have thoughts about IEEPA. We are still waiting for the Supreme Court ruling. Likely it's going to happen maybe the earliest, the end of February. How do you think the market is going to react to that?
Yeah, I think the question is, will the equity market likely cheers because it effectively is just a flow through down to the bottom line, boosts margins even more. Maybe that's how we get to 200 basis points of expansion. I think the more fascinating point will be how the bond market reacts, because the bond market having this extra tariff revenue has certainly allowed it to not have to issue as many treasuries as many people were expecting. It's made deficit statistics look a lot better. So if you actually were to see a reverse of this, you could have even more funding pressure. And then the question is, does that move yields up across the curve? And is that something certainly that we know Treasury doesn't want?
Do you think it's knee-jerk, or you think actually some of that could be sustainable?
In the bond market reaction? Yeah, I think at the end of the day, we think the bond market is simple, that it just follows effectively economic surprises in the U.S., at least for the 10-year. And so if you're in an environment where you have a release of tariffs and you have a little bit more funding pressure, yes, we would expect bond yields to move higher in that scenario, because it could be effectively growth positive, but funding negative for the Treasury.
And what if we're in a government shutdown at the same time?
Yeah, there's the big question, because yields probably were lower in the fourth quarter of 2025 because we didn't have economic data, because we weren't getting those economic surprises to move yields one way or another. I mean, I think stepping back, we have to appreciate that Atlanta Fed GDP now is at 5.4% for the fourth quarter. We printed nominal GDP at 8.2%, and yet the 10-year Treasury yield is effectively just flat. So again, we would think probably lean towards upside surprises on that front.
Total snooze. Volatility so subdued, 10s at 422. And given, throw in the mix, what's happening in Japan as well. JGB market exploding last week. And I think it's fair to use that language when you see a 20 to 30 basis point move and the long end.
Yeah, and the wild thing is that the MOVE index, that Bank of America bond market volatility index, was actually lower on the week last week. So we saw all of this movement, and I think it's important to appreciate bond market volatility being low is good for overall market liquidity, meaning that in order for valuations to stay at high levels, in order for credit spreads to stay tight, you need bond market volatility moving lower, and that's been a powerful market driver over the last 3 years. And if that were to turn in the other direction, that would be liquidity negative and likely usher in more volatility for risk assets.
I wanted to finish on a midterm risk. Let's just finish on that. So in November, we get the midterms. The president's polls right now, Republican polls, are not heading in the right direction. That's a problem for them. When the president's finding himself in this position, he's leaning on quite populist policy proposals. Is it making some sectors less investable than others right now as you look across the equity market?
Well, my colleague Brian Nick has been joking that probably the #1 policy priority for 2026 is don't let the stock market go down. Because if you think about how important the stock market has been to the U.S. economy and fueling that upper income spending growth, having a prolonged period of stock market volatility, which does typically happen in midterm years. Don't forget, midterms give you the best earnings growth, but typically the worst equity market returns. So it's this paradox that we could find ourselves where the policy from Trump and trying to be able to push markets higher might just be pushing on a string simply because of this midterm election dynamic.
The proposals on the table right now are certainly not market friendly. The president's going after stock buybacks in certain sectors. The president's going after investing in housing. This is all things that people might want to hear in the electorate. The president's going after capping interest rate costs. That's not going to help the financials. And some people might make the argument it's held them back over the last few weeks.
Absolutely. It's populist policies like it is in any election year like we saw in 2024. We're seeing it again this year. And not all of these, depending on the industry, is good for them. When you look at what's going on with the defense sector, you look at what's going on the home builders and housing. And you know what? We're probably going to hear a lot more of them tonight because the president is giving an address in Iowa.
Does the president care about the equity market in quite the same way coming into this year? You're making the case that he does, but I'm questioning whether that's actually real or not. I don't think you introduce ideas like capping interest rate costs if you care about the stock market.
Well, I think the key difference is that everybody talks about the Trump put. A put is rarely priced at the current price for its strike price, meaning that the Trump put is certainly lower than it is today, where stocks are trading today. However, if you were to see a period of deeper and more protracted equity market kind of volatility, this would be very negative for higher income growth and spending. That's been the key driver for the U.S. economy, so I don't think it would be something that would be tolerated for very long. Question is, does it work with whatever they're trying to do to fix it?
When you talk about his put price, you're basically saying he has a higher threshold for pain this time around.
Well, and I would say that the other point of it is that maybe in equity markets, possibly, it's really the bond market. It's that yippee bond market that gets him to act. And that if you were to see bond yields spike up higher, that's likely the thing that causes a reverse course in some of these policies.
No yips right now. Cameron, good to see you. Cameron Dawson of New Edge Wealth. Bond yields higher by about a basis point, 10s at 422.
Snoozy. I mean, it's not where the Treasury Secretary would like to see, but he's certainly not going to be upset at this because, as you said, there's not been a lot of volatility here.
Closer to 4 than to 5, and I'm sure the Treasury Secretary would take that given what's happening elsewhere. Coming up on the program, we'll catch up with Kit Jukes of SocGen as traders bet big on a deeper dollar sell-off, plus Danny as your morning movers. Health insurers sinking on proposed plans for Medicare payments. We're down across the board. That conversation up next. Live from New York City, you're watching Bloomberg TV.
case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield back on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
Four days, no losses on the S&P 500, the longest daily stretch of the year so far. Yesterday, though, notable, the first back-to-back losses on the Russell, the small caps, for 2026. This morning we bounced back by 0.3% on the S&P, up by a quarter. On the Nasdaq, up by 0.6. That's the price action. Let's get you some morning movers with more. Here's Danny. Hey, Danny.
Hey, John. Shares of health insurers tumbling in this morning's trade. United Health, CVS, Humana, all down at least 11%. We have the new plans from the government on payments for private Medicare plans, and they are keeping them flat, or almost flat, 0.09%. Just to underscore how much of a disappointment this was, some analysts were projecting as much as a 6% bump. So shares tumble off the back of that. Elsewhere this morning, the memory chip stocks having another good morning, something we're used to. Micron specifically outperforming, up nearly 5%, announcing plans to spend about $24 billion in Singapore to help ramp up its production of memory chips. It's something that we know that there is a shortage at the moment, so those shares moving higher. Finally, Salesforce, those shares also up 2.2% to the pre-market this morning, getting a $6.5 billion contract with the U.S. Army. The idea is to help adopt more commercial licenses for the U.S. Army. It is a 10-year contract. That's sending shares higher in the pre-market, John.
Danny, thank you. More from Danny in the next hour. On our radar this morning, the British Prime Minister, Keir Starmer, saying the country can balance ties with both the US and China. Starmer telling us here at Bloomberg, ahead of his trip to Beijing, he's prioritising economic growth and remaining firm on national security. Elsewhere, President Donald Trump threatening to raise tariffs on South Korean goods to 25% from 15%, blaming the country for stalling a major trade deal. New rates would be targeting essential sectors, including autos and pharmaceuticals. And finally, just moments ago, General Motors earnings just crossing their stock in the pre-market is down about 1.67%. Here's the outlook for them. They see 26 adjusted EPS in a range of $11 to $13. The estimate was $11.79. Also in the mix, approving a new $6 billion share repurchase authorization. The latest from General Motors.
Yeah, stocks are lower even though they do have a wider barrier when it comes to the adjusted earnings per share. When it comes to General Motors, they also seem to be doing well when it comes to international. Also, I thought this caught my eye, Jonathan, introducing conversational AI with Google Gemini. How many more companies are we going to see decide to pick which AI player they want to start to team up with?
Got a number on tariff costs. The companies have been pretty transparent about a lot of this.
Now.
Gross tariff costs of $3 to $4 billion. That's real money.
That's real money, and actually what comes to my mind is just the idea that USMCA is going to be renegotiated this year, and a company like GM is going to be one of those companies that is going to be stuck in the crossfires between Canada, Mexico, and the United States, because we know how many times does an auto pass a single border when it's being produced.
Stock all over the place at the moment, just turning mildly positive by about 0.8%. Joining us now is Bloomberg's Craig Trudell. Craig, welcome to the program. Let's get into some of these numbers. What stands out for you?
Yeah, I mean, I think it's more of the same from GM here, where they've really been executing with sort of the old school technology, the great big pickups and SUVs that has long been, their sort of calling card. And we've seen sort of slow and steady progress on the electric vehicle front until recently. I think we've seen some concerns, of course, about just how much that unwind will be disruptive for the Detroit automakers, both GM and Ford. And yet, I think GM was much better positioned than Ford in terms of, having the scale to where, its electric vehicle business is less of a loss-making aspect of the company. And so while we'll see some dialing back of production of those vehicles because of a sort of less receptive environment, it's going to be less dramatic than what we've seen at Ford. And meanwhile, just more and more of these, trucks and SUVs that are their specialty, the demand for those have been incredibly strong.
Craig, they just missed where the consumer was going to be. You and I have been talking about this now for a number of years. Do you think we're overstating the importance of the EV credits? I know they're material, but Craig, ultimately, was that the direction of travel anyway?
Yeah, I think, the going away of EV tax credits is a huge deal for certain manufacturers. I mean, the Teslas and Rivians and Lucids of the world that are entirely, tied to the battery electric vehicle market. This is hugely problematic for them in the U.S. And I think what we're going to see from GM is, some changes in terms of how many of these electric vehicles they make in the near term because of those credits going away, because of other forms of support, falling by the wayside. Also, just less pressure from a regulatory perspective where, fuel economy and emissions regulations have been gutted. And so, they're able to, just kind of keep ramping up that truck and SUV production. And, Americans are able to buy as many of those as they wish.
Stock is recovering now. The stock is higher in the pre-market by about 4.5%. The next hour, Craig's going to come back. Craig, appreciate your time. We'll also be catching up with, of course, Mary Barrett, the CEO of General Motors. So look out for that conversation later on this morning, 7:40 Eastern Time. You can make the argument, Anne-Marie, many people have, that the transition to EVs in this country specifically, was stalling long before the conversation about the expiry of EV credits began.
Right, and part of that was also just because the build-out was not there in terms of where you can actually, unless you had it at your house, where you can actually recharge your car. What's so interesting for a lot of these auto executives is the fine line they have to walk, and they're getting some from the Trump administration they absolutely love. What Craig was just talking about when it comes to the fuel economy regulations and some of that being easier on these auto spaces, especially when they build these big SUVs. At the same time, if you put a ton of money into electric vehicle space, those subsidies evaporated, and there's less of a push from Washington, D.C. to continue in that space.
Stock is up this morning by 4%. Let's turn to foreign exchange. The Bloomberg Dollar Index falling to its lowest level in 4 years. Kit Jukes of SocGen writing, what will determine how the dollar performs will be the strength of the economy. We will have a much clearer idea of where we are headed by mid-February. Kit joins us now for more. Kit, welcome to the program. We saw a lot of this price action in the first quarter of last year. Then the trade kind of stalled, at least for DXY. Kit, what's happening now?
I think now it's a straight fight between the sense, though, and the awareness that the U.S. economy is still doing better. Consensus growth forecasts moving higher for the U.S. And then all the noise around a president who would like a weaker dollar, a sense of that, and concerns about what policy might do, or will the equity market hold up, the kind of conversation you've just been having. And so we're in a range on euro-dollar, and then we're looking at other things that, Australian dollar's very fashionable. The yen is very difficult because they would like to get it stronger. So we've got lots of noise, but the underlying theme on the dollar is one of conflicting forces. Which wins, growth or policy?
Well, Kit, let's pick up a currency pair. Let's take euro-dollar. Let's discuss whether the Europeans are willing to embrace the euro strength that might come with that dollar weakness. Already one European Governing Council maker of the ECB, Governing Council member, coming out this morning and almost pushing back against the euro strength we've seen over the last 12 months or so. Can they live with the euro-dollar above 120?
They could live with euro-dollar above 120, provided everything else behaved in the sense. So, we've been up to above 120 twice in the last few years and held there for a bit. But the difference this time is that with other currencies, things like the yuan staying cheap, the yen obviously cheap at the moment, The result of that is the trade-weighted euro is stronger than euro-dollar looks, if that doesn't sound silly. And that concerns some of them. I think we could get to 120 because it's close. I think 125 is going to be a real reach. I think anything above that's impossible. I have a forecast of a peak at 120. January the 1st, I wish my forecast was lower and that we didn't think we'd get there. Today, I think I might have been right, but that's just luck and stupidity. But we're not that far. The euro is, the euro doesn't have that much growth, doesn't have an inflation problem, doesn't need a currency that gets strong. They'd be much happier if the Chinese would let theirs go up 30% and make life easier for everybody.
Well, do you think that's going to happen, Kit? Exactly. That's the problem. So, Kit, if you want to play this dollar weaker story, what are you playing it against in G10?
Well, that's the trouble is people who want to play it, there are two places you can play it. One is you have to believe that the U.S. is going to get a deal with the Japanese to persuade the yen to rally. And I think everybody's on board for that. But the debt sustainability concerns of the size of Japanese debt is a real problem, so it makes everyone nervous. And the other one is the high flyer of the currency world at the moment is the Australian dollar. There's a chance they get inflation numbers tomorrow that make a rate hike look really likely, and so they're moving in the other direction from everybody else. They are insulated to some degree from a lot of the geopolitics at the moment. Australia's a long way from everywhere in that sense. That would be my bet for what comes out as the winner over the next 3 to 6 months.
Well, Kit, isn't it also just gold? Individuals that were holding dollars, are they just moving potentially to put more into their gold holdings?
Gold wins everything. I'm not going to short gold. There's a correlation between gold and the Australian dollar that kind of has some sense to it,
True.
but that's not really the big driver. There's much more to the Australian economy than that. But yes, the story of the last year is that if people are unsure which currency to own, Chinese stuff makes sense.
Also, we've seen the Swiss franc also be a place that people are flocking to. Is that something you think that is keen on and a good idea?
It sort of at the beginning of the year it was performing badly. Then it came back in this last bit of volatility in markets. It is a safe haven. It is very expensive. It is in the middle of a tariff disagreement with the United States. They're going to suffer on some of that in the short term, and they have amassed they have intervened a lot to prevent the currency getting more expensive. The result is the National Bank in Switzerland owns a lot of U.S. tech stocks, which is an interesting outcome. But I think it can go up. Again, it can't go up as fast as gold.
Gold, that word, haven and gold. Kit, I just want to finish on that. Typically, that would mean a bout of risk aversion, but that's not what's happening, Kit. The correlation between gold and risk equities and how risk assets have outperformed has actually been really interesting to me, Kit. What do you think explains that, this regime where gold performs alongside risk?
I think it's partly it is a general sense of we don't trust fiat money in the same way, or there's people concerned about policies. It's a reflection of the massive uncertainty out there. It may also come back to your conversation of, the U.S. economic cycle is reliant on the U.S. equity market just keeping on going, and people are looking to say, is that healthy? Can it still? Is the valuations are high? We're feeling uncomfortable. Is the president going to make this more difficult? So there's a nervousness around there, and I think it just means that at a time of yes, rising equity prices, yes, risk on in one sense, and yes, low volatility, but historically very high uncertainty economically and geopolitically. People are trying to, they're just falling in love with a very old-fashioned solution to that problem, and it doesn't take that much buying to make the price of gold go up.
Kit, good to see you, as always. Kit Jukes there, SocGen Gold, up by 1.5% in today's session. Let's give an update on stories worldwide with your Bloomberg Brief. Back with us, here's Yahira. Hey, Yahira.
Hi, John. Shares of GM are rising 5% in the pre-market after reporting results. For the full year 2026, GM is expecting EPS to come in between $11 and $13, exceeding Wall Street estimates. GM also approving $6 billion in share buyback. CEO Mary Barra saying we are operating in a U.S. regulatory and policy environment that is increasingly aligned. She will be joining us at 7:40 a.m. Eastern. Meanwhile, JetBlue shares are falling nearly 4% in the pre-market after reporting wider than expected losses per share for the fourth quarter. The airline forecasting capital expenditure for the first quarter of about $200 million, lower than what analysts were calling for. CapEx for the full year is estimated to come in at about $900 million. And Goldman Sachs CEO David Solomon says he sees a slower trajectory for talent growth this year, but made an upbeat call on global markets.
I think the economic setup is pretty constructive, especially in the U.S. But broadly, I think it's relatively constructive. You've got a confluence of lots of stimulative fiscal policy in developed economies. You have a general deregulatory trend and tone, both in the U.S. and Europe.
Solomon also touted the strong relationship between Goldman and the White House, saying he appreciates that the Trump administration is, quote, open for business. That's your Bloomberg Brief. John.
Yahara, thank you. Appreciate the update. David Solomon, constructive. Ted Pick, amped up. Brian Moynihan looking for GDP close to 3%. That's a pretty good outlook from the world's biggest bankers.
Definitely, and it was interesting because Stephen Angle did push back and say, didn't in August the president say you should stick to DJing? And, he quipped, he said, I like DJing. He's, look, this is part of the noise that you're amplifying, and you got to stick to what is working with this administration. We share ideas out in the open. We don't like something, we can be vocal about it. Sometimes it gets out in the press. That's not helpful. But when it comes to the deregulatory push from this administration, they certainly don't mind.
Great exchange with the Goldman Sachs boss over in Asia. Up next on the program, balancing the dual mandate.
Ultimately, there is this tension that the spending data have been reasonably solid, but it's the employment data that have been soft.
We'll get into that tension in just a moment with George Concalves of MUFG from New York City. You're watching Bloomberg TV.
crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. When I started to realize what was happening, it was 12 years, and we haven't done it.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you
up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Stocks are doing okay, positive by 0.3% on the S&P 500. On the Nasdaq 100 so far this morning, up by 0.7. A big 48 hours for big tech just around the corner. Under surveillance this morning, balancing the dual mandate.
Ultimately, there is this tension that the spending data has been reasonably solid, but it's the employment data that has been soft. They're in a holding pattern given the strength in the economy, waiting for inflation to decisively start to move back down towards target.
So here's the latest this morning. The Federal Reserve kicking off its first meeting of the year, with investors expecting the central bank to pause its rate-cutting cycle. George Goncalves of MUFG writing, the labour market remains a critical focus. We see the Fed cutting 3 to 4 times to neutral. George joins us now for more. George, good morning.
Good morning.
Where's neutral?
Neutral is really in the eye of the beholder. And I do think it depends. And it depends on if it's a politically motivated neutral versus like an economic neutral.
Now we're getting into it. Which one is it?
Look, that's why I have 3 to 4. I have a range. I mean, I think two more cuts, I think, bring us to like a more equilibrium type rates of neutral, depending on the eye of like where you need to bring rates to anchor long-term rates, what you need to do to make housing more affordable. That's a different kind of neutral.
Well, what's the committee telling us right now?
I think the committee, like this week, it's the first meeting, first skip after cutting 3 times. They've done this now 2 years in a row. I don't think that they can afford to wait that long for the next cut. And of course, we're at the end of Powell's tenure.
Can't afford to wait, so you think potentially it's on the table for this week?
Oh, not for this week. So I think, like, look, having like 9-month gap last year of cutting in September allowed for the labor market to get even weaker, unnecessarily so. And as you recall, from the Powell pivot in August from Jackson Hole all the way throughout the rationale for cutting to begin with in 2025, they pivoted towards the labor market. It's hard to pivot away from that unless you have like real evidence that the jobs market is accelerating. Meanwhile, there is a path. We still have a March cut, which is obviously out of consensus and not priced in. But there's a path to cut if the February release of the January NFP and the revisions data really corroborates what Powell mentioned last year, that perhaps jobs data is overstated by 60,000 or more. And if that's true, if we hear those kind of tones this week, it'll be a dovish meeting, even though they won't cut.
It's going to be interesting because, of course, the politics is going to be center stage. When you say eye of the beholder for the neutral rate, what is the gap for the 4 candidates that may be the Fed chair in terms of neutral? Basically, Rick Reeder to Kevin Warsh.
I would say it's 50 basis points, about 50 bips. I think 2 cuts, roughly. This is why I have that kind of range of 3 to 4 cuts. Fundamentally, 2 cuts are easily justified. Beyond that, you have to start to kind of factor in other drivers.
Isn't it odd we're having this conversation with GDP tracking at 3-4%, maybe more?
It is, but the idea of running an economy hot does require lower rates, and so this is part and parcel for the objective, which is to keep the economy on fire.
This was the Seth Carpenter point. It's odd that we're seeing this jobs dynamic at the same time we're seeing GDP like right up here. Does something have to give?
Well, ideally, it'd be great to see the jobs market catch up to the economy, right? But given all the other sort of new phenomenons like AI, companies holding back, you might end up with a situation where maybe productivity can fill that gap for a while, but at some point, GDP is coming down. So I'm much more bearish on the outlook. I think we're peaking in activity, and perhaps we peaked already in Q4.
When you look at what's expanding in GDP, it's things like AI and then also things like gambling. So how does this economy actually have GDP expansion where it requires more labor?
Right, and that's where I think the low rate story does play a role. I mean, the small to mid-sized companies, the housing sector, those are the areas that can, with lower rates, would move the needle and actually broaden out the recovery, not just to these kind of bipolar parts of the economy.
The Fed's been a snooze for the last month. So has the US bond market. Let's get to where the real fireworks have been. Japan.
Yep.
JGB market. I've just been surprised by how insulated the global bond market has been from developments in Tokyo. How surprised are you?
Look, I've been surprised in my wildest dreams. I would never have thought we would have had the rate moves that we've seen without some sort of impact on broader sentiment and also just outright losses somewhere, right, in the system. And so there clearly is kind of this kind of balancing act that's going on. But we did look, all fairness, last week, 10-year rates did kind of gap higher in the Treasury side, right? So there was a small kind of viral infection back into the Treasury market.
Kind of for a moment, for a hot second. But I want to build on the discussion that you and I are having right now. These are the kind of things that the bears dreamt about. The blow up in a JGB market, to the extent that it has blown up. The moves we've seen in the Chinese property market over the last several years. These are the things that the bears were warning about for years and years and years. They've happened. And I've just been struck by how insulated, how resilient the global market seems to be in the face of some of these issues. Does something have to give again, or is this just the way it is?
I mean, look, I think the excess liquidity still has been working through its system, and it's been looking always for the cheapest asset, and so perhaps it overlooks these sort of kind of isolated events, which are big in and of themselves. But valuations do speak for a stretched market in all asset classes. So, like, maybe the weakest link is not where we're looking, and it's going to be somewhere else.
Where are you focused?
I still think it's the equity market. I mean, this is why the U.S. can never let equities go down. We're so linked to growth, driven by...
Can't let equities go down.
Yeah, so rates have to come down at some point.
When you look at the equity market, and do you think the bar is very high, though, for this earnings season? Cameron Dawson was talking about how the margin growth has to be 200 basis points. Look,
there's always going to be a moment where the reality is going to set in, and earnings cannot actually meet the expectations, and maybe we're in the midst of that. And while you're in that transition period from high valuations, you're going to have to lean on the levers you have, which is going to be either lower rates, further fiscal spending. But we're not going to get that this year, not justifiably so at the beginning of the year. So this is why I think rates are going to play a role in keeping equities propped up.
You're convinced the future Fed chair sees it the same way?
Whoever that may be, I think is going to have to argue with keeping the equity market, well positioned to continue to grow and perform. And it's look, these are, we're now kind of veering off into the areas where you would think it's not like acceptable for U.S. capital markets, or how the actual the way that the world works. But we now need lower cost of funding, higher PE valuations, and that can't change.
George, how difficult is it going to be, that new face of the Fed, though, to convince the committee?
Look, I think if it anchors back towards the fact that jobs have been lacking, and you need to have a broader growth environment, which helps out like companies in the Russell 2000. As like these small to mid-sized companies are the most sensitive to rates, so you can link back to like the wealth effect, the kind of broadening out of risk markets, broadening out of economy. And I mean, it could be a stretch. It might take a while, but I do think that they're gonna have to get multiple cuts in before the midterms.
George, good to see you. Appreciate your time. Thank you, sir. George Goncalves there of MUFG on the race for the Federal Reserve and the prospect of interest rate cuts before the midterm elections.
Yeah, and that's music to the ears of this White House. The problem is, can that new face of the Fed, if you're already on the Federal Reserve and think that they've had an overreach in terms of the independence, and we've talked about that galvanizing some of those members, can that new individual, whether it's Kevin Hassett, Kevin Warsh, Rick Reeder, maybe Governor Waller, can it convince the rest of the committee to take those rate cuts before the election?
All these concerns, the U.S. debt load, tariffs, inflation, the JGB market, Fed independence, 10s at 422. Up next on the program, Evan Brown of UBS, Henrietta Trays of Vader Partners, Bloomberg's Craig Trudell, and the GM CEO, Mary Barra. All of that still to come. The second hour of Bloomberg surveillance just around the corner.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
The game here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is this tension that the spending data have been reasonably solid, but it's the employment data that have been soft.
Maybe that jobs market weakness is sort of starting to steady a little bit.
Inflation, while not at the Fed's target, has been heading in the right direction.
Cutting rates might be a little bit difficult to justify.
I hope the Fed stays on hold.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The longest first month of the year ever, I think it's fair to say, for 2026 so far. This is dragging on and on and on. I was just saying at the commercial break, it feels like the end of Q2, never mind the end of January. Live from New York City this morning. Good morning to you all for our audience worldwide. The second hour of Bloomberg Surveillance starts right now. Your price action looks like this. Equity futures on the S&P up by about 1/3 of 1%, on the Nasdaq up by 0.7 through the close yesterday, within striking distance of all-time highs, within 0.5 of 1% of a record on the S&P 500. Big week still to come. Tons of tech earnings just around the corner. A big 48 hours for big tech. We will get numbers from Meta and Microsoft, Apple coming on Thursday, and a Fed decision in the mix just around the corner.
And the Fed decision is going to be really interesting. We're just talking to George there, who says they're going to have to cut before the midterm elections. He has an out of consensus view that maybe March is going to be on the table. No one thinks they're going to cut this week, but this week is going to be important to understand where the Fed is really emphasizing their mandate right now. Is it still concerned about the labor market, and also the politics surrounding Jay Powell is going to be center stage, or what do you say, pay-per-view?
Box office, pay-per-view. I mean, take your pick. Look, the chairman has backed off from engaging in this subject for the best part of 12 months until recently, where he became more assertive, I would say maybe even more aggressive. Is he going to take that posture into the news conference tomorrow?
I was talking to Mike McKee about this before the show. He was walking in with his luggage because, of course, he'll be going down there. Flights operating, of course, so the Fed getting back to business in D.C. The issue is, to your point, he's ignored it for months. The problem is now he has, in the administration's eyes, made it political by showing up to the Supreme Court hearing for Lisa Cook. And he might flirt with the idea of saying something more than just no, or I refer you to the Justice Department, I refer you to the White House on these questions. He might flirt with it a little bit more, but to Mike's point, he doesn't want it to dominate the entire conference. So a little bit of a balance he's going to have to strike.
Mike McKee, of course, will ask those questions in the news conference, no doubt, tomorrow afternoon. morning. If you're just joining us, equity futures positive by about 0.3% on the S&P 500. Coming up this hour, we'll catch up with Evan Brown of UBS as equities build on a 4-day winning streak, Henrietta Trays of Vader Partners as a government shutdown deadline looms, and the GM boss, Mary Barra, is going to join us as the carmaker reports an earnings beat. We begin this hour with stocks edging higher as the Fed's 2-day meeting begins. Evan Brown of UBS writing, risk the consensus growth forecasts are skewed to the upside. Solid growth with contained inflation favours equities and credit. Evan joins us now for more. Evan, good morning.
Good morning.
Let's take the first line first. Skewed to the upside, why?
Well, we've got the fiscal support coming through, over $100 billion, that's going to hit the consumers' wallets here in the U.S. We have also a positive fiscal impulse in Germany and Japan. And so all of that together is pretty supportive of growth in the first half.
Better growth, contained inflation.
Yes.
How does one not lead to an inflation boost?
Yeah, so we have this downtrend in shelter, which is a huge part of inflation. We also have wages, which are also weighing on inflation. I do think, we've had this disconnect, we're all talking about it, between growth and the labor market. Maybe there's an AI story there, maybe it's just general business caution, but the reality is that the labor market is not tight, and so you're not going to get this immediate acceleration in wages that's going to increase domestically generated inflation.
Does that give this Fed even more space to reduce interest rates?
It does, in our view. I mean, we think that the Fed can cut rates a few times this year. It's going to become clearer and clearer as the tariff effects come out of inflation that they'll see enough there to cut rates.
When it comes to the labor market, though, if part of it is AI-induced, how does a Fed rate cut solve that?
I don't know if the Fed really needs to solve that. I mean, there are certain areas of the economy that remain weak, like the housing market, and hopefully Fed rate cuts can provide some support there. But I think in general, for the kind of the areas of the economy that are weakening because interest rates have been too high, the Fed will help. I don't think it's going to do much in terms of the AI front either way.
How concerned are you mentioned tariffs before this, about the impact just happening now? You had the Amazon CEO last week talking about he's starting to see the creepiness of tariffs come in. They're creeping into some of the price levels that they weren't happening last year.
Yeah, so we are going to see a little bit more of a push through in goods inflation from the tariffs. But what we take a lot of signal in is 1-year inflation swaps, essentially what the market is thinking inflation is going to be a year from now. And those are absolutely collapsing. So there may be these temporary effects from goods prices going higher because of the tariffs, but once that washes out, you've got these domestic effects that are putting downward pressure on inflation.
Let's turn to the market moves. Gold's ripping. The dollar's selling off. We saw a bit of this last year. We're seeing it again at the start of this year. What do you think is the dominant driver behind that move?
Yeah, I think in general there's a few things. One is that there's growing concern about fiscal deficits, not just here, but in Japan and in other places. In gold, I mean, we have seen a surge in geopolitical volatility, and so there's this knee-jerk move into gold as well. For the broad dollar, yes, we're beginning to see some weakness this year, and I think that some of that is related to the Treasury via the Fed checking rates on Friday and essentially sending a message. We want to limit dollar strength from here. As much as we see the U.S. economy accelerating, we don't want to see the dollar going with it.
So last year, when we saw this big bout of dollar weakness, it was accompanied with rest of the world equity outperformance. Do you see it the same way this year?
Yeah, I think combined, we do see further dollar depreciation over the course of the year, and the Treasury stance on the dollar is an element there, as well as interest rates coming down relatively more in the U.S. than elsewhere. But I also just think that the U.S. equities in general, we're having to be a little bit more selective, right? It's no longer this one big AI trade that's driving the index. There's a lot more differentiation in that space. Whereas globally, you see some really powerful themes, whether it's high bandwidth memory in Korea, or just the broader reflation trade in Japan, or defense and industrials and banks in Europe. So all of these themes, I think, are going to attract capital over the course of the year.
When it comes to the idea of the sell America trade, is it just sell the dollar but still make sure you're exposed to the equity market?
Yeah, it's interesting because we have a lot of conversations with large global allocators, and they're not saying, hey, we want to sell our underlying U.S. assets. They're not saying, hey, we want less exposure to U.S. equities. But what they are saying is, hey, we built up a lot of dollar exposure. We see that the administration is looking to get a weaker dollar, and maybe we should be hedging a little bit more of this exposure.
So when they hedge that exposure, where exactly are they looking to?
In general, they're just selling dollars forward and buying back their own currencies, essentially. And so, again, no reallocation out of U.S. equities, but selling the dollar to hedge that flow.
You mentioned South Korea. The move on the Kospi so far, I think year to date we're up by 20%.
Yes.
Best performing currency in G10 this year, the Aussie dollar. The moves you're starting to see now, copper exploding as well over the last several months, base metals. If you just showed me that and didn't tell me anything about the news flow, I'd be like, well, Evan, this is just telling me we're going to see a massive, massive pickup in global growth. Is that what that is? And do you expect to see that?
I think it's two things. One, a cyclical acceleration, some pickup in global demand driven by fiscal policy. But I think there's other element here, which is a strategic move by the U.S., China, and other countries to really build up minerals. That there's this kind of strategic de-risking.
Like an arms race.
Yeah, essentially, with China weaponizing rare earths, the U.S. and other countries realizing, hey, we need to make sure that we have these materials, copper and such that our supply chains are in good shape. And so that global stockpiling and that global investment, I think, is supporting the metals and supporting countries like Australia that really export these materials.
Do you see all of this as a multi-year secular force that you just have to get behind? And to what extent should I just ignore traditional macro indicators like GDP, payrolls growth, when this is where things are heading, this is where governments and policymakers are pushing?
Yeah, I mean, I don't think you ignore the cyclical impulse. Like, if we were to have a recession, then these metals are going to take a hit. But I do think that there is going to be this strategic underpinning driven by geopolitical themes that is going to support these metals and these critical minerals going forward.
Are you spending more time talking about that than, say, the unemployment rate in America at the moment?
Yeah, I mean, we remain focused on the labor markets. It's key ultimately to what the Fed does and everything. But ultimately, I think you want to take these signals from the markets seriously. And when you see the kind of moves that we're seeing in copper or in the companies that are refining and exporting rare earths, like, that's something to pay attention to.
You certainly take note. Evan, it's good to see you. Thank you, sir. Evan Brown of UBS. Tariff threats on South Korea. The Kospi's up this year by more than 20%.
Well, I think a lot of people are just looking through and thinking this is going to be a Trump will chicken out or force the South Koreans to just expedite this investment deal they have with the United States. But to his point about what's going on with China, this administration couldn't have been clearer. Whether it's taking equity stakes in companies or whether it's talking about places like Greenland, it's the critical minerals they want access to and then the ability to process them right here in the United States.
Equity futures this morning positive by about 0.25% on the S&P, with an update on stories worldwide with your Bloomberg Brief. Joining us now is Yahara Anand. Hey, Yahara.
Hi, John. Airlines in focus this morning as earnings season rolls on. American Airlines shares up 2.2% after missing on fourth quarter results and posting weaker than expected EPS guidance for the full year. Meanwhile, JetBlue shares are falling 4% after reporting wider than expected losses per share for the fourth quarter. Meanwhile, the European Union and India concluded a free trade agreement after almost 2 decades of negotiations. It's part of an effort to deepen economic ties ramped up by aggressive tariff policies of the Trump administration. The deal includes reducing tariffs on imports of EU-made cars to 10% from as high as 110%. And here, the largest U.S. grid operator has been granted authority to divert power destined for data centers to households, hospitals, and other customers. The move aims to prevent rolling blackouts as an extreme cold snap strains electricity supplies. The order was authorized by U.S. Energy Secretary Chris Wright on Monday. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later this hour. Up next on the program, working to avoid a shutdown.
The White House supports the bipartisan work that was done to advance the bipartisan appropriations package. We absolutely do not want to see that funding lapse, and we want the Senate to move forward with passing the bipartisan appropriations package that was negotiated on a bipartisan basis.
Up next on the program, Henrietta Trace of Veda Partners, live from New York City this morning. Good morning.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
Stocks are doing okay, up by 0.25% on the S&P 500, going into a big 48 hours for big tech. The Nasdaq is higher by 0.65%. Down in Washington, under surveillance this morning, working to avoid a shutdown.
President Trump does not want any Americans to lose their lives in the streets of America and in American communities across the country. The White House supports the bipartisan work that was done to advance the bipartisan appropriations package. We absolutely do not want to see that funding lapse, and we want the Senate to move forward with passing the bipartisan appropriations package that was negotiated on a bipartisan basis.
So here's the latest this morning. Negotiations underway to avert a partial government shutdown. Senate Democrats pushing back against funding the Department of Homeland Security without new safeguards. Bloomberg's Tyler Kendall joins us now from Washington for more. Tyler, the buzzword there, obviously bipartisan. How bipartisan is the effort down in Washington?
Yeah, hey, John, good morning. Well, the spending package that is in front of the Senate was struck on a bipartisan basis and does include some hard-fought wins for Democrats, including a reversal to cuts that the Trump administration did when it came to foreign aid or medical research, for example. But when it comes to a way forward at the moment, it doesn't really seem like we are getting really a long, elusive off-ramp here, because while Republicans do say that they are willing to negotiate, the only options that have been put on the table as of now are non-legislative options. They're pointing to President Trump's de-escalatory efforts, such as pulling out the Border Patrol chief. But Democrats say that they want to see some real curbs tacked onto ICE that is in legislation, not just executive action. They are looking for things such as warrants and warrant requirements, also mandatory body cameras that could be included in actual written legislation. And at the moment, it's not clear if that's really going to happen. Perhaps we'll see some sort of separate legislative vehicle emerge, but at the moment, that would really take away Democrats' leverage because they want to see changes to this package, which is linked to the potential for a partial government shutdown. But we have to say that there are some big political risks, including for Democrats here, because if they just strip out DHS funding, that probably wouldn't impact ICE, since we know that the agency did get a big windfall when it came to the One Big Beautiful Bill. So, John, at this moment, we are watching this closely, but unless a solution emerges that both sides can get on board with, because Republicans need at least 7 Democrats to pass something, it looks like we are careening towards Friday's deadline.
This does feel different, though, Tyler, than what we saw in the fall with the record-setting government shutdown, where I feel like party lines are really hardened. We are seeing Republicans from the onset say, we're looking for an off-ramp. How much time do they have, though, to get to that off-ramp?
Well, they really only have until this Friday at midnight, Anne-Marie, because that is the government shutdown deadline. But you're exactly right. This is different because Republicans are saying that they're willing to negotiate. But as of now, the only things on the table are non-legislative action. So we're going to have to see how that ultimately revolves. The other big issue here when it comes to deadlines is that any changes to the proposed funding package that is in front of the Senate is going to have to get kicked back down to the House. And the thing is, the House right now is on recess. They're not even here in Washington, and they won't be until February 2nd. Tie in the weather complications, and that is only going to make this even more difficult to ultimately get passed. That is why we are watching closely whether or not some sort of separate legislation could ultimately emerge that Democrats could get behind. But at the moment, they are holding firm that they need to see specific changes when it comes to this package. Though, Anne-Marie, we can say this would be a partial government shutdown. They've already passed 6 out of the 12 required appropriation bills, and they are proposing that they could pass 5 more, just leave out DHS. But again, that opens up a whole slew of issues, including that they need the House to do so.
Tyler Kendall with the latest down in Washington. Tyler, thank you. To build on this conversation, Henrietta Trays of Vader Partners writing, at this point, a partial shutdown of the federal government on January 31 appears highly likely. However, there is bipartisan support for limiting the shutdown to just the Department of Homeland Security. Henrietta joins us now for more. Henrietta, welcome to the program. Immigration enforcement. The president won the argument. He won the election. Is he now losing the country?
Yeah, I think that's pretty clear. And you have a whole bunch of Republicans, especially those that are in very at-risk states, coming out clearly condemning the moves from ICE that resulted in the death of Alex Preedy over the weekend. And that kind of disruption and the fracture in the Republican Party is how you know that things need to change from the status quo that we have right now. I think, in addition, the personnel swaps that the White House is trying to do in Minnesota are just not sufficient. I was speaking with some Minnesotans last night, and they don't see a difference between Bovino and Homan. So they need to see quite a bit more out of the White House than what is currently on the table. The solution is actually pretty simple. From a Senate procedural process and from a House process, it's, maybe technically difficult. You got to get those members back, as Tyler was just mentioning. But you strip out the DHS funding from the underlying package of bills, get unanimous consent in the Senate to do that, move ahead, and you avoid a shutdown of the Defense Department, a shutdown of the Labor Department, and we proceed to, just focus on ICE.
Henrietta, just 2 weeks ago, you had an odds of a government shutdown 25%. Now they skyrocketed. So you think now, what is the percentage that we will shut down on Friday, and how long will the shutdown be? Because remember, we just got over, in the fall, the longest ever government shutdown.
I hear a lot of optimism behind the scenes from Democrats and Republicans that the path forward, as I just mentioned, is pretty simple. You just strip out DHS funding. And the problems for the White House is really optics. They have to sort of admit that there was a catastrophe in Minnesota and there needs to be remedies here and restrictions put on ICE. The White House is tacitly acknowledging that already with the personnel moves. But my base case expectation is that they do find an off-ramp here. Neither Republicans nor Democrats want this shutdown to happen, which is very different than the October 1st shutdown that we saw last year.
Well, the president also called Governor Walz yesterday and the mayor of Minnesota. Does that bode well for the White House or for Democrats? He's the one making that outreach.
I think this is a case where the American public is demanding change and both sides are prepared to give a little bit. Whether that's going to be sufficient to get you changed to a piece of legislation on the floor remains to be seen. But every side is recognizing that the killings have to stop. And it's so overwhelming in public polling that it's just obvious. You need to put your partisanship aside. You can't be talking about the Second Amendment. You can't be talking about ICE like it's okay right now. You got to move forward from both sides.
So if we have this off-ramp with the DHS funding stripped out, what do Democrats need to see to then sign up for DHS funding? Because Majority Leader Thune's going to need them to pass that through at the end of the day.
Yeah, absolutely. I think that Democrats are still pulling together a concrete list of what they want. There were some conference calls throughout the day yesterday. I think the most extreme is probably for DHS head Kristi Noem to resign, and that's definitely going to be something that stays on the front burner. She's actually scheduled to testify on March 3rd, if I'm not mistaken. So her time in the spotlight hasn't really even begun yet. And I think that's going to be a major point of focus for the Democrats. And it's a convenient out for a lot of the Republicans who want to see some real visible change to the immigration policies that are really dragging the president down right now with the American public.
I'm glad you brought that up. Do you think she is going to make it to that hearing? Because we have had Senator Tillis block all these DHS appointees until she decided to come on the Hill for a hearing, and they've been dragging that out.
Yeah, they really have. And March 3rd is a really long time away. Think about what's going to come in between then. The president has to deliver a State of the Union address. Immigration is going to have to be in the forefront. Hopefully there's no other escalation, and ICE really steps back from its very aggressive sort of patrolling of the streets right now. You have a lot to do before we get to March 3rd. I think the question of whether she makes it that long is a really good one. I don't know, but it's not a guarantee.
Well, speaking of the senator from North Carolina, he's got a big role to play in the process to nominate and confirm the next Fed chair. Henrietta, I thought this was going to happen months and months ago. What's happening?
You know, I've said this to clients quite a bit. If you think of the grand scheme of things of what's going on in D.C., from trying to annex Greenland to raising tariffs on South Korea to the killings in Minnesota, the Fed parlor game is actually the least insane or really scary or problematic part of the administration's focus right now. They don't need a predecessor for Jay Powell until May. So they can drag this out. It's already been, a couple months past due. Secretary Bessent said, it was coming at Davos. I think they got time, and I don't think it's a high-stakes thing. Obviously, the street is very closely watching it, but it's really just a parlor game between a couple of options that the street is pretty comfortable with. So as long as, even if there is a new hat thrown into the ring, like Secretary Bessent as a potential nominee, I don't think that that's comparatively a problem for the street, and the White House is happy to have that parlor game go on for a while longer.
You'll forgive the Wall Street bias, Henrietta. It's all we care about on any given day. You know that.
No.
It's good to see you. Henrietta Trays of Vader Partners. For the country, there are much, much bigger issues right now here on Wall Street. If you're tracking that story, you're going to have to wait, basically listening to Henrietta, and I don't get the impression that the president has made the decision just yet on who that person is.
No, we didn't get it at Davos. I mean, I know the Treasury Secretary said maybe we'll get it the week after Davos. It doesn't feel like it is an urgent matter at this moment for this White House. Who knows? The president's speaking tonight. He does like to revamp a little bit. Potentially, he talks about the Fed chair race. But to Henrietta's point, also, this parlor game, she's making it out to be like it's really not a big deal who he chooses. The problem is the process in the Senate and how quickly this could get done. To Senator Tillis's point, he's not doing it till the DOJ probe is wrapped up, or 347 days, whatever is left until he retires.
He said it's the process. It's not the individual, the process, not the individual, and this could take a whole lot longer. If you're just joining us, equities are positive by about 0.25% on the S&P. Coming up on the program, we'll catch up with the General Motors chair and CEO, Mary Barra, with an upside earnings surprise earlier on this morning. Plus, Danny has some of your morning movers. UPS rising after a strong sales forecast. That stock up in the pre-market by more than 3%. From New York City, you're watching Bloomberg TV.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geoeconomic news whenever and wherever it happens. I'm Vonnie Quinn in Sao Paulo, Brazil, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Big 24, 48 hours coming up for big tech. Stateside earnings coming up tomorrow from Meta and Microsoft. Thursday we'll get results from Apple. Look out for all of that. Equity futures right now in the S&P up by about 0.2% on the S&P 500 after a 4-day run with no losses. The longest stretch of the year so far for the S&P 500. Notable that a small caps had their first back-to-back losses on the Russell for 2026. Let's see if we can get some performance back from that big trade that's been picking up over the last month or so. The Russell this morning up by about 0.1%. In the bond market, can move on very quickly. We hit snooze so fast in fixed income stateside. 10-year bond yields up just a single basis point, 422.53. And going into the Federal Reserve decision tomorrow as the two-day meeting begins, twos anchored around somewhere between 350 to 360 with no rate cuts in sight for this meeting, at least 359.14 according to so many of you. Where are the fun and games? Where are the fireworks? Here they are right here. Gold, 7 consecutive days of record-breaking gains. Gold this morning up by 1.4%. Gold at all-time highs.
This is where everyone's hiding out. There's so many. This is part of the debasement trade. This is part of geopolitical uncertainty. This is a part of heightened central bank buying when it comes to gold, and not even those countries that are trying to evade sanctions, but others like Poland doubling down and making sure they're going after gold. I read from an individual this morning from RBC's Wealth Management talking about they could see $7K a troy ounce on gold by the end of this year. Do you know what I keep asking? And I'm sure individuals in the administration would say I'm just a conspiracy theorist. I wonder if this administration is finally going to remark gold.
You've been asking this over and over again for the last year or so.
Gold keeps rip-roaring. It's on a tear. It is smashing record after record. You see these banks coming out, Goldman, Bank of America, they keep having to move the goalpost when it comes to gold. And it is off to the races for this precious metal. At the same time, when you look at our balance sheet, it's $45 and change. And this is an administration that is obsessed with finding money anywhere to bring down the deficit. Well, billions of dollars potentially with just, adding a few zeros on the balance sheet.
Gold this morning up by 1.5%. If you're listening, Mr. Secretary over at the Treasury, I think Anne-Marie's got a message for you. Year to date, gold is higher by close to 18%. That's child's play. Silver, some massive volatility there in the last 24 hours. Silver so far, tracking this one, up by more than 7% on the year. We're up by something like 55, I think. Just a massive rip-roaring rally for that particular precious metal. As we count you down to the opening bell, about 2 hours away, let's get you some morning moves and cross over to Danny for more. Hey, Danny.
Hey, John, I got all earnings for you this morning. GM reporting in the last hour, seeing profit coming in at $2 billion, exceeding expectation. Also a healthy buyback being given, and again, just shareholder distributions. I know Matt Miller is going to be speaking to the CEO very shortly, so those shares up 4.5%. UPS also reported this morning a full-year forecast that exceeded expectations. Actually, the first time UPS has even given a full-year outlook in a year. So positivity there. They're also cutting businesses that are less profitable. Shares go up 3.7%. Finally, have a look at some of the airlines that reported today. We heard both from American and JetBlue. This one is interesting because American missed on their expectations. They also said that the storm was going to hit them, but investors finding something they liked out of that. Shares up 2.8%. JetBlue, the losses will be wider than expected. The struggles continue there, and shares are down 3.5% in the pre-market, John.
Hey, Danny, appreciate the update. Danny Berger there with the stock movers this morning. More from Danny in the next hour. On our radar this morning, the European Union and India reaching a free trade agreement in the hopes of offsetting Washington's tariff policies. The deal aims to reduce or eliminate some levies between the nations and double EU exports to India by 2032. Elsewhere, the Energy Secretary Chris Wright granted the largest US grid operator authority to divert power from data centers to households. PGM Interconnection can now order large facilities to switch to backup generators in order to reduce their burden on the grid. And finally, American Airlines reporting a miss on its fourth quarter earnings and weaker than expected EPS guidance for the full year. Elsewhere, JetBlue with wider than expected losses per share as it struggles to win over high-paying customers. American Airlines is higher in the pre-market. JetBlue is down by 3.5%.
This is all about making sure you can win over those individuals that are flying, as we've always talked about, in the front of the cabin. You have to wonder as well. These airlines are the ones that are suffering as well with this winter storm. They were suffering when there was a government shutdown. Potentially, we're going to have another government shutdown, and this just makes it an incredibly challenging environment.
JetBlue trading lower in early trading. More on that story in the next hour or so. Let's get back to those auto earnings. Bloomberg's Matt Miller joins us now with a very special guest. Good morning, Matt.
Good morning, John. Yeah, I have Mary Barra here, the CEO and chair at General Motors, I'm pleased to say. And Mary, really knocking the cover off the ball with these earnings. You see with your outlook more than $2 billion in extra profit and a profit jump for 2026. Let me start by asking what you attribute this to. Is it just the great sales and the financing of the higher margin vehicles like a Sierra, like an Escalade?
Well, first, I have to start by thanking the entire General Motors team, our suppliers, and our dealers for doing a phenomenal job. You know, 2025 was an exceptional year, especially when you look at all the challenges that we face, and I think it really demonstrates one of the core capabilities of GM, and it's our agility and our resilience. But the core of it starts with our great product portfolio, whether it's very affordable EVs like the Chevrolet Trax, all the way up to, you know, a supercar like what's behind me with the Corvette ZR1X. So couldn't be more proud of the team.
The ZR1X with 1,250 horsepower. It is indeed, I would call it a hypercar, Mary. That's not the bread and butter, though, for you. You really make these highly profitable, highly capable big trucks, and Americans are buying more of those and fewer of the EVs. Do you expect to continue to sell fewer of the EVs? I know you took a $7 billion and change write-down for that business in 2025.
Well, you know, the whole industry, we were on a path that we were working to get to 40 to 50% EVs by 2030. So now that the regulatory environment has changed and the consumer incentives have gone, there is going to be slower EV adoption. We're still committed to EVs, and we've got a great portfolio that we're working on taking costs out of. But in the meantime, we also have a great internal combustion engine platform. And you're right, full-size trucks are one of the strengths we have, as well as full-size SUVs, mid-size crossovers. So we really have a strong lineup across the board, and that is really what is, you know, fueling our business success.
I have had, as the host of Hot Pursuit, a Bloomberg podcast about cars, the opportunity to drive a lot of your EVs, from the Sierra EV to the Hummer EV to the Escalade IQ, and they're fantastic products. Are you not deterred that Americans aren't buying more of these vehicles? You know how capable they are. You know how useful they are in daily life. What needs to happen for more Americans to buy these EVs?
Well, I think the consumer is very rational when they're making a decision about what car to buy. Let's remember, it's one of the most important and expensive decisions that they make. And one of the things we have to continue to work on to drive EV adoption is a more robust charging infrastructure. And that still is continuing to happen. So every quarter, more and more chargers are available. I think as people in their individual communities see that they've got a robust charging network and believe if they have to go on a road trip, there's that as well, they're going to make that choice. And what we do see is once someone someone buys an EV, they see the technology, they see the driving experience, never having to go to the gas station, and they stick with EVs. So I think it will happen over time, and that's why during this period we've already got a great portfolio of EVs. We're going to continue to take cost out to get our EV portfolio profitable, and we're going to be well positioned as EV demand grows over the next handful of years.
What about the hybrids, Mary? I mean, GM was really a front runner, not only in EV technology, but in hybrid technology with the Chevy Volt. I remember when the Tahoe came out with a 6-liter gas engine and electric battery power. Will you start to sell more of the hybrid vehicles?
Well, we have always focused, as you said, we have great hybrid technology, we have great EV technology. We're one of the few OEMs that invested in a dedicated EV platform that allows us to have the portfolio we have. So we're focused on the end game, and we have affordable EVs. So I think that's where our primary focus is. We understand the technology, we have it in other regions. You'll see us with a handful of hybrids as we move forward, but right now our focus is really on having the right internal combustion engine portfolio and the right EV portfolio moving forward. And I think we're demonstrating that that's a winning formula, because over the last 4 years, we've gained share each year.
I wonder how much your racing efforts push towards that. And I know this is something I've talked about with your president, Mark Royce, on a number of occasions, but you're getting into so many more leagues. I watched the hypercars in Le Mans this summer, and looking forward to watching you participate in Formula One. Do you think this really boosts your brand awareness around the world?
Absolutely. We definitely see that it does. And I think, when you look at Cadillac and the strength of Cadillac, it is true luxury, true American luxury. F1 is the place that Cadillac should be showcased. So we're very proud to be a full works American team, anxious to enter this year in Australia. But I think it's going to be very important for the Cadillac brand. And we do have a really robust program that takes what we learn on the track and we incorporate it into our vehicles to make our vehicles better. It's true for Chevrolet as well as Cadillac and the entire portfolio.
I got to ask about the finance arm. GM Financial provided a massive liquidity buffer, I think $36 billion there. How do you think about, because you're doing buybacks, returning a lot of cash to shareholders, I'm sure they're happy about, the stock is near an all-time high, but how do you think about putting that aside for protection versus supporting shareholder returns, in case the auto cycle turns at some point?
Well, we've indicated that 18 to 20 billion is our cash target. Last year, we finished the year strong at around 22 billion. And we have a capital allocation framework of first reinvesting in the business, second, making sure that we have an investment-grade balance sheet, and then returning cash to shareholders. And we think based on the strength of our business and the cash that we generate, we can continue to do that well, and that's where our focus is.
The financial arm has added, I think, more than $2 billion to 2025 profit. So it's really a contributor, kind of a quiet profit stabilizer. Is that turning, though, as delinquencies and charge-offs rise a little bit? Is that starting to concern you as consumer balance sheets thin out?
Well, it's something that we watch very closely, but I think GMF does a great job in their business, and it is a very important business. Shout out to the GM Financial team for the great work they do. It's also very important from a loyalty perspective, because having a captive and being able to interface with the consumer on a monthly basis as they make their car payments, I think is just part of the ecosystem that we're building to really make sure we have that great relationship with the customer, and it shows that we have the highest loyalty in the U.S. of any OEM.
I look at loan originations in the fourth quarter, and I see that they're down pretty substantially, about 21%. And I wonder if that's a deliberate choice by GMF. Are you tightening your credit standards, or is that reflecting a softer demand at today's rates and prices, which are both fairly high?
Well, the car company and the finance company, they work together to make sure we have the right equation and what's going to optimize, profitability for the enterprise. And so I don't think you can look at one quarter. It goes up and down depending on what's happening in the external world. But GMF is a very important part of our portfolio of companies. And again, as I said, it works in concert with the car company to make sure that we have a strong business overall.
I have to, when I think of credit standards, I think of First Brands among some of the other businesses that have fallen to Chapter 11 this year. And I saw a report in the Financial Times overnight that you, along with Ford, your crosstown rivals, are negotiating to help send them a rescue line of sorts. Can you comment on that at all, Mary?
Well, what we're very much focused on is while we make sure we have secure supply is that transition period. So I think what you see General Motors and other OEMs working together to do is make sure that we don't have supply chain disruptions because of their financial situation. We've been working on it, but I think as we look at the immediate what's happening next week, next month, that's the work that we're doing, as well as in parallel making sure we have longer term supply. So that's what you're seeing with that announcement.
When you talk about the supply chain, I think about the concessions you're able to get out of your suppliers. I know that you're trying to keep costs down. You're under a threat of tariffs, or you already face tariffs in a lot of the places you produce. How much of those tariffs have you been able to pass through to consumers where you haven't been able to cut costs or get concessions from suppliers?
I think if you look at our portfolio, I think, for the most part, we've worked to offset it and with efficiencies across the board, making smart decisions on where we produce. And so very little has gone to the consumer because we are such a cost-sensitive business, and it's such a competitive business. But we continue to look at all of those levers, and we stay focused on consumer affordability.
You're operating, Mary, in the heart of America, and America has undergone some really tough times, especially over the last few weeks in Minnesota. What are you doing? What is General Motors doing to kind of keep the temperature down, to kind of keep the calm at your company and with your suppliers?
Well, we want to make sure that everyone stays focused on the business and is part of the solution, meaning de-escalating. I believe that's starting to happen. So that's what we continue to reinforce.
All right, Mary, thanks so much for the time. Really appreciate it. And I look forward to talking to you again. Mary Barra there, the CEO and chair at General Motors. John?
Hey, Matt, thank you, buddy. Great work as always. Matt Miller there on General Motors. That stock up in the pre-market by more than 4%. If you're just joining us, welcome to the program. Decent outlook for them. GM reporting an outlook for 2026, adjusted EPS in a range of 11 to 13 bucks. The estimate was 11.79. That's helping to push the stock higher. Also approving a new $6 billion share repurchase authorization.
Interesting discussion there that Matt just had with Mary Barra when it comes to also where the consumer is going. Jonathan, you've been just talking about this for months. She talked about GM will go to have a handful of hybrids. That's where the consumer is going, because there is still that consternation when you're buying a car. Will there be an EV charging station if I want to take this car on a long trip, which is why individuals want the hybrids. And right now, Mary Barra was saying the issue with the EV space right now is not the car, and Matt knows this because he's driven a lot of them. It's actually the infrastructure that the car needs in order to take it out.
Just to be clear, Matt was not at a GM last time I saw Matt. I was with Matt in the car yesterday. It was an Aston Martin SUV.
Ooh, Matt.
Not bad.
He has, I mean, I did go in a Porsche 911 with him before.
He told me he was test driving it and he's not buying it, but, Matt has a different kind of taste.
Is he your new driver around Manhattan? Because, these roads are very difficult. Matt is a good driver.
Miller handled these roads very, very well, I can confirm. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Back with us, here's Yahira. Hey, Yahira.
Hi, John. Turning to other earnings, we're seeing Boeing shares falling 0.5% in the pre-market despite reporting adjusted free cash flow for the fourth quarter that beat the average analyst estimates. Boeing highlighting that their 737 program lifted its production rate to 42 a month as it makes progress under CEO Kelly Ortberg following years of operational and quality issues. Meanwhile, Microsoft is rolling out a new AI chip as it pushes to provide an alternative to NVIDIA hardware. The chip will power Copilot for businesses and the latest OpenAI models on Microsoft's cloud. The company says the chip, the Maya 200, beats comparable chips from Google and Amazon on some tasks and is its most efficient system yet. And FIFA's former president is advising football fans to stay away from America and this year's World Cup. The U.S. is co-hosting the tournament with Canada and Mexico for about 5 weeks starting in June. Calls to consider a boycott are getting louder amid President Trump's immigration crackdown and a fraying relationship with Europe. We shall see. That's your Bloomberg Brief. John?
Yeah, Hannah, thank you. Just want to remind everyone where the 2018 World Cup took place. And no one seemed to have a problem with that. Russia.
Well,
a few years after going after
well, I spoke
Crimea.
to a lot of people that
And
went
European
to
nations all went to that World Cup.
I did speak to a lot of people that did go to that World Cup, and they said it was incredibly easy. The Russian government put out the red carpet for anyone who wanted to come and was encouraging, and a lot of people thought this is the one time.
That's the point I'm trying to make here, Anne-Marie.
Oh, no, I'm just saying that they made it easy for people to come, where the United States, when they have visa bans on some of these countries, is projecting potentially might be a problem. But yes, what you're talking about is signaling that seems off, because individuals were flocking to Russia after they invaded Ukraine, and look where we are today with that country.
Futures this morning positive by 0.25% on the S&P. Up next, an earnings recap and another look at the markets from New York City. You're watching Bloomberg TV.
For us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Revenue, for example, and moving on. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth for Solar Wave by empowering our customers across all our segments?
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Live from New York City this morning. Good morning. Welcome back to the program. Let's check out the equity market first. Equity futures positive by 0.2% on the S&P. On the Nasdaq 100, we're higher by 0.6%. This from the FX market just moments ago. The Bloomberg Dollar Index dropping to the lowest, the weakest level since February 2022. It's down by about 1/3 of 1% so far this morning. That's the move in foreign exchange. Renewed dollar weakness and gold out to fresh all-time highs. That's the price action. Let's get you a single name. GM shares rising after an earnings beat. We just caught up with Mary Barra of General Motors moments ago, and joining us now is Bloomberg's Craig Trudell. Craig, General Motors seems to be in a better place. Walk me through the auto market first, and then we can talk to which companies are best positioned.
Yeah, I think the U.S. auto market has proven to be quite resilient. There were a lot of sort of, bumpy moments last year, I would say, especially around, sort of Liberation Day and all the concerns about tariffs. And I think what we saw is, broadly speaking, the industry, making some moves around the margins to shift some production, doing some eating of tariffs, but they were able to afford doing that because we still have Americans buying, on the order of 16 million cars every year, and also buying a lot of, very expensive vehicles. I think we saw that especially toward the end of the year where, the average new car sold in the U.S. went for more than $50,000. And, this is just something that we've seen sort of, steady rise in vehicle prices that has really boosted these companies.
When you look at their gross tariff costs, though, they said it was about $3 to $4 billion. Mary Barra was very careful talking about tariffs, saying they made efficient, smart decisions and little are going to the consumer. But Craig, when you look at the year ahead, do you think more potentially would be passed through to the consumer?
I think there's a possibility of that. I think, you have, some flexibility if you're GM to sort of, move production around or to rely more on your U.S. plants and sort of less on your Canadian and Mexico factories. But, you can only do so much there. And I think, the willingness on the part of these manufacturers to sort of eat that has, probably reached a point of, needing to make some adjustments. We also probably have seen some changes more on the margins where rather than sort of risking the ire of this administration and out increasing MSRPs, you can sort of change, your sort of allocation of builds and only make sort of higher end trims, those sorts of things. So there's probably more to this in terms of, complications than meets the eye.
Matt was asking her about the EV business because, of course, the subsidies have gone away. And she basically said it's not the car, it's the infrastructure around the car. Is that Mary Barra basically saying GM is not abandoning EVs, but it's just going to be a lot slower?
Yeah, we've heard her say before that, EVs are still GM's North Star. And I think, that is an interesting sort of statement coming from her, given, the diversion that was sort of, thrown in last year, right, where U.S. policy went from, very pro-EV with $7,500 tax credits for EV purchases. The Inflation Reduction Act had all sorts of measures to try and, localize EV and battery production. A lot of that was just absolutely, sort of the rug was pulled last year. And that really complicates things for GM if indeed this is, the sort of end state for them, because they are going to have challenges with, being able to justify, keeping some of the production capacity that they built up over the last few years, and you've already seen them make some adjustments to bring that back down and get it more in line with where the consumer is, which is, not quite ready to go fully electric and, more willing to go the hybrid route where you're not having to necessarily plug in the vehicle and rely on public charging in particular.
GM this morning higher by 3.9%, higher by close to 4%. Craig, good to see you, sir. Craig Trudell. These companies do a phenomenal job of navigating really, really difficult issues in both China and in the US. Tough competition in China, policy volatility in the US, and this stock is still up by 4% so far this morning. Coming up next, we'll catch up with Matt Stuckey of Northwestern, former Kansas City Fed President Esther George, and David Seith of Nomura.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech.
Looks like it's going to threaten that earnings picture is going to be problematic. Looks like it's going to threaten that earnings picture is going to be problematic.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. Your price action looks like this. Looking for day 5 days with no losses on the S&P 500. We've had 4 so far. On the S&P, we're higher by 0.25%. On the Nasdaq, up by 0.6. In the bond market, a total snooze. Going into the Fed's 2-day meeting, bond yields higher by just 2 basis points, still around 420 at 422.93. Let's see if that changes. Heading into tomorrow, the big one tomorrow afternoon, a Fed decision followed by tons of tech earnings after the closing bell. We'll hear from Meta, Microsoft, and Apple on Thursday.
And just how high the bar is for these tech earnings, especially given the fact that everyone continues to want to double down when it comes to tech. They're moving away from the U.S. dollar when it comes to sell America, but they're not necessarily moving away from the tech earnings. We are in a bull market, but can they continue to basically justify all the CapEx spend we have seen from these companies?
AMH, you mentioned the U.S. dollar. Let's talk about it. In FX right now, the Bloomberg Dollar Index down to levels we haven't seen since February 2022. 4 days of weakness, a lot of weakness very recently.
A lot of weakness when it comes to the U.S. dollar, and where is all this going? Everyone is talking about this gold trade and precious metals and also silver. There's a joke going around on Twitter that actually if you win the Olympic medal for silver, you're going to want to maybe swap it with the individual that won for gold. Silver and gold last year had their best year since 1979. Every bank on Wall Street is talking about the fact that now for gold, maybe the spring we're going to see targets they thought we were going to see the end of this year. RBC Wealth Management talking about $7K a troy ounce by the end of this year. So you have that debasement trade just continuing, and it's continuing sharply this morning.
Explosive moves in precious metals, tons of volatility in something like silver. Silver up by 8% right now. Gold is up by about 1.6%. 7 after big moves already so far year to date. Coming up this hour, we'll catch up with Matt Stuckey of Northwestern Mutual Wealth Management, with stocks trading near record highs. We'll speak to the former Kansas City Fed President Esther George, looking ahead to tomorrow's Fed rate decision, and David Seath of Nomura as another government shutdown is looming. We begin this hour with stocks pushing towards fresh records as a key week of earnings continues. Matt Stuckey of Northwestern Mutual Wealth Management writing the following: given elevated valuations and very tight credit spreads, earnings growth is likely to be the bigger driver of equity returns looking over the next year or two. Matt joins us now for more. Matt, welcome to the program. Just how much of the heavy lifting will be done by a handful of tech players?
Look, I mean, I think tech is going to continue to be the main earnings growth driver for the S&P 500, and it needs to be given the concentration levels of the S&P 500. However, that's not where the fastest earnings growth is as an asset class. Certainly big tech is going to continue to do well, but since earnings estimates bottomed in mid-May of 2025, the fastest earnings growth is in the Russell 2000. Blended forward 12-month earnings estimates are up around 25% from that kind of low water mark. The aggregate S&P 500 is up 14% or so, and that's one of the reasons why you're seeing the broadening happen in markets. Just the last 2 or 3 years, if we're looking at kind of the percentage of S&P 500 companies that outperformed the aggregate index, it was between 20 and 30%, and so over the last 4 months, you've seen that push up north of 60%. Earnings growth is going to be the big lifeblood going forward, and it's the key to continued broadening trade as we look in 2026.
Well, Matt, I think that's the right question to be asking. Just how much life does that broadening trade actually have? And does it go well beyond just a short-term rate cut story like we saw at the back end of last year? To your point, earnings, a better backdrop for growth for the year ahead. Do you believe it has legs?
I think it does. And certainly additional rate cuts from this point forward would be helpful. But don't forget the rate cuts that we have in the rearview mirror that take time to work itself through the economic system. I think that's really what's pushed up earnings estimates so far this year. And as the world has adjusted to higher rates, now they've come down somewhat. I think just the passage of time is also a factor to benefit kind of more areas of the economy pushing forward and pushing estimates higher on the earnings side of things. The other area that we can always point to is just the value dislocation, that the setup has here for different areas of the market complex outside of the S&P 500. On a forward-looking basis, you're seeing 7 multiple points of discount for things like small cap relative to the S&P 500. That's been persisted the last few years, but it's starting to get unlocked now that earnings growth is starting to be a driver in terms of growth going forward.
Is it being unlocked because of productivity, or to John's point, because maybe we are going to get more of those rate cuts?
I think it's a combination of things. So it is partially due to rates coming down. We get some cyclical parts of the economy to stop, basically just treading water and moving sideways and start to grow again. But also, if you think about the secular horizon, if artificial intelligence is going to unlock a lot of productivity across the economy, think about the labor intensity of things like small cap and mid caps, and really where the torque might be in terms of using those productivity benefits to drive earnings estimates even higher. So to me, productivity as well as cyclical recovery are keys on a go-forward basis for this broadening trade to persist in the upcoming year.
You don't think that the Fed is going to cut or do anything this week, but you do say at the press conference will likely be the only source of volatility. What are you expecting from Jay Powell?
Well, I think he's going to be deflecting a lot of questions from your colleague, Mike McKee. But in terms of just the ongoing messaging, I think, maybe some urgency is starting to leave the room in terms of the necessity for additional rate cuts, just based on, a couple of back-to-back labor reports that didn't show, continued deceleration in the labor markets. However, I think, the messaging is going to also have some positive nuggets for equity investors out there, just that, the continued kind of view on the inflation lens maybe separate some of the inflationary impacts from tariffs, and if we adjust for those, that they're continuing to see progress on inflation moving back to their 2% mandate. And so if there is any volatility, it's probably in the press conference, but I think if we're looking at this, it's unlikely to be the type of fireworks show that we've seen in prior meetings.
Yeah, Matt, to your point, the fireworks might be after the closing bell when we hear from Meta and from Microsoft. Two companies in two different positions, both spending a lot of money, but do you expect to see more performance dispersion within that cohort of massive companies?
Well, I think along with the results, the plans for CapEx are a huge watch point for the S&P 500, because if we're looking, at this point a year ago, what these companies were saying they were going to spend in CapEx versus what they're saying today is 80% higher. And that revision higher in terms of capital expenditures has been a huge driver of earnings growth for the largest technology companies. And I'm very interested in seeing what they have to say about, plans moving forward. Did those get revised even higher from where they sit today? In terms of, specifically to Microsoft and to Meta, I do think that both of those names actually have a little bit of upside in front of them, just given, some of the weakness we've seen relatively in their performance. And expectations as a result are somewhat more muted for these companies versus just 6 months ago.
Matt, the market reaction function seems to have shifted in the last 6 months as well in the face of increased CapEx spend, particularly with a company like Meta. Is that the risk into tomorrow afternoon?
Yeah, that's an interesting question. Unlike the Oracles of the world, the vast majority of Meta spending has been cash flow financed. And so, they have the ability to adjust up or down, just given, their enviable financial position. I think investors are starting to demand a little bit more in terms of line of sight on returns on that cash flow spend in the form of additional CapEx. However, I do think that they have a lot of options in front of them, just in terms of if they do need to adjust and continue to show, ongoing efficiency gains in their business. To me, I think that they have a lot of options that they can lean into here.
Is there a lot of investor tolerance left? Matt, that's kind of what I'm getting at. Are we reaching the point where investors are starting to push back?
I think so. Just in terms of, you've seen the multiple compressed for Meta. I think that's a sign that investors are losing a little bit of patience. However, you have to go to a lot of other companies outside of Meta to find, the attractive balance sheet health as well as cash flow and earnings growth. So to me, I think that they can, have the enviable position of being able to navigate these, evolving landscapes from a position of strength. And so, we'll stay tuned and see what they say at the upcoming earnings report. But I don't think they're necessarily going to be disappointing in terms of, the expense growth that we see for 2026.
Matt, it's good to see you. As always, Matt Stuckey there of Northwestern Mutual Wealth Management. Looking ahead to the Fed, hit snooze apparently. You can skip that, according to Matt and to many others as well. After the closing bell tomorrow, Meta and Microsoft. The day after, we'll hear from Apple. Then the following week, we'll get Alphabet and Amazon. Equity futures doing okay, up by 0.25% on the S&P. With an update on stories worldwide with your Bloomberg Brief. Back with us, here's Yahira. Hey, Yahira.
Hi, John. Shares of major U.S. health insurers are plunging this morning after a proposed plan to keep payments to private Medicare plans essentially flat next year. Medicare Advantage payment rates will rise by just 0.09% in 2027, which is much less than what was expected. The proposed policies will mean barely any increase for Medicare insurers that have seen profits squeezed by rising care expenses. Meanwhile, speaking of Meta, it's planning to test new subscriptions that will give users exclusive features on its apps. TechCrunch reporting Meta will test the premium subscriptions on Instagram, Facebook, and WhatsApp. The subscriptions will unlock more productivity and creativity, according to Meta, along with expanded AI capabilities. And U.S. airlines are cutting flights as freezing temperatures hamper the restart of operations at some major hubs. According to FlightAware, almost 1,000 flights were canceled as of 1 a.m. Eastern this morning. The industry is also bracing for further disruptions as the National Weather Service warns of another potential significant winter storm later this week. That's your Bloomberg Brief. John.
Yahira, thank you. Thanks for the update. More from Yahira in about 30 minutes' time. Up next, we'll get you some morning calls. Plus, we'll catch up with the former Kansas City Fed President Esther George, looking ahead to tomorrow's Fed decision. Live from New York City this morning. Good morning. You're watching Bloomberg TV.
a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
It's not a big thing to say that there is a high bar for earnings to jump over. It's not to say it's not achievable. There's a lot of parts of the economy that didn't experience great earnings growth over the last couple of years because of the concentration in just Mag 7, but that is still an extraordinarily high bar for this market just to meet expectations, let alone beat them.
That was Cameron Dawson of New Edge Wealth going into Mag 7 earnings season. It kicks off big time tomorrow after the closing bell when we hear from Meta and from Microsoft Thursday. Results from Apple. Into that, futures positive by 0.25% on the S&P 500, on the Nasdaq 100 higher by 0.65%. The S&P within striking distance of all-time highs, within 0.5% of a brand new record. Look out for that around the opening bell. That's the price action. Let's get you some morning calls. First up, Bank of America cutting its price target on Amazon to $286. The firm citing multiple compression in Amazon's software business. That stock is up by 0.8%. Your second call from Roth Capital raising its price target on Alphabet to $365, expecting it to beat estimates in its fourth quarter report. That stock is up by another 1.3%. And finally, Deutsche Bank upgrading CoreWeave to a buy, citing opportunity for it to differentiate versus its peers. That stock is higher again. It's up this morning by close to 5%. Let's turn to the Federal Reserve. The central bank is set to make its first rate decision of the year tomorrow as threats to Fed independence build. Joining us now is the former Kansas City Fed president, Esther George. Esther, welcome back to the program. Before we get into the substance, the economic backdrop, the policy, I want to pick up on the more assertive stance, the more aggressive posture, if you will, that Chairman Powell seemed to be taking this year to defend central bank independence. I'd love your reaction to that and whether you believe he'll carry that into the news conference tomorrow afternoon.
Yeah, good morning, Jonathan. I think the chairman had to take this move. I think we have been dancing around these threats to independence and really trying not to make too much of it. But I think the chairman reached a point where he really did have to speak out and send a message to the public about how important the decision-making of the central bank is, that it not get caught up in political issues. And as you saw, the reaction from around the world, from former policymakers, was quite supportive of that, as was I.
That's when it comes to the video he released in reaction to the subpoena from the DOJ. But he also recently went to the Supreme Court to attend the hearing of Lisa Cook. And the administration said that he was now politicizing that hearing. What's your reaction to that movement from Jay Powell?
Well, I think the Supreme Court's decision is absolutely consequential to the future of the Federal Reserve and thinking about how this body will weigh in on the ability of removing Fed governors. So clearly, I think as a leader of this institution, his interest would be high in understanding how the courts might be talking about this and what the arguments are that are presented. I didn't view that as a political one.
Given these stances we have seen from him, do you think in the press conference he's going to be more willing to engage when reporters obviously ask a number of questions that are really on this line when it comes to politics?
Well, I'm quite sure he's going to get a number of questions, and I suspect he will address them. At the same time, though, trying to keep the focus on what it is this committee is really focused on, and that is responding to economic conditions in the United States. And so, yes, I think he will have to address what are likely to be a number of questions, and he may do so in the fashion he did in his previous statement. Again, bringing it back, though, to this is the job of the central bank and where he most likely will want to focus today.
Esther, do you think that the economic backdrop at the moment gives them the space to hit pause for a little while?
Yeah, I agree that it's time to take a breath on these rate cuts. They've made a number of cuts that are still feeding through the economy. And so I think it makes sense in the face of elevated inflation and what seems to be coming this year, that it would be a good time to pause and really take stock of how they assess the economy on both sides of their mandate.
What do you expect is coming this year on the inflation side?
Well, my own view, Jonathan, is that inflation is something we've got to keep a careful eye on, because I continue to hear this idea that the full impulse of the tariffs has not fed through yet. I think companies have been trying to do their best in managing, pushing through those costs, but you could expect, I think, that the first half of the year we will see more price pressures coming in there. You have easy financial conditions now, and you have a fiscal situation that I think is going to be a tailwind, both on the consumer side and business side, with some of the new rules coming into play. And so I think all of that should make us very cautious about inflation expectations, staying firmly anchored at that 2%, really raising, I think, the attention that the Fed has to pay on that inflation mandate.
I understand your concern about inflation potentially pushing higher, but hasn't the Fed basically acknowledged that they're no longer looking for a 2% target, given how many cuts we've had, and it's been closer to 3%?
Well, they've certainly moved in the direction of putting more weight on the labor market part of their mandate and have emphasized that. And I think, fair enough to look at that, because you have seen a dramatic change in the data from a labor market that was really tied, a number of job openings, and that's sort of reversed and pulled back. At the same time, though, this is a Fed that just released its framework saying 2% was the target. They have to keep their eye on inflation expectations. And the truth is, households and businesses are beginning to agitate a bit, if you will, even in these survey measures, about their concern about future inflation. So I think it's a very good time just to reassess and be quite confident about your assessment of inflation before making further rate cuts.
When it comes to the potential tariff pass-through, we have heard from Amazon. They're saying that more of the tariff pass-through is actually starting to creep into some of the prices. But do you think that consumers will bear the brunt of it, or really will it still be corporate America that tries to bear the brunt of it this year as well?
Yeah, Marie, we'll have to see how this plays out. I mean, so far, I think businesses have been very careful not to overwhelm consumers with these price increases, but there is a limit to that, as you know. And I think consumers have been bearing the cost of this, and I think they will continue to. We saw some of that, I think, come through in the Fed's Beige Book most recently, to say that is still very much on the minds of businesses as they come into this new year.
Esther, it's so strange to have a conversation right now about this really robust backdrop for economic growth. At the same time, we have these concerns about a weaker labour market. What do you think explains that disconnect of the last 12 months? And do you see it reconciling in the next 12?
Well, it's easy to start with the data, Jonathan, and say, the government shutdown gave us a little scramble as it relates to that. So it's going to take a little while, both on inflation data and labor market data, to work through that. But I think we also have to recognize that while demand has come off, and you can say demand came off from employers because of uncertainty, because of making more technological investments that would substitute for labor, you've also seen the supply side be hit directly too. And so those two things have left us with an unemployment rate that looks pretty low all in, but it does make you ask questions about where that labor market is headed when, people characterize a low hire, low fire environment, and you see very narrow sectors of the economy that are actually adding labor. So again, I think all of that weighs in the balance for the Fed of saying, let's wait and understand, given what we've done so far, what these dynamics are in the labor market.
Esther, it's good to see you. Thanks for dropping by. A big meeting for the chairman tomorrow, and not on policy, but on the politics. Esther George there, the former Kansas City Fed president, ahead of that meeting. Two-day meeting begins later on this morning, concludes tomorrow. The news conference with Chairman Powell tomorrow afternoon. Full coverage here, of course, on a special edition of Bloomberg Surveillance. That disconnect between growth and payrolls is intriguing for many people. I think there is an obvious supply-side response that you can make. You can say that obviously immigration is much tighter over the last 12 months, but unemployment started to bleed a little bit higher as well, which gave some people on the committee, enough people on the committee, reason to reduce interest rates.
But they did it 3 times now, which is why Esther George thinks it's time for a pause. And there are individuals that are concerned potentially this year more tariff pass-through. She says they're still committed to their 2% target, even though they continuously cut when it's close to 3. But it's a very curious moment. You have Atlanta GDP sticking to 5.4% growth. A lot of individuals are talking about an economic boom. CEOs saying they're amped up for this upcoming year. And at the same time, individuals on the Fed are concerned about potentially making sure the economy can grow and not have weakness in the labor market.
And now we've got this disagreement over inflation. Esther George suggesting things might pick up towards year-end off the back of fiscal stimulus, tax refunds, a better backdrop for economic growth. Peter Chi of Academy, by the way, saying this Fed is so focused on missing transitory that they'll miss inflation falling, that the tailwinds for disinflation are strong enough that the opposite story's going to be the story of the year.
Which is why it is challenging to decide what you think the Fed is actually going to do, because a lot of people have a different take on where inflation is going and also where the unemployment rate is going. I thought it was interesting, once again, we heard from Torsten Slok talking about really it's going to be a blockbuster year this year when it comes to the fiscal impulse, the tax rebates we're going to get. And we heard from Cameron Dawson, it's an election year. What is going to be the impulse of Washington to spend and make sure consumers are shored up?
The great debate of the moment for the market, it speaks for itself. Rate volatility is low. The bond market's still somewhat range-bound. The 10-year at the top of a recent range. The 10-year bond yield at the moment at about 4.23. Coming up next, we'll catch up with David Seif of Nomura as another government shutdown is looming. Plus, Danny's back. She's got your morning movers. GM rising on a fourth quarter beat. GM in the pre-market up by 4% from New York City. This is Bloomberg.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
So this is what the Treasury Secretary said in the last 24 hours. I was in the Oval with the President today. He spoke to Prime Minister Carney, who was very aggressively walking back some of the unfortunate remarks he made there at Davos. So here's Prime Minister Mark Carney this morning speaking to reporters. He does not regret the speech made in Davos, and he doesn't appear to be walking anything back.
Well, the Prime Minister also didn't mention Trump by name. I think the administration took it as a slight to the administration, especially when Trump got up there, gave his speech, and said, you know, Mark, maybe think twice next time you give a speech. But to Mark Carney's point, he's not making a U-turn, even though certain Europeans that want to distance themselves from Ottawa and that, like Christine Lagarde, he didn't actually mention the U.S., but it was pointed to the U.S. He was talking about what he called coercion. I love that line about middle powers. That's what everyone kept coming up to me talking about at Davos. If you're not at the table, you're on the menu. Mark Carney standing by his words.
The tension between the US and Canada continues to build. Let's turn back to the price action. Equities look like this. Equity futures on the S&P still positive. 4 days, no losses on the S&P 500. Can we make it day 5? We're up by 0.2% on the Nasdaq, higher by 0.6 tomorrow. Earnings from Microsoft and Meta in the bond market. We've talked about how quiet things are, given the risks elsewhere. The 10-year bond yield at 4.23. Yields creeping just a little bit higher at the long end of the curve this morning, up by 2 basis points on 10s and 30s. And even with that move, this dollar a little bit weaker. The Bloomberg Dollar Index at lows we have not seen, the weakest level since February 2022. The dollar's weaker and gold is at fresh all-time highs.
Gold just continues to go higher, and so does silver. After having their best year for both of these metals since 1979, they are coming out in the new year absolutely swinging. You're seeing banks lift their forecast for their 5K was supposed to be the end of this year. Now that's the end of January. They're talking about maybe 6, 7K by the end of this year when it comes to the precious metal.
The gold up another 1.5% this morning. Silver up by close to 8. As we count you down to the opening bell, about 1 hour to go. Let's get your morning movers with Danny Berger. Hey, Danny.
Hey, John. Kicking things off with GM earnings. A big showing from them, increasing profit by $2 billion. A $6 billion buyback, share buyback authorized too. People are buying the big SUVs, even if they are buying less EVs. Shares up 4.2%. Elsewhere in earnings, diverging fortunes between the airlines. American Airlines shares are up 3.5%. Yes, they missed on their earnings, but gave an upbeat forecast for 2026, despite the fact they are seeing an impact from the winter storm this past weekend. For JetBlue, it continues to be their lack of being able to capitalize on moving into more premium offerings. Their loss is wider than expected. Shares down 5% in the pre-market. Finally, the healthcare providers, they are getting hit. The insurers in the pre-market by a huge amount. The plans going to Medicare companies, the private ones, the payback from the government, smaller than expected. It's basically flat on the year, 0.09% raise. Expectations were as high as that payback should be lifted as much as 9%. And on top of that, some pretty weak earnings from United Health, and shares are down as much as 15.5% this morning, John.
Danny, thank you. Thanks for the update. More from Danny in about 30 minutes' time, alongside Matt Miller to take you into the opening bell. JetBlue needs a rebrand. The business product is pretty decent.
Mint, right?
Yeah, I think the Mint product's pretty decent. You can question whether they've got the right routes. People obviously don't carry the credit cards to get the points, so they wouldn't spend them on JetBlue. They'd like to spend them on, say, Delta, whatever. The product's actually decent. I've flown JetBlue Mint in the past, and it's as good as the others.
I'm with you. Because you told me it was so good, I decided to try it once on a flight to LA, and I was shocked. The food was really good, really nice eye mask that they delivered, really nice pillow, but they don't actually market it the way you feel it in the cabin.
The brand feels like Spirit.
Yes.
That's the way I think people perceive the brand to be, but it's certainly not.
Growing up, JetBlue was always supposed to be a cheap way, I remember, to get to Florida if you wanted to go to Miami or go to Disney World from New York. Now, if they have a premium product, they have to do a lot of convincing to the consumer that has more of a nostalgia, cheaper JetBlue in their mind.
That's the latest on the airlines stage side. Let's get back to the Federal Reserve. Two-day meeting begins later this morning. Interest rate decision tomorrow. Bloomberg's Mike McKee joins us now for more. Good morning, Mike.
Good morning, John. Well, in about an hour, the Fed meeting starts. And speaking of airlines, we hope everybody on the Open Market Committee made it to Washington, given all of the travel interruptions that we have seen. Along with the Fed meeting starting today, we get consumer confidence. This will be kind of important, more than usual, in the sense that everybody wants to know whether the consumer is pulling back or not, and how concerned they are about what's going on in the United States these days. Tomorrow, of course, all eyes on the Fed decision at 2 p.m. Eastern Time. Thursday, jobless claims. Trade balance will make a big difference in the GDP numbers for the fourth quarter. So a lot of people looking to that. And then Friday, December PPI is going to be really interesting because you take the December PPI and the CPI numbers and people can figure out what PCE is going to be for December. And some of the experts in this are already saying they think it will go up over 3%. If that were the case, that gets the Fed's attention and makes a big difference. The other thing that makes a difference this year, maybe the change in the Fed voting roundup, the number of the members who are now going to be voting, including Beth Hammack, Lori Logan, Neil Kashkari, and Anna Paulson. They kind of replace people who have the same views from last year. There's a feeling they'll get more hawkish, but really it's Hammack and Logan who are hawkish, Kashkari in the middle, and Paulson is kind of dovish. And then there's always Stephen Myron. He's still around. His term ends on Friday, but he can stay till someone else replaces him. Someone else is nominated by the president, and we expect him to dissent on whatever decision the Fed makes. And then the big question, of course, on Friday is, does the government shut down at midnight? If so, do we go right back into the data hole that we have been? ISM manufacturing. Well, you can see on the left-hand side is what we will get, the private sector numbers, ISM, the ADP numbers, Michigan sentiment. What we wouldn't get is December retail sales. We don't have a specific date for that, but it would be in jeopardy. Durable goods orders, housing starts. JOLTS and jobless claims. People want to see that. But, of course, look at the big one on Friday, the January jobs report. Not only do we get that, but we get that revision to show how fewer jobs were created in 2024-25 that everybody has been pointing to.
Mike, it's the time of month where we typically field loads of questions that people want you to ask in the news conference tomorrow. And I have to say, the questions we've had so far, they have nothing to do with the data. They have nothing to do with monetary policy decisions. They have everything to do with the chairman's more assertive stance to the White House a few weekends ago. And they want to know, Mike, whether he'd be willing to engage in a conversation, at least tomorrow afternoon, about what he's going to do after May.
Well, we'll find out, because no doubt, John, somebody's going to ask that question. I certainly would if I'm the first one called on. But does the chair want to continue engaging with the White House and perhaps ratcheting up the temperature, knowing that it would have an effect on Wall Street? Or does he want to disengage? Does he want to say, I stand by my comments, but I'm not going to have anything further on that? That's going to be the real question. What's the strategy at the Fed for handling this?
Mike McKee, thank you, sir. Mike McKee in the news conference tomorrow afternoon. And Mike's right. What is the strategy? Because the strategy appeared to change a few weeks back.
Yeah, there was a huge turning point after the DOJ sent the subpoena over that Friday. Chairman Powell also waited till Sunday when the markets were just about to open in Asia, or maybe they just did open, when that video was actually released. He could have released it Friday night. Saturday he had all day, markets were closed. He waited till Sunday night and decided to send out this video. Then on top of that, the administration said he's being political by showing up at the Supreme Court hearing of Lisa Cook. So January, we have seen a very different Jay Powell show up when it comes to these issues that many in Washington would say are very political. So does he engage at least a little bit with some of the reporters?
Let's stick with Washington. David Seif of Nomura writing the following: a partial government shutdown seems fairly likely to begin the weekend, with Democrats refusing to support DHS funding following the recent events in Minneapolis. David joins us now for more. David, good morning.
Good morning.
Is any of that consequential for the world that we track?
You know, it's consequential for we economists who may once again lose access to data. But the economy is just trudging along, doing so well, despite all the chaos, for lack of a better word, that is out there. We've had a couple of great quarters of growth, and we think that Q4 and Q1 of this year are also going to both be fantastic quarters for growth.
So in terms of damage, if there was to be a partial government shutdown, would it do any damage to growth?
We think it would be more of a rounding error than anything. I mean, I don't want to say zero, of course, but we didn't see a huge amount from the government shutdown that was the longest we'd ever had. This would, first of all, only be a partial shutdown, so a lot less would be affected, and we would expect it to last a much shorter period of time if it were to occur.
If it's going to last a shorter period of time, what's the off-ramp? How do they figure this out when it comes to DHS funding? Because Senator Schumer says he's not voting for those appropriation bills unless DHS funding is delinked.
Yeah, well, I think that Schumer and most of the Democrats are going to be a no almost no matter what. The key thing is, can you get that handful of moderate Senate Democrats to go along with it? And you have heard at least some softening of the rhetoric from some of the more moderate Democrats, including some of the ones who are retiring, who want to do a little bit less posturing. So I think there is a deal to be had. It's not quite clear how much the White House would need to give, and it's not quite clear how much they're willing to give.
Speaking of posturing, tomorrow's news conference with the chairman of the Federal Reserve. Do you expect that to be about policy or politics?
I expect it to be a lot more boring than people are hoping for it to be, probably.
Boring?
Yeah, I think
Fireworks.
Powell, well, the questions may be interesting. I just don't think the responses will be all that interesting.
Well, that's the important question.
Yes.
Because I would have agreed with you 3 weeks ago,
Yeah.
4 weeks ago. Then something changed, something snapped for Chairman Powell.
I think that's right. But I don't think we're going to get another round of that at this specific press conference. I mean, the first thing is that these press conferences, it's really the job of the Fed chair to represent the views of the committee, whereas any other time, a Fed speaker is speaking for him or herself. And so this may not be the forum for that. I would expect Powell to largely refer to previous speeches, say that he's allowed to attend a Supreme Court hearing if he wants to, and really not be willing to engage on that front, even though I know that's what we all probably want to hear more of.
I'm looking less forward to now this press conference if you don't think he's going to engage. But if we sit on the Fed and the race, what's going on right now, we spoke to Senator Tom Tillis in Davos, and he was pretty emphatic. He is not moving, not because of the person, because of the process. The DOJ subpoena, all of what's going on in that investigation into Jay Powell and the Fed needs to be wrapped up before he moves. Do you think we can have a much longer Powell-led Fed, given what is going on in terms of this investigation?
Well, certainly if this were to extend beyond the June meeting, so the middle of June, Powell most likely would be selected as chair pro tempore, and therefore be allowed to continue running on a meeting-by-meeting basis until his successor is confirmed. I think, though, that the administration would really like to avoid giving Powell even one additional meeting, and so it just puts a lot of incentive on the DOJ to wrap this up sooner rather than later, because Tillis's threat is extremely credible. He can do it. He seems set to do it. And so I think the real pressure is to get this wrapped up in a few weeks.
But given that, and we have not heard from the Oval Office yet on who the president is going to be picking, do you think they are going to push this down, kick the bucket down when it comes to deciding on who's going to lead the Fed?
I do think that, but in fairness, we've actually at Nomura been saying for quite some time that we thought this was going to be a much longer selection process than expected. Trump has historically taken a good deal of time to come up with decisions for important candidates. And then more than that, it seems as though he's not terribly thrilled with any of the candidates. He, on the one hand, seems to have soured a little bit on Kevin Hassett, who was seen as sort of that big insider. But you've had other comments, maybe they've gotten a little bit less press, but I think they're important, where he talks about, well, I'm a little worried about selecting somebody who acts like he or she is going to do what I want them to do, but then changes their mind. And this is a job where he can't fire the person, as he knows also well. So it's that much more important, presumably, to the president to pick somebody who he sees as a real dyed-in-the-wool loyalist.
Does this make it harder for you to forecast policy for the year ahead?
Well, we think there's going to be 2 cuts under the new Fed chair, and that is really based on the politics and the changing dynamics of the Fed, much more than on the fundamental economics of it. We think no matter who Trump does end up with, it will be a very dovish shift on the Fed as a result of the new chair, and that the committee will give at least some deference at the beginning to that new chair, allowing a couple more cuts.
David, it's good to see you.
Always a pleasure.
Thanks for dropping by. Thank you, David Seif there of Nomura. That Fed decision tomorrow afternoon. Let's get you an update on stories worldwide with your Bloomberg Brief. Here's Yahara Arnold with more. Hey, Yahara.
Hi, John. President Donald Trump is threatening to raise tariffs on South Korean goods to 25% from 15% in a post on Truth Social. The president saying the country's lawmakers have not lived up to the deal they agreed to, with the new rate applying to autos, lumber, pharmaceutical, and other products. Meanwhile, Microsoft is rolling out its new Maya 200 AI chip as it pushes to provide an alternative to NVIDIA hardware. The chip will power Copilot for businesses and the latest OpenAI models on Microsoft's cloud. The company says Maya 200 beats comparable chips from Google and Amazon on some tasks and is its most efficient system yet. And a new documentary film about First Lady Melania Trump is struggling to fill theaters. BoxOffice.com projecting $1 to $2 million in opening weekend ticket sales. The film was purchased by Amazon's MGM Studios for $40 million, and the company is spending an additional $35 million on marketing. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. Up next, setting you up for the day ahead, we'll catch up with Nisha Patel of Parametric, expecting the Fed to hold interest rates steady at tomorrow's meeting. From New York City, you're watching Bloomberg Surveillance.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
It's time to take a breath on these rate cuts. They've made a number of cuts that are still feeding through the economy. And so I think it makes sense in the face of elevated inflation and what seems to be coming this year that it would be a good time to pause and really take stock of how they assess the economy on both sides of their mandate.
That was the former Kansas City Fed President Esther George weighing in on the Federal Reserve. That 2-day meeting begins a little bit later this morning down in Washington, D.C. It concludes tomorrow afternoon. That news conference with Chairman Powell is just around the corner. As we count you down to the opening bell, equity futures doing okay, just about positive on the S&P 500, up by 0.2%, up by 0.5 on the NASDAQ 100. Just a bit of weakness creeping into the small cap trade. A lot of bulls out there on the Russell, a little bit of weakness, back-to-back losses on that particular index over the last 2 days. This morning, some underperformance once again. As we count you down to the cash open, just around the corner, about 41 minutes away. This is what the next few days look like at 4 p.m. Eastern Time. The president speaking in Iowa. Tomorrow, an FOMC rate decision and Chairman Powell news conference, plus earnings, Microsoft, Meta, Tesla. Thursday, more data, another round of jobless claims, and Apple earnings. Friday, more data, PPI, and the government funding deadline going into the weekend, which has all of a sudden become an important topic.
I know. Henry & Trades 2 weeks ago had it at 25%. Now it's north of 70%. You heard from David Seif. He's talking about, yes, likely a partial government shutdown. We are hearing, though, as opposed to the fall, a lot of individuals say we need an off-ramp for this, so maybe it doesn't go as long. But potentially, this is going to interrupt some of the data we're expecting next week.
Well, let's turn back to the Federal Reserve. This is what Nisha Patel of Parametric has to say. The expectation is a hold this week. This is less higher for longer and more steady for longer. Nisha joins us now for more. Nisha, good morning.
Good morning.
Is that independent of who the next Fed chair is?
I think it is. I think you're going to need to see a significant change in the data, even if we have a new Fed chair. Now, there's a difference between perhaps market and the optics of who the Fed chair is, and obviously the pressure. But it's also a good reminder that this is a committee decision, right? So I think you're going to need a lot of support within the Fed to see a fairly significant shift in data before more Fed cuts are warranted.
We've had a significant shift in the Fed funds rate already. We had 3 cuts last year. We had a number of cuts the year before. We often talked about this money sitting in cash, parked in cash. When the rate cuts come, they'd pile back out. Have we actually seen that?
We haven't seen that. And in fact, I mean, you can say money market fund AUM has hit all-time records. So it seems like, you know, we're not seeing as much of a rate-sensitive investor as we thought. But I do think that if there's a catalyst, and I think there's a lot of expectation that perhaps we see steady for longer in the first half. However, if we do see a drop-off in the labor market, right, that's the key piece here. Inflation seems to be cooling. Inflation seems to be headed in the right direction. If we see anything on the labor market side, I think that's where you can garner support from the Fed and the committee to warrant more rate cuts. So if we see that, even 1, 2 more rate cuts, and you start to see a shift in the language, I think that's when you could start to see more of this momentum coming out of cash. And then I would also say, you know, when you take a look at equity valuations, perhaps you have investors pausing, right? And then they're saying, look, if I'm earning 3.5%, 4% in cash, I'll sit here longer. I would make the argument at some point fixed income starts to look compelling to start locking that in for longer.
When you say the Fed may have to change its stance when it comes to the data, what data exactly? Is it just the unemployment rate? Is that the only thing we should really be focused on?
I think it could be a series of data that is pointing to a weakness in jobless claims or an increase in jobless claims, and you start to see some of this perhaps ahead of time. And then it is going to be an uptick in unemployment data. Hopefully we see a little bit more guidance from the Fed this week on what exactly it is they're looking for, right? For a long time, it was a focus on inflation, and it was a 2% target. They less kind of focused on that number. Now it's the new 3%. Perhaps there's some metric that they will point to that sets up and opens up the door for them to cut if labor market weakness actually starts showing up.
So for this meeting, you're looking for direction of travel from the chairman.
Yes.
And you think he's going to be biased towards the labor market?
I think you'll see more language around the labor market, although I'm not sure in this meeting we're going to see exactly that, right? I think with Chairman Powell, he will hold a stance of saying, look, we're where we need to be. We haven't seen any change in data. With the government shutdown, we need a series of more. And so perhaps we don't see exactly that this year, this week, but I think you could start seeing that in the coming months.
Is he where he wants to be? It's a different question that some people might ask in that news conference tomorrow.
Oh, yeah, I know. I think he's hoping people ask questions like this. What data points should we be looking at? Because the questions are going to be, sir, tell us about your dealings with the Department of Justice, the Supreme Court, and the Oval Office.
I stand beyond May. I think 5 different ways of asking that question are already prepared going into that news conference. Markets look okay, within striking distance of all-time highs. Junk debt sales in the last couple of days, last 24 hours picking up. IPO window saw several headlines to start the week. That feels like that's open. You've talked about being up in quality. Are you maintaining that discipline, given the frothiness, just pockets of it, developing elsewhere?
I am, and I think there's 2 disciplines that you want to really focus on in fixed income portfolios. So the first is on credit discipline, right? Especially where in this environment spreads are tight and investors are not necessarily getting paid for the extra risk. So I think this is an environment where you do want to be up in quality, especially if this is meant to be that ballast, right? I bring back kind of why fixed income today. Real yields are high. You are looking for possibly a diversifier in portfolios where portfolios may be overweight equities. So credit is certainly a key component. And then the duration management, right? So I think just looking for duration management, you could look at this as a good entry point, but really being able to shift in these portfolios is going to be key.
Nisha, good to see you.
Yeah.
I won't ask your favourite for the next Fed chair. I mean, you can answer that if you want, but I imagine you're not. So I won't ask. Nisha, it's good to see you.
Good to see you too.
Thank you. And you're probably happy I didn't ask. Not directly anyway. Nisha Patel of Parametric. Nisha, thank you. Coming up tomorrow, Keith Lerner of Truist Advisory, former Kansas City Fed President Thomas Honig, Priya Misra of JP Morgan, Aditya Bave of Bank of America. That 2-day Fed decision begins later this morning, concludes tomorrow. I'm not sure that's the main event based on expectations we've heard so far this morning. A lot of people think it'll be a snoozer. Maybe the main event's going to be the earnings in the afternoon.
Absolutely, especially when you have Mike McKee basically saying he's going to stick to representing the deliberative body and not getting into the politics when it comes to those high flyers, those hyperscalers. The CapEx is going to be incredibly important. Can they justify it?
We are within 0.5% of all-time highs on the S&P 500. Equity futures this morning positive by 0.2. From New York City, this was Bloomberg Surveillance.
Day 9 at the Australian Open. Jessica Pegula ended Madison Keys' reign as champion down under in straight sets to reach the quarterfinals for the 4th time. She'll face another American, Amanda Anisimova, for a spot in the semis. A 2-time champion, Yannick Sinner, eased past compatriot Luciano Darderi in his round of 16 showdown. Up next for him, 8th seed Ben Shelton.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras. How many other filmmakers out there use the film cameras? The lens that filmmakers out there use the film cameras. The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
We have 2 crises, 2 essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and...
Bloomberg Open Interest starts right now.
Coming up, earnings season enters its busiest stretch as global stocks march back towards fresh record highs.
Goldman CEO shares some of his predictions for the year ahead, outlining key tailwinds and risks for the economy in a Bloomberg exclusive.
And tariff talk. President Trump threatens to hike duties on South Korean goods, but markets are unfazed.
I have one market that is certainly phased this morning, Matt, and that is the health insurance stocks getting slammed. Let me show you.
Not for tariff reasons, though, right?
Nothing is getting slammed for tariff reasons. That's like, did it even happen?
Yeah.
I'm not sure it did. This happened, though. So you had announced plans to keep payments for private Medicare flat next year. Just to put this in perspective, analysts were expecting as much as a 6% jump. Then on top of that, United Healthcare forecasts its first annual revenue drop in more than 3 decades. So we're down as much as 17.2% for Humana, Matt.
Yeah, and they've already been beaten down. General Motors expects profit to grow as much as $2 billion this year, from $13 to $15 billion on adjusted earnings before interest and taxes. It plans to give back a lot more money to shareholders through a higher dividend as well as stock buybacks, and that stock is near an all-time high, $82.50. I spoke with the CEO, Mary Barra, after the company's report, and we talked about how GM is navigating the current tariff environment.
If you look at our portfolio, I think, you know, for the most part, we've worked to offset it, and with efficiencies across the board, making smart decisions on where we produce. And so very little has gone to the consumer because we are such a cost-sensitive business, and it's such a competitive business. But we continue to look at all of those levers, and we stay focused on consumer affordability.
That was just part of my interview with the CEO and chair of General Motors, Mary Barra. Joining us now to discuss is Bloomberg's Detroit bureau chief, David Welch. And David covers the company very closely, has written the book on Mary and General Motors. So, David, what do you think of the results and more importantly, I guess, the forecast, right? Everything looks pretty rosy for General Motors.
The forecast does. You got a low-end profit growth of $300 million, high end of $2 billion. And that's in an environment where most analysts are predicting a slight dip in U.S. sales, which is where GM makes most of its money. And you've still got tariffs out there that are costing GM some cash as well. But, hey, they're selling a lot of vehicles. They grew market share last year. The vehicles they're selling are very expensive and very profitable. And they're going to sell fewer EVs since they lose money on those. Every one that they don't sell doesn't hit the bottom line. So there are a lot of things that are at GM's back at the moment. For the quarter, it was actually pretty rough because of the write-downs for the electric vehicle business. But on an operating basis, the company continues to make a lot of money.
Do we know, I mean, it seems like GM is doing a little bit better than Ford in terms of the write-down, just the sheer size, right? $7 billion and change for General Motors, almost $20 billion for Ford in 2025 alone. And GM has a much larger product portfolio of EVs. Why does it look like it's not doing as badly?
I think Ford was spending a lot of money to tool up some future EVs, and they pulled back on that stuff. So there are probably some supplier commitments there that they have to deal with. The two EVs that they had on the market, or still have in the market, the F-150 Lightning and the Mustang Mach-E. You know, these are vehicles that, you know, they had a battery pack that they were buying. They didn't have a lot of commonality, or really any commonality with other vehicles in the lineup, so they were very expensive to make. So I think all of these things you add up, and it was an expensive vehicle program for them. In GM's case, they had one platform that you could just, for the battery, that you could just make in different sizes, and a couple of battery plants. They hadn't built the fourth one yet in Indiana, so there were things that they had planned but didn't do yet. So you know, you add these things together, and I think Ford just had an expensive program that they then had to write down. GM's, look, $7.6 billion is nothing to sneeze at. That's a lot of money they've had to write down, and there could be more to come, but the worst appears to be behind them from write-downs.
David, thank you very much for this. And by the way, recommend David's book called Charging Ahead, perfect for this moment, about GM Mary and the reinvention of an American icon. David Welch, thank you very much. Another set of earnings we had this morning, American Airlines. They missed estimates for the fourth quarter, but it did give a bullish outlook for the year. Bloomberg Chief Global Aviation Correspondent Sid Phillip joins us now. Sid, I watched the stock market reaction when these earnings came out. It plunges and then it rebounds. There's already a little bit of mixed messages coming from a lot of the big operators so far to start the year. What message did you get from American?
So American is sort of they're looking to cash in on the same trend that has propelled United and Delta Airlines. They're sort of focusing on premium, they're focusing on upgrading their cabins, they're also focusing on adding Wi-Fi to the planes, and they think that will bring in the big spenders. At the same time, American Airlines has struggled with both the government shutdown as well as the most recent Storm Fern in New York than the US this week. And with more bad weather on the way, we still don't know what the impact of the weather will be. I mean, they talked about how just the last storm alone forced them to cancel about 9,000 flights, and I estimate it'll cost them about $150 to $200 million. So there is a lot of uncertainty at the moment, especially with weather. There's also uncertainty about demand, but the airline's hoping that pivoting to premium and focusing on those premium customers will continue to sort of help them go forward.
We look at often the 5-year picture for any stock, just because in the comp function that is a default, and I think it's a decent window to compare. American has done far worse than United, and even worse than Delta. So what's wrong with this airline? Is it that it doesn't deal well with storms? Is it that they haven't been cashing in previously on the premium passenger? Or why haven't they been doing as well as their competitors?
So Americans got a multitude of things that they sort of worked on, including the fact that they did sort of focus on premium and on business travelers primarily. And post-pandemic, business travel demand was slower to recover than the premium leisure travel trend that both Delta and United sort of focused on. In terms of the storm and the impact of the storm, American has a large domestic operation, and they have a lot of operations to regional airports, and those were harder hit, especially as some of those airports weren't really equipped to deal with such bad weather, and so therefore the effect was more pronounced.
Sid, what's going on with JetBlue? This was supposed to be an airline that was righting the ship. Wrong metaphor for a plane, I realize. But they were supposed to be investing more into their premium travel. What went wrong? I mean, 5% loss in the pre-market after earnings. That's pretty painful.
Yeah, I mean, JetBlue is sort of still trying to pivot and still trying to sort of figure out what their business model is. I mean, the airline has sort of tried to go after the premium travel, especially as ultra low-cost carriers faced customer sort of hesitation in terms of bookings. I mean, remember, every CEO has been talking about this K-shaped economy and this K-shaped booking curve where people at the top end of the market tend to be booking holidays while people at the bottom end are holding off. And so JetBlue has tried to sort of turn the corner around and try to sort of focus on those customers, on the higher end customers. But at the same time, the airline is struggling in terms of being able to cash in on actually on that demand.
All right, Sid, thanks very much. Bloomberg's Sid Phillip covers aviation for us on the news side. Later this hour, we're going to discuss American's earnings with TD Cowen's Tom Fitzgerald as well. So more on American and the airlines. Now, well, more right now on the plane makers. Boeing generated cash for a second straight quarter and reported a 57% bump in sales to close out 2025. Its backlog has surged to a record $682 billion. Bloomberg's Brooke Sutherland covers industrials and joins us now. So that's a massive order book, $682 billion of planes. How quickly can they turn these out, and what are the headwinds that they face?
Sure. I mean, I think you saw some real progress in this past period in terms of being able to ramp up production of both the 737 and working toward that ramp up of the 787. I mean, if you remember where we were just a year ago, that would have been very hard to imagine for Boeing. And so this is, hard-won progress that they've made in terms of ramping up their output. And that will help them, continue to chip away at that backlog and really see that surge of deliveries that's so key to getting that cash flow that investors are really looking to see from Boeing after a few very rough years for the company. And, what's really driving that backlog, we've seen, a number of airlines step up their purchases as a way of sort of currying favor with the Trump administration. And so that's certainly been a boom to Boeing, seeing that sort of aircraft diplomacy in these trade wars. And so I think, they're in a better position to capitalize on that demand that they're seeing than they have been for a while now.
Speaking of industry affected by the administration, well, I guess it's every industry, but specifically defense, Brooke. We've been getting their earnings coming in, Northrop and RTX both reporting. How are these companies handling the pressure coming from the Trump administration, whether it's being called out about munitions, questions being raised and threatening of reducing shareholder returns, cash returns, and CEO pay? How are they handling all that?
Well, I don't think it is a coincidence that RTX this morning highlighted the 20% increase in munitions output that it's achieved and the $10 billion that it spent in both company and customer-funded CapEx last year. And, the portion I was able to listen to of the earnings call before I joined you all, they spent a decent chunk of time in their prepared remarks talking about all of those capital expenditures and all of the different states in which they are making investments. And I think that was very deliberate. If you remember, just a few weeks ago, President Trump specifically called out RTX as being, one of the defense contractors that the Pentagon is having trouble with in terms of its goal of ramping up output and sort of limiting shareholder returns. Now, I do think that these CEOs are sort of trying to walk a line of, being supportive of the administration's goals, and certainly they would like to see this, increased defense spending that the president has been calling for, while also being cognizant of the fact that it's not exactly clear how the president would go about imposing these regulations that he wants to see on company buybacks or dividends or executive pay. It's not clear what the mechanism would be to enforce that, or even what the mechanism would be to decide, what companies would be subject to those restrictions. And so I think there's a lot of question marks there. I think most CEOs probably feel pretty confident about their ability to keep doing, sort of having control over their share buybacks. But inevitably, we're going to see a period of increased capital expenditures. And I think the question for investors is sort of what that looks like down the road, because when you step up your investments, that is not going to be as robust for your cash flow. And is that something that investors are comfortable with? Is that a good trade-off for them ultimately? And I think we're going to see a lot of questions about that in this earnings season.
Brooke, this has been so excellent. Thank you for breaking those down for us. That's Bloomberg's Brooke Sutherland. Some more earnings this morning. United Health forecast a decline in 2026 revenue, its first annual drop in over 30 years. Its peers, though, are also falling this morning sharply after the U.S. government proposed holding payments to private Medicare plans flat next year. Bloomberg's Ike Swetlitz covers the sector and joins us now. Ike, the expectations were as high as a 6% bump in payouts. How did we get this so wrong?
So the Trump administration was expected to be, pretty friendly to Medicare Advantage, these private Medicare plans. The president's been under more pressure to address the affordability of health care for Americans, and we're seeing something different than folks expected.
So these shares, a lot of them have already taken a massive hit, Ike, and I guess investors were buying the dip to some extent, hoping that they could recover. Does this mean that's off?
The projections that United put out for next year, are also, I think, a big part of what's going on. As you said, seeing declining revenue coming in the future for the first time in a long time.
All right, Ike, thanks very much. Ike Swetlitz there talking to us about the healthcare companies, which we will continue to follow and show you, taking big 10 and 20% drops, a number of different stocks in healthcare. Coming up, my interview with GM CEO Mary Barra, which is going the other way. The share's up 5% in the pre-market. The company discussing its strategy of selling a lot more of the high-margin ICE cars and trucks and fewer of the money-losing EVs. Regulatory shifts really helping this company in this market. This is Bloomberg Open Interest.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now that these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Getting out of high interest, look what's making headlines around the world. President Trump's Border Patrol Commander Greg Bovino is leaving Minneapolis following mounting public outcry over the killing of 2 U.S. citizens by federal agents in recent weeks. The White House is sending Border Czar Tom Homan to ease tensions, meet city leaders, and refocus enforcement on undocumented immigrants with criminal records. Homan will meet with Minneapolis Mayor Jacob Frey to discuss coordination between federal and local law enforcement to accomplish that task. Goldman Sachs CEO David Solomon says the firm expects a slower pace of hiring this year as the bank looks for targeted growth. He joined Bloomberg from the firm's annual conference in Hong Kong.
It's probably a little bit more constrained in 26 because we see opportunities for efficiency and we're trying to deploy those. But ultimately, we've also said those efficiency opportunities give us more of an opportunity to invest in parts of our business where we can scale growth. And some of that growth scales with additional headcount. I point to our wealth management business, which scales with people all over the world.
General Motors expects profits to rise by up to $2 billion additional this year, driven by strong demand for its highest margin trucks and SUVs. The automaker forecasted adjusted earnings before interest and taxes of up to $15 billion and announced a $6 billion share buyback plus raising its dividend. GM says a more favorable U.S. regulatory environment is supporting its outlook even as it scales back on electric vehicle expectations. And I spoke with the CEO and chair, Mary Barra, following the company's results. One of the topics we discussed was the shifting regulatory environment and the landscape for electric vehicles in the U.S.
The whole industry, we were on a path that we were working to get to 40 to 50% EVs by 2030. So now that the regulatory environment has changed and the consumer incentives have gone, there is going to be slower EV adoption. We're still committed to EVs, and we've got a great portfolio that we're working on taking costs out of. But in the meantime, we also have a great internal combustion engine platform. And you're right, full-size trucks are one of the strengths we have, as well as full-size SUVs, mid-size crossovers. So we really have a strong lineup across the board, and that is really what is fueling our business success.
I have had, as the host of Hot Pursuit, a Bloomberg podcast about cars, the opportunity to drive a lot of your EVs, from the Sierra EV to the Hummer EV to the Escalade IQ, and they're fantastic products. Are you not deterred that Americans aren't buying more of these vehicles? You know how capable they are. You know how useful they are in daily life. What needs to happen for more Americans to buy these EVs?
Well, I think the consumer is very rational when they're making a decision about what car to buy. Let's remember, it's one of the most important and expensive decisions that they make. And one of the things we have to continue to work on to drive EV adoption is a more robust charging infrastructure. And that still is continuing to happen. So every quarter, more and more chargers are available. I think as people in their individual communities see that they've got a robust charging network and believe if they have to go on a road trip, there's that as well, they're going to make that choice. And what we do see is once someone buys an EV, they see the technology, they see the driving experience, never having to go to the gas station, and they stick with EVs. So I think it will happen over time, and that's why during this period we've already got a great portfolio of EVs. We're going to continue to take cost out to get our EV portfolio profitable, and we're going to be well positioned as EV demand grows over the next handful of years.
What about the hybrids, Mary? I mean, GM was really a front runner, not only in EV technology, but in hybrid technology with the Chevy Volt. I remember when the Tahoe came out with a 6-liter gas engine and electric battery power. Will you start to sell more of the hybrid vehicles?
Well, we have always focused, as you said, we have great hybrid technology. We have great EV technology. We're one of the few OEMs that invested in a dedicated EV platform that allows us to have the portfolio we have. So we're focused on the end game, and we have affordable EVs. So I think that's where our primary focus is. We understand the technology. We have it in other regions. You'll see us with a handful of hybrids as we move forward. But right now, our focus is really on having the right internal combustion engine portfolio and the right EV portfolio moving forward. And I think we're demonstrating that that's a winning formula, because over the last 4 years, we've gained share each year.
And the shares have gained as well. I mean, not just today, but they're near a record high right now, trading at about $84 a piece. It's interesting. She's talking about hybrids sitting in front of that Corvette ZR1X. It is a 1,250 horsepower hypercar. I mean, twin turbocharged 5.5-liter V8 with the electric powertrain. I think it is the fastest production car or the highest horsepower production car in the world, if you don't count like the Revac Navara.
I think it's a weird choice to have behind her, because it should be like our results were led by big trucks and SUVs. Look at this awesome Denali behind me and how well we're doing versus like this.
That's actually a great point. If she had had a Denali or an AT4, one of those high-spec trims behind her, it would have made a lot of sense, because that is where they make the majority of their money. But I think this Corvette, because it's such a standout halo vehicle like the Cadillac Celestiq will be, it just represents that GM is going further than they ever have before, really, in terms of, or at least in our lifetimes, in terms of the cars that it produces.
I have feelings on Corvettes, and they're not good.
Well, I think the Corvette is a very different vehicle than it has been over the past,
I still
6
feel
decades.
like it's like trying to compare like American luxury handbags. This is my reference point.
Oh, and it's, I mean, a phenomenal power plant. All right, we can talk more about this. Or you can tune into my podcast, Hot Pursuit, with Hannah Elliott. We talk all about this, and we debate the Corvette pretty much weekly. Tune in. Stay with us. This is Open Interest.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Less than 5 minutes ago until the start of your cash equity trading, looking at more gains. Can the Russell 2000 turn things around? That's the interesting one. It's fallen for 2 consecutive sessions, ending the outperformance that it saw for mostly all of the start of the year. At the moment, your S&P up 0.2%. The NASDAQ outperforms. Matt up 0.5%.
All right, let's get a look at some of the single stock stories that we're watching for you this morning. UPS gave its first full year sales forecast in over a year. They had been holding back due to tariff uncertainty, and its outlook topped estimates nonetheless. The shares are not moving higher.
Decidedly not moving higher is JetBlue. It reported a wider than expected loss last quarter. It's targeting break-even operating margins for the upcoming year. Shares down 6%.
And software stocks like Cloudflare and Zoom are rebounding after weeks of losses over concerns about AI-related disruption. Less than 4 minutes to the opening bell. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Moments away from the start of trading on this. It's only Tuesday morning. This is Bloomberg Open Interest. I'm Matt Miller. We're looking at gains for S&P futures, about 0.2%. We closed out at 69.50 last night, and 69.85 is the all-time high. So we're getting back closer to that level, and may hit it today by the time Romaine and Katie close stocks. We're looking at, well, gold.com. Ringing the opening bell. Every dog has its day, right? Actually, this stock is up 220% over the last 5 years. Only 30% this year to date. So if you look at the 5-year chart, it's like up, 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 and then a huge drop and recovery. They're a happy bunch of people. Cullinan Therapeutics ringing the opening bell down at the NASDAQ, trying to cure cancer, and we wish them the best in that endeavor. However, the stock is down 68% over the past 5 years. I guess it costs a lot of money.
Yeah.
And investors are giving it away.
Yeah, I guess it's like a biotech company. They just need to have one good discovery and then have one big drug company buy them, and then things are okay.
Right. Well, AI should help, right? Isn't AI?
Yeah, it helps with drug discovery. AI is very useful. I'm sticking with the healthcare theme, and I'm looking at health insurers at the opening bell. This is really painful. They are plunging. The U.S. announced plans to keep payments to private Medicare plans flat last year. Analysts were expecting a jump of up to 6%. So you can just see how much expectations were out of whack. You add to that, United Health forecast its first annual revenue drop in more than 3 decades, so that's down 15.5%. CVS down 9%, and Humana down almost 16% at the opening bell, Matt.
All right, General Motors expects profit to grow by as much as $2 billion to $15 billion this year. It also plans to give back a ton of money to shareholders, $6 billion in buybacks, a higher dividend as well. You can see the stock and the cash trade up 6% and change to $84. So General Motors seems to be profiting incredibly well off of what is reduced regulation, helping it to sell more of its big gas-powered vehicles and not getting hit as hard by the losses it takes on its broad EV offering. Let's bring in right now Miller Tabak, Chief Market Strategist, Matt Maley. And Matt, I won't ask you about GM specifically, but just it seems that this economy continues to do well. The consumer continues to hold in, and we're back to all-time highs on stocks and continue to hold at record tights on spreads. Does this all make sense to you?
Well, there's no question that the market acts really well. This rotation we've seen recently certainly helped broaden out the market. That's very good. You mentioned 5,000 on the S&P or almost, and 50,000 on the Dow almost. It looks like we're going to pierce those levels. The one thing that does have me a little concerned, though, is what's going on in the credit markets. You mentioned that credit spreads are very, very tight. The one problem is that widening credit spreads are not a good leading indicator. They only widen out in any kind of meaningful way after things have already, gotten pretty serious. And we see what's going on in some of these global credit markets with this, doubling of long-term interest rates in Japan over the last 10 months. We see that, they've gone up in France, in the UK, and then, of course, in the US. It's only been for the last 3 months. but it's still 3 months is not, is not a short period of time. And they're pushing up against some key resistance levels. So at some point, I do worry that the credit market issue could create some problems. But right now, it's sure hard to fight the tape.
I wonder why we don't see credit spreads widening out already. I can't remember if it was Jimmy Carville or Bill Clinton. One of them wanted to come back as the bond market. Right back then, the bond market reacted when we spent way too much money and deficits and debt blew out and tamed the government, the administration, and Congress. Now, no such luck.
No, but and that's a concern. I mean, you see what's happening in Japan. I mean, they have a very serious credit crisis. I'm sorry, budget crisis right now, not a credit crisis, but it could be turned into a credit crisis. But the point is their budget is really tough. And what is their new prime minister doing? Well, she's coming out with something that's going to cause a bigger budget problem. So at some point, I guess my point is that, I mean, I go all the way back to 1987. Now, I'm not looking for a crash, but I remember that time very well. I was on the trading desk at Solomon Brothers back then, and those interest rates rose for several months, and then nobody cared until they did. Now, again, I'm not looking for a crash, but I've seen that several other times in many different countries around the world. When interest rates go up quite a bit, at some point it does have an impact on the rest of the markets. And my point is that these budget deficits are something that people didn't really care that much about for most of the last 40, 50, 60 years. But now they are. Now they're demanding to get paid more for the risks that they're taking and buying the sovereign debt of some of these countries.
Matt, there's another market that I'm struggling with, and I hope you can help me, with the record prices we continue to see in gold. Because the justifications, I'm going to be honest, are weird to me. On one hand, it's this idea that we're going to have a collapse in the currency. The dollar is just the lowest since 2022. That's by no means a collapse. Or there's the threat of inflation. But there's a market that gives us inflation expectations. It's in this bond market, and that's not showing up anywhere. Matt, is gold anything other than just a momentum trade right now?
I don't think so. I really don't. The one thing is that, Danny, when you see what's happening in these markets, again, interest rates in Japan have skyrocketed. The 10-year note has doubled in the last 10 months. Gold, silver, and other precious metals, palladium and platinum, they have skyrocketed. Why is that? And like you said, inflation is 3% in Japan or 3% here in the U.S., a little bit lower in Europe. That's not something that would cause these kind of moves. It's something else is going on, and I do believe, or I worry, that it's these budget deficits and that people are finally, for years, or for decades. All anybody's cared about is the economy improving, what's going on with the economy, what's going on with inflation. That's going to determine the level of interest rates.
Matt, if I can jump in, just why would that show up in the gold market and not the bond market? I guess that's the thing I'm struggling with. Why are these angst only showing up in gold?
Yeah, we can see that the long-term interest rates are rising, even though short-term interest rates are being cut by the Fed. Okay, and they're rising quite a bit in UK, who also has a budget deficit problem. They're rising in France, who also has a deficit problem. Germany, they're rising there for other reasons. But the point is that even though short-term interest rates are being cut, long-term interest rates are now pushing higher in the U.S. in a meaningful way, not skyrocketing to the way gold has, certainly, but they are moving and they are pushing up a bunch, pushing above a trend line, making a higher high. These are the kind of things that signal on a technical basis that the trend for long-term interest rates is changing to the upside. So watch it. We're above 4.2%. If this continues over the near term, that we're going to get that confirmation.
We just had the opening bell and we booked you to talk about stocks, but we're all about credit, gold, and the dollar today. I want to ask you about the greenback because traders are paying record levels to bet on a continued drop, and we're already at a 4-year low. I was talking to a hedge fund manager this morning who said that this is basically the market voting on the administration's policies. Now, I countered that I think the administration wants a cheaper dollar, right? How do you view it?
Yeah, I mean, it's funny how, because everybody says, every administration talks about wanting to have the dollar strong, but every single one of them wants it to be lower because it, makes our products more attractive to overseas buyers, and so they like that. So I do agree with that situation. The one thing, though, I do have to point out, though, is that when you get so many people on one side of the boat, in this case the dollar, and the DXY dollar index is testing a key support level. Whenever you test a support level and everybody's on one side of the boat, you usually get a decent-sized bounce. So I wouldn't be surprised if we saw a bounce here on a near-term basis for the dollar. But longer term, this is, again, an important issue, and it says something about, what's going on in these credit markets. I mean, I don't know if you saw that. In fact, I read it on Bloomberg, the double line yesterday coming out saying that they're cutting back on their, this is investment-grade debt purchases because of the froth in the market. So my point is that the stock market looks really, really good right now, but those credit markets are, there's some issues that we need to be careful about. So investors really need to stay nimble as we move through 2026.
Matt, we're going to have to end it there. Always a pleasure to have you on. Matt Maley of Miller Tabak. Thank you so much for joining us. 10 minutes into your trading day, let's get a check on where this equity market is right now. Breadth is pretty even, about the same number of stocks moving up as they are down. Actually, slightly more moving down, despite the fact the S&P 500 is up so far this morning. It's because big tech is doing well. Apple, we're going to get results from them on Thursday. Shares are up 2%. Microsoft, we get those results tomorrow. Shares are up 1.5%. Micron, chip stocks rallying this morning, up 3.7%. For this company, they just announced they're going to spend $24 billion in Singapore to spend on a chip building facility to try to address some of the glut. If you look at what's dropping this morning, you're going to see a lot of the health insurers there after the amount from the government paid to private Medicare plans remains flat for the year. Expectations have been for as much as 6%. Elevance Health, that's down 11%. Meta, Nvidia, Tesla, Netflix, some of the Mag 7 also having a rough go of it this morning. If you look at the sectors, healthcare obviously is going to be the worst. And it's, again, because of all those health insurers. By the way, also had bad earnings from United Health, too, so that only adds to the pain. Down 1.1% for the sector. Financials down 1/3%. In infotech, it is higher. I pointed out that Apple and Micron and memory chip stocks were doing better. Energy is up 2.6% as oil prices move up more than 1% after President Trump said an armada was on its way to Iran, and he hopes he doesn't have to use it. That is an ominous message, but either way, equities are up 0.1% so far in the trade, Matt.
All right, we'll continue to follow all those storylines for you. Coming up, we're going to get back to American Airlines. It expects a strong year for air travel. We break down the outlook with analyst Tom Fitzgerald. This is Bloomberg Open Interest.
For us is the year that everything just comes together, right? We're not just moving money. The last decade, literally, we've been the race for Africa's growth, right? And the future of Africa, in our opinion, is not hype, it's infrastructure-led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now of age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Global Open, for example, and Nuvian. And the point behind that really is, how do we ensure we use that infrastructure to drive the next phase of growth for StartupWave by empowering our customers across all our segments?
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Let's get you some top calls. The analyst action that we're watching this morning. First up, Deutsche Bank, they upgrade CoreWeave to a buy after NVIDIA increased its investment. Deutsche Bank says that the move reinforces confidence in CoreWeave's fundamentals, shares up 6.8%. Next up, Morgan Stanley downgrades Alcoa, saying that the recent earnings beat doesn't materially change the outlook. The firm says that it benefits from strong aluminum prices, but that is already fully reflected in the stock, leaving limited upside from here. Shares, though, are up 3.5%. Finally, RBC, they're out with a positive note on Cloudflare, arguing that growing AI adoption plays directly to the company's strength. They say that new AI tools and agents are driving demand for secure computing. Those shares, Matt, up 13%.
All right, big jump there. American Airlines, that stock is right now, over the last 2 days, I guess, down 4.5%, American Airlines. Even though it reported a strong forecast for the year. Let's bring in TD Cowen Airlines analyst Tom Fitzgerald. He has a buy rating on the stock with a $19 price target. Tom, let me pull up the American Airlines stock right now, currently trading off 4% at $13.97. Why do you think the market's reacting so poorly to this outlook?
Thanks for having me. It could be a confluence of factors. The stock's had a nice run over the last 3 to 6 months, so you could see some fast money accounts, profit taking, the impact of Winter Storm Fern, risk of another government shutdown on the horizon, and then I think some uncertainty and investor debate about the impact of the company's growth in Chicago this summer.
Tom, I mean, it's been a volatile ride just this morning for American. Earnings came out, stock plunges pre-market. Then it rallies. Everybody says the 2026 outlook is great or great given the circumstances. Then it falls again given what you're saying. Is the 2026 outlook strong? American Airlines itself said that it was conservative. Should we not be expecting a pretty decent year for them?
I think it is a positive outlook. EPS was above our estimates, which were above consensus. They're expecting to hit their debt paydown targets a year early. I mean, we have a buy on it, so would view the weakness as an attractive entry point and a nice buying opportunity in the shares. So, I think it's just a volatile space and maybe more of a sell the news moment than a major red flag.
Our graphics genius, Joe, in the control room, threw up a screen of American versus United, Delta, and JetBlue. I guess America is outperforming JetBlue, but the other two big airlines are doing far better over the last 5 years. Is this a company that just has problems dealing with things like Storm Fern?
I mean, if you're looking at the last 5 years, I think that's a broader issue. I would say especially United got the bet right on international growth. They didn't retire any of their wide bodies during the pandemic, so that allowed them to ramp back up much faster and lean into the strong international outbound traffic out of the U.S., whereas American had retired a lot of their 767s and their A330s, which limited their ability to grow into the long-haul network over time. There was also the commercial strategy mishap about 2 years ago that cost them about 10 points of their corporate traffic share that they've recovered as they exited last year. But there were a few idiosyncratic headwinds in the recent history that's caused the underperformance versus United and Delta.
Tom, with this weather, with the cancellations we saw over the weekend, threat of maybe more cancellations to come with the bad weather, how much of these do we view as a one-off versus airlines needing to rethink strategies, maybe network complexity or fleet strategy? Does it have longer-term impacts than just momentary loss of revenue from grounding of flights?
It's a great question. I think the network complexity is a fair debate. We saw United on their call talk about preferring 3 large-sized mid-con hubs versus 1 mega hub, of over 900 departures a day, due in part to the operational complexities that hubs of that scale bring. I think there's aspects of it that are just unavoidable. Weather's always going to create problems and challenges for airline operations. I view this as more of a transitory issue that the market should look through versus any type of a year ago when we saw demand tapering off in the spring. That was much more of a check engine flashing warning sign type of moment for the industry.
Is the consumer, the higher end consumer, obviously still able to pay these prices and fly overseas? The lower end consumer has to struggle as 80% of the country is with prices of everything. Does that not bode poorly for American Airlines when they have to rely on the top 10, 20, or even 50% of the consumers?
Yeah, I think it's okay for the airlines. It's not the premium end. It's not just business class or lie flat seats. It could be anything from extra legroom economy seats. It's really just anything other than the back of the bus. So I don't think it's a super elitist definition. I also think there's reasons to be encouraged for the lower end of the market to come back this year, especially if we have a robust tax refund season that could serve to prime the pump a little bit for main cabin leisure demand.
Tom, what's going on with JetBlue? This is a company that said that it's been investing in premium. It's certainly building more airlines. We see that airline lounges. We see that in New York City airports. Why are they unable to turn things around at this point?
Well, I think a lot of their initiatives are going to need some more time to ramp and bear fruit. And I also think there was a perfect storm of issues that hit the company. Their merger with Spirit Airlines got blocked by the DOJ. They took a hit by the GTF engine groundings, which were out of their control. And then I just think the whole kind of industry construct flipped post-pandemic, where a lot of the secular tailwinds that had favored low-cost carriers turned into headwinds. So they've have to kind of be adapting to that. And they're doing. I would say they're doing everything. They're making all the right decisions and they're moving as quickly as they can. But I think there's some of the things outside of their control dug them into a little bit of a hole. The leverage also is a pause for concern. And I think that keeps some investors on the sidelines, where if there was a lower leverage point, you might see people buying in to support the stock more.
Shares down about 4.5% compared to Americans' drop of 4% this morning. Tom, thank you so much for joining us. TD Cowen Airlines analyst Tom Fitzgerald. Coming up, more earnings for you. UPS delivering a sales beat as it works to overhaul its network and reduce the amount of Amazon packages it handles. We'll break those results down for you next. Stay with us on Bloomberg TV.
Business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question. I so appreciate that question.
Yes, let me ask,
Interesting questions.
Bloomberg Television. Top experts, great questions.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up to the minute global news whenever and wherever it happens. I'm Anne-Marie Hardern in Davos, Switzerland, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check of what the stock market is doing now. Just about 23 minutes into the session, we're looking at 69.76 on the S&P 500, 69.85. Not that it matters, is the all-time high. So we're getting back up to that level. The NASDAQ at about 25,900 right now. I saw NVIDIA actually flash down for a moment. Now it's up 0.25%, but it's not really moving the market too much with these small moves. CoreWeave, on the other hand, continues to gain this after yesterday's $2 billion investment and some upgrades, as Danny was pointing out, by analysts on that. United Health, with the rest of the sector, is down after it looks like Medicare spending will be flat. Boeing is off as well, even though it has a massive, almost $700 billion backlog. American Airlines is down, even though it had a 26 outlook that at least Tom Fitzgerald, the analyst we just spoke to, thought was positive. And UPS, right now, gaining 2.5%. This is a company that forecasts $90 billion in revenue. They just deliver stuff. They don't make it and sell it. They just bring it from one place to another.
And the business of delivery, I guess, is good. To your point, Matt, they beat Wall Street expectations with that $90 billion in sales. The profits also come with a big shift that they're undergoing. They've cut back on Amazon deliveries. They're overhauling its network. Bloomberg stocks reporter Matthew Griffin joins us now on the results. Matt, this is a company, this is what, its first full year outlook in a year. Is it fair to say that it's like the fog has lifted? We finally get an insight into how things look ahead.
Well, Danny, I would say the fog is lifting because, yes, we finally have another full year outlook from UPS. They had been a little bit more conservative in giving guidance as trade and tariff policy just shifted again and again last year. And the outlook that we got is being received positively by Wall Street. Yes, nearly $90 billion in revenue, Wall Street looking for about $88 billion. But there's a lot that is still hanging over this company. The impact of tariffs, the continued hit to revenue in some places from cutting business with Amazon. So we are still waiting, and analysts and investors are waiting to see how this all shakes out in the long run.
Yeah, I should point out, I mean, even though it blows me away, $90 billion, that's less than they've had in past years because they have such a big business with Amazon, although clearly it's a low margin business, not worth doing.
Yes, and investors are very aware of this. The stock fell 21% this year. It has a pretty, or last year, I mean, has a pretty deep hole to climb out of, down around 50% from its post-COVID highs. Investors have questioned this plan to cut business with Amazon, even though in the long run, Truist says there'll be a higher margin business.
Yeah, 21 and 22, they did about $100 billion. Matthew Griffin, thank you very much for joining us this morning. Coming up in the next hour, Paisley Nardini talks Mag 7 earnings. This is Bloomberg.
game here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
CBS News on the Hour, your home for original reporting.
I'm Deborah Rodriguez. Minnesota's chief federal judge, Patrick Schiltz, says the acting director of ICE has some explaining to do. He's ordered Todd Lyons to appear in court in person Friday to explain repeated failures to comply with dozens of court orders to hold bond hearings for detained immigrants. Former federal prosecutor Lori Levinson.
The chief judge says that if there's not an explanation, this would be contempt of court. And the court has the power to have these hearings to determine whether ICE has been denying people due process.
President Trump is shaking up immigration leadership after ICU nurse Alex Preddy was shot to death by ICE Saturday. The changes begin at the top with Homeland Security Secretary Kristi Noem, correspondent Natalie Brand from Washington.
Sources tell CBS News that she is expected to keep her job, but perhaps shift focus from these interior enforcement operations in major U.S. cities to other priorities such as the southern border.
The president has ordered his border czar, Tom Homan, to take over ICE operations in Minnesota from Commander Gregory Bovino. The mayor of Milan, Italy, is upset. ICE will be part of the security at next month's Olympics.
ICE says it will support the State Department's diplomatic security service at the Games and help Italian authorities vet and mitigate risks from transnational criminal organizations. Milan Mayor Giuseppe Sala says ICE is a militia that kills and enters people's homes by signing permits for themselves. He says ICE is not welcome in Milan. Sala asked, "Can't we just say no to Trump for once?" He says Italy can take care of security itself and doesn't need ICE. Michael Wallace, CBS News.
People from New Mexico to Maine are dealing with the icy aftermath of a brutal winter storm. Shoveling out in Baltimore has been no easy task.
You just have to crunch it before you can lift it because it's a solid block of ice.
I hurt my back earlier, so, just trying to make do with the best I can.
Thousands of customers still have no electricity, most of them in the southeast. CBS's Nicole Valdez checks in from Nashville.
Many people are sort of not prepared in some cases or just simply unsure of how to navigate icy roads and deal with long-duration power outages.
The new cutoff for free tuition at Yale, $200,000. Starting this fall, the Ivy's offering students from what's considered middle-class families a free ride. The cost for paying students, including tuition, room, board fees, and books, will be about $98,000. This is CBS News. They've just announced nominations for Britain's version of the Oscars.
I'm Vicky Barker at the Foreign Desk. One battle after another. 5 of its cast. In second place with 13 nominations.
One day he's going to follow you home.
Ryan Coogler's Blue Steep vampire epic Sinners, itself fresh from winning a record 16 Oscar nominations. This is turning into one closely fought award season.
That's Vicky Barker reporting. When New York City new millennial mayor speaks, his constituents listen, at least when it comes to a recommendation for a good read during a snowstorm.
Take advantage of our public libraries' offer of free access to Heated Rivalry on ebook or audiobook for anyone with a library card.
Number of downloads of the second book in the Game Changer series, says the public library, has surged by 529%. Deborah Rodriguez, CBS.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're streaming live on YouTube as well. Head over to youtube.com and search Bloomberg Podcasts. Scarlett Fu and Paul Sweeney with you. This is the Bloomberg Intelligence Program. Scarlett, it's kind of strange out there on the tape. Got the S&P up 18 points, but the Dow's off 485 points, and those healthcare insurance companies really getting slammed here.
Right. You were talking about United Health, Humana, CVS Health as well. United Health did come out with results, and its outlook did raise some concerns. Full year revenue will be dropping. But the bigger issue is that Dr. Mehmet Oz, who of course oversees Medicare and Medicaid, issued a rate proposal for Medicare Advantage plans that calls for only a 0.9% increase.
Wow.
So that was a huge surprise to investors.
I think investors were, and the street was kind of thinking maybe 4 to 5% increase.
Yeah.
So it's a big
we know what
disappointment.
inflation is like, and it's not 0.9%.
Yeah, so maybe this can be revised and with some future discussion. But anyway, we'll pay attention to that going through the day. But that's what's kind of impacting the Dow here, off 475 points. Let's head over to Lisa Mateo and get a Bloomberg Business Flash to get us ready to go for the next 2 hours.
You got it. This Bloomberg Business Flash brought to you by IBKR. Will the U.S. unemployment rate exceed 4.5% in January 2026? At IBKR Forecast Trader, the yes recently at 33%. Start predicting today at IBKR.com/forecast. The last trading day for this contract, February 6th, 2026. Well, we've got stocks mixed, and this is as earnings season kind of moves into its busiest phase. Results from 4 Mag 7 heavyweights later this week. Today we heard from UPS. Now it sees better than expected sales. The company continues its overhaul, cutting back on those less profitable package volume out of its network. Its shares right now, they're up about 1.5%. We go to General Motors. They said they expect profits to grow as much as $2 billion this year. They also plan to return more of that to shareholders with a higher dividend and buybacks. Its new guidance fueled by demand for its highest margin vehicles and fewer electric vehicles. General Motors up more than 6.5%. Tesla opens its books tomorrow. Ahead of it, its shares are a little changed right now. And Boeing cash flow at topped estimates, reported a 57% bump in its sales last quarter thanks to surging orders. Boeing, though, down about 2.5%. To the markets we go. We're on records watch. Let's start with the S&P 500, up 0.3%, 6,971. The Dow down nearly 1%. You said United Healthcare, a big part of that reason, 48,940. The Nasdaq rising by 0.7%, 23,781. The two-year yield 3.56%. That's down 2 basis points. The yield on the 10-year 4.20%, and that's little change. We have silver up more than 2.5%. Spot gold up more than 1%. WTI crude up more than 1% at $61 a barrel. The dollar hit its lowest level since 2022. The Bloomberg Dollar Spot Index weakening by 0.6%. More eco data. Let's get right to it. We're talking about Conference Board. Consumer confidence for January right now. The expectation was for 91, came in at 84.5. It was also, the prior was revised up to 94.2. That is your Bloomberg Business Flash. Paul and Scarlett.
All right, Lisa Mateo, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's get a sense of what's happening out there with stocks on the move today. We can do that with Denise Sakova. Denise, what are you looking at today in the stock market?
We have to talk about General Motors. Obviously, profits are expected to grow as much as $2 billion this year. Stock is on a tear, up nearly 7% today. Ticker, of course, is GM. So there is this interesting trend. A lot of those legacy automakers are benefiting from President Trump's effort to water down Biden-era fuel economy. And a lot of those big vehicles, like the SUVs, they have the GMC Sierra and Cadillac, those are the vehicles that are driving a lot of the profits. And we see adjusted earnings before interest and taxes this year will range from $13 billion to $15 billion, which is significantly higher than what we saw last year. A lot of optimism. The company was already up 50% last year, so pretty strong start of 2026 as well.
All right, let's stay with the transportation theme. What else are you looking at?
Moving to airlines, things don't look so good for JetBlue. The company reported a wider loss than expected. There are a lot of challenges in the strategy to win over high-paying customers. That's been their new push. What we saw is the carrier posted an adjusted loss of 49 cents a share, 3 cents worse than what the street was expected. JetBlue has posted operating losses for several years. The airline has been turning to those high-end consumers and trying to woo most of them. For example, they opened their first airport lounge, but so far we're yet to see if that high-end consumer will bring enough revenue. The share fell as much as 9%. Now they're down 4%. Ticker is GBLU.
You guys fly JetBlue at all?
I do, because we go to the West Coast all the time to see family, to see my kids, and they have the most, options in terms of direct flights.
And you like it?
Yeah, I mean, I don't have a problem with it, although I do think it's interesting that they're focusing so much on the premium customer when they spend so much time making clear that that was not who they were.
Right.
Yeah, I also go to the West Coast. It feels they're very good for those short routes. And,
Have you gone to the lounge yet, the new lounge?
No, I don't have access to it yet.
All right, I'll make a phone call. I'll make a phone call. UPS, what do you got for us?
UPS, another gainer today. UPS is up nearly 2%. The ticker is UPS, of course. They forecast full-year sales above Wall Street's expectations. There have been a lot of cuts and efforts for the company to improve their profitability. The stock tumbled 21% last year as the S&P had a double-digit gain. What we're seeing is revenue will be about $90 billion in 2026, UPS said in a statement. Analysts had anticipated lower than that, so some of the optimism is coming from that. UPS has been trying to cut costs. It says it has saved $3.5 billion in 2025, so it's clearly working, but it's a long way ahead. They have closed and consolidated sorting facility, offering buyouts to union drivers, cutting back on seasonal workers. There have been a lot of those efforts, and so far this year, a small gain after a big loss last year, for sure.
All right, thank you so much, Denise Sakova, one of our cross-asset reporters with today's Market Movers. And for more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, so we did get some data today. I'm looking at EcoGo on the Bloomberg terminal. There's some stuff on housing prices, but that's really old. It goes back to November. But the new data that came out is from the Conference Board, and it's on consumer confidence. And Paul, it shows an unexpected decline. People were looking for an improvement, and instead we got a drop to what looks like the lowest since 2014.
And, last period revised higher, but that just makes the period-to-period decline from 94.2 to 84.5 all that much pronounced.
Yeah, absolutely. So let's bring in Dana Peterson. She is chief economist at Conference Board to give us her read on what's happening here. Dana, can you square what you're seeing in this consumer confidence report with the official data that seems to show the economy is doing just fine?
Well, the thing is that the official data is pretty old, and we don't really know what's going on right now in January. And I think the Consumer Confidence Index is probably the closest thing we can get to in terms of how consumers are feeling right now. And from December to even January, we thought that there would be some improvement given the fact that the shutdown was over, but it seems not. Almost all 5 of the sub-indexes for our overall index were down. Consumers are concerned about business conditions now and in the future. They're concerned about labor market opportunities now and also in the future, and also they're concerned about incomes in the future. So all those things were, negative or down in January.
Dana, at 84.5 for consumer confidence, that's a headline number. Where would you like to, as an economist, where would you like to see that number? What would suggest a healthy consumer in terms of the outlook?
Well, anything that's going up, and certainly getting back to some of the peaks that we saw late last year in 2024. I mean, really, that was the local peak over the last couple of years. So getting back to there, I think would be quite healthy and bode well for the economy.
In terms of expectations for the next 6 months, what usually drives consumers' response to that? Does it come down to something as simple as gas prices, or is there something more, structural in their response?
Well, we do receive write-ins, and those write-ins mainly are complaining about prices, gas prices, food prices, and even the sentiment around that. When we read the sentences that they send, it's all very negative. They're saying prices are too high. And, in terms of buying in the future, they're indicating that they're still going to shift away from things they don't need. And if they do want to go out and have fun, it's going to be cheap thrills like streaming at home or, going to McDonald's instead of taking the whole family to the movies.
Right.
And so we're still seeing those trends there.
Okay, that's not really going all out or at all if you're streaming at home because you're paying for it already. Dana, what about geopolitics? There's been a lot of headlines over the last couple of weeks. And I'm wondering if that factors into consumer confidence and expectations. I mean, do people say anything about that as they write in their answers?
Well, that's fascinating. We did look through it to see if there are any mentions of any, conflagrations or conflicts or anything, the U.S. is doing internationally. And we didn't see that. But we did continue to see concerns about tariffs, also big concerns about just, politics in the U.S., but nothing really mentioning anything geopolitical that's happened.
Dana, how about the labor market? It seems to me if someone has a job, they feel pretty good about kind of their economic position. And we're pretty darn near full employment here. How does that factor in?
Yeah, so we've pretty much been at full employment for at least a couple of years. Nonetheless, consumers continue to have angst and be upset. And a lot of that does have to do with prices being elevated. Even though inflation has slowed, so that's the rate of change, prices are still high and they're still going up, even if inflation's, getting closer to 2%. And so you can have a job and have money, but still be very concerned about what's going on. And I think the key thing is that throughout the last couple of years, consumers were not necessarily concerned about the labor market, but that has changed. And I think that's something that we closely need to watch. And it's something that even the Federal Reserve has said, we're paying close attention to downside risks to the labor market, even though right now the labor market's been pretty stable. And yes, most people are working and wages are still growing at a pace that's above what we saw between the great financial crisis and the pandemic.
Right. The dollar is hovering near a 4-year low. Very quickly, do you see any correlation between that and how consumers respond?
I mean, consumers aren't really looking at the value of the dollar when they go out and shop. They just expect to find deals in general. But certainly on a macroeconomic perspective, I think the cheapening of the dollar is a reflection of everything that's going on in the economy, politically, fiscally, monetarily. And so I don't think it necessarily has to do with the consumer, but certainly how investors view the U.S.
All right, Dana Peterson, always appreciate it. Dana Peterson, chief economist at Conference Board, with consumer confidence plummeting to the lowest level since 2014. People turning a little bit more pessimistic on the economy and the labor market. This is Bloomberg Intelligence on Bloomberg Radio.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got tech shares leading the advance. The rally in memory chip maker shows no sign of easing. Let's look at Micron. Their shares up 5% on plans to expand its memory chip capacity. SanDisk up more than 3%. And even South Korea's SK Hynix, it soared to a record after local media said the company is a sole supplier of advanced memory for Microsoft's new AI chip. Let's start with the NASDAQ, rising 0.8%, 200 points. The S&P 500 up 0.3%. The Dow falling nearly 1%. 1%. A big part of the Dow drop-off due to that healthcare. Shares of a number of major U.S. insurers falling. That's after the U.S. proposed holding payments to private Medicare plans fell flat next year, and that was a huge disappointment for investors. So we look at companies like CVS Health down 11%, Humana off 19%, United Health falling 18%. And speaking of United Health, it also forecasted a decline in 2026 revenue, the first annual contraction in more than 3 decades. Let's get to the yield space. The 2-year, 3.57%. That's down 2 basis points. The yield on the 10-year, 4.21%, and that is little change. The Bloomberg Dollar Spot Index weakening by 0.6%. The Japanese yen strengthening by 0.7% at 153.03 against the dollar. Bitcoin falling. It's just above 87,000, down about 0.5%. It looks like JetBlue having some trouble winning over those higher-paying customers. The carrier, it reported a wider loss than expected last quarter, and that's after offering pricier options. Also opening its first airport lounges. Its shares are down nearly 2%. At American Airlines, they reported a miss on fourth quarter results. The carrier also said this week's winter storm, it's going to clip revenue in the current period in the range of $150 million to $200 million. Its shares are off about 0.5%. And finally, also making news, it's Amazon. In that blog post, the company said it's closing the Amazon Go, Amazon Fresh physical stores, some locations converted to Whole Food stores. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
Thank you so much, Lisa Mateo, with our Bloomberg Business Flash. It's so interesting that American Airlines said that about this current winter storm that we're still recovering from, when JetBlue had just said that they don't see the winter storm as material to their full-year earnings outlook. And JetBlue is based in New York, so
yeah, they had a lot of problems. American down in their hub down there in Dallas-Fort Worth.
That's a good point.
A lot of ice and all that kind of stuff. So
yeah, Dallas is not exactly equipped to deal with the kind of snow that we are.
Exactly. Neither is Phoenix, but we'll get to that later. I'll tell you this: what I learned very early in my career: do not go anywhere near energy trading pits. The oil and gas guys, these people are nuts. And I'm looking at the trading in nat gas. It's been all over the place. You know, we're down 15% today, but we were up like 30% over the last couple of days.
But the front month contract expires, I believe, tomorrow, so there could be some volatility tied to that too.
Yep, absolutely. But don't go anywhere near those trading pits, as people are nuts, including Mike McGlone, senior commodity strategist, one of the worst for Bloomberg Intelligence. Mike, is this just another day trading oil and gas and all that kind of stuff?
Well, Paul, I echo those sentiments. That's why I was always on the phones arguing to the people in the pits. The key thing about natural gas is it's been stuck in a range between basically 2 and 5 for almost 20 years. Every time it gets in the upper end of the range, it goes down. Now, the key thing that's happening this year was we're having this second colder than normal winter in a row. Despite global warming, that's a bit of a shock. But as Scarlett mentioned, as of Wednesday, the front contract will be March, and that's trading $3.70. You look at the apex of the bell curve going out to January of next year, it's around 5. And what's going to happen now, we have about a good summer season, a good 8 months to bring on more supply, and that's what natural gas has been doing for decades. It always does.
What does positioning look like? Because I remember reading about a lot of hedge funds being short on nat gas, and therefore this current surge in price was really more of a short squeeze.
It is, Scarlett. It's definitely positioning is somewhat short, but the squeeze is in the front contract. And put that in context, it probably only has about 20,000 open interest. The next contract has about 350,000. So it's the front contract that's getting squeezed into expiration, and it's usually a classic peak.
What's going on with gold here? I mean, you guys are nuts there as well. I mean, gold is ripping. Silver ripping again. Is this just a trade that's just got the momentum going right now?
It does. Paul, silver is the devil's metal. I think it's going to put an enduring peak this year. I thought copper was a worthy short around $6. It's tickling down a little bit. I think silver is a worthy short around $100 right now. The stop is a little more difficult because who knows how high it will go. But to put this in context, the velocity of the silver rally has put it to the highest ever versus crude oil and the highest ever versus electricity conductor brethren copper. So it's just silly expensive. It's going to cause a lot of pain, and I think expect 10% days as it trickles back down. I think we're going to look back at 2026 like we did in 1980. That high lasted until last year.
Right. Yeah, a lot of people have made the comparison to looking at what happened in 1980. But when it comes to silver, what I keep reading is that demand from China is driving this surge. What is it about? Why are people in China speculating so much on silver?
So, Scarlett, that's what I love about when you talk about supply and demand, all that is past tense now. When price goes parabolic, it shifts everything. It shifts those supply-demand curves, stuff we learned in Economics 101, and it shifts it back the other way. And the key thing to remember that's different about silver is 843 million ounces. That's the amount that's sitting in silver ETFs. That did not exist in the past, so that's a lot of supply. And these silver holders have actually started selling into the rally. Maybe they're prudent, so those total holdings have actually down 2% this year. That point is that kind of massive supply is over there if it wants to come, and we've already started to bring on some of that supply from those ETF holders.
All right, Mike, thanks so much. Appreciate it as always. Mike McGlone, he's a commodity strategist for Bloomberg Intelligence. We'll do pork bellies next time with Mike. All right, for all
always
the
next time
finance bros out there, Business Development Company, BDC, is a specialized regulated investment vehicle created by Congress in 1980 to provide capital to small and mid-sized businesses. And we've got one of those with us today. Kyle Brown, CEO of Trinity Capital. It trades on NASDAQ, TRIN. I joined us here in our Bloomberg Interactive Broker studio.
Thanks for
from Phoenix.
Yeah.
Give us the weather when you left Phoenix.
Yeah, it's been 4 straight months of 70 degrees, and so we had to come see what this snowstorm was all about over here.
And you flew into New York last night, right?
Yeah, just nice blue skies. It was a nice transition.
That's no way to
brought
live
the weather with us.
That's no way to live a life. But all right, so Kyle, I know you guys at Trinity, as a business development company, focus on private credit.
Yeah.
Talk to us about the market these days. How's your market? We had Jamie Dimon talked about maybe some cockroaches out there, and that kind of spooked people a little bit on the margin. What are you seeing out there?
So there's different segments of private credit, and we focus really on late stage venture capital backed companies that are heading towards an IPO or M&A into the lower middle market. I think some of those comments are really directed at the middle market and upper middle market, where for years now, portfolio managers, pension funds, private investors, they've had this edict, which is, hey, we can't get fired if we put our money with X, Y, or Z. The problem is their money is directly tied to SOFR, and they're all competing for the same deals in the upper middle market. It's generating really beta returns, and it's been disappointing for investors. And so where we deal, which is a large segment of the market, it's a really exciting space right now. These are baby boomer-owned companies. This is the largest transfer of wealth that our country's ever seen happening over the next 5 to 10 years. And so we're really bullish on the space. We're seeing great returns. We had a record year last year. And investors are buying into BDCs and those specifically focused on kind of lower middle market because they want access to private companies. Private companies, and typically BDCs are either lending money or providing equity to this lower middle market space. And those returns are current pay. And so investors buy BDCs, and BDCs really exist to fund that lower middle market segment. And investors buy our stock and our peers because they want access directly into those loans with these companies.
So during the financial crisis and afterwards, of course, banks gave up a lot of market share in business, lending to companies, private companies as well. But that's starting to change, and there's a lot of optimism around deregulating the banking industry. Why aren't traditional banks offering these companies credit?
Yeah, I think it's a little bit of a misunderstanding. Banks are knee deep in private credit, and I know those comments that you've heard have made their way around media outlets. But at the end of the day, J.P. Morgan and all the big banks are leaning into private credit in a big way. Sometimes, though, it's not directly with the company. And if you think about the way banks are structured, they're levered 8 to 10x, right? Do you really think that your deposits are meant to go to high-yielding, lower middle market businesses and these various assets? The truth is, a bank would be better off serving the market by providing leverage and lines of credit, bonds, et cetera, to lenders who are knee-deep in that world, who are willing to take a little bit more risk for a little bit higher return. So we work with dozens of banks.
So they're your bankers.
They're our bankers. and if you think about it, they make 200 to 300 basis points less in return, but then they sit at a 50% loan to value rather than lending directly to the company and taking on that additional risk. And so they can lower their default rates. So they are knee deep in the space. They're just lending in different ways, which I think the market's starting to understand.
What's a typical company for you guys to do business with?
So on the early end, this is a late stage Series C, Series D company, venture capital backed, top tier venture capital backed company, heading towards some type of liquidity event or an IPO. So we're bridging them to that event. It could be a company like a Rocket Lab who sends rockets into space. It could be a company like Angel Studios, who just went public recently. Companies like Whoop, fitness technology, that was an investment of ours. And so these are late stage, they've been around for 5 to 10 years, are heading towards an event into private equity backed lower middle market companies, 3 to 50 million of EBITDA, still growing rapidly. Typically, we're looking at doing tack-on acquisitions, larger companies swallowing up smaller companies. But most of the time, these companies have a 2 to 3 year head start on their competition, moat around their technology. It's very disruptive to old archaic systems, and we're helping to finance that business to that next round of funding or an M&A type transaction.
And investors are relying on your ability to do the due diligence on these companies that you do lend to. What does lower interest rates mean then for your business? I'm not saying we're going to get it this week, but the projection is we're going to get it this year.
Yeah, so I think for most of private credit, it's a problem because most private credit is tied directly to SOFR. And as rates come down, their returns come down. So their net income comes down. It's offset a little bit because they are also borrowing money tied to SOFR. So there's some offset there. We are uniquely positioned. We have equipment financing, so we provide a lot of manufacturing. We finance a lot of manufacturing equipment. These are fixed loans. And so the majority of our portfolio is already at its floor. So if rates come down, and we're modeling out 50 to 75 bips this year, if rates come down, we do not see that same impact. It's something we've been working on for 5 years. As rates went up, we started creating floor rates. Rates have come down. We've now hit those floor rates, and we are not going to see the same impact as most private credit will see, particularly those in the upper middle market that are just floating tied to SOFR. So for us, it could be a good thing. Our cost of capital is going to go down. For others, it might not be such a great thing.
30 seconds. What's an industry that you guys like right now?
So I love equipment financing and I love manufacturing right now. You've been hearing forever, for a couple of years now, reshoring. A lot of manufacturing in the U.S. We are seeing it. We are seeing our pipeline absolutely explode.
Really?
Frontier tech, so anything that's kind of space involved. AI right now, we're doing a ton of the picks and shovels type financing. These are data centers. We're financing the turbines and the power generation equipment that's going in all across our country, and the GPUs that are coming off from Dell and Lenovo, et cetera. And so manufacturing and even the life science and healthcare, it's just exploding right now. And so I'm really excited about just manufacturing generally here in the U.S.
All right, great stuff. Kyle, thanks so much for joining us. Really appreciate it. Kyle Brown, CEO, Trinity Capital. TRIN is the ticker, trading on NASDAQ. Joining us here in studio, based in Phoenix. Why don't you go out to Central Park, go play in the snow, do some sledding, stuff you can't do back in Phoenix. Take advantage of it. Markets at S&P up 25, the Dow down 500. Again, I think the healthcare stocks like United Healthcare, Humana, all those things, they're down 10-15% today on some negative news. We'll get to that. The NASDAQ up about 0.9%. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got the NASDAQ leading the gains up nearly 1%. Goldman Sachs strategists, they say risk appetite the highest in 5 years. That's as optimism about the economy offsets global uncertainty. Let's get to the S&P 500, up 0.4%. The Dow seeing a decline down to nearly 1%. To the yield space, the 2-year 3.57%. That's down 1 basis point. The yield on the 10-year 4.21%, and that is little change. Checking with commodities, we'll start with silver up more than 3.5%. COMEX gold right now, little change. Spot gold up nearly 1.5% at $5,082 an ounce. We have WTI crude up more than 1% at $61 a barrel. The Bloomberg Dollar Spot Index, that's weakening by about 0.5%. The Japanese yen strengthening by 0.5% at 153.28 against the dollar. To Kimberly-Clark, that's the maker of Huggies diapers, Scott paper towels. It reported a beat on profit. The company is reeling in more customers after making some price cuts. Its shares right now, they are little changed. Over to company news. We'll start with Puma. Their shares are up more than 8% in Frankfurt, and that's after the billionaire Pinot family had agreed to sell 29% stake in the company to China's Anta Sports and becoming its biggest shareholder. And the competition heating up at one of the world's busiest airports. United Airlines are adding new routes, also increasing flying from Chicago. It comes after American recently added some new routes from Chicago and Los Angeles. And Fat Brands, that's the owner of restaurant chains Fatburger, Johnny Rockets, Twin Peaks. It has filed for bankruptcy. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Check us out there. Boy, a lot of news flow in the airline space, the aerospace area. So let's get right to it with somebody who knows this stuff. Sid Phillip, Deputy Team Leader for Global Aviation, Bloomberg News. I think he's in my hometown, Dublin, Ireland, back when my peeps were from way back in the day. So good for him. Hey, Sid, let's talk to us about the airlines. American Airlines, they said they're poised for a pretty strong year, yet JetBlue had a wider than expected loss here. What's going on with these two airlines here?
So the airline industry is actually in a sort of bit of a flux at the moment. I mean, you've obviously had the impact of all these storms. You've had the impact of the government shutdown, and you've got the uncertainty about the year ahead. And so American Airlines is taking a more bullish view of the year ahead. They're sort of following their peers, United and Delta, in targeting the most premium end of the spectrum. And they're sort of hoping that by aiming their product at the premium end of the market, they can sort of offset the sort of downturn that's happened at the bottom end of the market. JetBlue also talking about how at the moment things look a bit shaky, but they're talking about how they see a road to profitability and a free cash flow by the end of 2027. So slightly more long-term view of when the recovery might happen. And that sort of explains the dichotomy in the earnings forecast for both those companies.
And of course, JetBlue is also doing what it can to premiumize, if that's a verb, its experience for customers too, with the opening of that new lounge in JFK. So that is the story with airlines, and it's been fairly consistent too with what we heard from Delta and United. Where does that leave the smaller carriers that need to either team up or fade into oblivion? I'm thinking Spirit, I'm thinking Frontier. Is there still a market for these discount carriers?
So the market at the moment is very tough for the discount carriers. So essentially what's happening is that the top end of the market is going to Delta and United for their premium products like first class and business class. And on the other end of the market, you have sort of everyone else competing to get the lowest cost tickets into the hands of the passengers. And that's sort of eroding margins, especially as costs for both pilots and cabin crew are hurting the ultra low cost carriers and the low cost carriers. And that's sort of been explained by this K-shaped recovery that airline executives are talking about. And so JetBlue and the others are sort of trying to get the premium end of it. I mean, we've seen even Spirit Airlines talking about how they're adding a so-called business class product. They've added Wi-Fi, they've added all sorts of things to keep people coming back to them. And so they're hoping that by slightly differentiating themselves from just very commoditized ultra low cost carriers, they can be able to get in those customers.
Well, then it kind of goes back to the point, is there a need for a real true low-cost carrier out there? If some of these supposed ones are going kind of mid-market, higher market? Is there a market demand for that, or is everybody just willing to pay up for travel?
At the moment, it looks the people who are willing to pay up for travel are the people willing to pay up for travel. And so at the bottom end of the market, I mean, everyone talks about how there will be a recovery of the ultra low-cost carriers, and that once people are more certain about the economy and once people at the bottom end of that K start to see some stability in the economy, people will travel. Because, I mean, remember during the pandemic, there was as we exited the pandemic, there was this boom in travel for across the board, and that sort of has further split up. And so we will see that demand coming back. We just don't know when and what sort of shape that will be.
So, Sid, you also cover Boeing, and it came out with its results. And in terms of the numbers for the fourth quarter, free cash flow topping estimates, it generated cash for a second straight quarter. That sounds like it's good news. How far along this recovery, this long-awaited recovery, is Boeing actually?
So Boeing is on the road to recovery. They're still not there yet, but they are recovering. I mean, their fourth quarter results and their full year results were boosted by the sale of their Jeppesen digital aviation subsidiary, and that sort of gave them a $9.6 billion boost. And at the same time, Boeing is sort of ramping up production. They are ramping up sales. I mean, they've seen a surge in sales. I mean, in the last, ever since the Trump administration came in, we've seen a surge in Boeing sales. And so Kelly Ortberg, the new CEO, is sort of pushing Boeing to improve production, ramp up production at a steady pace. I mean, they've gone to about 42 737 MAX jets a month, and they are sort of further boosting those production numbers, and that will get them at the sort of where they want to be. And Kelly Ortberg talked about how $10 billion in free cash flow is his target, and the company's on its way there.
Sid, I'm glad you mentioned deliveries, because I guess I learned long ago about this aircraft manufacturing business. It's not the sales you announce, it's the orders that you actually deliver. You mentioned kind of on the 737, which is the key aircraft for Boeing, that around 42 a month here. Where does a company want to get to, and by what time frame?
So Boeing's still way below. It used to be above 50 pre-pandemic, when they sort of shut down production of the MAX because of the grounding that happened after those two fatal crashes. And so they need to get to beyond that. Remember, Airbus has talked about 75 a month by 2027 on their rival A320 model. And so Boeing would have to sort of ramp up production to some of those levels to target that backlog. I mean, they've got a sort of record-breaking $682 billion backlog of customer orders. And so that's actually when airlines so the airframers like Boeing and Airbus only get paid when they actually deliver those planes. So when they book those orders, they don't really get the money from the airlines. The airlines pay them when they get those planes. And so for Boeing to actually start generating that free cash, they need to actually get those planes out the door.
Yeah.
And that they need to do by ramping up production.
Sid, very quickly, you mentioned that backlog, record $682 billion. How much of that is customers trying to curry favor with the Trump administration by buying U.S. aircraft, or at least announcing plans to do so?
Some of it may be the customers trying to curry favor with the administration. I mean, we saw that massive Qatar order. At the same time, there are only two plane makers in town, and Airbus is sold out until the end of the decade and sort of into the next decade. And so the only way for an airline to actually get planes is to either buy planes from either Boeing or Airbus. And Boeing is similarly sold out. And so airlines are placing their bets with either manufacturer and hoping that they will get those planes whenever they actually get those planes in terms of the delivery forecast. Yeah.
All right, Sid, thanks so much for joining us. I know George Ferguson, Bloomberg Intelligence, he's over there in Dublin as well for this airline leasing conference. I did not approve of that trip, but he made it anyway. Sid, you walk into any Dublin bar, mention my name, they'll take care of you, okay? Sid Phillip, Deputy Team Leader, Global Aviation, Bloomberg News there, giving us the latest there on American Airlines. Pretty bullish. JetBlue, a little bit less so. The regionals having a little bit more of a tougher go than, the big global players. And Boeing, on the road to recovery. I guess that's the takeaways there.
And all I'm thinking about is when I pay for my plane ticket, it's still going to be more expensive than what I want to pay.
Yeah, I don't know. I don't know. I've always been captive to Newark, so I kind of have no choice. I'm a price taker from United.
Oh, I see.
Yeah,
okay.
So, they've got...
You will rearrange your life for United at Newark.
Exactly right. So that's how we roll. And I think that's how a lot of people roll. You're kind of captive to whoever is kind of the hub of the hub and spoke. We're going to have more coming up. This is Bloomberg. Good morning.
listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, good Tuesday morning. We are looking at a Dow Jones Industrial Average that is under pressure. And I bring that up because it's kind of the outlier when you look at the big cap indexes. And a big reason for that is what Paul Sweeney has been identifying all morning. The fact that you have healthcare insurers in the red by a lot. United Health down at 18% at the moment. John Tazzi covers healthcare for us here at Bloomberg. And John, this is not just due to United Health's earnings. Its outlook is certainly one reason why the stock is weaker, but some concern that the government is not going to be funding Medicare programs the way that a lot of investors had anticipated. Tell us what the latest is.
Yeah, so the news that's really driving shares across the sector today is yesterday after the close, the Trump administration
John, we're going
to rates for Medicare Advantage.
John, we're going to let John kind of reconnect there. We're getting some Zoom issues, but
Zoom fail.
The issue, I'm looking at the Bloomberg terminal and the IMAP function for the Industrial Jones 500. 333 points of the 417 points decline in the Dow is due to United Healthcare. So that tells you kind of right there.
Absolutely. United Healthcare has had its own issues, certainly. Didn't have a great 2025. There are a lot of issues with just its different business lines, right? It's become this healthcare supermarket, and its health business units, its care units were not doing so well, and is now in the middle of divesting some of that. And of course, the insurance business is also something that it is actively looking to shrink. So already it's got some issues that perhaps the other insurers don't have, but on top of that, you now have the government making changes. And I guess what this means for the rotation trade that we've been seeing in equities, right? Investors moving out of big tech and into other parts of the market, including healthcare. Does this, put a stop to that?
Yep, absolutely. And the interesting thing is United had been, in their 2026 outlook signals a company with a smaller footprint, this is according to Bloomberg News, fewer members, but higher profits, with revenue set to drop at both United Healthcare and its Optum Services division. So they're trying to just kind of right-size the company, it seems a little bit, but looks
that's
like
the goal.
Yeah, so it looks like a turnaround is not there yet. And again, that stock off pretty big here today. So, and that's pulling down the Dow Jones Industrial, but the S&P is up about 32 points. And then tech is still working very much today, up 200 points here. But you look at some of the Cigna also off about 2.5% here today. So a lot of other, related issues about some of this payments coming from the U.S. government.
Yeah, and it's specifically for private Medicare Advantage plans. The headline here is this proposal to only increase payments by 0.09% on average. So that's basically flat. That's not an increase at all.
Exactly, and the rate proposal is a surprise coming from an administration that investors did believe would be more favorable for private Medicare plans than the prior one. So this is kind of, I think the street was looking for kind of 4 or 5% increase in payments, and this 0.09% is not what they were looking for.
Not what they were looking for. And I mean, if you take a step back, big picture, it kind of dovetails with the White House's renewed focus on affordability. Healthcare expenses are huge, and of course, senior citizens, boomers, big voting constituent for the Trump administration. This is something that they want to tackle and be very out front on in terms of addressing affordability.
And that kind of goes to the Consumer Board, the consumer confidence number that came out today at 84.5, the weakest since 2014. And that's something that this administration probably is not happy about, because a lot of that weakening in consumer confidence is because of that persistent inflation that's out there. So that is a tough issue here when you're trying to make the affordability issue. And when we saw in the Virginia governor's race and then New Jersey governor's race that affordability really became a key point in those races.
Absolutely. Dana Peterson, who we were just talking to, the chief economist at the conference board, said that there were write-in responses to the survey. And in a lot of those responses, consumers mentioned prices of oil, prices of gas, prices of groceries. You think about that. Those are three items that the Federal Reserve does not include in its oversight of inflation. I don't want to say oversight, but they don't look at the number that includes oil and food because it's a little bit too volatile, right? They look at inflation measures where that's stripped out. So that's exactly what consumers are saying bothers them right now.
Yep. In my day-to-day, the food definitely is still an issue. You just kind of continue to see it at the grocery store, and I don't expect food companies are going to lower prices when their raw material costs go down. I don't expect to see that. I can see how they go up, but not how they come down. Where you do see it is in a strict commodity like gasoline. I mean, I'm filling it up for $2.70 a gallon, which is fantastic. We were paying north of $4 a gallon, and so it's really come down, and that's been a huge help. So that's that. But I think
you're not driving your car to go to a restaurant anymore because those prices are really high and continue to be.
Exactly right. For a lot of folks, that is absolutely the case there. So, but again, to me, I think that one of the inflation things that gets people is food. It's insurance. It's still the cost of housing is still an issue. And I don't know what the Fed can do. I mean, those are things that are kind of bigger macro pictures, I think.
Right. I mean, they can make the cost of money cheaper, but that doesn't address the other things. One of my favorite restaurants is shutting down, even though every time I go, it's wall to wall with people.
Is that right?
And I'm sure it's tied to labor costs and it's tied to raw material costs.
Yep. All right. We'll have to see how that goes. We talked to Michael Hagan, who's a restaurant analyst for Bloomberg Intelligence, frequently to get a sense of what's going on there. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence begins in just moments. Red and green on the screen with the S&P up 32 points. That's 0.5%. The Dow's down about 395 points. That's 0.8% decline. NASDAQ up about 0.9%, 215 points. 10-year Treasury yields 4.21%. We'll have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Thursday morning from the Bloomberg Intelligence team, Paul Sweeney and Scarlett Fu in the Bloomberg Interactive Broker Studio, streaming live on YouTube. Coming up in this second hour of Bloomberg Intelligence, earnings palooza, and this is all before the big tech names begin reporting their results starting tomorrow. We've got Steve Mann. He is our global autos and industrials analyst, talking about GM's earnings. Mary Barra, the CEO of GM, spoke with our Matt Miller a little bit earlier today. Kim Forrest, she is the founder and CIO of Boca Capital Partners, will give us her outlook for the markets. She's a specialist in those tech names, so we'll get her take on what she's seeing there. And of course, we will be checking in with Thomas Black. He is our Bloomberg opinion columnist on UPS's results. I told you, earnings palooza. All right, let's head over to Lisa Mateo first for our Bloomberg Business Flash.
You got it. And we've got stocks. Right now, a mixed look on the screen. This says earnings season kicks into high gear. We have results from 4 Mag 7 heavyweights later this week. Today, we heard from UPS. It sees better than expected sales. The company continues its overhaul, cutting those less profitable package volume out of its network. It's the first time in a year that the courier has provided full year sales guidance. Its shares, right now, they're up about 3%. General Motors, they raised its profit outlook, approved $6 billion in buybacks and an increase in its quarterly dividend. Taking a look at GM, and they're up about 9%. Tesla opens its books tomorrow. Ahead of it, its shares right now down about 0.2%. And Boeing, their fourth quarter earnings, which featured a second straight quarter of positive cash flow, well, just wasn't enough to impress investors. Their shares, they were down. Now they're starting to come back up about 0.2%. To the markets we go. The NASDAQ leading the gains up 1%, 218 points. This S&P 500 up about 0.5%. The Dow taking a hit down about 0.7%. We go over to commodities. I have to point out silver up more than 4%. We go to spot gold up about 1.5%. Brent crude up about 1.5%, $66 a barrel. WTI crude about $61 a barrel. The dollar hit the lowest levels since 2022. The Bloomberg Dollar Spot Index weakening by about 0.5%. Taking a look at the Japanese yen, strengthening by 0.6%, 153.23 against the dollar. And also this Amazon, it's closing its Amazon Go, Amazon Fresh physical stores, with some locations converting into Whole Foods. That is your Bloomberg Business Flash. Scarlett and Paul.
That's right, Lisa Mateo. Thank you so much. We appreciate it. Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. Let's see what some stocks on the move today. We're joined by Bloomberg's Christine Aquino. Christine, what are you looking at today?
We got to take a look at United Health, Paul. Ticker UNH. That is having a bad day. Those shares are down 19% now, but that is only set for the biggest drop in terms of the day's move since mid-April. It's only set for its lowest closing price since August. So that just tells you, even though it's a bad day for United Health, it's actually had much worse. But that is because we did get a forecast from the company seeing a decline in 2026 revenue. That is their first annual contraction in more than 3 decades. And so quite a big deal, a historic moment for the company in not a very good way, unfortunately. And then also they've been hit by more policy risks, right? Because the U.S. is now proposing to keep payments to private Medicare plans flat next year. So it's a bit of a double whammy for United Health.
Right, just days like today, news like United Healthcare just reminds me how much I absolutely don't know anything about healthcare finance, economics. Like who pays who, I have no idea.
But at this point, this is just a proposal. It's not even a done deal. And it's the fact that something can happen like this and blow everyone's expectations out the door, you know. Let's move on to some defense names.
Yeah, let's take a look at Northrop Grumman this morning. We did get results from them as well. Ticker NOC. So just down a little bit today, down 0.3%. I mean, the results were quite mixed. I mean, we did see adjusted EPS at 27.40 to 27.90 in terms of their forecast for the full year. And the estimate is 28.96. So, you know, the midpoint of that range, still meeting those expectations. They did have their fourth quarter income rising 17% to $1.27 billion, which is above estimates. And then a lot of attention being paid as well to their order backlog, which is a good indication of future business. That reached $95.7 billion, which of course has been spurred by awards for the F-35 fighter jet and also Virginia-class submarines.
Northrop Grumman, the Grumman part, originally based on Long Island, where they made my favorite aircraft, the F-14 Tomcat. So there you go.
There you go. Yeah.
What else you got? One more?
Taking a look at RTX as well, staying with the defense theme here. So those shares doing better. They're up 2% at the moment. So that's ticker RTX. And yeah, very interesting call. I mean, the top line of the results was a fourth quarter adjusted EPS at 155. That is above estimates. And sales rose across the company's primary aerospace and defense units as well. Quite a bit of interesting comments coming from the earnings call. They did say, the company is saying that they will continue to pay dividends to investors even after they drew criticism from President Donald Trump, who said that the company specifically citing their sluggish weapons output and lavish shareholder returns. But looks like the CEO of RTX, Chris Callio, backing that dividend plan, and we're seeing investors rewarding them for it today.
Yeah, investors do like their dividends. All right, Christine Aquino, thank you so much. Managing editor for Bloomberg Smive blog. You can check her out and check out her contributions on the terminal. And of course, for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Earnings Palooza in full swing here. General Motors, the latest report as well. It expects profit to grow as much as $2 billion this year. And like RTX, plans to return more of that to shareholders with a higher dividend as well as buybacks. Earlier, GM's CEO Mary Barra joined Bloomberg's Matt Miller to discuss their earnings and their push on EVs. Remember those? Take a listen.
The whole industry, we were on a path that we were working to get to 40 to 50% EVs by 2030. So now that the regulatory environment has changed and the consumer incentives have gone, there is going to be slower EV adoption. We're still committed to EVs, and we've got a great portfolio that we're working on taking costs out of. But in the meantime, we also have a great internal combustion engine platform. And you're right, full-size trucks are one of the strengths we have, as well as full-size SUVs, mid-size crossovers. So we really have a strong strong lineup across the board, and that is really what is, fueling our business success.
I have had, as the host of Hot Pursuit, a Bloomberg podcast about cars, the opportunity to drive a lot of your EVs, from the Sierra EV to the Hummer EV to the Escalade IQ, and they're fantastic products. Are you not deterred that Americans aren't buying more of these vehicles? You know how capable they are. You know how useful they are in daily life. What needs to happen for more Americans to buy these EVs?
Well, I think the consumer is very rational when they're making a decision about what car to buy. Let's remember, it's one of the most important and expensive decisions that they make. And one of the things we have to continue to work on to drive EV adoption is a more robust charging infrastructure. And that still is continuing to happen. So every quarter, more and more chargers are available. I think as people in their individual communities see that they've got a robust charging network and believe if they have to go on a road trip, there's that as well, they're going to make that choice. And what we do see is once someone buys an EV, they see the technology, they see the driving experience, never having to go to the gas station, and they stick with EVs. So I think it will happen over time, and that's why during this period we've already got a great portfolio of EVs. We're going to continue to take cost out to get our EV portfolio profitable, and we're going to be well positioned as EV demand grows over the next handful of years.
What about the hybrids, Mary? I mean, GM was really a front runner, not only in EV technology, but in hybrid technology with the Chevy Volt. I remember when the Tahoe came out with a 6-liter gas engine and electric battery power. Will you start to sell more of the hybrid vehicles?
Well, we have always focused, as you said, we have great hybrid technology. We have great EV technology. We're one of the few OEMs that invested in a dedicated EV platform that allows us to have the portfolio we have. So we're focused on the end game, and we have affordable EVs. So I think that's where our primary focus is. We understand the technology. We have it in other regions. You'll see us with a handful of hybrids as we move forward. But right now, our focus is really on having the right internal combustion engine portfolio and the right EV portfolio moving forward. And I think we're demonstrating that that's a winning formula, because over the last 4 years, we've gained share each year.
All right, that was General Motors CEO Mary Barra. And of course, for more on the company's earnings and what she had to say, let's bring in our Steve Mann. He covers autos for us here at Bloomberg Intelligence. He's the Bloomberg Intelligence Global Autos and Industrials Analyst. Steve, when Mary was talking about their portfolio of internal combustion engines and their portfolio of EV vehicles, what does that portfolio actually look like? I mean, is it 70-30 ICE engines to EVs, 80-20?
Oh, it's actually ICE engines much greater. I know they have a full portfolio of EVs, but you're talking about like 85-90% ICE versus 10-15% EVs. So, they do have a big portfolio, but it was just at the beginning of rolling them out. They do still have one more major rollout coming out, which is the Chevy Bolt, a smaller vehicle, which the industry and GM thinks that that's where the market is going, a cheaper, more convenient EV.
GM stock up 9% today to a 52-week and an all-time high. So the street likes what they're hearing. Steve, it's almost to the point where the street rewards these companies if they not fully back away, but at least slow down the evolution to EVs and just focus on what's making money today. Is that kind of where the industry is today?
Yeah, exactly. Like Trump actually did the auto industry a major favor by relaxing the miles per gallon mandate. So basically, every vehicle in the big three's portfolio are currently meeting those mandates. And what it means is less penalties, right? And no need to buy EV credits going forward. Huge savings. And what that means is it could translate into a slower increase in car prices for consumers, especially for big trucks. Makes the big trucks a lot more attractive to sell for the big three. So they're gonna sell as many as possible, given this opportunity. I know we talked about hybrid for GM. It's gonna be a huge a sinkhole for them if they invest in that technology today. So let's not do that. Maintain whatever they can do with EVs and really push the ICE vehicles.
maintain what they can with EVs so that, small 10 to 15% of their overall portfolio, forget about hybrids and just focus on the mammoth gas guzzling vehicles that Matt Miller likes driving. I know he talked about how he drove electric versions of that, but let's face it. What happens then if gas prices do turn up higher unexpectedly? And I know that the administration is doing all it can to prevent that from happening, but I'm looking at AAA gas prices and they bottomed at around $2.79 and have now made their way back up towards $2.90.
Yeah. I mean, historically, when gas prices go up, it does impact ICE sales. And, it may push some buyers into EVs, depending on where the expansion of the EV charging network is at. But I think at the end of the day, if gas prices do go up, it actually benefits the Japanese companies like Toyota and Honda, where they have a full suite of hybrid vehicles that actually consumer love.
Yeah, I just leased the Honda CR-V hybrid. My son, who drives in California all the time, where the gas is really expensive.
Yes, that's right. He probably wanted it. And how often does he have to fill up?
Not that often. I mean, just not that often. It's great. It's a great technology. Steve, let's just, while we got you here, what's the call these days on Tesla? As we talk about this EV business, but really for Tesla, we're talking about so much more.
Yeah, looking at GM as a backdrop, GM's earnings for 2026 is probably a little bit light. There's probably some more upside on the shift mix for more ICE. So what it means for Tesla, it's an uphill battle for them. I know the stock is trading, at an astronomical valuation at the moment. Investors are very focused on their robo-taxi, autonomous vehicle build-out. People feel that, they can actually outcompete the likes of Uber and Lyft. So, sales will be weak in the fourth quarter for Tesla. But I believe the investors are actually looking past that into, what is the catalyst, or what is Elon Musk going to talk about in their next earnings calls on the robo-taxi.
Yeah, it's always about the Elon Musk narrative, his vision going forward of what this company is going to be. I wonder, Mary Barra talked about the charging infrastructure and the network and how we're not there in the United States. Tesla is offering the supercharger, and that's part of its business model, to be able to make that charger available to other automakers. How big a contributor is that to its revenue, to its profitability, when it's profitable?
It's still a small amount. It is what they do is they want to expand that business. So the charging, selling these supercharging business and the revenues from the charging, it's still really small. I would say around 10%, maybe less.
Hey, what do we know about how important are incentives here? I look at other countries around the world, and they have got these huge EV percentages of sales. China, the Nordic countries. How important are government incentives to get there?
It is very important. I think the Germans are actually putting back the incentives, and it has lifted EV sales in Europe, in Germany. But at the end of the day, you really want to build a sustainable growth environment for these cars. And Mary Barr is right. We actually published a very extensive report on EV charging, comparing charging network in the U.S. versus China, night and day. Right, so it's about convenience. It's about cost for the U.S. consumer. It's great to have. It's great for consumer to have some subsidy. Help pay for the cars that they're buying. But I think long term, it really needs the consumer to really buy into the product.
Yeah, and to have chargers available nearby. That's why it works in California and less so here on the East Coast. Steve Mann, thank you so much. He is our global autos and industrials analyst here at Bloomberg Intelligence. And Paul, whenever I rent a car, Hertz will try to push an EV on me, and I go in the other direction because I don't want to spend my last hour as a car renter trying to find a charging station.
Yep, exactly right. I think a lot of people have the opinion, hey, when it gets to there are as many charging stations as there are gas stations today, then come talk.
Right.
And we're way far away from
And when you charge, you have to sit there for like 20 minutes sometimes.
Yeah.
You're not like get in, get out, 5 minutes.
Yeah. Yeah, no, thank you. But the hybrid's working well for my number 4 offspring. So there you go. Maybe that's the technology. S&P 500 up 35 points. The Dow off 350. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It is Bloomberg Business Flash, brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and to learn how to add metals to your IRA or 401k tax and penalty-free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Well, we still have check shares leading the advance this morning, up more than 1% for the NASDAQ. A rally in memory chip makers. We look at Micron, their shares up more than 4.5%. That's on plans to expand its memory chip capacity. And we mentioned tech. I just want to take a peek at Apple shares. They're up more than 2%. They're leading the Mag 7. So the NASDAQ up more than 1%. We have the S&P 500 rising 0.5%. The Dow down 0.6%. A big part of the Dow drop-off due to healthcare. Shares of a number of major U.S. insurers falling. That's after the U.S. proposed holding payments to private Medicare plans flat next year. And that is a huge disappointment for investors. We look at CVS Health down 11%. We have Humana off about 19%. 19%, and United Health falling about 18%. Speaking of United Health, it also forecasts a decline in 2026 revenue, the first annual contraction in more than 3 decades. To the yield space, the 2-year at 3.57%, that's down 1 basis point. The yield on the 10-year, 4.22%, and that's up about 1 basis point. To currencies, the Bloomberg Dollar Spot Index weakening by about 0.6%, with the Japanese yen strengthening by about 0.7% at 153.05 against the dollar. The euro strengthening 0.7% at 119.71 against the dollar. Bitcoin right now just above 88,000. Bitcoin actually down 25% since October. It's shed about 6% in the past 7 days. Now it's finally starting to see a lift. JetBlue having some trouble winning it over those higher paying customers. They reported wider loss than expected last quarter. Its shares are off about 5%. And American Airlines reported a miss on fourth quarter results. Its shares are little changed. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, Lisa Mateo, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney are live here in our Bloomberg Interactive Broker Studio in New York City. We are digging out like a lot of other folks. We're also streaming on YouTube, so head over to youtube.com and search for us there. Let's go to our next guest right away. Kim Forrest, founder and chief investment officer of Boca Capital Partners out of Pittsburgh. Kim, I see in your notes that you mentioned you are owners of UNH, United Healthcare, and that stock's been certainly in the news today. The stock's down 19% today. As an owner of this thing, assuming you still own it, what's your call? What's your view of what's going on with this company?
Sure. Well, firstly, the reason why we have United Healthcare is because we run a sector-neutral strategy, meaning we have to have proportional exposure to all sectors in the S&P 500. And looking at insurers, health insurers, actually, United Health, yes, they've had issues, and the whole, government not going to reimburse or raise reimbursement rates next year is an issue. However, UNH has a lot of technology in its operations. So we believe that they are relatively well positioned to be able to weather lower reimbursement rates because they use technology effectively. They develop it in-house and use it. So that's really interesting to me, who came from a background in software. And it's not easy to own today, but it is what it is.
Oh, I appreciate that angle, because I know that you always focus on the tech angle, and this is, something that I think may be underpriced, underappreciated by a lot of investors. What about the rest of the sector? I don't know if you own any of the other names like Cigna, like CVS Health, like Humana, but are they in a similar position, or are they kind of, because of their lack of investment in tech to the extent that UNH has made, are perhaps not as well positioned?
Right. Well, I looked at all the insurers. Oddly enough, my exit from software engineering, that last contract that I was on was at a large Blue Cross Blue Shield. So I kind of know how healthcare works from the inside. And looking at these other companies, I believe that the use of technology, effective technology, is about the only thing that can give them higher profitability and still do their job about, taking care of people. So in looking at them, I still think that United Health has the strongest tech stack, and that's why they were the pick for that insurance slot in our strategy.
Big tech earnings week, and just earnings in general this week. Kim, what are you focusing on?
Well, I'm focused on all of it, but today is, at the end of today, we're going to get news from Seagate. I think that's it, STX. And, the memory is hot. Who would have imagined,
right,
if we told you like a couple of years ago, makers of NAND and DRAM are going to be the hottest thing in the market. I laugh saying that because it's so nerdy, right? But it is a very hot item now because of AI and because of how the new chips demand this high-speed memory bandwidth stuff. So looking at that, that's certainly important, but the Mag 7's important tomorrow, IBM's important tomorrow. There is a lot of tech coming at us, and we want to see that companies are getting revenues and they're still in the focus for their customers.
Makes a lot of sense. And I know that, it feels like the big tech names have already gotten their initial lift over the AI excitement, and now investors are much more discerning about them. When it comes to the memory space, is it still, everyone bidding up anyone in memory, or do you see that discernment taking place for the memory names as well?
Well, actually, it's gone the other way. In the beginning, Micron, was the one name to rule them all, to quote the Lord of the Rings. But it looks like anybody who's creating memory is really in the spotlight. And I think it will shake out. You always want to own the highest quality companies you can. I don't really love the companies that still make the spinning disks. And why is that? Even though in the shorter term, companies, especially AI, need a lot of storage space, but over the long haul, guess what? Having spinning disk systems, the old-fashioned kind of hard drives or the disk-based systems requires more electricity than NAND, which is a static kind of memory, kind of like the memory sticks in your phone or your computer, if you remember those, or camera. So looking at that, we like Micron still probably better than everyone because they are concentrated in the areas that we think are going to be growth areas for the foreseeable future.
All right, Kim, we'll let you get back to all those earnings. Kim Forrest, founder and chief investment officer, Boca Capital Partners, joining us from Pittsburgh, PA, via that Zoom thing. Still on the earnings front, UPS, Big Brown, sees better than expected sales amid a network overhaul. Thomas Black joins us, Bloomberg opinion columnist. Thomas, what'd you see? What'd you learn from the UPS earnings here?
UPS continues to shrink to become more profitable. That's the big takeaway there. They're reducing their Amazon business, and they're trying to retrench with more profitable packages. And that's probably a move away from some of the e-commerce deliveries where the competition is fierce, and there's lots of little companies that are out there competing.
So how far along this journey of shrinking to become more profitable are they? Are we in the third inning? Are we in the seventh inning?
This will be the last year of this, so I would say we're in the sixth inning, heading toward the ninth. So after this year, Carol Tomé, the CEO at UPS, said we're going to be a leaner company and ready to grow. So it's going to be a little bit painful this year. She walked analysts through it. The first half is going to be more painful as they glide down from Amazon and they take some write-downs and so forth. As you know, they retired their fleet of MD-11s, which is this old plane that just recently had a crash. So they're going through all of this in the first half, and then the second half, things should start to turn around. They're not only shrinking their Amazon business, they're shrinking their footprint, their facilities, and the older ones are being retired, and they're replacing those with new automated facilities, and that's going to allow them to lay off more union workers. So that big union contract where the Teamsters pushed through a big labor increase is turning around to bite them a little bit because UPS is dealing with that by shrinking its workforce.
How does this UPS strategy differ from that of FedEx?
They're similar in the sense that they're both cutting costs aggressively. FedEx is a little bit different because it doesn't have the labor costs from the union workforce, so it's a little bit more flexible. And FedEx is undergoing a major overhaul that's probably in its last innings as well. And the last part of that is the most difficult part, where they're going to combine their two separate networks, the ground network and the express network. They're in the middle of that, but so they're going to be coming out of that as well. So we're going to have two parcel companies that are restructured and ready to grow at the end of this year.
Every time there's some kind of headline regarding UPS laying off workers or cutting positions, it's these massive numbers, right? This time around, it's up to 30,000 positions this year. And as you mentioned, Thomas, this is all due to trimming down and downsizing the scope of the company. At what point are we looking at job cuts tied to AI, or have we not even gotten there yet?
Well, I would, instead of saying AI, I would say automation. And those are these new facilities that handle packages automatically. You even have the induction of packages where you have robots putting the packages on the conveyor belts and taking them off. So those are the steps toward more automation. This is that physical AI that people talk about, right? And of interesting stat that Carol Tomei gave on the call is that those automated buildings are 28% more efficient than the older buildings. So the more automation is where they're leaning into. So it's part of it shrinking some of the low profit volume plus more automation to replace the human workers, basically.
E-commerce continues to grow, I guess, double digits. Who's handling all these packages if UPS is maybe backing away a little bit?
Well, Amazon has its own delivery network.
Yep.
It tends to want to deliver into those big urban areas where it just takes things from a warehouse to a residential home. So they do that very well. Where they want help is on the rural areas. That's where they turn to folks like UPS and the Postal Service. So obviously Amazon is a big player there. We also have lots of smaller companies. These are gig type companies that have apps and workers show up and they have an app on their phone and it gives them a delivery route and they throw packages in their car or their truck and they go deliver. So there's a lot of those companies that tend to operate in urban areas. So there's actually a lot of capacity out there for retailers or people who are really smart on their inventory management to tap into.
All right, Thomas, good stuff there. UPS out with some numbers here today. Thomas Black, he covers logistics, manufacturing, and aerospace for Bloomberg Opinion. He's based down there in Dallas here. So again, it just seems like you see these package delivery people in urban areas like New York City just flying around on these bikes and electric carts and all kinds of stuff.
But they're not necessarily employed by UPS or FedEx. They're all kind of independent contractors. And to your point about FedEx and how the story is very similar, the themes are very similar. FedEx shares are up almost 3% on the day following UPS's results. FedEx does not report earnings until late March, March 19th.
Okay, all right, we'll keep an eye out for that. Again, just looking at the markets here, red and green on the screen like we've seen all morning with the S&P up about 0.5%. The Dow off about a little more than 0.5% on some of those healthcare insurance companies taking it on the chin here. NASDAQ, however, is up 1%, 235 points. Tech is the play with tech earnings coming up this week.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks, well, trying to rebound after a round of volatility from geopolitical tensions, also a resurgence in trade threats. We have the NASDAQ leading the gains up more than 1%, 238 points. The S&P 500 rising about 0.5%, 37 points. But the Dow taking a hit down about 0.5%, a big part of that due to those health insurer stocks. Over to the Bloomberg Dollar Spot Index, weakening by 0.7%. Japanese yen strengthening by 0.7%, 152.99 against the dollar. Over to the yield space, the 2-year, 3.57%. That's down 1 basis point. The yield on the 10-year, 4.22%, and that is little change. Commodities, pointing out silver up more than 4%. We have COMEX gold up about 0.1%, but spot gold up more than 1.5% at $5,093 an ounce. Brent crude right now, $66 a barrel. That's up nearly 2%. Aircraft engine and missile maker RTX, their shares gaining nearly 2%. It reported fourth quarter adjusted earnings per share above what analysts had expected. Then you have military contractor Northrop Grumman. It gave a forecast for full-year adjusted earnings per share below what analysts had expected, but its shares, they're on the rebound. They're up about 0.1%. In other news, software company Salesforce said it was awarded a 10-year contract worth $5.6 billion from the U.S. Army. And space and defense technology company Redwire, it was reported a contract for the Missile Defense Agency's Scalable Homeland Innovative Enterprise Layered Defense, or SHIELD program. Much easier to say. Shares are up about 31%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is your Bloomberg Business Flash. Scarlett and Paul.
All right. Thank you so much, Lisa Mateo, with our Bloomberg Business Flash. Whenever we talk about universities and their investments, their endowments, the one name always comes up, and that is Yale. Yale created this endowment model that was predicated on lots of private assets, long-term investments that paid off handsomely years down the road. Except there are now question marks over whether this Yale endowment model is still relevant, whether it's dead or not. Janet Lauren is Bloomberg News' higher education finance reporter, and today's Big Take really focuses on that idea. Janet, there's question marks about the Yale endowment model because the better performing endowments of late are those that invest in just plain old stocks and bonds.
Yes, and occasionally from time to time we've seen that in certain years where Simple just outperformed private equity and other and VC. And in 2021, remember the outstanding returns that these schools had. But now, higher interest rates, fewer exits, you've got a huge amount of money locked up in private equity, in some cases 40%. And, look, these schools would like a little cash. They're looking, perhaps they want to change managers. They need the cash to do other things as well and refresh their portfolios. But when you have, in the 40% locked up, time to think about other things. And that's perhaps why you saw Yale doing its first ever sale last year, which was a big deal.
So again, this sale, Yale unloaded about $2.5 billion in LBO funds at a discount. That is brutal.
Well,
is that unprecedented, or other folks?
Yale has done it for the first time. Others have been doing this before. Harvard has unloaded a lot in previous years, but it's sort of a new normal in some ways. Looking at secondaries, the secondary market is very popular right now, and they in the hunt for potential cash and liquidity. You look at the UC endowment where we talked about this 80-20. They call it the Blue and Gold Fund. Very proud of it. And in the height of the pandemic, when they wanted some liquidity, they gave almost $2 billion in cash to the campuses for liquidity. Compare that to 2008, when schools were forced to sell on the secondaries or borrow. That's kind of a stark example right there when you need money.
When you need money, and I think that's a key phrase here, especially in 2026, because this White House has been targeting higher ed. And even though Yale has not been targeted to the extent that Harvard has, for instance, or Columbia, these schools need money in a way that they didn't before, if for nothing else, to pay taxes on their endowment.
Yes, and that's a huge game changer. A year ago, we may not be having this conversation. Yale and Harvard each had pegged their bill for the endowment tax, which is now 8% of net investment returns, to be about $300 million a year.
Wow. And is that enforced? Is that happening right now?
Absolutely.
Absolutely,
That happened
okay.
July 1st when the big beautiful act happened.
How about the actual, I guess, halting payments to some of these universities that President Trump and the administration have talked about for some of their funding? Has that happened?
So many schools have had settlements. Harvard famously has not yet. There was a lawsuit in last September. The district court ruled in favor of Harvard. Late December, the government appealed. So that's still in flux, but there's a huge concern of Harvard and all universities. Are we still going to get this federal research funding going forward? And Harvard may have temporarily solved their problem, still very unclear. But what is the money going forward? Are universities, these large research universities, still going to be able to count on hundreds of millions of dollars? You know, Northwestern, which settled around Thanksgiving, had been self-funding their research to the tune of something like $30 or $40 million a month. So we're talking, you know, lots and lots of money.
Yeah, they need the money in a way that they didn't before. And going back to the Yale endowment strategy and how well it worked, at least initially, when David Swensen launched it back, I think, in the 80s and 90s, those were the heydays of the Yale endowment model. Maybe it made sense when private equity, private investing was not a big thing yet, was not yet mainstream, or maybe it makes more sense in a low rate environment, but times have changed and that's a big part of it, right?
Absolutely. First mover advantage, you know, there weren't as many institutional investors doing what he was doing. He saw inefficiencies in the market and he said, look, this is what we can do. We have the ability to lock up money for a while. We're very long-term investors. We invest for centuries. We can do this, and it was extremely successful. And others tried to copy. Certainly more money piled into private equity, sovereign wealth funds, pension funds, foundations. And when you have a lot of money chasing returns, it just isn't as successful, especially at this higher interest rate when there are fewer exits.
What is the Yale model in terms of asset allocation, and is it dead now?
Well, you know, we had the head of a very large pension fund say it's not dead, it's perhaps on life support. But it's, you know, it's looking at inefficiencies in the market. Now, typically, Yale has not been a big investor in U.S. equities. You know, tiny share of, now we don't know the details because unfortunately they stopped publishing their asset allocation when David Swensen died. You know, a huge loss for me personally because it gave you some great insight. But they, you know, typically had a very, very tiny investment in U.S. equities. Now look at the University of California, you know, 80% in global equities, but you know, who are they trying to emulate? You know, some investor in Omaha who's been pretty successful.
Yeah.
You know, betting on America.
Yeah, but just buying cheap index funds. I guess what's not immediately obvious to people is that an endowment is more of a fund of funds rather than just a fund. Like the UC fund, the blue and gold fund you were talking about, that's almost like a very basic personal account where you're just putting money into index funds and not dealing with it for a long time.
Exactly.
But Yale is like, they're picking fund managers, like it's very, very complex.
Well, it's actively managed. And Yale is very famous for, you know, having managers for 10 or more years. They did a story maybe 10 years ago that talked about the length of managers, and it's often 10 years. And, you know, Yale very smartly came up with a new program. They call it the Prospect Fellowship, and they're looking for new talent. And we had a comment from a former Princeton manager who talked about, you know, they look for talent and they grow with them. So maybe a small allocation to a manager today, think Hill House at Yale, it turns when they're successful into, you know, billion-dollar investments, and especially when they've done well. You know, you can grow with a successful manager, and then all of a sudden your allocations are much larger as you're growing with them, and that's what they're seeking. So that's sort of like a refresh for them.
All right, Janet, great stuff. As always, it is the big take story today on the Bloomberg Terminal. You can check it out on the terminal as well as Bloomberg.com/big take. Another great story from Janet. Covers higher education for Bloomberg News. This story is entitled Yale's Endowment Model Falters as Tough Moment for Universities. So there you go. S&P 500 up 36 points. The Dow off 285. The NASDAQ is up 240 points. That's 1%. We're going to have more coming up. This is Bloomberg. Good morning.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, any day now, the U.S. Supreme Court will announce a ruling on import tariffs imposed by the Trump administration. That's going to impact a ton of industries, including the energy business and renewable energy and batteries and all that kind of stuff here. So let's see where we're going to go here. We can do that with Antoine Wagner-Jones, head of trade and supply chains for BNEF. The BNEF folks they're the team at Bloomberg that tracks and analyzes the energy transition from commodities to power, transport, industries, buildings, and agricultural sectors. And we got a whole huge group. It's a global team looking at that energy transition. And I guess what I've learned in this Trump administration, talking to investors around the world, is that this transition to cleaner energy, it's going, folks, whether the U.S. is going to participate or not. It's moving on a global scale. It's not slowing down. The investment dollars are being spent. Antoine, talk to us about the Supreme Court and tariffs. How are you guys kind of mapping out the potential play out here?
Yeah, just as a level set, there's all kinds of news coming out around tariffs with the Trump administration. This year hasn't slowed down. We've heard potential tariff threats regarding Iran, Greenland, most recently South Korea. But in the backdrop, there's Trump's ability to invoke a national emergency as the basis for a lot of his tariffs. That's being questioned, and that's a big deal because that changes the tools that he has available to put these in place. So the Supreme Court is going to issue a decision at some point. They were giving oral arguments in November that seems to question the validity of those tariffs, but we're waiting. And the really important thing that we're trying to do is break down the impact of that decision, which is likely going to strike down Trump's ability to set tariffs under this law on different sectors. And what's really important is that there's other authorities that Trump can refer to in terms of other instruments that he can use to apply tariffs, and this is only one of them. And it means that this is a really big deal for certain sectors where this would radically bring the tariffs down on things like batteries used for powering data centers. But this wouldn't have a big impact on electric vehicles, which are excluded from those tariffs under that particular instrument. So what we're trying to do is map things out. It's very complicated right now, and that's why it's useful to have to be able to refer to the data.
So what's if these, and President Trump and the administration have many different ways to impose tariffs, but this, I guess the easiest, most broadest one is the one that's in front of the Supreme Court right now. If that were to come down and be reversed, would that materially change how trade and supply chains may operate?
Yeah, it would radically bring down the average tariff imposed on imports writ large, just in a general sense. The Trump administration seems to be concerned about this. We've seen various Truth Social posts, various members of the administration saying that they're concerned. They are investigating alternative tools to put in place tariffs, which exist, but they would likely have to be either temporary, there's one that they refer to which only lasts for 150 days compared to the tool that we're using now, which is indefinite, or they would have to be subject to investigations on specific sectors. And that's ponderous, it's slow, and it goes back to the original sort of founding principle of the US, where as per the Constitution, if you're putting in place any kind of taxation, which a tariff is, you have to refer to Congress. And that's what's so special about what the Trump administration has been doing with this particular tool, which is being used in this unprecedented way where power is centralized in the presidency for putting tariffs up and down at will.
When you talk to companies out there, what are they doing with their investments given this uncertainty here? We've heard some companies saying we're just plowing ahead, but a lot of other companies have said we have to be cautious in how we allocate capital because we're just not sure kind of what the economic playing field is going to look like.
So we're used to talking about the AI data center boom, and money is pouring into that in terms of the infrastructure. And when we look at some of the other sectors that we track, things like batteries, EVs, solar manufacturing, this is 3.5 years after the Inflation Reduction Act. We just published a report 2 hours ago tracking the progress there. And what we are seeing is a whole lot of delays, and we expect more than half of the factories that were supposed to come online last year to have been delayed beyond that. But still, there's still been progress. And again, we expect, surprisingly maybe, for the US to become entirely self-reliant when it comes to battery manufacturing over the next couple of years, which is a big surprise, which is huge. and it's an area of real progress, and it's something that we don't talk enough about. So there's progress, even though things have been tough for manufacturers, and even though those investments have been subject to uncertainty, which makes things tough.
What's the capital raising environment? If I have some new technology that I think is going to promote a cleaner energy, I have a cleaner energy way of doing something, can I raise capital today? Or is it more difficult, or is it easier?
Yeah, there's been a bit of a recentering. A lot of the capital that was going into clean energy, which was seen as which saw a bit of a boom over the last sort of 3 years, is now going into the AI space. And there's been, when you look at the VC space or just the interactions with capital markets, you're much more likely to see startups sort of start to tout alternative approaches. So starting to talk about national self-reliance, using legacy systems and improving on them to facilitate permitting with the grid, or just access to different markets for battery makers. So less around raising capital for radically new capital-intensive technologies where demand is uncertain, and more around pivoting to maybe a bit more of a mature landscape that we're seeing today.
All right, very helpful. We need to talk to you more often. Antoine Wagner-Jones, Head of Trade and Supply Chains at BNEF, talking about the Supreme Court and tariffs and what that means for the transition to clean energy and the companies that deal with that. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. The S&P up 33 points, the Dow off 300, NASDAQ up 230 points. This is Bloomberg. Good morning.
This is CBS News on the Hour, your home for original reporting.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:02 on Wall Street. I'm Charlie Pelletan. These are some of the stories, some of the top stories that we are following for you right now. We have got the Dow trading lower, but the S&P 500 index and the NASDAQ Composite Index are both trading higher right now, right to the numbers. We got the S&P up 33. That is a gain of just about 0.5%. NASDAQ higher by 1% now, up 231 points for the NASDAQ Composite Index, up 229 now. 23,830 on the NASDAQ Composite. NASDAQ 100 up now by just about 1%. We've got the Dow lower. Dow Industrials down 367 on the Dow, a decline right now of 0.7%. Your 10-year at 4.22% with a 2-year 3.57%. Spot gold continues to push higher, up $77 now, up by about 1.5%, 5,086 on gold. West Texas Intermediate crude up 2.3%, 62.03 a barrel on WTI, and Bitcoin now up by 0.6%. Bitcoin is advancing to 88,513. Shares of major U.S. insurers are tumbling today, plunging, perhaps the better word, after the government proposed holding payments to private Medicare plans flat next year. A huge disappointment for investors. Shares of some of those companies are down right now. Case in point, we do have shares of CVS lower by 13%, United Healthcare down 19.5%, and Humana right now is plunging by 20.5%. So again, recapping the Dow, the S&P, NASDAQ trading mixed. S&P up 34, up by about 0.5%. Texas Instruments coming up after the close of trading. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Donald Trump tries for a reset. Welcome to the Tuesday edition as the president heads for Des Moines today to deliver a message on, yes, affordability, while ordering a changing of the guard in Minneapolis. We're going to get an update on both when we talk in a moment with Bloomberg's Laura Davison with us here in our Washington bureau, and we'll have insights coming up a bit later this hour from Iowa Republican strategist David Kochel, the president's economic plans and the way tariffs are hitting home in the first in the nation caucus state. Analysis this hour from our political panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us, and we'll have their take on things momentarily. Thanks for being with us here on the Tuesday edition of Balance of Power. I'm Joe Matthew again on Bloomberg Radio, streaming live on YouTube, and of course always available on your satellite radio. Search, well, find us there on channel 121. Search on YouTube, Bloomberg Business News Live. With what has been a fairly decent day on the broad market so far, we'll check in a little bit later on with Charlie Pellet once again. A down day for the Dow. It's down almost 400 points, thanks largely to United Health. Broad market's kicking in, though, and the S&P 500 is up 33 points with 7,000 in sight. So we have a lot to catch up on. If you're back to work, maybe you broke out of your ice case at some point over the past 24 hours. If not, you are one of many here. It's a ghost town once again. I won't call it a winter wonderland in the nation's capital, with some 70 million Americans under an extreme cold warning as of last night. From Dallas to D.C., as we say, although they got more snow dumped on them in New England than just about anywhere else. And this remains part of the story here. We're still watching the grid. We're still dealing with pretty sizable power outages and a transportation challenge for a lot of Americans as the president gets on Air Force One today to fly to the Midwest. It's on to Des Moines, all the memories we have from the Iowa caucuses. Incidentally, it's, I think, just about as cold there as it is in the nation's capital today. But of course, the president wants to seize on the issue of affordability. This is the weekly trip, right? That's what Susie Wiles says. He's going to leave the bubble each week to actually show up in person and speak about prices, speak about the economy, and what could be coming, the president likes to call the golden age. But of course, it's Minneapolis that's taken up all the headlines, and that's, again, what most people woke up to this morning, with news that the president was taking a very different tone on things, a changing of the guard when it comes to the ICE raids that we've seen. Mr. Bovino is gone, heading back to California. Kristi Noem is being sidelined and replaced by Tom Homan. But we want to go back to the language that we heard from last weekend. Remembering yesterday, Donald Trump said he's on a similar wavelength as Tim Walz, having disparaged him for days leading up to that moment. And an administration that had framed the second American citizen shot dead in an ICE raid, or in this case, a targeted ICE action, with rhetoric that is still resonating now. Let's go back to Saturday. Bovino and Noem and the way they were characterizing this shooting that took place earlier in the day.
An individual approached U.S. Border Patrol agents with a 9mm semi-automatic handgun. The agents attempted to disarm the individual, but he violently resisted. Fearing for his life and the lives and safety of fellow officers, a Border Patrol agent fired defensive shots.
This individual showed up to impede a law enforcement operation and assaulted our officers. They responded according to their training and took action to defend the officer's life and those of the public around him. And I don't know of any peaceful protester that shows up with a gun and ammunition rather than a sign.
But of course, the video that we've seen since has debunked that characterization. And of course, as well, many Second Amendment rights activists have taken issue with what the secretary just said. So this is going to be interesting, and we're going to be hearing from the president not only in this speech. Producer James is giving us a heads up. It looks like he will be gaggling with reporters before he gets on Marine One to leave town. This is probably the moment in which he weighs in on this, as opposed to the middle of an affordability speech, but we'll find out. The fact of the matter is, we're seeing some change in the administration's posture toward what's happening in Minneapolis, and it's where we start our conversation with Laura Davison, our Deputy Washington Bureau Chief, with us here in our studios in Washington. Laura, if I end up having to interrupt us, of course, you know the way this goes with the president in the driveway. But I'm curious your thoughts about what has occurred in the past 24 hours here, the changing rhetoric, with the New York Times reporting that Kristi Noem was brought into the White House for a 2-hour meeting at her request, only to be replaced essentially here by Tom Homan.
This is a rare moment that we're seeing the White House kind of come out and be a little bit conciliatory in their approach. You know, if you look at any scandal or any moment of public outcry going back for 10 years, it's always been double down, defend your position. We're seeing the White House respond to a lot of public outcry, including from members of the Republican Party who are saying they want to see investigations into this. They're saying that the White House needs to tamp this down. Of course, members of Congress are worried about their own re-election here just in about 10, 11 months later this year. And we're seeing the polling on this is really, really bad. There was a new Reuters poll out this morning. Trump's approval rate was 38%, and on immigration, it was 39%. This is an issue just going back several months. He had, 50+% approval. Right. So they're really seeing the changing tides very, very quickly. That
Oval Office meeting, I can't quite imagine. It was not just Noem. It was, of course, Corey Lewandowski, who has been kind of her right hand here. And is not a member of the cabinet. Is it possible that he loses his job? Is it possible she loses hers?
It is always possible. Never discount staff change-ups within the Trump administration, though we have seen a real desire, particularly driven by Susie Wiles, to keep that cabinet together and to not have divisions in the ranks, not have people resign, not have asked people to leave. Bovino gives them, asking him to go back to California and essentially saying, and he's going to be retiring in just a few months, gives them a way to say, look, there's been leadership changes without having to break up the cabinet. Lewandowski, however, could be vulnerable here because he's not at that cabinet level. But this is really, it was clear that some heads needed to roll here. They've made those changes, but just how far they'll go, will really remain to be seen. What happens on the ground here over the next couple days as tensions are at an all-time high.
Well, maybe they knocked heads together. They aren't rolling yet, at least. And although I found it fascinating that Stephen Miller was not in the room for that meeting. How do we read into that?
It's, there's a lot of different factions coming out here. We know that Noem and Tom Homan have been at loggerheads in the past. Stephen Miller has been one of the most strident voices out there on this issue. If I were him, I would probably want to just lay low, not be too front and center yesterday. Just as kind of some of his policies, you're seeing sort of the backlash of those come out.
Well, really something. The Bovino situation is remarkable. To become a household name like this so quickly, everyone's got an analysis on the overcoat that he's wearing, We've seen all the videos of him throwing the gas canisters and so forth. It's not just that he's being sent home. He's been cut off from his social media, which is something I've not heard of in this administration. He's got an X account in which he was using multiple times a day to troll critics, to promote his interviews, to go at it with others. And he is no longer going to be in control of his social media, even as he leads operations around the country? What do we make of that?
This is, you know, until about 48 hours ago, you know, being very loud and bombastic on social media has been seen as a pro in this administration, not as a con or a liability. But this is, you know, kind of just one of what we've seen many different sort of strategy shifts here in the past 24, 48 hours, where the White House realizes that they have a situation that's out of control and they need to get their thumb on the scale. Getting Bovina physically out of Minneapolis and also controlling his social media allows them to at least, protect themselves on that flank. There's a lot of other issues. You have, thousands of ICE agents and Border Patrol agents, around, and who have not gotten a lot of training, who don't have, kind of the professionalism that you might expect, even just going back a couple of years ago, we're having, months of training versus just 47 days.
Well, Bovino's leaving today, apparently with some of his officers. It's unclear what the numbers are going to be. Do we know that Tom Homan is there? He was on his way last evening. Has there been any confirmation of the administration being quiet about that?
He was supposed to be going last night, that we have not seen him out and about on the ground. He may be, meeting kind of behind the scenes with folks before he makes, Bovino was out there very publicly, and also counter protest, everywhere he went, he was faced with protesters. Homan may be trying to, as Trump said, try to decrease tensions. We'll see how that actually plays out on the ground. But
if he does a briefing, he's going to meet with the mayor, right, as part of his day there. So we've covered Bovino. I want to get to Kristi Noem a little bit more carefully because, there are articles of impeachment that I have about 140 signatures on them now for the Secretary of Homeland Security. I spoke with Glenn Ivey, congressman, a Democrat from Maryland, yesterday about his take on this. And this is a man who was state's attorney, was a law professor at Harvard, and thinks that she is in way over her head. Here's Congressman Ivey.
I think at this point, Noem needs to be removed. I don't know that Trump will do that, but she's clearly in over her head. The agency is, running amok. The chain of command is broken over there. And the statements she's made, especially after these really, horrific shootings, I think are clearly false and suggest that she didn't even look at the evidence before she made the statements.
That's a lot. If Donald Trump does not fire her, will Congress?
Highly unlikely at this moment. One of the things going in Kristi Noem's favor is the House is out this week, so they're not going to be doing much on this. And two, they're also facing a shutdown deadline, and the likelihood of a shutdown goes on really every hour here in Washington, and that will completely consume all of the discussions going forward. Of course, the point of, or the kind of at the crux of this shutdown is DHS funding, ICE funding, CBP funding. So it's possible that becomes part of the negotiations as Democrats and Republicans work forward, but highly unlikely that Kristi Noem losing her job would be, or being impeached rather, would be kind of in some sort of final deal.
Let's get into this then. Shut down 12:01 a.m. Saturday, unless there's some sort of miracle, but there's no possible miracle, right? The House is gone. Even if the Senate split up all the spending bills and they voted on body cams and everything else for ICE agents, we'd still shut down this weekend because the House won't be back till next week. That said, no one's got an appetite for another record here, right? What do you think we're in for?
This shutdown feels like a shorter shutdown than we had last time. There's still a chance to avoid it. They could do some sort of short-term, very short-term, like a one-week stopgap bill to fund the government, get the House back here, try to hash something out next week. Absent that, it looks like we're heading into a shutdown, at least for some days, if not for a couple weeks. The politics of this one are going to be different. You've got people who are really angry. There's stuff happening on ground. There's video circulating on social media. It's a lot more tangible than sort of healthcare prices potentially going up in the future.
The qualifiers, though, and the asks from Democrats are seeming unrealistic at this point. Is there a world in which John Thune would split up these bills, or are we going to be hammering this out for a couple of weeks?
It seems like that, right now we're sort of in stare down mode, and that both sides, they're just coming back after the snowstorm because senators haven't really been in the building. So they're trying to game each other out. We'll know more in a couple hours just about how each side is willing to flex. Republicans were very successful last time of staying united and having Democrats fold in the end.
Have you busted your car out of the ice yet?
I made my husband drive it to the main street.
Really? Hey, good job. That's the way you do it. That's the right answer. Thank you so much, Laura Davison. She knows how to run a bureau, everybody. Hey, they reset the doomsday clock. You don't want to know, but I will tell you where it landed. Straight ahead on Balance of Power. I'm Joe Matthew in Washington. Thanks for being with us on the fastest show in politics. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow trading lower, the S&P, NASDAQ. They are both advancing right now. Could see a record close today. The S&P currently at 69.80, higher by 30 points. That is a gain right now of just about 0.4%. But bottom line here, the dollar slipping to its weakest level in nearly 4 years as U.S. policy risks and a resurgent yen weigh against the world's reserve currency. The Bloomberg Dollar Spot Index fell as much as 0.7% to the lowest since March of 2022. Equities right now, as I mentioned, trading mixed. We've got the S&P higher at 69.79, up 29. That is a gain of 0.4%, with the Dow down 459, drop there of 0.9%. United Health certainly weighing on the Dow today. Shares of UNH, United Health, they are plunging today, along with other healthcare names. Shares of UNH, they're down 19.5%. CVS down 13.7%. Humana down by 20%. 10-year currently yielding 4.21% with a 2-year 3.57%. This ahead of the Fed decision and J-Powell news conference tomorrow. Spot gold keeps on going, $5,083 the ounce, up 1.5%. Silver at $107 the ounce, up 3.2%. Bitcoin right now down 0.4% at 87,630. Amazon is shuttering its Amazon-branded grocery stores and automated grab-and-go markets, closing 2 centerpieces of its push into physical retail. In a blog post, Amazon said Amazon Fresh and Amazon Go stores will close. Some locations will be converted into Whole Food stores. Again, recapping here, S&P advancing 0.4%, 20 points away from S&P 7,000. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
Yeah, I got my 7,000 hat ready here, Charlie. You let me know when to put it on. Charlie Pellet will have more on stocks, bonds, the rest of the markets coming up in about 20 minutes' time. It's pretty often we hear Charlie talk about gold and silver these days, but S&P 7,000 will be a treat when we actually get there. Assuming we get there. They reset the doomsday clock this morning as we talk about politics in America. This is remarkable. Maybe they'll name the movie 85 Seconds when Netflix finally gets around to it. Yes, they've reset the clock 85 seconds to midnight. That is the closest point to catastrophe since the clock made its debut nearly 80 years ago. By the way, if you're with us on YouTube, there's the boss getting the JBA Marine One, taking the president to Air Force One so he can go on to Des Moines to talk not about the doomsday clock, but affordability and the economy. Incidentally, the president did make a few remarks in the driveway at the White House before he jumped on the helicopter. We're going to be getting those for you in just a second. As the Atomic Scientists Science and Security Board cite a worldwide failure of leadership, it's not just your country, bringing us 85 seconds to midnight. The doomsday clock's message cannot be clearer. They say in a statement, catastrophic risks are on the rise, cooperation is on the decline, and we are running out of time. So have a nice day, everybody, to quote our friend Ed Duffner this morning in our editorial meeting. Are they playing that now, James? Do you want me to do that, or are we waiting for the president here? All right, I guess he's going to talk in a moment here, because he's on his way to Iowa. And this is why we wanted to talk with David Kochel, one of the voices that carried us through the caucuses, to get a sense of what people are saying on the ground, what farmers are saying about tariffs, what the suits are saying at the bar at the 801 Chop House in Des Moines. He's the owner of Red Wave Communications, longtime Iowa strategist once again, a former resident fellow at the Institute of Politics at Harvard's Kennedy School of Government. David, welcome back to Bloomberg. It's great to have you with us here, and I wonder if you could bring a little bit of Midwestern sensibility to what the president's talking about today. Will affordability resonate with people even as they are occupied by headlines coming out of Minneapolis?
Well, if he stays on message and talks about it, I think it'll resonate, because I do think he has a pretty good story to tell right now. You know, we've got consumer prices at about 2.7% growth, which means inflation has come down slowly and kind of in a nice, calm way. Energy prices are down. As you know, Iowa's agricultural economy is very dependent upon energy. You got to run the tractors, you got to run the dryers, you got to get product to market. So we're very dependent upon energy. So those things are good for farmers. That being said, you know, there's still some concern, I think, among ag producers who are probably going to go into their 4th year of net loss. They're worried a little bit about tariffs, of course, but they're so far, I think, giving the president the benefit of the doubt, as they did in 2017 and 18, where he ended up delivering a pretty good trade deal with China on soybeans. So I think they're looking to the future. They're hoping for the best. And in the meantime, you know, we're still growing our way and you know, we're producing food for the world. So we're doing what we're supposed to do. And hopefully, you know, the ag economy kind of comes out of this funk that it's been in for a while.
Well, as we wait for a ruling by the Supreme Court, Dave, to what extent is the issue of tariffs hanging over every issue in Iowa? Every state's got its own microcosm, and it sounds like this is yours.
Yeah, no, tariffs are very meaningful to us. Trade, we are a very trade-dependent state. We are a net exporter, not just of energy, but of goods and services. So, it matters to us. But like I said, so far, Republicans in Iowa in particular and ag leadership has given, they've been very patient with this administration in the hopes that, he can work out some new markets, open some markets for our industry. And so, you don't see a lot of complaining yet. But that being said, we need our prices to come back up. We're operating at a net loss again, like I said, fourth year in a row. And there is some concern about it. But, energy costs going down, consumer prices going down, those are all good things. And so, I think it's one of those things where it's wait and see how this next year's crop comes in and see whether or not we've got enough markets for it. And I know that the administration will be focused on helping with that.
Interesting to note, I'm looking at Morning Consult polling from the 5th of December, Dave. Iowans flipping negative in their approval of Donald Trump. Overall approval here in the month of December. Is that tariffs or is there more to it? And I'm going to ask you to hold your thought on that answer because we are now being directed to the White House. President Trump speaking with reporters on his way to the helicopter, and we'll speak with David on the other side. This is coming out of the White House now on Bloomberg.
And what can I say? The economy is good. It's all good. Prices are coming way down. And we have a lot of very positive news.
Mr. President, do you believe that Alex Cuddy's death was justified?
Well, we're doing a big investigation. I want to see the investigation. I'm going to be watching over it. I want a very honorable and honest investigation. I have to see it myself.
Is Kristi Noem going to step down?
No.
The president of Syria, the president of Venezuela said that he has not taking orders from you. What do you have to say about that?
Well, I don't know exactly what's going on there, but I haven't heard that at all. No, we have a very good relationship.
What about
I'd like to see interest rates go down. Everything else is going down. We have the energy and fuel going down. We have gasoline in many states now at $1.99. Groceries are going down. We inherited a mess with very, very high prices, very, very high prices. And I will tell you, we've made a lot of progress. So we have the groceries going down. We have the energy going down. We have gasoline going down at a record clip. And that's what I want to do. We're doing well. Well, I'm looking at that whole situation. I love everybody. I love all of our people. I love his family. And it's a very sad situation. Yeah, please. I am, yeah. I think she's doing a very good job. The border is totally secure. You forget. We had a border that I inherited where millions of people were coming through. Now we have a border where no one is coming through. They come into our country only legally. So you have to remember those things. People forget as soon as you accomplish something, it goes into history and nobody ever wants to talk about it. We had a border that caused all of this problem. Biden caused, and the Democrats caused this problem. They allowed tens of millions of people to come in. Many of them were murderers. Many were drug dealers, drug addicts, people from mental institutions. They allowed these people to violate our country, to come into our country. And that's what we're talking about. So if you remember, we had a horrible border, the worst border we've ever had, ever in history. People were flowing through by, we think, 25 million people, not to mention drugs and everything else. And that border is absolutely closed.
All right, it looks like our tape got interrupted there. President Trump speaking with reporters. Let us know, James, if we get the sound back. And it's really, I think the point that we wanted to hear has already been arrived at. If you could hear over the chopper, the president was just asked by reporters there, first of all, about Tom Homan, who we know is in Minneapolis today. He's meeting with the governor, Trump said. He's meeting with the mayor. I think later I hear that it's all going well. Will Kristi Noem step down? His answer was no. So while the rhetoric may be changing and assignments may be changing, personnel do not appear to be at the moment, at least. David Kochel is spending time with us right now as we look ahead to the president's arrival in Iowa. That's where he's going, of course, later on. In fact, he'll be speaking likely during the late edition of Balance of Power. It's going to turn out to be around 4 or 5 o'clock Eastern time, according to the schedule. As we consider the message here, David, the president has been spending a lot of time talking about geopolitics. Your first answer pointed us to, well, if he's on message, it will resonate with the crowd there. That's been a wild card depending on the speech that you look at. How important is it for him to physically be in the state, to actually leave the bubble here and show up in person in states that favor Donald Trump?
Yeah, well, Susie Wiles telegraphed this some months back, saying, he's going to get out around the country. Iowa's a place where he's been many, many, many times. He's been on the ballot there 5 times. He's won 4 times, all 3 general elections and the 2024 caucuses. He's comfortable in Iowa, and I think he thinks of Iowans as his people. We voted for him by almost double digits the first time around, and I think, 13 last time. So, he's comfortable there. It's a good place to send him. And of course, it's Trump. So who knows if he's going to be completely on message. He likes to do the weave. Sometimes his fans encourage that and they want to hear the hits. He's going to play some of the hits, I'm sure. But he does have a lot of things that I think need to be said that he can say that I think will land well with Iowans. Energy, affordability, forward looking on the economy, and help is on the way for the farmers. And, he gets that in his bones. He definitely internalized those messages when he came to Iowa and spent so much time there throughout the caucus process. So he knows exactly what to do. It's a roll of the dice to see whether or not he'll do it. I think he probably will, because I do think, particularly over the last weekend and for some time now, you mentioned the December polls. I think this administration knows that they need to turn a few things around, and Iowa's the kind of place where they can get some of that started. And if he can stay on message, I think he can have a successful visit. By the way, I'll also mention Iowa's a really critical swing state in this upcoming cycle. We have 4 Republican members of Congress, 2 Republican senators. Right. We've got a retiring Joni Ernst. We've got an open Senate seat with Ashley Hinson leading the charge for the Republicans. We've got, 3 of those 4 congressional districts are very competitive and have been competitive within a point or two, even in the last couple of cycles. So Iowa is really ground zero for control of Congress, particularly the House, but also in the Senate. So it's meaningful that he's there, because Republicans need to kind of get their mojo back, and he's pretty good. One thing he can do is he can bring enthusiasm to his base, and a lot of people will come out for him when they won't necessarily come out for every other Republican. So having him there, I think the party thinks that this is going to be a net plus, and I'm hopeful for the Republican candidates that I know and appreciate that this will be a net benefit for them.
Well, Dave, I'm glad you mentioned that. Is there a chance we get endorsements this evening? Are you hoping that we do from Trump?
Could be. He's already endorsed Ashley Hinson for Senate. I believe he's endorsed.
How about the governor's race?
Miller Meeks. He is not endorsed in the governor's race. That's something definitely to watch for this evening. Randy Feenstra is the leading candidate. He's definitely got the most, kind of the broadest base of support right now. He certainly has a financial advantage on his opponents, but we'll see what President Trump does. Randy's got a very good base coming out of Northwest Iowa, where a lot of Republicans live. So we'll see what he does. I don't have any inside information on that, but I can tell you that's one of the things that we should be watching, because that will certainly make a statement in that race.
Yeah, really, really fascinating. I want you to point us toward Minneapolis by way of Iowa, if you would, these ICE raids and the controversy that we've been seeing, and you're hearing us talk about this. You heard the president was just asked about it just now. We know that there's a labor shortage in Iowa that many farms are dealing with because of the crackdown on immigration. Does that affect or color the way Iowan voters look at this issue?
A little bit. This is a really mixed bag. Obviously, a vast majority of Iowans support what he's done on the border to shut down illegal immigration. There's no longer people flooding across the border. That has immense support, and it's meaningful to our people in Iowa. But yeah, there are concerns about workforce. I think that's probably also true in Minnesota. And Midwesterners by nature are pretty understated. They don't like the theatrics. They don't like the masks and the automatic weapons and the long coats and all of that. And I think there's an element of chaos in some of these internal enforcement practices that even Republicans are uncomfortable with. And obviously, the shooting over the weekend is a tragedy. I'm glad that he appears to be looking to turn down the temperature, because the initial message out of Secretary Noem and Greg Bovino were really not helpful. And I think, he's going to do what he can, I hope, in this visit to help turn down the temperature, because it certainly is, it's a powder keg up there. And, Iowans and Minnesotans, we're famously nice people. But I do think some of these folks, particularly these Lutheran progressives in Minnesota, are being pushed a little bit to the brink. And it's been sad to watch through the weekend.
Well, it's really interesting to hear you talk about this, Dave. We just saw a headline as you were speaking from the Minnesota Star-Tribune. Governor Walz has met with Tom Homan. So you think this change in rhetoric and this turn by the president is well-timed?
I think it's well-timed, and I think it's overdue. Look, I don't think we should have been in this situation in the first place, obviously. Border Patrol doesn't have as much to do, so they're dispatching them to Minnesota. And if you think about it, just in terms of the raw politics, which is my business, Minnesota Democrats were on their back heels. They're embroiled in a fraud scandal reaching into the billions. It's not just a Somali immigrant problem, but that's a big part of it. They were on the defensive, and then you send in, a force of 2,000 or 3,000 ICE members and Border Patrol and create this chaos. It distracts from a message that was actually pretty good for Republicans. So I think, I think you need to turn down the temperature. I think President Trump knows it. I think that's part of why he's there, or he's coming to Iowa. It's part of what his message will be today, at least I hope, because if we can get the issues back to what's really more meaningful for people, which is their own pocketbooks, that's where Republicans do better.
Well, he's on his way, Dave. Air Force One is wheels up on its way to Des Moines, and we'll be tracking the president, of course, and bringing you his remarks later on. He's set to speak about 4 hours from now if things stay relatively on time. He helped to greatly enrich our coverage of the Iowa caucuses. David Kochel, great to have you back. Dave, it's good to see you, and we appreciate the insights here. Owner of Red Wave Communications with us live on Bloomberg. I'm Joe Matthew in Washington. We'll assemble our panel next. Rick and Jeannie are both with us as we gauge the fallout from Minneapolis and anticipate the president's remarks later. We're also going to be watching for Tom Homan's meeting with the mayor of Minneapolis, Mayor Fry. That's also on the docket today. We just don't have times provided by the administration, but as we learn these we'll, of course, relay them to you right here on Bloomberg. Before we bring in our panel, let's get to Wall Street. Charlie Pellet is watching the Tuesday trade here. An otherwise good day if it weren't for these insurers, Charlie.
Indeed,
what are you looking at?
Right now, looking at the Dow, tumbling by 500 points, down by 1%. You hit the nail on the head, Joe Matthew, all about the insurers, at least in the Dow, with companies like United Healthcare plunging 19.8%, CVS down 14.1%, Humana down 20%. United Health Group, though, leading losses on a disappointing forecast, also as the U.S. proposes holding payments to private Medicare plans flat next year. Bottom line, the Dow, low of the day, now down 503. That is a drop of 1%. S&P continues to advance, up another 30, up 0.4%. Right now it's 69.80. The old record there, 69.77. That's the number to beat today for another record on the S&P. Also getting very close to S&P 7,000. NASDAQ, the composite index, up 232, up 1%. The NASDAQ 100 index up 0.9. Another down day for the Russell 2000 index, down 0.2%, as both the Russell and the S&P continue to diverge. We've got the Mag 7 index up 1%. 4 out of the 7 members do report this coming week. 10-year 4.22%, with the 2-year ahead of the Fed decision 3.57%. Spot gold up 1.5%, 5,082. We've got silver at 106.52. Silver surging 2.6%. West Texas Intermediate crude $60 $62.13 a barrel, up 2.5%. Nat gas retreating somewhat today, down 6.9% at $6.30 per million BTUs. General Motors shares are up 8.5% right now. The automaker says its profits will grow up to $2 billion this year, thanks to sales of more big trucks and SUVs like the GMC Sierra and Cadillac Escalade and fewer EVs. Here's GM CEO Mary Barra, who spoke this morning with Bloomberg's Matt Miller.
2025 was an exceptional year, especially when you look at all the challenges that we face, and I think it really demonstrates one of the core capabilities of GM, and it's our agility and our resilience. But the core of it starts with our great product portfolio, whether it's very affordable EVs like the Chevrolet Trax, all the way up to, you know, a supercar like what's behind me with the Corvette ZR1X. So couldn't be more proud of the team.
GM CEO Mary Barra speaking with Bloomberg Hot Pursuit host Matt Miller. For more coverage of the auto industry on Hot Pursuit, wherever you get your podcasts, GM also announcing a $6 billion stock buyback. And again, GM shares up now by 8.5%. Boeing generating cash for a second straight quarter, also reporting a 57% bump in sales during the final 3 months of last year. Boeing shares today, they are trading lower right now. Boeing down by 1%. Again, recapping here, Dow down 509, down 1%. S&P at a record right now, up 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, we do thank you. Charlie Pellet will have more on the markets coming up at the top of the hour, 1 p.m. Eastern Time, as we welcome our global television audience to the conversation. How about Matt Miller there with Mary Barra? Big stuff and a big move on that stock, up almost 10%. Hot Pursuit. Are you subscribed to Hot Pursuit? Exclamation point. We tried to get Matt Miller on this program to talk to us about the auto sector recently and couldn't get him. I don't know if James, you got the agent's name or whatever. I thought things were lined up. Never got him on the program because there's a big crossover there. There's a lot of policy coming out of Washington, whether you're talking about CAFE standards or electric vehicle incentives that have to do with the auto sector. We'll keep trying, Matt. We see you. The president speaking today, by the way, on his way out of town. I think we've established this hour. He's going to be in Des Moines later to deliver a speech on affordability. He was asked in the driveway as he made his way to Marine One about what's happening in Minneapolis. Doing a big investigation is the headline on the terminal. I will watch over it. Knowing that he posted on Truth Social yesterday that he was dispatching Tom Homan to Des Moines. And remember what he said? He will report directly to me. That means not Kristi Noem. Now, Homan has already met with the governor. He sat down with Tim Walz, and he's going to be meeting with Jacob Fry, the mayor of Minneapolis, on his first visit there today. Something tells me he's going to be there for a minute. You know who else is speaking? Is the mayor of St. Paul. Yeah, remember the Twin Cities? All part of these same targeted actions as ICE has been calling them. And we spent some time last evening on the late edition of Balance of Power with Collie Herr. This is the mayor of St. Paul, who has been on the job for 3 weeks. Can you imagine? This is her only reality that has come in the throes of this controversy. Here's what she said about the shooting and killing last weekend.
Alex was not at a protest. It was a morning in which he just happened to be in a space in which he saw activity and he wanted to go and document. I think that it is dangerous when we say that just because people are gathering or they exist is that they are protesting. They are not. They know that their neighbors have been taken off of the streets, that people are being ripped out of their homes forcibly, that people are having children and families ripped apart. And so when our neighbors see each other hurting and impacted, we show up.
Let's assemble our political panel for their take on everything that's happened in the past 24 hours, even the past 12 hours. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Jeannie, what do we think of this 2-hour meeting in the Oval Office? The New York Times has the story, of course. This is Kristi Noem and Corey Lewandowski at her request, I will note. Interesting, who was not in the room in Stephen Miller, but of course many were in the room for this conversation, including Chief of Staff Susie Wiles, Press Secretary Caroline Leavitt, and others. She is not being dispatched to Minneapolis today. What's happening inside the White House?
Yeah, just a fascinating reports coming out of that meeting. As you mentioned, Stephen Miller, absent, even though he probably has the hardest line on immigration. Smart that he's trying to stay below the fray at this point, which is not Stephen Miller's style. But I think it speaks to the fact that Lewandowski and Kristi Noem understand what a debacle this has been, both strategically, politically, from a policy perspective. Last year, there was some talk that Kristi Noem may be moved out of DHS to an ambassadorship. And one of the big values that Donald Trump said she brought to the team, if you will, was the fact that she was really good at communicating and really good on television. And that's what she was known for, going down to CCOT, parading around with cameras. And yet this weekend, as Susie Wiles vetted those calls coming in, frantic calls about how bad this was, Kristi Noem suddenly lost that edge. And so she's got to be wondering, rightly so, what does she bring to the table? I think at this point she's hanging on because Wiles and Trump don't want to see a lot of turnover. But I wouldn't be surprised if she is moved somewhere else in the short term. And I think we're going to see a lot of leaks out of DHS, people very upset with the way she has managed this from top to bottom. That's going to make her situation a lot worse.
What's your read on this moment in time here, Rick? It does feel like pieces are moving. And when the president says Tom Homan reports directly to me, what should the Homeland Security Secretary think?
Well, Homan is a White House staffer, so that's actually not news. He does report directly to the president. He's not a part of the department. He's the czar. And so I wouldn't read a whole lot into that. The reality is that Noem is in the doghouse. She's put herself there. And not just because of, her response to, Alex Petty's killing, but for doing this repeatedly over a long period of time. Since July, Homeland Security has shot 16 individuals. Hasn't killed them all, but they've shot them. And in every single instance, the department walks out and immediately claims innocence on the part of the shooter without any investigation. And I do think this is one of the reasons why Donald Trump went out of his way today while boarding Marine One to say there will be a thorough investigation, something we haven't heard from his Department of Justice or from the Department of Homeland Security in any of these kinds of conversations. So now we're going to see how the feds can work with the state in this investigation, because now if the investigation is undermined in any way, it's going to taint the entire administration's storyline. So I think we've got a lot going on here. I mean, Kristi Noem have not made any friends on Capitol Hill. And with an upcoming hearing in March, the question now is, will she still be secretary by then?
Well, that is a question. How about Bovino? Rick, you've got a line. When somebody's in trouble, they're in the barrel. I'm guessing you described this moment as Bovino in the barrel. What happens to him now that he goes back to California?
Great alliteration. Way to go, Joe. Couldn't have said it better myself. Look, I mean, his tactics are well known, right? He is the tip of the spear. When he's gone into these cities, California, Minneapolis, places like that, his job is to disrupt. He's not there to do normal policing or gather up people. He's there to disrupt the community, to make people forced to have to take sides on this issue. And he was withdrawn from Minneapolis, but also his team. I mean, these are basically the equivalent of stormtroopers in the United States government. And I'm sure that there are people within the White House, Stephen Miller, who believe that his tactics are justified somehow. But he's going to become a cudgel for this administration if he isn't already. And it's not surprising to me that he's been sent out of the state, because the disruption that he has caused is actually hurting the administration and its political prospects in that state in the future.
Jeannie, they've taken Greg Bovino off social media. You see this? He's not able to use his X account now, which he was using pretty aggressively to go after critics, to post appearances on cable news and so forth. He's been going at it with lawmakers on X, yet he continues to lead operations around the country, according to the administration. How do you have both? How long can this last?
Yeah, we're going to all miss his long green jacket, Joe Matthew, and his, he had just like Kristi Noem and like Stephen Miller and some of these other folks, that has been what they have done, spent a lot of time on social media, followed around by cameras. And, this has been something that Donald Trump has always found attractive. And yet now what we are seeing is it is starting to drag his numbers down. And so they are moving these people off. It makes sense. It is a little bit too late by my estimation. But I think we should also be cautious here because you remember the old Peter Drucker line, and I know Bloomberg folks know Peter Drucker, that when an organization's in crisis, you don't just change the people at the top. You really have to look at the rules of the game, at the policies, at the operations. That is what is missing here, at least so far. Sure, you have replaced Bovino, you have replaced Noem and maybe Lewandowski, you've put Homan up front, that's fine. But it doesn't change the operations, the policies, and the culture that has been driving what has been happening on the ground in Minneapolis and across the country. That is a problem. And when we think about what's going to hold up government funding and potentially shut down the government on the Democratic side, that is it. Because you can't simply say, we're going to move this person off and all things are better. Now look over here at this shiny object and things will be fine. There is a stink in the DHS and in Border Patrol that needs to be addressed. And if they don't put out plans to address it, that is going to be a big problem.
A couple of senators, both Republicans, are up with a proposal, Rick, and I know we only have about a minute left here. This is Katie Britt and Susan Collins. They're holding initial discussions, they say, around actions by Trump, executive actions that could be taken outside of the legislative process to rein in ICE enforcement. Democrats are saying that that's not enough. Is there any way we could prevent a government shutdown by something like this?
Well, I do think the first order of events should be Congress exerts its own jurisdiction here. They are the oversight of these executive branch agencies. And frankly, I think it's great that Senator Grassley said he's going to hold a hearing in March. I mean, people are getting killed in the streets of America today, and he's going to delay this for 2 months? Come on, where's the oversight there? So before you start, giving the president more power in order to oversee his own agencies, I suggest Congress step up.
Very real take from our great panel. Rick Davis and Jeannie Shanzano on point today, and they'll have a lot more in our next hour as we welcome our global television audience. We're going to spend some time as well with Mick Mulvaney, President's former acting chief of staff, to try to get inside of Trump's brain. It's all ahead here on Bloomberg.
Washington, D.C. This is Balance of Power with Joe Matthew.
President Trump heads for Des Moines as his border czar lands in Minneapolis. Welcome to the Tuesday edition as the president tries to steer the narrative to the issue of affordability, even as he orders a changing of the guard in Minneapolis. We're going to go to ground and get the latest on meetings that Tom Homan is holding in the city with Bloomberg's immigration reporter Alicia Caldwell, who is there right now. We'll talk with Tyler Kendall about the president's speech later today in Iowa, and we'll get insights on it all from Mick Mulvaney, the president's former acting chief of staff from the first term, back with us today on Bloomberg. We'll have analysis from our political panel with Jeannie Shanzano and Rick Davis. And it's all after a look at Wall Street. Having some trouble with the insurers today, Charlie Pellet, but the rest of the market is hanging in there. What do you have for us?
Right now, Joe Matthew looking at a almost 500-point drop in the Dow Jones Industrial Average. Some trouble with the insurers, putting it mildly. They are plunging right now. Let's get right to the insurance story because we got major insurance companies plunging after the government proposed holding payments to private Medicare plans flat next year. That is a huge disappointment for investors. Case in point, United Healthcare, member of the Dow, down 19.8%. CVS down 14.6% right now. Humana shares, they are plunging by 20.3%. Bottom line here, the Dow selling off by 501 points, down 1%. S&P up 26. That is a gain of 0.4%. While NASDAQ right now up 210. The NASDAQ Composite Index up by 0.9%. And another day of divergence for the Russell 2000 Index of small cap shares. The Russell 2000 down 0.1%. S&P up by 0.4%. Right now, we have got the 10-year yielding 4.21%. The Fed decision tomorrow, 2 o'clock Wall Street time. The 2-year, 3.57%. Jay Powell's news conference live on Bloomberg Television and Radio, 2:30 p.m. Wall Street time. Spot gold keeps on going, up another 1.5%, 5,085 on the precious metal. Silver moving higher as well, up 2.9%, 106.81 on silver. Bitcoin down 460, 87,511, drop there of 0.5%, and the Bloomberg dollar spot index down by 0.8%. So again, recapping here, S&P at a record, very close to it, 69.77, the old high, 69.75 where we stand right now. S&P up by about 0.4%. Again, the 10-year, 4.21%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie, thank you. Charlie Pellet will have more on the markets coming up in about 20 minutes' time here on Balance of Power. Welcome to the Tuesday edition on Bloomberg TV and Radio. I'm Joe Matthew in Washington, where we just said goodbye to President Trump. He's on his way to Iowa right now, a speech in Des Moines, back on the affordability tour, set to coincide with the closing bell about 4 p.m. Eastern time. We'll see how close to on time he is, and we plan to bring you some of his remarks live here on Bloomberg TV and Radio. Having just now been asked in the White House driveway on his way to Marine One about the situation in Minneapolis and the investigation into Alex Preddy's death, he said, quote, "We're doing a big investigation. I want to see the investigation. I'm going to be watching over it. I want a very honorable and honest investigation." He said, "I have to see it myself." These could be some of the most complete remarks we hear from the president today, as again, he tries to steer the narrative toward affordability, knowing that big changes are coming now in Minneapolis. It was around this time yesterday the president announced on Truth Social that he'd had a phone call with Tim Walz, the governor, suggesting that they were on a similar wavelength. Those are the words that he used. A bit later on today, he said he had a very good telephone conversation with Mayor Jacob Fry of Minneapolis. A lot of progress being made. Tom Homan, he says, will be meeting with him tomorrow, and we're waiting for word on that. Homan has already met with the governor, knowing that Greg Bovino has been dispatched back to California, and that we've been seeing a bit of a sidelining of the Secretary of Homeland Security, Kristi Noem. All of these gears turning as Caroline Leavitt, the press secretary, spoke to reporters yesterday about how to regain control over the situation. Listen.
He has outlined a clear and simple path to restoring law and order in Minnesota. Number one, Governor Walz, Mayor Fry, and all Democrat leaders should turn over all criminal illegal aliens currently incarcerated in their prisons and jails to federal authorities, along with any illegal aliens with active warrants or known criminal histories for immediate deportation. Number 2, state and local law enforcement must agree to turn over all illegal aliens who are arrested by local police. And then thirdly, local police must assist federal law enforcement in apprehending and detaining illegal aliens who are wanted for crimes, especially violent crimes.
That path laid out this time yesterday at the White House, even as the investigations continue. We go to ground in Minneapolis with Alicia Caldwell. Bloomberg News immigration reporter has made her way to the city as all of these developments take place. Alicia, it's great to have you with us. I know it's bitter cold in Minneapolis, and we appreciate your stopping down during your day of reporting here. How are these ideas being put forth by the White House going over with local officials, whether it's the mayor or, for that matter, the governor?
You know, for the moment, the response is a little bit unclear from the ground. Historically, the answer has been largely no, that local police don't have a role in enforcing federal immigration law. It's a civil procedure as a general proposition. The state prison system does cooperate, and they do coordinate. In fact, they've posted a separate page now of information that they say rebuts many of the claims from the administration about cooperation, be it people who were arrested from their facilities or turned over. And, you know, ICE also has to proceed and take those people into custody when the state says, hey, we're about to release this person. And so there's a conflict there. But in terms of local police, you know, they don't have very many officers relative. They have about 600 officers. There's 3,000 federal agents here right now, or at the peak there was. And the Minneapolis Police Department is shorthanded. They're down by about a third, according to the police chief. So, you know, that's a big ask that doesn't seem to be readily in the making.
Can you tell any difference on the ground today, Alicia, with Bovino out? He apparently was taking some officers with him. Is there a different posture in Minneapolis today?
It's hard to know. You know, there's as many agents as there are and have been in the region. Sometimes it's a bit of a needle in a haystack. So what you're seeing is a lot of people in their neighborhoods who see things and then report things and post to social media. But what I'm hearing from local residents is a sense of relief, but tempered with wait and see approaches. As I overheard one person describe, you know, they can't wait to dance in the street when everything is official and over. But for now, things are still really tense. You know, I've been here off and on for the last 3 weeks, back again first thing this morning. The city is still tense. As you drive around, you know, you'll see people with whistles, people on street corners with brightly colored vests, you know, operating as community lookouts effectively and trying to help, you know, as they describe, trying to help their neighbors stay safe.
Well, it's really important that you're there, Alicia Caldwell. We do appreciate your reporting. You cannot do this kind of reporting without actually being there. And we'll stay close to Alicia on this. Ahead of our conversation with Mick Mulvaney, I want to bring in Tyler Kendall. Thank you so much, Alicia, for her take on the president's speech today. There are two prongs to this story. You've got what's happening in Minneapolis, and you've got the messaging that's going to come from the president. Having heard from him in the driveway, Tyler, a short time ago, he says Kristi Noem is not out. He's going to be tracking this investigation. And by the time 4 o'clock Eastern rolls around, he's going to want us to be talking about strides this administration is taking when it comes to affordability. What do we expect from him in Des Moines?
Well, Joe, this bid at de-escalation from the Trump administration has largely been overshadowed because, or rather, the White House's apparent want to focus on affordability has been overshadowed. And that is why we're seeing this perhaps bid at a de-escalation, as we were just hearing Tom Homan now being sent over there. But it's really continuing what feels like a theme over the past few weeks, right? We had President Trump's speech in Davos last week, which we were told was going to be about affordability, and then it ended up being overshadowed by Greenland. So we'll see if this could be perhaps a reset for President Trump as he heads to Iowa. It's been pointed out that this is going to be a relatively friendly crowd, right? President Trump has won Iowa repeatedly. You and I were there during the Iowa caucuses when it was just about as cold as it is now, and he handedly won that race. But he's also dealing with a few different factors, including that Iowa has had a mixed response when it comes to his policies, such as trade tensions with China. Iowa is the second top producers of soybeans in this country today. We saw U.S. consumer confidence plummet to its lowest level since 2014. screen. And then hanging over all of this is the potential that we could have a partial government shutdown over what is happening when it comes to ICE in Minneapolis.
Well, we'll see what the rhetoric includes. As I mentioned, that speech set for 4 p.m. Eastern. We're going to carry it here on Bloomberg TV and radio. Incidentally, 16 degrees right now in Des Moines. If that's bringing back some memories, I think we were sub-zero, which they have been in Minneapolis as well. Tyler, thank you so much. Right now in Minneapolis on the ground, 5 degrees. Which is a warm-up from where we were over the weekend when thousands of protesters were on the streets. Pretty remarkable to consider. And I'd love to know what Mick Mulvaney has in his mind today as the president gears up for another rally, in this case in Iowa, a very important state on the map, but it's also a very confusing news cycle right now. The former Republican congressman, former acting chief of staff of the White House in the first term, former director of the Office of Management and Budget. I could keep going. It's a long business card, and it's been a long time since we've had you on, Mick. It's good to have you back. I hope the year is starting out well for you. We talk a lot about resets in Washington and with this administration. Is this another one today?
It is, and it's the likes of which I've not seen before. I was talking to Sean Spicer, a friend of mine from the first administration this morning. We both agree we've not seen a pivot this significant, this quickly from Donald Trump ever. Wow. You've talked about a couple of things about Kristi Noem sort of being moved aside, maybe temporarily, for Tom Homan, who will be answering directly to the president. The president was straight about that. Bovino getting shipped off to California. The president talking to both the governor and the mayor, which doesn't seem remarkable, except that J.D. Vance was there over the weekend and did not meet with those folks or did not talk to them. The language coming out of the White House now from Caroline Leavitt is very different than the language that was coming out of DHS. So it's almost an all-of-administration pivot. And I think rightly so. They were getting their teeth kicked in on this politically. It was, anytime Americans see a citizen on his knees getting shot in the back by federal law enforcement officers, that's a really bad day for the White House. So I've never seen anything like it, but I think it's the right response.
Wow, Mick, well, that's something else. What did you make of the president's response just now in the driveway? Will Kristi Noem step down was the question, not will you fire her. He said no. If you're a cabinet secretary on the rocks like this, how do you interpret an answer like that?
Well, you do it the right way, and I think Kristi would do it the right way. You ask the boss, look, do you need me to step down? And if he says, yeah, the president shouldn't ever have to fire any member of the cabinet. Okay, what the president would do is, make it clear that we want you to go and that you would offer your resignation. And I just can't see that happening. Look, DHS has had a disastrous couple of weeks on messaging. They just have. A lot of this turmoil right now is caused by the immediate reaction that DHS had to both the killing over the weekend, but also 10 days ago with Renee Good, when they essentially ran to the microphones and said, oh, these were domestic terrorists or these were assassins. That's what's causing a lot of this. It's just that tin-eared response. I don't know if you end up sacking your cabinet secretaries over messaging difficulties. Kristi Noem has done exactly what the administration has wanted since she took over. I cannot imagine them firing her over this. If she offered her resignation, the president said, no, that sounds like it's probably the appropriate way for it to go.
So 2 hours in the Oval. Kristi Noem, Corey Lewandowski, according to the New York Times. Susie Wiles is in there. Caroline Leavitt. Strangely, Stephen Miller is not. Maybe not strangely. I'm just wondering, as somebody who's been in the room with Donald Trump when he's been angry, when he's been happy, what was the fly-on-the-wall view of a meeting like this, knowing that Noem asked for it?
Well, I'm sorry. You did know. Sorry, you might have a piece of information I don't, because that's what I've been asking. Is who called for the meeting? Do you have information?
She
on
requested the meeting. According to the New York Times, it was her request.
All right, so let's assume for sake of this discussion, the New York Times is right. I think it's fascinating to me that she asks for the meeting and Stephen Miller is not there. To have an immigration meeting in the Oval Office without Stephen Miller is, I don't know, it's like you and me having a market update not talking about the Dow. You don't do that. So I think it'd be very interesting to confirm that she asked for the meeting, and then somebody must have affirmatively excluded Stephen. And there's only about 2 people who I know who can do that. One is the President of the United States. The other is Susie Wiles, the Chief of Staff. So you telling me that she asked for the meeting reaffirms my position that I don't think she's leaving anytime soon.
Okay. Is this a tough time to be named Corey Lewandowski when you're not actually in the cabinet?
No, Corey's got a good relationship with the president going back. People who underestimate Corey Lewandowski's ability to work with President Trump do so at their own peril. I know Corey gets a lot of rap in the press, but he and the president are very close, have been for a long time. And look, is the president capable at some point of cutting ties with Corey Lewandowski? Yes. But I think it will be a much colder day in a much hotter place than what you guys are experiencing in Iowa and Minneapolis today.
I got you. Mick Mulvaney, boy, this is fascinating to hear your reaction to all of this. So let's fast forward 3-4 hours to the speech in Des Moines. What will be the president's posture? And is this going to be the same message that we heard in Detroit and in Pennsylvania?
I hope if it is, it should be the same topic, which is the economy. I hope it's a more focused meeting than speech than it was in Detroit. I don't think that speech went over very well, but of course that was a different audience. It is completely within what conversations would I have been having with the president the last 24 hours? Mr. President, we're losing on immigration. I can't believe I'm saying that because it's an 85% issue for us, but we are getting killed on immigration. Wow. Let's go talk about the economy, please. We can get people back on our side on immigration, but let's let things calm down and go back to affordability, back to the economy. We've got some decent policies. Let's go talk about them, and let's get back talking about what the voters want us to talk about, which is stuff that impacts them directly. So my guess is, and it's an educated guess, you will see a focus on the economy today, as you should see from the president, and hopefully they'll let this they'll find a way to simmer things down in Minneapolis and across the country on immigration, so they can reclaim the high ground on that at a later date before the midterms.
Really interesting, Mick. Would you also counsel him on maybe trying to avoid a government shutdown? I can't even believe I'm asking you about this with 4 days to go here. But there is a thought, at least among Republicans in the Senate, that he could take some executive actions to try to sort of rein in the activities of ICE that might dislodge enough Democrats to pass the DHS funding bill. Or is this is crazy talk we're shutting down on Friday night?
Yeah, this is tough. This is really, really tough because I put myself in the seats of the Democrat senators. Not that I'm either of those things. I'm not a Democrat nor a senator, but I've been around the town a little bit. I don't know how they don't take a hard line. It's almost like they were going to sleepwalk into a shutdown because the Democrats don't have a way out. I don't know how they go to their constituents and say, Donald Trump gave us his word that he would make executive changes, so we went ahead and voted for DHS funding. I just don't know if that sells. They want to sell it. I don't think they want to shut down any more than anybody else because they know that once they get into a shutdown, getting out is really hard. And who always loses a shutdown? The side that shuts down to try and get something else, which is what they would be doing here. But honestly, Joe, I don't know how you don't go into shutdown because I just don't think the trust levels are there. If there's any, plus you got a situation we haven't talked about yet, which I'm not sure that if they change anything in the Senate bills, if the House can pass that when they come back. Plus, I don't think the House is going to be there in full force until after Friday anyway. So you put all of that together, put all that math together, and I'm at about 85% on at least a short-term shutdown over the weekend.
Well, that's the conventional wisdom here, Mick. I can't believe everything I'm hearing from you. You're confirming a lot of tough news. Did you hear? 85 seconds to midnight. They reset the doomsday clock. Seems like an appropriate date for it, Mick, right?
There's nothing like a good affirmation in the afternoon, right? That's always, everybody needs that every now and then.
Those weren't the words to the song. Mick, it's great to have you back. Mick Mulvaney with us live on Bloomberg TV and radio. I can't wait to hear what the panel thinks about this, and I'm glad to say that Rick Davis and Jeannie Shanzano are with us. Fascinating read on Mick Mulvaney. We'll have to get that online. Indeed, by the way, citing a worldwide failure of leadership, the doomsday clock set to 85 seconds to midnight. That happened this morning, the closest it has ever been to catastrophe. Stay with us on Balance of Power. I'm Joe Matthew. This is Bloomberg.
1:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow lower, the S&P, NASDAQ, they are both advancing. S&P right now trading at a record. It is at 69.80, up 30 points. Gain there of 0.4%. The old high, by the way, is at 69.77 on the S&P. The Dow, however, another story right there. We have got the Dow down 489, decline there of 1%, and NASDAQ up 224 for the NASDAQ Composite Index, an advance of 1%, while the NASDAQ 100 Index up by 0.9%. On a day when stocks are pushing higher, indeed the S&P at a record, the Russell 2000 Index diverging. That index down now by 0.2%. The Mag 7 Index pushing higher. 4 out of the 7 members do report this week. Right now we have got the Mag 7 Index, the Bloomberg Mag 7 Index, up 0.9%. 10-year at 4.22% with a 2-year 3.57%. Spot gold up $74 the ounce. Right now that's a gain of 1.5%. Spot gold at $5,083. Silver 106.04 up 2.2%. West Texas Intermediate crude up 2.5%, 62.15 a barrel. UPS delivering a bullish outlook. Shares of UPS up by 3%. Rival FedEx up by 2.5%. Cannot ignore the plunge in healthcare stocks today. United, the insurers, United Healthcare down 19.9%. This on a disappointing forecast, and as the U.S. proposed holding payments to private Medicare plans flat next year. The Dow lower by 490, down 1%. S&P at a record up 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. Charlie will have more on the markets in about 20 minutes' time here on Balance of Power. Thanks for being with us on the Tuesday edition. I'm Joe Matthew in Washington. The president has left us. He's on his way to Des Moines right now. In fact, he's going to be holding forth in Clive, Iowa, the outskirts of Des Moines, where things are pretty chilly today, as you might expect. 16 degrees right now in Des Moines. Of course, we haven't been there since the Iowa caucuses, and this is a state that's been very good to Donald Trump. He's going to be delivering a message on affordability. With our first view of the room there, the president going to be speaking to folks starting in the 4 p.m. hour, right around the closing bell. Gentleman in a New England Patriots sweatshirt holding his spot in the front row about 3 hours ahead of the speech. We'll see if things start on time. The president's going to be making a stop on the way, so we'll let you know if he has any remarks to reporters. He did speak with reporters on the way out of the White House this morning, asking if Alex Preddy's death was justified. He talked about a big investigation. He said, I want to see the investigation. I'm going to be watching over it. I want a very honorable and honest investigation. And he was asked about Kristi Noem, whether in fact she would step down, as some have suggested, the Homeland Security Secretary. No, was his answer. Not that we know anything about her feelings about the job going forward. The New York Times reporting that she held a 2-hour meeting at her request with Donald Trump in the Oval Office. And now Tom Homan has been dispatched to Minneapolis. He spoke with Governor Tim Walz earlier and will be speaking with Mayor Fry of Minneapolis before the day is out. This is the reset speech, then, we can call it, as we just discussed with Mick Mulvaney. As the president tries to seize on affordability, this is the latest stop on a tour. He was most recently in Detroit trying to deliver a message on the markets, on interest rates. Listen.
In the old days, when you had good numbers, interest rates would go down. When you had good numbers, the market would go through the roof. That's the way we're going to make it again. That's the old-fashioned way. That's the right way. Today, if you announce great numbers, they raise interest rates to try and kill it. So you can never really have the kind of rally you should have. What happens and what we want, we're going to have a lot of great months, a lot of great quarters. I want the market to go up.
Of course, he also wants people to feel it, and that is where the messaging has run into some challenges most recently. We assembled our political panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is our Republican strategist partner at Stone Court Capital. If it were your job this time around, Rick, how would you be advising the president to seize this moment and maybe use it a little bit differently when he Went through Pennsylvania, went to Detroit, even in Davos. He spent as much time talking about, in fact, more time, geopolitics and the retribution tour than he did the issue of affordability. What should he do today?
Yeah, in your conversation with Mick Mulvaney, he hit it spot on. He actually got to talk about the things that this speech is supposed to be about, and that is, you know, the challenges, but also the opportunities for the American public to benefit from his economic policies. And look, I mean, he's got a story to tell, and whether it's like what we heard about lower prices or certainly energy prices coming down. You know, and behind that, he's got a little bit of wind at his back with some of the implementation of the One Big Beautiful Bill that'll start occurring now. So child tax credits, you know, go into effect, the Trump accounts, which he's holding a summit on next month. So there are talking points that he should be comfortable with. But if he then falls into the same kind of demagoguery around immigration and, you know, all these countries open their prisons into the United States. I mean, that's just talking past the voter who is looking for news that they could hold on to say this administration's got its act together. And the second thing I would say is he's got to start talking to his voters a little bit. You know, and when he talks about all the markets going up, his voters aren't in the market. I mean, these are, you know, non-college educated, mostly rural, especially male voters who aren't banked into the Wall Street. And so when he talks about making the markets go up, he's making the mistake that the Bidens made, you know, at the time of their election. And that was, you know, talk about the people who are actually hurting, not the ones who are benefiting from the markets.
Jeannie, a week ago at Davos, the president said, "We have defeated inflation." Will that be his message tonight?
Yeah, that'll be one of his messages. You know, Joe, I'm looking at this picture you were showing of this guy with the Patriots jersey on, and I think Donald Trump should take inspiration from the Patriots last weekend. He's got to pull a rabbit out of the hat to change the messaging here, and he's got to stick to the issue of the economy to do that and affordability. And this is such an important moment. We're seeing it in the polls. I mean, you just look at the latest echelon poll of independents in the generic ballot. Democrats are up 25 points in January. That is a very bad number for Republicans. Just to put that in perspective, last July, Republicans were up +2. You couple that with the fact that Donald Trump in the last week or so has done something that he doesn't usually do, which is back down. We saw it in the case of Greenland, in Davos, as you just mentioned, and now in the last 48 hours on the issue of Minneapolis. He is having a really difficult time. He needs to get back on message. And today, I think, is going to be a moment in front of a friendly Iowan crowd, even though it's freezing cold there, for him to do that. But he's got to be disciplined, and that's always the question with Donald Trump.
Does he speak about immigration this evening, Rick? You mentioned he could, you know, bring out some of the greatest hits that would not resonate with people, but he does have an issue here. Obviously, we've been talking about it for the balance of the hour with what's going on in Minneapolis. Reuters Ipsos is out with new numbers. Americans approve of his handling of immigration, 39%, disapprove 53%. ICE efforts go too far. All adults say, yeah, 58%. 92% of Democrats, but 20% of Republicans, and I've got an other at 63% here. Is it just the actions being taken in Minneapolis, or does the message also need to change, Rick?
Well, I think it's all of the above. A year ago, those numbers were upside down, right? Where he was driving his election campaign off the backs of closing the border and being tough on immigration. You can only argue that that's backfired on him, and that whatever he has done in the implementation of that over the last 12 months is actually the wrong direction. And so, you know, normally bells would be going off when you see these numbers in the West Wing of the White House saying, hey, you know, we've got to reset this. And yet they've doubled down. I mean, Minneapolis is a great example of a tone-deaf administration on their signature issue, overplaying their hand, and now getting punished for it nationally. If there's another city like Minneapolis between now and Election Day, midterms, forget it. Republicans will have little chance of success. Democrats have already won every statewide election since Donald Trump became president. and by a margin of 14%. And Jeannie just talked about the approval ratings now are, double that for Democrats. I mean, and they haven't done a thing. I mean, like, arguably, their party is just as messed up as the Republican Party, but they're the beneficiary of these stumbles by the administration.
Wow. Something's going to happen while we're talking about economic issues here and interest rates. The president brought it up, Jeannie. Something's going to happen tomorrow. There's going to be the conclusion of a Fed meeting. They're behind closed doors as of today, right? Two-day policy meeting. Right at this time tomorrow, I'm going to be throwing things over to special coverage as we wait for the decision and a news conference from a guy named Jay Powell, who is being investigated, a criminal investigation by the Department of Justice. As soon as the president turns back to the economy, there's something else waiting for him here called the Fed. Is he going to manage this in the days ahead in terms of naming a new Fed chair?
That might be one way for him to turn the page on all of this. And it's funny you mentioned that, Joe. We love a good Fed day. I was just looking back. Senator Kennedy, who says the most colorful things, when they announced that the DOJ was investigating Powell, said, we need this like we need a hole in the head. And that, has got to be tripled now, given what's going on in Minneapolis. So the president, I think today and going forward, has got to show that he can manage both immigration in a sound way and the economy. He's got to talk about his plans that are going to help people on the ground, all of those people Rick talked about that are his supporters and the independents he's losing. And he's got to show that when he turns the page on the Fed and appoints a new Fed chair, it is somebody who has widespread support on Wall Street, on Main Street, and who people trust to do the job. That, I think, would be a great way to start to turn the page on this immigration debacle. But again, Donald Trump is having a really difficult time because he keeps stepping into it. I would just couple that with saying he might need to make some changes at the top with DHS in terms of showing he's serious about getting back on track. But the Fed chair announcement, I think, might be big enough that it could help potentially at least shift some of this focus from immigration.
Would a Fed chair announcement help to buttress his message on affordability? Rick, we're doing everything we can along with this new chair who's going to cut your interest rates.
Well, I wish I could say that it would have an impact because it would certainly play well in Bloomberg. But the reality is nobody outside the Beltway knows or cares about the Fed chair. They care about interest rates. And if the president was able to do something about that, then he would get credit for that. But if you actually took a poll today and asked people to describe the job that Jay Powell has in Washington, you would be not shocked, but hilariously shocked about the selections that they have. I'll bet you a dinner at 801 Chop House, since we're on Iowa today, that nobody knows who the next Fed chair or cares.
I think you and Jeannie already made that bet, but I'll follow up with you on that. And Rick Davis knows how to bring us down to earth here. Back to reality with Rick Davis and Jeannie Shanzano. Great panel. Thank you both for the insights. We'll be very curious to hear from the president. That's, again, 4 p.m. Eastern if he's on time. We'll bring you his remarks here on Bloomberg. Turning our attention next to Iran. This is Balance.
6:30 on Wall Street. We do check markets all day long here at Bloomberg. Dow Industrials lower. We've got health insurers certainly weighing on the index. Case in point, United Health down now by roughly 20%. The Dow down 1%, down 472. Widely divergent market, though, with the S&P trading at a record up 32, 69.82 where we stand right now, closing in perhaps on 7,000. Just might see a record today at the close. Keep it locked into Bloomberg Television and Radio. We'll see how things shake out. Right now, the S&P up 0.5%, higher by 32. Again, 69.82. The old record on the S&P 500 index was 69.77. NASDAQ up 233 points. NASDAQ Composite Index up right now by 1%. The Russell 2000 Index of small cap shares continuing its divergence, down now by under 0.1%. Little change, but in the red. Again, keeping it all in context, we got the S&P up by just about 0.5%. Our Mag 7 Index ahead of 4 out of the 7 members reporting earnings this week. The index up now by 1%. The 10-year ahead of the Fed decision tomorrow. 4.22% with the 2-year, 3.56%. Gold, 5,088 the ounce, up 1.6%. Silver back above 107, trading higher by 3.3%. And West Texas Intermediate crude up 2.2%, 61.99 a barrel on WTI. Nat gas trading lower, 678 per million BTUs, down 0.3%. Airline news: we had earnings out of American Airlines this morning. Shares are trading lower, down now by 5.2%. Lots of delays continuing across the country after all of the storms over the weekend. United, UAL down 2.7%. Delta among domestic carriers down 1.6%. And the sell-off in JetBlue continues today after earnings. JetBlue plunging now by 8.2%. Recapping, stocks higher. S&P up 31, 69.81. Big question, will we see 7,000 today? Up now by 0.4%. Balance of Power continues now, and back we go to Washington. Once again, your host, here he is, Joe Matthew.
Hi, Charlie. Thank you. Interesting market today. Charlie Pellet will have more on the Tuesday trade coming up at 2 p.m. Eastern Time as we kick off Bloomberg Business Week Daily. We want to stick with the markets for a moment, though, because this is an interesting moment as we dig into the throes of earnings reporting season. And we look at a market here. Look at that, 69.80. S&P 500 is chugging along here, and we could have our 7,000 hats on any moment. And I wonder if it weren't for losses in these insurers, if we might already be there. Wanted to spend some time with Christine Aquino as we dig a bit deeper on the markets. Bloomberg's managing editor for our Markets Live blog and our good friend at World Headquarters in New York. Christine, it's great to see you here. United Health, wow, down 20%. This alone is the reason why we've got this big hole in the Dow. It doesn't speak for the broader market today, though, does it?
Yeah, definitely, Joe. I mean, quite the contrast from what we're seeing in the S&P 500. It is all about mega caps. It is all about those big tech names powering those gains. And as you say, we could be wearing our 7,000 hats as soon as this afternoon. I hope you have yours ready.
It's always ready, indeed. My gosh, we're going to be talking Dow 50,000 at some point soon as well. When you remove this United or just the broader insurance story after what the president posted on social media, where are we here? Have we recovered from this whole Sell America trade? This was a big concern last week. We still haven't seen a Supreme Court ruling on tariffs. We've got a lot of geopolitics giving investors some cross currents. Have we moved beyond that? Is this more of a specific dollar issue as opposed to a Sell America issue?
Yeah, it certainly seems like it's the dollar that's really bearing the brunt of the pain from that Sell America trade. And even as of last week, there was a lot of skepticism over whether, in fact, investors were selling America or maybe just hedging it or pausing their purchases. But, you know, it's really back to the biggest tech stocks this week when it comes to that gain in the S&P 500. And as you know, we're going to get 4 of the Magnificent 7 reporting tomorrow. And so very interesting setup, a lot of bullishness that kind of carries markets through into those risk events. And of course, before we even hear from 4 of the Mag 7, we're going to hear from the Federal Reserve. So that's another risk event to factor into.
Okay, let me ask you just quickly on that. Do investors care about the Fed right now, or is it earnings driving this market for better or worse?
I mean, I think the Fed impact is likely going to be longer term, not necessarily about tomorrow's decision, which is scheduled to be unchanged, but yeah, really about the long-term trajectory of the rate path outlook as well as the future of its independence. I think that's the biggest market concern.
Interesting. We might have to talk again this week, Christine. Thanks for stopping by, as always. Christine Aquino, the best of Bloomberg, live from New York. Now, here's a story that no one is talking about, and something tells me that we're about to start talking about it again a lot. The president's going to be back on the Air Force One on his way home from Des Moines tonight, and I suspect he's going to get a couple questions about Iran. He actually did an interview earlier today in which he did bring up the whole armada that he discussed last week, and we're reporting on the terminal now, the Associated Press, Iran-backed militias in Iraq and in Yemen are signaling their willingness to launch new attacks against the aircraft carrier that's just rolling in. We told you, the USS Lincoln Carrier Strike Group making its way to the region, making an attack or strike against Iran possible at any time if that's what the president decides he wants to do. He was on a radio show, as I mentioned earlier today, the Sid and Friends show, in which he talked about the big armada, echoing remarks from just a couple of days ago. Listen.
We're watching Iran. We're watching Iran. You know, we have a lot of ships going that direction, just in case. We have a big flotilla going in that direction. We have an armada. We have a massive fleet heading in that direction, and maybe we won't have to use it. We'll see.
He says even bigger than we had in Venezuela, even though that was the largest aircraft carrier in the world. Pleasure to spend some time on this with Jen Gavito, senior advisor with the Cohen Group, former acting principal, deputy assistant secretary of state for Near Eastern Affairs in the Biden administration. Jen, welcome back to Bloomberg. It's great to have you. Are we about to strike Iran again? How are you reading this?
I don't know that the president has made a decision yet, and certainly he is hearing a lot of chatter from both camps. There are those like Senator Lindsey Graham who are publicly really urging him on. There are others who I think rightly are questioning what the objective of such a strike would be, and I haven't heard that well answered yet. And then if you look across to the Gulf, I think that, for the most part, the president is hearing from Gulf allies some real skepticism about what a strike would actually contribute to stability in the region.
What would it be attempting to accomplish? A couple of weeks ago, this was about mass protest. The president said, remember, help is on the way. The help never arrived. Thousands of protesters died. So what would this strike do?
So first, I think we're looking now maybe at tens of thousands of protesters.
Wow.
The loss of life was enormous. And it is quite a dangerous
We're
thing.
hearing plus 30,000 at this point.
I think it's hard to...
But what would a strike do to save them?
So, the folks that are encouraging a strike, I think, are really kind of agitating for regime change, and that likely includes Israel as well. I think that perhaps, though, is a false understanding of what the objective is, because you're talking about a millennia-old empire. And so, toppling the top level of leadership doesn't necessarily bring the type of change, I think, that, people are thinking of when they speculate about helping protesters. In fact, every simulation that the U.S. government or military has run in recent years demonstrates that if, in fact, you did take out, for example, the supreme leader, the beneficiary of that would be the IRGC. Hardly a better situation for protesters.
So we would be putting them in control of the country. Then is this something that the president needs to tread carefully? Because once we open this can of worms, I'm guessing it wouldn't be like the last set of precision strikes that were targeted directly to nuclear infrastructure, for instance. We'd be going after military installations here, correct?
Certainly military installations, and I think increasingly the messaging that we've heard suggests that we'd be going after the Iranian leadership itself. We know that the Israeli government had advocated for that during the 12-day war. The U.S. actually acted as kind of a brake on those ambitions. And so I think you're asking all the right questions about what would be unleashed here. I think it's a correct assumption that we would not simply go in and do kind of a repeat or a mowing of the lawn, as it were, of nuclear facilities. And so if we do go after the leadership, I think it's exactly right that we would be opening a can of worms that we are ill prepared to understand.
To what extent do you or the Cohen Group or your sources believe that Iran's nuclear program has been reconstituted? Remember the argument about that? The president said decimated, nothing left. We're seeing reports that that's simply not the case, and I wonder if it might become new justification for new strikes.
So again, I think, Israel is moving towards elections this year. There is no secret that Bibi Netanyahu has long advocated for decisive action against Iran. And so if you look forward to Israeli elections, I think that Israel will be agitating for something bigger than what we saw this past summer with the 12-day war. And so a number of justifications come into play, whether it is support of protesters, whether it is ensuring that the nuclear program can't be reconstituted, whether it is talking about the missile program, or as you mentioned in the intro, you have two proxies, Qatar and Hezbollah in Iraq and the Houthis, who are threatening U.S. interests. All of those give a pretext for a justified strike. And when it comes to the nuclear program, to directly answer that question, I think the statements about it having been decimated were, of course, made before any real assessment of the damage was done. Certainly, the program was put back, but whether or not it was decimated, whether you can unlearn things that you've acquired, knowledge that you've acquired over the years, that is a much different scenario. So I think there are plenty of pretexts for which to strike Iran if, in fact, a decision is made that that's the best way forward.
We all remember Signalgate. That was about the U.S. striking this proxy in Yemen. If we're worried about their willingness to launch new attacks against the Lincoln, I guess we didn't quite finish that job. What's the state of
the Houthis continue?
Houthis in Yemen?
Yeah, I mean, the Houthis continue to be, of all of Iran's proxies, which have been degraded over the last year. Certainly, when you're talking about Hezbollah, Hamas, and others.
Could they hit a U.S. carrier strike group? That'd be pretty dramatic.
It would be pretty dramatic, and they certainly have the aspirations. There probably would be a degree of luck involved, but I wouldn't put it out of the question. But the same with Qatar, Hezbollah, and Iraq. All of these proxy groups possess, some degree of capabilities, certainly backed by Iran. And so I think that is a threat that, first of all, has never really gone away, but that we should take seriously.
We have some headlines just crossing the terminal right now, Jen, that the president spent some time on the phone with the president of Syria. They discussed the transitional phase in Syria, said that the U.S. is ready to back reconstruction in Syria, the president welcoming the ceasefire agreement. Would an attack or a strike against Iran put any of this in jeopardy?
Again, I think that a strike on Iran, one that really was intended to hit at the regime, unleashes some really unpredictable results. And so it would certainly have a destabilizing effect across the region writ large. Specifically, what the impact would be on Syria, I don't know. I think that Syria probably has some risks involved that go beyond Iran at this point. I think the administration has done right in really doubling down on this new al-Shara regime and trying to give him the tools needed to stabilize, but you interject any amount of refugees, economic instability, fluctuating oil prices, there are a lot of shocks that could come from the type of strike that we're talking about.
Just for clarity, by the way, that was from Syrian state media, and we'll let you know if we hear more from President Trump himself about these phone calls. But Jen, I'm curious, what does Saudi Arabia think of this whole conversation we're having, and are they in the president's ear?
MBS is certainly in the president's ear, and I think when it comes to this conversation, that's probably a positive thing. As the Saudis, the Emiratis, the Qataris have been telling us for years, they are, of course, the closest neighbors to Iran, and so therefore have the most to lose. There was a period of time where those countries really were in the crossfires. In recent years, Saudi Arabia in particular has really taken steps to try to normalize its relationship with Iran and inject a degree of stability into it. And so for Saudi Arabia, which of course has significant strategic ambitions, a renewed conflict in the region, again, the likes of which we can't entirely understand, would serve as a real disincentive to the type of investment that they're seeking at the moment. So yes, I think MBS is absolutely in the president's ear. We know that Qatar and Saudi Arabia in particular have been advising against this type of strike. It's a little bit less clear what the UAE has been saying. I think all of those countries have a wariness about Iran that is well justified, but that has to be balanced against the instability that would result.
I've only got about a minute left, Jen. I don't want to set you up here with an unanswerable question, but could we be in a world in which the president's board of peace, including a board member named Benjamin Netanyahu, helps to settle what's about to happen in Iran?
Absolutely. I mean, if you're talking militarily, that is absolutely.
What would Iran's neighbors think of that?
Well, I mean, we know to some degree, and we saw that play out this summer. We've already heard, again, from the Gulf states, their unwillingness to open their airspace for these types of attacks. There is a real sensitivity, more so since Gaza, but not only. There's a real sensitivity to the appearance that they are in some way collaborating with Israel, with Iran, with Israel, in order to attack a regional neighbor. And so that is certainly an unpredictable element as well.
You're one of the first calls we'll make if this happens one way or the other. We'd love to know. Jen Gavito, thank you so much. The Cohen Group, it's always a pleasure to spend some time with you, and we appreciate the insights here on Bloomberg. I'll meet you back here on the late edition. President will likely be speaking in Des Moines. That starts 5 p.m. Eastern Time right here on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed, it is the Tuesday edition, or the pre-Fed decision, I should say, of Bloomberg Business Week Daily.
Yeah, I'm looking forward to that meeting tomorrow. I'm looking forward to hearing from Jay Powell. Well, they're meeting right now.
That's right, it began.
They're meeting right now.
It's underway.
The press conference tomorrow.
Yeah.
As we speak.
24 hours from now, we'll know. Right?
First question.
Jay, how you doing?
I don't know.
Or not.
I think he'll be very prepared to answer all questions, and he'll have pages in the binder marked. Mike McKee, I think, is on his way to Washington, D.C. already.
I bet he is. It does feel like everything, everywhere, all at once. Our producer, Sarah Livesey, kind of making some comments in the newsroom about that. It does feel, I mean, we've got the dollar at its weakest in nearly 4 years. The S&P hitting an all-time high intraday. We'll see how we close up. We had U.S. consumer confidence declining in January to the lowest level in more than a decade, on more pessimistic views of the economy and labor market just one day before the Fed decision. We'll see what the U.S. Central Bank has to say tomorrow when it comes to how consumers are doing.
Okay, so ahead this hour, how all this is playing out in terms of the U.S. dollar. We're going to have much more on the debasement trade. Also, American and JetBlue earnings, Boeing as well. Sheila Kayalu of Jefferies is going to be joining us. And Silicon Valley speaks out against ICE in Minneapolis. This as Texas Governor Greg Abbott calls for a freeze on new H-1B visa petitions.
It's kind of interesting, right? We are seeing more and more CEOs speak out. All right, a lot to come in the next hour here on Bloomberg Business Week Daily. Let's get you going, though, with a check on the trade. Here is Charlie Powell.
Thank you very much indeed. We got the Dow lower, the S&P, NASDAQ. They are both higher. Do want to begin with the developing story headline right now from the Bloomberg Professional Service. Anthropic set to raise about $20 billion from venture capitalists and other investors. That is double the amount initially targeted. This, according to the FT, citing people familiar with the matter. Fundraising would value the company at $350 billion. Also, another developing story, President Trump said ready to back reconstruction in Syria. Traders sending stocks toward records. S&P right now at 69.82, the old high, 69.77. Keep it locked into Bloomberg Television and Radio to see how things shake out right at the closing bell. The S&P up 32 right now, up by about 0.5%. Interesting divergence with the Dow dropping 448 points, down 0.9%. Health insurers sending the Dow lower. United Health down now by 19.6%. Humana down 19.1%. Again, NASDAQ pushing higher, up 1%. The Russell 2000 index diverging from the S&P. That index lower now by about 0.1%. Ahead of 4 out of the 7 Mag 7 earnings reports this week. Our Mag 7 index up 1%. 10-year 4.22%, but the 2-year 3.57%. Gold up 1.5%, 5,086 the ounce. West Texas Intermediate crude up 2.3%. WTI 62.02 a barrel, and Bitcoin right now 88,083, up by 0.1%. Amazon shuttering its Amazon branded grocery stores and automated grab-and-go markets, closing down 2 centerpieces of its push into physical retail. Amazon shares, they're up by 2.2%. Again, recapping, stocks trading mix, the Dow lower by 0.9%, S&P up 0.5. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yeah, I think I tried one of those Amazon stores maybe once just to try it out.
The Amazon Go store?
Yeah.
I'd never been to one, but we'll talk about this a little later. The groceries, we get all our groceries from Whole Foods delivery.
Yeah. Oh, you do?
Just because it's the most convenient thing. You can order the 365 brand. But if you go to the Amazon app and say you want to order groceries, there's like 6 different options there. It's not easy to navigate.
It isn't.
Yeah, I've talked about this with Romaine before.
It's a little tricky.
Yeah.
All right, so we are going to talk about it a little bit later on. Hey, right now we want to talk about what's going on in the currency markets. There was a headline that just crossed the British pound climbing to its highest level versus the U.S. dollar since October of 2021. I mean, the greenback overall languishing when you look at the G10 currency pile this year. It's at the bottom, pointing to a shift in the way investors are viewing the traditional safe haven asset. And that's interesting. We have been talking about this, I feel like, over the last year or so. It's facing pressure from concern about rising U.S. deficits, trade frictions, investor caution amid unpredictable Washington policymaking, including what we saw big time last week, President Trump's threats to take over Greenland and risks about Fed independence. And on global issues, Tim, I feel like we have seen some really prominent names talking about.
Yeah,
talking
JP
out a
Morgan
lot.
Chase CEO Jamie Dimon just earlier this month, he talked that there are chances we'll have a problem somewhere somehow, and the biggest unknown is geopolitics. That was also addressed by Goldman Sachs CEO David Solomon, who spoke earlier today with Bloomberg's Stephen Engel at the 17th annual Goldman Sachs Global Macro Conference, Asia Pacific in Hong Kong.
There's a lot going on geopolitically. There's a lot going on in the world. And as that stuff plays out, it can lead to speed bumps or, distraction. People move forward when they're confident. The noise sometimes can sap confidence.
Yeah.
I think at the moment, generally things look relatively green, but that doesn't mean there aren't issues that could pop up.
Yeah, certainly. We've already seen some things pop up here in 2026. Goldman Sachs CEO David Solomon, of course, earlier with Bloomberg's Stephen Engel at the 17th annual Goldman Sachs Global Macro Conference, Asia Pacific and Hong Kong. So as we mentioned earlier, geopolitics, one of the pressures on the U.S. currencies, and as we see investors move out of the U.S. dollar, we see an accelerating diversification into gold and other reserve assets. And what's interesting is this isn't a tepid trade. There are heavy flows behind the move. Tim, it's not just sentiment.
With more on the currency trade and declines in the U.S. dollar, Bloomberg News FX and rates reporter Carter Johnson is here in the Bloomberg Business Week studio. The declines that we continue to see in the U.S. dollars, the flows behind it, what's the story that's telling you?
Sure, absolutely. Thanks, Tim. Thanks, Carol. And I think what's really interesting is we can look at this on a pretty long timeline. So I'm starting to hear comparisons late last week, today, yesterday, to this feels like early 2025 and Liberation Day all over again. And that's just because, yes, we're seeing some action in stocks and treasuries, but really this is a real sort of dollar-focused impulse to sell. And of course, on a shorter timeline as well, we can think about that in the context of what we saw last week, which was some pretty concerted movement in dollar-yen specifically. And that was, as we reported, likely because some folks here in the U.S., the New York Fed acting at the behest of the Treasury, were reported to us to be checking rates and sort of calling into some banks and seeing where exchange rates were trading. So on a couple different levels, sort of in the near term and in the big picture, as you mentioned, Carol, questions about the U.S. fiscal position, policy uncertainty, those are all combining right now.
Carter, reading in this morning, Bloomberg reporting out the positioning is heavily one-sided. They said since Thursday, roughly 2/3 of options trades in the euro and the Australian dollar have been bets on further greenback weakness. So is this largely about dollar decline and not about bets on other currency strength backed by fundamentals?
It's a great question. I think the answer, honestly, is both. And a lot of that impulse, as we just talked about, is because of a declining dollar and questions about U.S. policy. But we are seeing relatively solid growth expectations in the rest of the world, whether that's Europe, maybe that's in Asia. And that really underpins the impulse to sell dollars as well. If growth in the rest of the world was cratering at the moment, we wouldn't be seeing this sort of action we're seeing in terms of dollar sales. So it's absolutely the other side of the coin as well.
We've got stock investors watching and listening to this program. What is the relationship between weakness in the dollar and what happens in the equity market? I mean, you made the comparison minutes ago to kind of feels like April 2025, and we all remember what happened to the equity markets during that time.
Absolutely. And I think that's the big question is, will we see that again, where typically you'd expect to see the dollar weaker as stocks strengthen. They have a negative correlation, particularly the dollar as a traditionally haven asset. We didn't see that late last year. The stocks, the dollar, treasuries, they were all falling together. So I think that's the big question right now is, will we see that again? I don't think we are yet. But in sort of a different picture as well, a weaker dollar should theoretically support domestic manufacturers. It should support exporters here in the U.S. That's typically what we'd see on a lag. But we also know that that's something the Trump administration has been vocal about as well. A weaker dollar theoretically, again, doesn't work instantaneously, but theoretically supports domestic manufacturing and exporters who are looking to sell to the rest of the world.
Hey, one other thing I want to ask you, though, but is it about global investors, and we've talked about flows into European equities, is it another sign, perhaps, that global investors are less interested in dollar-denominated investments?
It is possible, although I think it's too early for us to say at this point, as we knew last year. We don't have that data yet necessarily. And again, if we look at just the relative performance of U.S. stocks, they're doing all right. They're certainly holding up. I think what it could definitely be indicative of, and this is something we've covered a bit here at Bloomberg in the past, is hedging behavior. And what that means.
Lead the Fed possibly, certainly to keep rates as is or possibly hike them. We'll have to see. Carter, thank you so much laying out the currency trade for us as we continue to watch the U.S. dollar. He's Bloomberg News FX and rates reporter Carter Johnson. Should we stay on the market?
We should, but I should point out, not if you listen to the president, who talks about the reasons that rates should go down. He says inflation is under control and rates should be lower.
But he also says the economy is doing well. So
can you have both?
I don't know. I don't know. Because you do wonder if you lower rates, does that create more liquidity in the system? And that could certainly put some pressure on inflation to move even higher. All right, you want to talk markets?
Yeah, let's talk markets. The S&P 500 hitting a record intraday. We also get ready for 4 of the Mag 7 to report this week. And, of course, that Fed decision. Back with us, Allie McCartney, Managing Director, Wealth Management and Private Wealth Advisor with Alignment Partners at UBS. Just over $1 billion in assets under management. She joins us from New York City. We've had this debate throughout the week talking about, yes, 4 of the Mag 7 stocks reporting in the remainder of the week. We, of course, have everything that's happening geopolitically. The president now making his way to Iowa to talk about affordability ahead of the midterms. And then, of course, Jay Powell kicking off that 2-day policy meeting in Washington, D.C. today. What matters this week to you?
I think you've really gone through them in the lead up to me just listening. You know, we have wobbles out of Washington to see what happens politically. That's obviously a big wild card always. We have earnings and the fact that we have for the whatever you call Mag 7, AI 10, super meaningful. In addition, this week is 35% of the market cap addition to those companies. And the Fed meeting, although I think that's probably the least impactful, given that, there's very little expectation of a rate cut. And Chairman Powell is stuck between a rock and a hard place right now. So it is very unlikely that he says anything that's market moving.
You know, Allie, I do think about how much we are hearing a little bit of a drumbeat when it comes to geopolitical, and not a surprise considering how we kicked off 2026 with the U.S. going into Venezuela, taking out, I should say, President Maduro. And I just, Jamie Dimon has kind of highlighted that area. David Solomon, we just heard from our team over in Europe, Stephen Engel. What about global issues? How does that factor into how you're thinking about U.S. markets, U.S. names, and maybe where investors should be positioning?
That is such a macro question, right? So,
yes.
Our CIO published a monthly report, and it's called "Nostalgia is Not an Investment Strategy." And, the paradigm has simply shifted globally. And what that means is that the world has to evolve, and there are all of these impactful ways that it evolves, whether it's the dollar, whether it's increases in defense spending, whether it's a hangover from the pandemic, which is owning and monitoring your own supply chain. So it all matters. However, if you think back a year, or almost before, trade day, think about how long the markets were in a panic because of that, relative to Greenland and Venezuela. So I think there is a growing comfort with this president and his and the Don Rowe doctrine. And there's a growing understanding that the paradigm has shifted going forward, and that geopolitics will be a risk going forward in a way that it was not. And so everything that was said before makes absolute sense, and I think increases the need, whether you're a U.S. investor or a non-U.S. investor, to be diversified.
But just on this, with Greenland and versus Venezuela, I think a lot of people were surprised about what happened in Venezuela, and then the president last week essentially walking back comments about acquiring Greenland in some sort of way. When it comes to geopolitics, does the market take him seriously? Does the market take him literally? Because he's kept people guessing. Let's just say that.
I heard, I think it was David Solomon say something about the noise. And you asked me last time when I was on, do I make investment decisions on this? And the answer was not in the short term, but yes, in the changes in the long term. And so I think the answer to that is twofold. The first is that this president has a style where he often breaks things first and mediates things back. And the market seems to be understanding that, as well as you pointed out, his desire to have more liquidity in the market to keep rates down, addressing the affordability concept and voters who are very concerned about that before the midterm election, and wanting the markets to go up. And so the second thing is that, you have to really, most geopolitical issues tend to be noise in the short term, and they don't affect buying behavior in the long term. In the long term, you look to fundamentals. I do think with this presidency and the magnitude of the changes and the disaggregation of the way the world functions politically and from a defense and alliance perspective, there are some longer term issues and things. For example, the peace dividend that existed after the Cold War, and the fact that, we have representatives all over the world that are spending much more money on defense, and defense is now not just physical defense, it's cyber defense. So there are some real long-term investment themes here. Yeah. And at the end of the day, it's about, what can actually be done. What are the long-term implications of some of the fundamental fiscal packages and legislative packages? And so, again, this week in earnings is going to be meaningful given the market cap and the AI adjacent names we have reporting.
Hey, one thing I want to ask you before you go, Allie, we're looking at health insurers, which are coming under pressure. The Trump administration proposing limiting federal payments to Medicare Advantage plans next year. So we're looking at Humana and United Health and CVS Health really dragged down. We saw this in the aftermarket when it first hit last night. Do you look at this like a wait and see moment? Is it an opportunity to get a name that is now maybe 18 or 20% lower because you still believe in that we're going to need health care for more of an aging population? I'm just curious what your thought is, and forgive me, just about 20 seconds.
No, I think that's a great question, and you're right from a thematic and from the population perspective, it makes sense. It's a lot of these get killed. If you want to buy them, you buy them. Okay. If it doesn't make sense long term, then you wait and get more information.
All right, great stuff as always. Allie McCartney, managing director, I should say, wealth management and private wealth advisor with Alignment.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow Jones Industrial Average lower, the S&P, NASDAQ. They are both advancing, and after losses earlier in the session, the Russell 2000 index of small cap shares up now by 0.1%. S&P up by 0.5. The Dow, however, slumping 0.9%, down 444 points. S&P up by 33. NASDAQ right now up 239. That is a gain of 1%. Key takeaway at this hour, we've got S&P at a record, could see a record close 69.83 where we stand right now. The old high set on January 12th, 69.77 on the S&P. 10-year ahead of the Fed decision tomorrow, 4.22%. The 2-year, 3.57%. Gold up 1.6%, 5,088 now on spot gold. Silver 108 right now, up by 4.1%. West Texas Intermediate crude up 2.8%, 62.31 a barrel on WTI. Bitcoin up 0.3%, 88,204 right now on Bitcoin. UPS has forecast full-year sales above Wall Street expectations. Shares of UPS up now by 3%. Rival FedEx also higher, up by 2.5%. Airline stocks lower. JetBlue plunging 8.1%. An American down after a rosy outlook, down now by 5.5%. A whole lot more on airlines coming up in just a moment. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie, of course, covering this throughout the day about what's going on with airlines. They are still paring back flights as that deep freeze hampens the restart of operations at some major hubs. Industry bracing for further disruptions as another Arctic blast looms later this week, whether it's this weekend or next week, or maybe doesn't happen at all. We'll see.
American Airlines, speaking of the storm, said it's poised for a strong year. The carrier ramping up premium offerings. First, though, it's trying to survive winter weather that's prompting thousands of cancellations at U.S. hubs. Shares of American Airlines selling off today. To be fair, most airlines are down today. JetBlue gave an update, reported a wider loss than expected last quarter. It was a bruising 2025. The company is trying to get those higher paying customers to get them back to profitability, but was not able to provide reassurance there for investors.
Yeah, the group of airline stocks as a whole off about 2% today. Here to talk about that, we're also going to talk about Boeing, which also reported today, is Sheila Kayalu. She is Managing Director in Equity Research at Jefferies. She joins us here in studio. Nice to have you here. Happy New Year.
Thank you for having me.
I know January's over, but
almost.
Let's just start with airlines, and then we want to move into defense because you cover that really closely as well. It does feel like they're all finding their way back after the storm. We're trying to see if there's another storm. In terms of the impact, is it still a case of they're still trying to assess? How do you, as someone who covers some of these names, kind of factor that in?
Yeah, in terms of airlines, we're looking for revenue growth. We've seen the same trend across American that we saw at United and Delta. Corporate was up 12%. Corporate momentum continues. I'm taking a very long flight this weekend. And then main cabin weakness, but it's getting a little bit better. And it's all about cost control. That's why I think United went up the most on earnings, is they really beat out on costs when American Airlines margins came in 100 bips below our estimate. So I think the most polarizing stock is going to be Southwest. I'm really excited for their report on Thursday because they have some lofty targets. The stock's at $40 today. Some people think it's going to 30. Some people think it's going to 80. It's all about they're adding extra legroom seats, and is the strategy going to work?
But that's a huge shift for Southwest. I mean, they're essentially moving away from their DNA, what they're known for, and the culture that they're known for, and that's alienated some people already.
Yeah, it depends. So the average Southwest fare is about $109. So if you add an option for extra legroom or refundable or seating, if you add $50 to that cost of that airfare, so $159, it's a 50% increase almost. Does the passenger back away? I'm not sure. But then again, it's only $159. So how do we think about that? And what adoption do we assume? We're at about 5% adoption in 26. They have a bunch of other benefits as well, baggage fees and cost optimization. So that's driving their EPS to $3, essentially EBIT tripling off of a very low 25 base. So we'll see how much of that they get. You know, some people think they could get to $4 or even $5 as more of that extra legroom adoption comes in. But it's their first go at it, and we'll see how it takes off.
You have a $45 price target. So you're not at the 80 and you're not at the 30. So maybe a little bit higher from where we are?
You know, I would prefer United, where they've if you think about United, they're going to be accounting for 44% of the new premium seats through 2028. So they're going to be accounting for more than any other airline in the U.S. Americans after that, and Southwest because of their extra legroom. I prefer to bet on that corporate customer paying $1,000 plus $100 to achieve that additional corporate fare and that higher margin where United is adding its seats than Southwest adding on the, I think both are, given the multiples that they're currently trading at, United is more appealing to me.
Let's talk some defense, and then we'll talk some Boeing, too.
Sure.
I want to look at shares of RTX. They're higher right now by about 3.4%. Profit topped Wall Street estimates, a sign of momentum that the company awaits a potentially huge jump in U.S. military spending. That's kind of where I want to start. What we've heard from President Trump in the last few weeks, not just with the idea of a $1.5 trillion defense package, but also calling on some of these companies to do a better job, pay their executives less, and also build stuff for the U.S. government more quickly. What are these CEOs to do?
There's a lot going on in defense, and that's why I was saying it's an exciting sector to cover, because this is the first time that the five primes might no longer exist as five primes by the end of the Trump administration, which is our view. We think that there's going to be, similar to what LHX announced 10 days ago, there's going to be more deconsolidation happening among the primes. Their budget is going up by $500 billion. From $1 trillion. We don't know the time period of that spending. We don't know how much will be added to actual equipment and R&D versus military operations, but they're seeing an increase, whether it's to fund defense tech names like Firefly, Voyager, the recent IPOs we've seen in the space, or the traditional primes, or suppliers like AeroVironment, Kratos are up 100% on the year already, and we're 27 days in. So it's really interesting to see what happens in defense, but there's a lot of shakeups that I think are going to play out. So it's about seeing who has the best positioned portfolio and who to play from here.
I was surprised, I know when you walked in, we started talking, and I mean, aerospace defense, just the S&P Broad Index, up about 9% year to date, up about 46% last year. Is it just because defense spending all around the globe is just happening and everybody's amping it up?
It's
Is it as simple as that?
Tremendous growth internationally, 20% plus. NATO budgets, Japan, Korea. We're seeing countries like Serbia put in orders that never used to put in billion-dollar orders for equipment to companies like Elbit in Israel. Coupled with the defense budget going from $1 trillion to $1.5 trillion, makes defense very interesting. And the administration has been very supportive of defense tech, emerging technology companies that had stagnant revenues for the last decade are seeing 30, 40% growth.
But, as Tim mentioned, when the president talks about an industry, it can be good or bad. So is it good that they're on his radar? But when he's
only pay the CEOs $5 million.
We're not talking about CEOs.
He did back off of he didn't quantify in the executive order the pay,
But he mentioned it in the social post earlier.
Yes.
Yeah.
It's a headline that caught our attention.
And $5 million, it sounds like a lot of money, but not for a CEO who's paid over $20 million.
Right, the executive pay, the average executive pay, I would assume in any sector is over $20 million. So the caliber of folks you would get into defense would be the opposite of what the administration's trying to achieve.
So what do you hear from defense companies about getting some attention like that from the president? Do they kind of brush it off a little bit? Like we're talking with them?
I think one interesting trend we've seen from the reports, whether it was Northrop or Raytheon today, is the lack of buybacks, because that's what the administration asked for, a focus on additional CapEx. Raytheon mentioned that, Northrop mentioned that, Boeing mentioned that. So across the board, everyone's like, sure, we're investing, we're going to get you supplies on time, that's our job, and it helps funnel the growth.
The Northrop CEO saying Northrop is balancing the need for performance with affordability and speed to market to meet the U.S. Defense Department's focus on speedy development.
Yes, and I think Kathy Warden, the CEO of Northrop, said this was the best spending environment she's ever seen in her career. So most of these executives are very bullish.
Do the upstarts in defense tech pose a threat to the incumbents? And I'm thinking of, an Anduril that is not yet, and I say not yet because obviously this company, I'm guessing, will IPO at some point soon. Do they compete with these incumbents?
Yes, clearly they're competing and they're collaborating. They're working together, both internationally and domestically. The primes are trying to work with, Northrop has a partnership with Kratos on CCA. It's a autonomous vehicle, essentially. So we're seeing a lot more collaboration, but they're also trying to take share. But the budget is growing overall, and that's the bottom line. Although we're not really seeing it in 26. Northrop's guidance is 5% growth. They talk about an acceleration from there in 27, 28. Same thing with Raytheon. It was modest growth in defense. It didn't really pop. But yes, it grew in the second half versus the first half, and we'll see how those trends continue.
I feel like with all of the geopolitical tensions and the wars that we've seen around the world, that everybody comes back to the U.S. military might and the defense companies here in the United States. What is the global picture? Where's the competition? Is there not much global competition, Sheila, when it comes to the U.S. defense companies?
So I think it's focused on maybe a few things. First is missiles and munitions readiness. Like, we need to have that available, and that's why we're seeing companies like Lockheed increase PAC-3 production from 600 missiles a year.
What's PAC-3 production?
It's a missile. PAC-3 is the name of the missile.
Got it.
Going from 600 units a year to 2,000. That is significant, to say the least. That's $8 billion of additional revenues to Lockheed over 7 years if they could ramp to those levels. The backlog's 20 years for a missile like that. We're seeing that across the board. LHX 10 days ago or 2 weeks ago now announced that they are seeing a government investment within their solid rocket motor business that powers missiles. They're going to open up 60 factories next year. LHX currently has 250 factories. So that's the magnitude of investment we're seeing from the government. So focus on missiles and munitions. And second, I think it goes back to old school warfare. Everybody thinks helicopters are over and F-35 is a bad program. But if we think about Venezuela, if we think about Iran, what's the kind of equipment we're using? So, it's not necessarily rebuilding an entire fleet for the Navy, but it's doing things that we could use pretty quickly.
Just in the last 90 seconds, I want to hit Boeing with you. Shares are down today by about 1.8%. The company did report this morning a second straight quarter of generating cash, 57% bump in sales during the final 3 months of the year. Shares down, though. Is it because of accounting charges for the KC-46 tanker program? Is that it?
No, everybody just assumes that's going to happen every quarter.
Okay.
So we're all good there.
Why are shares down after a quarter
So the
that looks pretty good?
shares opened down. The call at 10:30 got it up to it reversed about 4 points, and then they're down again. We're a believer in Boeing. Their underwriting, their free cash flow was a loss of $2 billion in 25. They're talking about positive $2 billion at the midpoint in 26. Normalized for one-time items, they're saying their free cash flow is high single digits, so say $8 billion. They're reaffirming their $10 billion target, and then they're saying they could go above that. So, 10, 15, it's giving long only as a reason not to dismiss the stock. If this company could actually earn $10 billion of free cash flow, then it's quite compelling at its current valuation. So we're seeing a lot of fluctuations. Are they talking back 27, 28? No, I think that you're going to see $2 billion in 26 and an improvement in 27 and 28.
So Boeing, let me just say, you've got a 290 price target. Is that 244? You feel good about that?
Yes.
Do you want to raise it? Or?
We are supportive of Boeing. We think there's a few positive catalysts. I think President Trump might be headed to China in April. We'll see if Boeing heads there. We haven't seen a China order since, I can't even recall, maybe it was 2019, maybe earlier. So I think Boeing works from here, depressed prices for Maxes, maybe 50% below what they historically sell at today.
This was fun. Come back soon. All right. Sheila Kayalu, she's Managing Director in Equity Research at Jefferies, joining us here in studio. When we come back, an update on what's going on in Minneapolis.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow lower, S&P, NASDAQ, they're both advancing. Russell 2000 index in the green, up 0.2%. United Health Group leading losses in insurers on a disappointing forecast. United Health Group shares plunging 19.8%. United, a member, United Health, a member of the Dow, down now by 422 points on the Dow, drop of 0.9%. S&P up 34, trading at a record 69.84. The old high there was 69.77. Right now, the S&P up 0.5%. NASDAQ, the composite index, up by 1%. NASDAQ 100 up 0.9. And again, the Russell 2000 up by 0.2%. 10-year ahead of the Fed decision tomorrow, 4.22%. The 2-year, 3.57%. Complete coverage, by the way, on Bloomberg Television and Radio of not only the decision, but also Jay Powell's news conference. Spot gold up $81 the ounce, 50.90 right now, up 1.6%. Silver with a $108 handle, up 4.5%. West Texas Intermediate crude up 3%, 62.45 for a barrel of WTI. Bitcoin 88,224. Bitcoin up by 0.3%. Boeing generating cash for a second straight quarter. It also reported a 57% bump in sales during the final 3 months of 2025. Boeing shares are trading lower. Boeing down by 1.5%. And RTX's CEO says the aerospace and defense giant plans to continue paying dividends to investors after President Trump attacked the company for sluggish weapons output and lavish shareholder returns. Right now, we do have shares of RTX trading higher by 3.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much. Charlie Pellet there. Hey, OpenAI CEO Sam Altman joining a growing chorus of Silicon Valley leaders who are expressing outrage in the aftermath of the fatal shooting of Alex Preddy, aligning with tech industry workers who have urged CEOs to take a stronger stand against the violent immigration crackdown in Minneapolis. Sam Altman saying what's happening with ICE is going too far. He wrote this in a note yesterday. He shared it with all employees, according to a person familiar with the matter. There is a big difference between deporting violent criminals and what's happening now, and we need to get the distinction right. Again, this is Sam Altman in a memo yesterday to his employees, according to a person familiar.
Other tech leaders, including Anthropic CEO Dario Amodei, LinkedIn co-founder Reid Hoffman, Reddit co-founder Alexis Ohanian have also spoken out against the violence in Minnesota. This is Greg Bovino, the U.S. Border Patrol commander who became the face of President Trump's sweeping immigration crackdown in Minneapolis, is leaving the city, Carol, following a mounting public outcry over the killing of 2 U.S. citizens by federal agents just in recent weeks.
All right, so we wanted to get you an update. We do head back to the White House and Bloomberg News senior reporter Jen Delowy. Jen, good to have you here with us. We know President Trump on his way. I don't think he's landed yet, but we know there is a crowd in Iowa waiting for him. He did say en route to Iowa, talking to reporters, he's meeting in terms of Tom Homan, the border czar. He said he's meeting with the governor in Minnesota. He's meeting with the mayor, I think, later, and I hear that's all going very well. What are we hearing? Is it all going so well?
Early reports out, we don't have a great deal of intelligence out of those early meetings, but what we are seeing, of course, is this effort by the president, it appears, to dial down the temperature, to do really 2 things, to express support for Homeland Security Secretary Noem, and at the same time, who's obviously been criticized for her handling of these incidents and her characterization of them, and then at the same time, also try to find a way forward with local leaders. The president repeated that comment to us several times before he headed out to Iowa, saying that he believes the conversations with the governor of Minnesota are going very nicely. And of course, he was previewing that later conversation today with Mayor Jacob Frey.
I was surprised to hear, just based on the reporting that we've seen in the last 24 hours, that Tom Homan was headed to Minneapolis. Some of the reporting from other outlets indicated that Kristi Noem had been sidelined in some way. She was at a meeting at the White House yesterday, reportedly went a couple of hours, according to other outlets. how are you reading into that reporting? Has she been sidelined? The president earlier expressing his support for her, saying she will stay on at the agency. How are you reading into that?
It's important to appreciate that departures aren't always telegraphed well in advance. But for now, the president is very clearly, insisting that she has his support. That meeting, first reported by the New York Times last night and stretching over 2 hours, included her top aide, Corey Lewandowski, the first campaign manager from Trump's 2016 presidential bid. And also, it's notable that they came out of that meeting with the president's messaging today about not backing down from her. And in fact, when asked about Noam's performance, he immediately pivoted to talk about, how she's done a great job on the border. Traditional deportation, focused comments from the president there. Notably today, on the way to Iowa, on the plane on Air Force One, Trump is joined by his senior advisor, Stephen Miller, who had also drawn a lot of criticism, just like Noam, for his initial characterizations of the shooting over the weekend. Stephen Miller had intimated on social media that the man shot on Saturday was an assassin and domestic terrorist, even though video evidence suggests he had been disarmed and hadn't brandished a weapon.
Hey, Jen, in terms of, I was going to ask you about who's the architect of all of this, and I think there's been a lot of reporting, but does it really matter because the buck really stops with the president, to be fair?
The president, this president in particular, takes ownership of his policies and has been quite happy to tout his deportation agenda. It's something he campaigned on so vigorously, and in office has really claimed as a source of pride that he's accomplishing his goal of deporting illegal immigrants. What is,
and not the only president to do it, right? We can go back to the Obama administration, to be fair, because I think it's important to kind of point that out.
But, Stephen Miller is seen internally as, of course, a big factor in this push. Obviously, someone who's been critical of the, amount of immigration and illegal immigration into the U.S. But to your point, Trump has taken ownership of this. This is as much his issue as it is that of a key ally and aide. And it's one where we've heard him talk very openly about being frustrated with the messaging on this. Last week, he lamented that, the focus hadn't been on the rapists and murderers, as he characterized them, that were being deported. He even, took to the White House briefing room last week to show pictures of some of the deportees. So that, kind of speaks to his frustration that the messaging has shifted away from where he wants it to be. And of course, that he's lost some control over the narrative here. Polls show that even among folks who care, who support his broader immigration crackdown, there's support is waning for the overall effort in the wake of these two deaths.
So then where do deportations go from here? If Minneapolis's Mayor Jacob Fry and the Governor Tim Walz of Minnesota are successful in de-escalating this, does that provide some sort of roadmap to other governors to then go ahead and say, hey, your federal agents are not welcome here. You are going to have to find a different way to accomplish what you want to when it comes to deportations?
It'll be interesting to see how this gets resolved. I think that will be key to the extent to which it is a roadmap for other states. Clearly, the governor and mayor have been very forceful in their eagerness to see these folks leave their area. At the same time, Walz has in the last day indicated he wants to turn down the temperature. We're going to want to watch what happens with Tom Homan, the border czar that Trump dispatched to Minnesota. He has focused much more on traditional deportation efforts rather than kind of this broader dragnet or these broader operations that Kristi Noem has favored. And so, if we see that kind of refocusing back on more conventional deportation efforts, that could be a de-escalation and a roadmap for other states and cities concerned about immigration enforcement in their backyards.
All right. Super appreciate it, Jen. Thank you so much. Bloomberg News senior reporter Jen Delowy joining us there from the White House. I do also want to mention that around 12:20 today, the governor of Texas, Greg Abbott, put out on social that he's directing state agencies and universities to freeze new H-1B visa petitions. So we're seeing some stuff happen around the country.
Yeah, we're going to keep an eye, too, on President Trump, who's set to give remarks a little later in Iowa. Stocks on the move next. This is Bloomberg.